gains across the magnificent 7 tech stocks and strength in financials and energy names board US benchmarks in Wednesday's session as all indices end in the green, futures steady as investors look past hawkish signals from the Fed. And Nifty surges past 25,800 during the last hour of upbeat closing. Benchmark's recovery was also reflected in broader markets which overtook them in last few minutes of trade. All sectors traded in the green except IT. And with key collaborations in place, several sectors, the likes of defense, education, trade and science, the India-France relations are set to take off in the second phase. French president who's attending India AI Summit also shared his AI-generated photo with PM Modi reflecting confidence in India's growth. And even as bilateral with France takes shape, sources say that India and Canada are likely to finalize the terms of reference of the Comprehensive Economic Partnership Agreement during the visit of Canadian Prime Minister Mark Carney to India early next month. And a slew of initiatives mark the ongoing India AI Impact Summit, where Google announced the America India Connect initiative, along with allocating about $30 million for the Government Innovation Impact Challenge for AI-led programs around the world. Stay tuned to NDTV Profit for exclusive chats and detailed reports. Good morning, you're watching Markets Today with me, Shreyanshi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Start with a handover coming in from Wall Street. Largely a winning session is what you're looking at. So when you talk about the broad-based index, you're looking at a climb of about 0.6% thereabout. Nasdaq as well added just about 0.8%, and Dow Jones, that's the one that's added about 0.3% as well. When you talk about Nvidia, that was the key performer aiding this sort of move that we've seen coming in as far as the S&P 500 is concerned. So you're looking at an advance, in fact, of about 1.5% thereabout on the heels of Meta Platforms announcing that it's going to use millions of Nvidia's chips in its data center build-out. Now, let's also talk about investors mulling over the minutes from the Fed's January meeting. And that's something that you're seeing possibly reflected in the US futures rates right now, because you do have, the reveal coming in that participants largely approved of the central bank's decision to leave its key interest rate unchanged at a range of about 3.5% to 3.75%. However, officials were divided on the direction of monetary policy thereafter, and that's something that you're looking at. US futures, not much of a direction that you have at this point in time, so still awaiting some of those clues. But by and large, a winning session is what you're looking at. A bunch of markets across Asia are shuttered for Lunar New Year holiday as well. But let's also move on and get you the word coming in as far as trade is concerned, because you do have Commerce Minister Piyush Goyal confirming that the long-anticipated India-US bilateral trade agreement is now in its final stages, expected to be signed as early as March. Now, he also says that India has negotiated from a position of strength, stressing that farmers and MSMEs are fully protected, with sensitive sectors, the likes of dairy, explicitly kept out of the pact. Let's go across and listen into what else he had to say.
When we negotiate with a position of strength, you're able to balance national interests. You're able to also take care of sensitivities. Like in all our trade deals, our farmers' interests, our MSMEs' interests, our fishermen's interests, the interests of jobs in India, these have been paramount in our negotiations. Once you're able to generate the confidence in them, that genuinely it is impossible for us to open it. Our small dairy, our marginal fishermen, marginal farmers with 3 or 4 livestock cannot compete with the mechanized dairies of the West or the developed world. And once you are honest about what you are saying and you build up that trust, then it's very easy to protect your sensitivities, your defensive interests.
All right, then there you go. So that's the Commerce Minister's rationale coming in terms of protecting the farmers and the way that the agreement has also been constructed. But let's also tune into some important commentary this morning, because you do have French President Emmanuel Macron also saying that both India and France share a push for digital independence, not relying solely on the US or China at this point in time. And he's also added that the real race is in computing, power, talent, and capital, and India and France are a part of that race, and very much so. Let's go across and listen into that bit of commentary there.
I really believe that we have the same obsession both in India and France, I would say, and in Europe, which is that we don't want to be dependent on a totally US or a totally Chinese model, but we really believe that we need a broader one, and we want to be part of the solutions, and we want to have players being part of the solutions. What we want to do is to make sure that we have the data centers and the computing capacities, that we train the talents in our countries, that we have all the capacities, and it's clearly about computing capacities, talents, and capital. Here are the three elements. And I mean, when I speak about computing capacities, it's about having affordable, or at least competitive, low carbon energy in order to deliver this agenda. On this agenda, I really believe we have a lot of assets, and we are in the race. We are lagging behind both US and China, but we are in the race.
All right, then that's a race that India and France are very much a part of. But let's also move on and talk to you about some other developments here, because even as Delhi edges closer to sealing that interim pact with Washington, there's movement on another long park trade track. In fact, you do have India and Canada that are now preparing to resume their FTA negotiations. And sources, in fact, are saying that both sides are finalizing the terms of reference, the document that lays out the scope, the structure, the modalities of the talks as well. And this could be wrapped up around the time of the PM's visit. Now, once signed off, the negotiations formally reopen, and to give the talks a little bit of political and operational heft, you do have both countries that have now named their chief negotiators as well. So you're looking at Brij Mohan Mishra for India and Bruce Christie for Canada, clearing the way for a fresh round of discussions that will very much be in the spotlight. But with that in mind, let's also put the spotlight away from all of these facts that we've been talking to you this morning. Talk to you about the FNOQs that we have at hand right now. And Puneet, let's take a closer look at that.
Well, certainly, it's been a very interesting session over the last couple of days, where we've consistently seen that we have been hovering around the 25,700 level, something that we've been consistently watching out for. And while there have been larger macro issues like what's happening with IT amongst others, the market seems to be steadily making its way to the 25,800 mark. Now, this mark has been something that we've consistently talked about, which has not been a very good support in the level that the market had hoped for. So even on the downside, when we fell from 26,000, it was a one-way fall. Even in terms of the budget day, we went all the way down to 25,600 in that sense. So you consistently, on the budget day, we went down to 24,600 in that sense. But these levels of 25,400 is a key support level. And on the upside, we do have to cross 26,000 with rigor to go across and above that level as well. Currently, at 25,819, we have been consistently talking about this. There was, of course, in terms of, the expiry this week of the Nifty. So you've seen 1.7% uptick in terms of open interest. For Sensex as well, today is the expiry. So watch out for all those stocks in the Sensex in terms of moves. Bank Nifty continues to be one of the key and the positive indexes, now at 61,500. And yes, 600-700 points away from the highs, but consistently able to maintain that support. Foreign investors plowed in roughly 1,100 crores in terms of buying in the cash market. They have been buying over the last week or so, I would say. A couple of days where they've managed to sell in the market, but largely a very strong buying figure yesterday seen in the foreign investors. The index long, which we've been consistently highlighting in terms of their positions, now at 22.8%, continues to be strong at this level. Bounced back from 19 at the start of this week, and so we have been seeing consistent buying visible in the numbers. Well, the put-call ratio is bang very similar to what we saw in yesterday's FNO setup as well at 1.3. In terms of stocks, Oro Pharma saw a short build-up at the end, but yesterday was a day where stock was down almost 4% at one point in time because of the key observation in Unit 7. So we continue to monitor this. In terms of IT, those names will keep propping up on our list, and this time it's KPIT Tech, while Eternal also saw some short build-up yesterday in trade. a lot of these AI-related stocks, barring IT as well. So you consistently are seeing action in those stocks. In terms of open interest losers, very quickly, in terms of Feb futures, you're seeing, barring IRIDA, the open interest thins out very quickly. So some short covering seen on this counter, but continue to monitor a lot of these individual names for today's trading session as well, and something that we look out for.
No, absolutely. And speaking of things to look out for, Puneet, there's an ABB India that's standing out on the back of its results later, and that's something that we're definitely watching out for. Now, any and all commentary coming in as far as the large orders, the capex trends will be watched out for. But I believe that we're expecting, in terms of the revenue, net profit, decent expansion, decent uptick that we're penciling in.
So it has been something that we've been watching out for, and largely a lot of play has been in terms of the revenue as well as net profit. Now, consistently continue to monitor a lot of global trends. We got some of those back in February when ABB got some of the key orders wins. So a lot will be built in terms of the commentary as well for ABB, and in terms of the margins as well has been a decent performance, but a lot more to talk about once the results are out in terms of commentary. Robotics and motion is expected to offset the weakness that we're seeing in terms of the electrification part of things, but the higher import content will be the and unfavorable mix will largely weigh on the margin. So that's largely the picture on ABB India. A lot more to talk about in terms of what the global outlook is, what the management is seeing.
No, absolutely. And thank you so much, Puneet, for joining us with what the street then is penciling in. So there you go. That's ABB that is going to be very much in focus. But there's a bunch of stocks that actually make it to Sharad's radar in terms of the news flow that is coming in when it comes to some of them. There's an MOU that we're going to be talking about, a foray into aquaculture as well. In fact, Sharad is standing by with his entire list there. Sharad, a very good morning to you. Which are the stocks that you're looking at right now?
Good morning, Shreyanshi. There's a whole lot of announcements coming in, and one by one I'm going to explain that, and of course we'll give you the impact analysis also. HUL, a 2,000 crore fresh investment has come in the new beauty wellness segment. Dr. Reddy's, it's an important pact with Mercury Group. That's positive for the company. Rallis now is entering into the aquaculture business. That's pretty much very much important, but remember, it might be a negative impact just sentimentally for Avanti Feeds and Apex Frozen Food. Intellect Design Arena, they have launched their AI first banking platform, while if you look at Bharat Forge, an important MOU has been signed with VVD and Tech. Syngene International also, you look at it, there's a partial relief coming in on the taxes front. And ONGC Oil India, remember, there might be a reversal in trade because the Brent crude, that has jumped up 4%. What's not working? That is cement stocks. That's going to be expected to be negative, and this is because of the channel check suggests that the minor price hikes are there, but the demand is still plateaued in the month of February from the broking reports. And NCC also is negative. They have been debarred by NHAI for the company and its unit for the next 2 years. So that is significantly a very stressful position for the company. So these are the stocks in our watch list today.
And thank you so much, Sharad, for joining us with that entire list. So there you go. Those are some of the counters that are going to be remaining in focus on the back of MOUs, on the back of news flow as well. But let's also put the spotlight on counters that are going to be in focus on the back of order wins. There's actually 3 counters that make it to Varsha's list this morning on the back of order wins. Varsha, it's quite an interesting list that you're looking at.
Let me start with BL Kashyap, wherein they've received 300 crore order from CRC Green, and the order is for civil works for group housing project, which needs to be executed in next 42 months. Then you have Page Digitic, wherein they've secured $1.35 million order from Yakim Chem, and this is to supply mobile battery systems, and the delivery needs to be completed by April 2026. They've also next is Cochin Shipyard, wherein they've signed contract with over 2,000 crore with France, and the contract is to manufacture 6 feeder container vessels. So these are 3 stocks which will be in focus on the back of order wins.
Absolutely, and thank you so much, Varsha, for joining us with that entire list. But stay with us because, I was looking at Naven Fluorine in terms of the analyst meet that is in focus, and there's quite some interesting commentary that talking about how the focus is now going to be on multiple products. There's quite some takeaway. They're aiming to double their CDMO revenue also by financial year 30. Let's take a closer look in terms of their takeaways now.
Well, let me divide this into into some of their business segments, starting with HFO, that is R32, which is the refrigerant gas used in AC. So their new 15,000 MTPA capacity will start in Q3 FY27, and HFO volumes can still grow at 20%. No debottlenecking plan. With Honeywell, the focus is on multiple products, and onto the specialty chemicals. Then their Chemeris project will go live in Q1 FY27, which is first global, which has a first global capacity, and their phase 2 capex potential is 10x what they're talking about, and they're expecting 50% of ramp up in FY27 and 100% in FY28. While on the CDMO, their Fermion business run rate is expected to rise $50 million annually, and they need to double the CDMO revenue by FY30. 15 molecules are in pipeline, 3 to 4 are in advanced state. So overall, these are the key takeaways on different product segments and different business segments when it comes to Navin Fluorine.
No, absolutely. And thank you so much, Varsha, for helping us out with that one counter. So there you go. That's a bunch of counters that are going to be in focus on the back of order wins, on the back of news flow as well. And Navin Fluorine that is going to be in focus on the back of its analyst meet takeaways, where they have quite the ambitious target when it comes to their CDMO revenue. But let's also move on, talk to you about India taking center stage in the global AI conversation this week, with a wave of top-tier leaders landing in New Delhi, welcomed by PM Modi, and in conversations, many of these global leaders are openly calling India a rising AI powerhouse. You do have former UK Prime Minister Rishi Sunak and French President Emmanuel Macron, that are a few of them right now, where global AI firms are clustering around India this week. So you're looking at Google, Nvidia, Anthropic, and even others drawn by what they describe as India's unique mix of scale, talent, as well as multilingual innovation. So that's something that you're looking at in terms of the entire AI story. But there is also recognition of India moving beyond adoption to actually shaping the next wave of AI development that you're looking at right now, and gets reflected in what visiting dignitaries are describing. You do have OpenAI also describing this as India's moment, a country well positioned to lead in India. And that's the quote coming in from them, ready to build models that reflects linguistic as well as cultural diversity, and encapsulates that really into the AI story. So here's what the global leaders are saying. Let's go across and listen into a slice of everything that they had to say.
India has recognized that leadership in technology doesn't depend just on inventing the technology. It depends on how effectively you deploy it in your country. So by focusing on mass adoption, I think supported by a very deep talent pool here, a strong digital public infrastructure, and a public that's very supportive and optimistic of the technology, I think India is well positioned to take a leadership role in AI.
India starts off in a really advantageous position, given the students who are using this, given the number of people who are using it, given the fact that this is one of the countries in the world that's leading in terms of developers building on AI. Like, this country is just so incredibly positioned to be a leader in this intelligence age that's coming. You talked about the before and the after. I mean, I think if you look around the world, India is as well positioned as any country, but we are going to have to all work together to really be able to help address that jobs issue.
All right, then there you go. That's some key commentary coming in from leaders when it comes to the entire AI story. But it's Google that's at the very forefront of this. In fact, they're talking about the entire India bet at the India AI Summit. You do have Google CEO Sundar Pichai also saying that the company is investing aggressively to seize what he called an extraordinary AI moment. Let's go across and listen in to what else he had to say.
I think it's an extraordinary moment. I think we are investing to meet that moment, right? I think in some of the context, Demis has spoken about this as the industrial revolution, but 10 times faster and 10 times larger. And if you go back and look at the railroad investments or the national highway system in the US, I mean, these are such leveraged investments, and you drive so much growth and value on top of that. I view this as a transformational moment like that. As Google, I think we are fortunate that we've been focused on this technology for over a decade, and be it search, be it YouTube, be it cloud, be it emerging businesses like Waymo or Isomorphic Labs, I think they're all getting better and growing based on this one technology underneath.
We get very excited about India. I mean, one of the things in India is actually, if you think about our Gemini app, it's actually one of our third largest market. We announced today the America-India Connect initiative, which connects India with undersea cables with 4 other continents. That's also part of our infrastructure commitment to India. I don't think sovereignty necessarily means isolation. I think to me at least, it feels like it means you're working on a technology in a way that serves your national interests and benefits your people and your society and transforms it. I think in that sense, I think these are the right things for the Indian government and quite frankly any government to be thinking about.
All right, and that's all about Google's AI bet as well. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. Stay tuned for India Market Open on the other side of that very short break.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
He is transforming AI from code into voice and from technology into experience. Meet Marty Staniszewski at the NDTV AI Summit, 18 February on the NDTV network in partnership with Startup Policy Forum. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Hello and welcome to India Market Open on NDTV Profit. An interesting day that's brewing with everything about AI. I'm Hiral Daria. With me is Sharad Dubey.
Hello Hiral, and looking at the markets for the last two trading sessions, we have seen a good technical up move coming in. Hopefully we are expecting that today also we might see a good opening as well. But remember, AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme. And let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Tamanna.
I think it was. And this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
Tamanna, are you sure if it's Sharad, AI Sharad and AI Hiral?
There's only one way to find out.
Yes, so all three of us are real, but definitely we had one AI Tamanna also.
Yeah, it's astonishing. It's astonishing when you look back and see this, the exact look, style, everything that an AI generated image can do. Well,
Wow.
AI might just quite replace us, but at least not today.
To feed AI Tamanna lots of things, right?
Well, it's, a lot of what we are doing is in the public domain. So it's not that difficult to pick up one way or the other.
It's going to be interesting.
So the future is very scary as well as interesting.
No. So just a small glimpse of what is on the anvil as we get into the AI summit, which is also the big picture. But, we are, all three of us, very real, bringing you a very real show. So let's start with what the global markets are looking like. Now, US markets closed with gains as mega cap stocks rebounded in trade. Let's pull up the key indices as well for you. And you could see some improvement there in sentiment. The reason is that the sense is the tech sell-off is a bit overblown, and maybe that will reverse. Fed minutes have indicated a divided view on future rate cuts, and that has been absorbed fairly well by the markets as well. There were in fact some in that Fed committee in the last policy who actually were pitching for rate increases. Oil, though, is the big factor, and what's happening geopolitically is the big factor. US Vice President J.D. Vance said the US has reserved the right to strike Iran. Their talks are clearly not going well. Brent has jumped 4% to close above the $70 mark. Let's pull up Asian markets for you this morning as well and give you a sense, a bit of a mixed bag. Look at Shanghai, down nearly 1.5%. But implied open for India is the other one that you should look out for. And it's showing some positivity at least. You might open with a small uptick as far as the data at this point is talking about. But okay, Real Hiral, time for your recap.
Yeah, in terms of the recap, one interesting fact I'm picking up from what you've mentioned about Brent is the pressure it created on an ONGC or an Oil India. That's something that will be relieved to some extent in today's session because
It'll be a reversal basically.
There will be a reversal on those stocks as well, taking the global cues into consideration. But overall, clearly we've ended in the green for a second consecutive session. Now, what is interesting is a close above that 25,800 mark, which has come in 0.4% higher yesterday. HDFC Life, Tata Steel, these were the companies which actually gained the most. And Tata Steel is one of the high conviction buys that one of the brokerage calls had, and that's the reason we saw that kind of a move coming in on that one. If you see in terms of broader markets, second day where your broader markets have actually outperformed your benchmark indices. So your breadth is widening to some extent, and that seems to be slightly positive for all your traders as well. Mid cap 150, 0.5% gain. You have small cap 250 as well. A similar kind of return is what you saw in yesterday's session. Names like Godfrey Philip, second consecutive session of gains along with an ITC is what you've seen. And this is on the back of the secret price hikes that have been taken. In fact, Tarol and Netweb have also gained quite some in yesterday's session. Netweb, we know that was on the back of the AI partnership with NVIDIA, but Tarol is a clear volume buzzer. All sectors actually ended in the green. It was mainly IT which has continued to see profit booking in yesterday's session. There was no respite coming in there when you talk about IT as a sector. PSU Bank Index in that last hour of trade saw a good surge that came in. So strong moves there. That was the top gaining sector. PNB, Punjab and Sindh, these were a few of the names which saw some smart moves. And you had names, the Bank Nifty and Nifty Pharma, 3 consecutive sessions of gains that are coming in. So the private bank participation has continued. Whether it continues today is not is the question, because your implied open is actually, telling you that it's a pretty flattish expectation. Participation from IT and financials is going to be important if we have to see an up move beyond that 25,800 mark. And auto, that has continued to gain, Sharad.
Exactly, and Real Hiral, there's a real analysis coming up, and there's a very important statement you have mentioned. Financials, there's a flight to safety happening over there, and that's one of the key components in my analysis also today. And I'd like to just point out the market setup. There was a strong closing in Nifty and Nifty Bank, and the technical levels have gone up. 2 straight sessions, the closing were on the higher side. But if you look at it, the expected is a range bound trade early in the trade as well, and this is because of the option data suggesting value buying has emerged in mid cap. We had discussed in IMC also this trend we had picked up, but do stick to the financials. The consumption also we are seeing some kind of a good buying happening, but the DI buying that's happening in cap goods. Over the last 3 to 4 trading sessions, large cap goods companies, they have seen a good up move coming in, and Paytm is something which has attracted my attention. It ended at day's high for the second straight day. That means there is a good accumulation happening in this counter, but remember there's an exclusive research coming on that. And cement pricing, again a problem coming in. The pricing power has not returned in the month of January and even February, but the best data for today is the FI shorts. That's the lowest in the Feb series. It's 77% down. We had made this case in last week's Friday itself that this FI short covering would happen, though gradual, we'll still take it. If February series start for FI shorts was 88%. There are 3 key reasons for it. First is India is still under-owned in the emerging market basket. The earnings upgrade is likely to follow after Q3, and still a thin liquidity is there in this Asian markets this week. So that's why some flows are coming to India. That's what the street is talking about.
Okay, some factors to watch today. I wonder if IT stocks will see some kind of relief, if at all, because the kind of hammering they saw was quite painful. And since you have seen a rebound globally in sentiment as far as IT is concerned, I think that's one thing I would watch out for. Apart from that, other factors, the Nifty is strong, closing above 25,800 is paving the way for a further up move towards 26,000 levels. Nifty's closing level shows 2 days of higher highs, reflecting the FII short covering. The second half also saw strong up moves coming in the benchmark indices with value buying in small and medium companies. The Nifty Bank's technical setup remains better than the Nifty, but can expect profit booking even as geopolitical tensions are now back on the table. Metals and PSU banks see strong strength, while IT pack could see a big technical reversal. Nifty support levels at 25,600 to 25,800, resistance levels at 25,900 to 26,100. For the bank Nifty, it's close to its all-time high, isn't it? 61,765. So let's see if you're seeing a sell-on rise on Bank Nifty. That's the other one to look out for. But let me go across to Puneet now for the derivative setup this morning.
Well, thank you for that, and good morning to all three of you. We've seen, of course, the Sensex expiry today, so we continue to see those moves on the key 30 stocks. But overall on the Nifty as well, we have been, while in the consolidation low, slowly inching up on daily basis. So now we are looking at 25,800 as the key level. And the last 18 to 19 days in the Feb series have been very interesting, because on budget day we did touch 24,600. And while the support between 25,400 and 25,800 hasn't been that strong, we've consistently inched up and hopefully find a meaningful support at these levels of 26,000, 26,100, because between 25,500 and 26,000, there's not too much of a support that the index has been able to build up. So we continue to monitor those, but 25,800 as the key level, we'll take it with both hands at this point of time, and not led by IT amongst key factors. So you've seen the other stocks consistently contribute positively to the Nifty 50. In terms of the Bank Nifty as well, it has been now consolidating at 61,000, 61,500 as a key level. And while it is more closer to the highs compared to the Nifty 50, it seems to be in a consolidation now, with the PSU banks having a lot more favor at this point of time. In terms of the foreign investor buying, they bought almost 1,154 crores, and you guys did highlight some of the key factors leading into this. So it's been a week where we've seen only a couple of days of selling, but overall buying since last Monday, and continue to monitor that figure. While the 22% index long, the highest it has been over the last few weeks, continues to be a big positive number. The put call ratio very stagnant compared to yesterday at 1.35. Finally, in terms of stocks, Aurobindo Pharma was one of the key ones that we discussed yesterday as well in the slightly extended IMO session, discussed about the observation. So you saw that short build up on Aurobindo Pharma, and a counter that will continue to be in focus as well. While IT names keep propping up now and then, short build up now seen on KPIT Tech. While the open interest thins out on the other names, and similar fate is seen in the open interest losers as well. Well, barring something like Irida, where you saw short covering yesterday, KFin Tech was some of the other ones, but the open interest thins out very quickly. So very, very stock-specific action that we are seeing, but broadly, as you rightly mentioned, IT will be a theme that continues to be in focus at this point of time, where it has been a little surprising on some days, but continues to be one of the key indexes for the next move on the Nifty 50 to watch out for.
Okay. It's all about stocks and it's all about AI right now. So at least the first one on my watch list is an AI play. Intellect Design Arena is what I'm talking about. The company has launched AI. That's an AI-first banking platform featuring 550 domain-aware agents. It's also previously launched a number of such products, launched Purple Fabric as an enterprise AI on-tap subscription service, priced just at $99,500 per month for up to 50 users. So that was quite a disruptive pricing. And before that, it introduced a judgment-centric AI architecture that ensures deterministic governance, auditability, and regulatory compliance. It's designed to shift AI adoption from capital-intensive infrastructure projects to operational shared enterprise models. Now, if you've been hunting for Indian AI plays, then you're definitely getting some options here. So, which is why Intellect Design Arena on my radar. Dr. Reddy's is the other one. It's entered a new market or a new segment in that sense. It's entered HRT, that's hormone replacement therapy. It's acquired Proginova and Cycloproginova trademarks in India from a UK headquartered specialty pharmaceutical company. So now what this drug does is treat symptoms of menopause and also estrogen deficiency. Those are the two brands. They had sales of 100 crore rupees last year, and acquisition is strengthening the company's gynecology portfolio. It marks a strategic entry into the HRT market for Dr. Reddy's. So a thumbs up on that development. BL Kashyap and Sons is the other one that is on the radar today. They've secured a 300 crore order from CRC Greens. It's an order for civil works for group housing projects and will be executed within the next 42 months. So those are the first three that I'm looking at.
Yeah, I mean, interesting ones. I think on a daily basis, Tamanna, we have one company which comes in focus on the back of the AI play, because the kind of partnerships, collaborations, or even for that matter, acquisitions that are on the anvil, it's huge.
You know what I'm finding very surprising? Till I think even 3 weeks ago, the whole point was, oh, India is so behind the AI race. You have no companies working on anything. We just don't know about it. It's just not been in the limelight. And at least, at the very least, that's what the AI summit has done.
One interesting trend I have also found out, it's not the AI, it's the ancillaries around it. I'm talking about L&T, it was infrastructure.
Data centers.
Exactly, data center. And one interesting thing is on sea cables. That's also coming in, and guess what? The company Tata Communications, they do the major work on this. So a lot of ancillary plays are coming in the infra space of AI, not just the tech part. So that's an interesting trend.
Absolutely. So, I mean, there's a parallel sector which is getting developed right now as well, along with AI as a play, and this is going to be interesting for all the viewers and investors. But on my list, HUL consumption remains in focus. Now, they've announced a 2,000 crore investment plan, and this is going to span out over the next 2 years. What this means is that the investment will be to expand its manufacturing capacity and will be directed towards high growth demand spaces like beauty and well-being. This also includes premium skincare and hair care segments. In fact, home care liquids is what they're looking at as well, which covers liquid-based home and personal care products. So watch out for a HUL in trade. It's a thumbs up. Cochin Shipyard, now that stock has been buzzing in trade on the being LOA for, I think, a 5,000 crore order. And now they've received a French contract, which is a mega contract. They've signed a $360 million contract, which comes up to around 3,267 crores with France-based CMA CGM Group. This contract is for 6 LNG-powered 1,700 TEU feeder container vessels. And this marks the first time that this global shipping giant has actually ordered from an Indian yard. Now, the company's current order book also provides nearly 5 years of revenue visibility. So watch out for Cochin Shipyard. That up move possibly could continue. And very lastly, NCC. Now, there is negative news coming in on this one. This will be a thumbs down. NHAI has actually debarred NCC and its subsidiary OB Infrastructure from participating in any NHAI tenders for 2 years. Now, this debarment is actually effective from the 17th of February, and the company has stated that it is reviewing the order and intends to challenge it legally. A similar situation had happened with KEC International, where this was revoked, but let's see what happens with the NCC as well. There is no immediate impact on its current order book. Your future order book is something that could be impacted on a NCC. The pressure probably could be building in today's session as well. So watch out for this one, Sharad.
Hiral, there was one more example on PNC Infratech, and when this news flow happened, there was a full gap down.
Gap down opening.
So there might be adverse reaction in the initial hour of trade. So we will be watching out and tracking this counter. But moving on to the other set of stocks, the cement stocks would be in focus. JP Morgan has come out with a note on the concrete insights. February month, minor price hikes have been there, but it's plateauing the demand. That's where it's looking like. Price hikes is below the expectations. The demand seems to be plateauing after a strong January without the volume upside. It would be very difficult for companies to increase prices further, and they continue to prefer Ultratech cement over the other cement players. Now there is an industry disruption kind of a move coming in. Why? Because Rallis India, as per INCRED's report, has stepped into fish feed and shrimp feed. Now this includes polyculture feed as well, and it seems to be a portfolio-led approach targeting both export-linked shrimp farming and domestic fish demand. The stock is already up 23% in the last 1 month, but you can expect volatility for Avanti Feeds and Apex Frozen Foods as well. Aadhar Housing Finance, Citi has maintained a buy rating, target price of 650 rupees per share. They had an analyst meet. Commentary has been strong. The medium-term AUM guidance, they have given a 20 to 22% growth with spreads anchored above the 5.6% mark, and this is the medium-term guidance which they have spoken about. Annual improvement also they're expecting in their cost-to-income ratios, and currently their stock is trading at 2.3 times its FY26 book value, which is more than 4.4% level. So these are the stocks on my radar today.
A couple of interesting strategy notes that have come up as well, and maybe some of them that we could look at. Jeffries on India strategy, it says more confidence on EPS growth improvement, that's earnings per share growth improvement. They see a 5% uptake from the bottom. FY27 MSCI India EPS growth improvement forecast to 15%, improved nominal GDP growth due to higher inflation helping revenues and earnings, and a potential normal or deficit monsoon supporting higher growth across sectors. Bank NIMs, that's net interest margins, have bottomed out, supporting the largest MSCI sector. Credit growth has improved to 13% versus 11% in March 2025 and should stay at 13% over FY26-28. I thought this was very interesting because the excessive monsoon last year actually made life difficult for a lot of sectors, including consumer durables, even Varun beverages.
The base itself was impacted.
The whole set. So they're hoping for slightly deficit monsoon or a normal monsoon at the very least.
But with that also, the base any which ways is very low. The recovery will look very good in terms of the growth.
For Q4.
For Q4 as well, if it comes in Q4, even for that matter, if you look at Q1 of FY27. But overall, absolute numbers will not be as good as they were in the previous quarter.
And there is an important report also, like the weather reports are suggesting there's an early onset of summer coming in. And remember, the AC stocks have been beaten down completely last year.
That's what they're saying, that maybe you have a different kind of
It'll be interesting to call all of these guys in the next 15-20 days to understand if there is any pre-buying happening.
I am feeling the early onset of summer. It's suddenly gotten very hot. But
actually, I have on my ACs already in Bombay because it's been like 2 weeks. Now everybody's using the ACs again.
Once again. Yeah. Okay. All right. More stocks to watch. And that's a good indicator. We look at all of these indicators and reports, but do you need to switch on your AC earlier than expected is also another indicator whether you should buy some of those stocks or consumer durable plays. Now, a pair of stocks which will also be in focus is Naven Fluorine and Alkem Laboratories, as both the companies held its analyst meet. Varsha coming in to give us the key takeaways.
Well, starting with Naven Fluorine, let's categorize into different product, or rather different business segments which Naven Fluorine has talked about in their analyst meet. Talking about HFO or R32, this is a refrigerant gas which is used in your AC. Well, the new 15,000 metric tons per annum R32 equivalent capacity is expected to start in Q3 FY27, and HFO volumes according to Naven can still grow at 20%, no debottlenecking planned. And with Honeywell, the focus is on multiple products, not only on HFO. And onto the specialty chemical, their Chemeris project will go live in Q1 FY27, which is the Naven's plant is first global capacity, I would say, and the Chemeris phase 2 capex potential is 10x. And the project Nectar ramp up, if I were to talk about, the 50% is expected in FY27, 75% by end of FY27 and 100% in FY28. Onto the CDMO, the Fermion business run rate is expected at $50 million annually, and they have a target to double CDMO revenue by FY30. Onto the Alkem Lab, onto their analysts day key takeaways, they basically talked about the medtech, which is a future driver. Which they're going to build a new medtech business. The goal is to have 1,000 crores of medtech sales in 5 years, and with the target profit margin of 20 to 25%, basically a high growth driver. Two areas that they are going to concentrate on: orthopedic implants and cardiac devices, and these are large global markets with high growth. Now, what Alkem has bought, they've bought multiple companies in ortho or in implants in India, which they're going to launch from FY27, and they're also buying Oculate, which is a heart device company. They're going to buy 51 to 55% of that company, and this will make Alkem third in the world in ocular devices, and has a big upcoming heart products also. Lastly, on the future outlook, when it comes to Alkem, medtech will become a meaningful growth engine for Alkem. They're expecting cardiac business to drive most of the growth, and they're going to aim for 10% market share. So overall, a big driver, growth driver for Alkem is, I would say, the next leg of growth is medtech.
All right, the next leg of growth is medtech. Thanks a lot, Varsha, for that. But it's time for a short break, and on the other side, we'll get you what you should buy or sell in the day's trade today. Please come back.
Some moments in life are lifelong. Some memories are lifelong. Blessings are meant to be lifelong. Trust is also placed lifelong.
Heart lifelong, love lifelong, bond lifelong, memories lifelong.
True love is lifelong, isn't it?
Love lifelong, bond lifelong.
We respect our loved ones lifelong too, don't we? Some relationships stay shining lifelong. Just like Tata Power Solar Roof. Best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff.
Welcome back. You're watching India Market Open. Let's pull up the implied open for you. You might see a muted start to the markets, which is not half bad considering that there are now fresh geopolitical fears that have come in overnight, especially after it seems like initial talks have not gone too far between Iran and the United States. But let's get in our conversations for this morning. Kush Bora and Parag Thakkar in our studios. Parag Thakkar back in our studios. So great to have you. And so much to unpack. And of course, the big theme continues to be AI. Kush?
Yeah. Just to prove that Parag Bhai and are not AI, I'm just going to do a high five with Hiral. Maybe we are, who knows? But I have to give it to you and the team. That was brilliant.
Yeah.
That was out of the box. That was unexpected. And that just hit the nail on its head where AI कहाँ है अभी और कहाँ जा सकता है. And one good thing out of it जो मुझे समझ में आया is that अब आप लोग बेफिक्री से छुट्टी ले सकते हो.
नहीं नहीं ज़्यादा लंबी छुट्टी हो जाएगी.
Already लोग छुट्टी में हैं.
No, but kudos to you and the team. Very serious.
No, complete credit goes to our production team who has put it all together and made this happen. And just to show that application, the idea was just to display what the hype is all about. And remember, this is at a very rudimentary phase. We did this in a few hours. Wow. So this can happen.
This looks like a future episode of Black Mirror, and it's actually mirroring it.
Wow! I was just thinking you were going to say this is a future episode of India Market Open.
Who knows?
Having said that, the fact is that is it a real investment play right now? Because you don't know if AI is going to change your livelihood, take away your job. At least you should make money off it when you can. Then that is the question. Any thoughts over there?
So Parag Bhai is obviously much better placed, for that. But one thing's very clear: this is the internet moment yet again, right? Where things will shift dramatically. This will become the new normal, right? And I am, while a lot of people talk about, job losses and how things will go, we've been through these technological shifts. Of course, there will be some rotations, but maybe people will get into more meaningful employment or, do something better. But this is definitely that internet moment where, we shift, a few orbits higher. So, yeah, investment opportunities. I was quite intrigued by what Sharad said, which is, at least in India, there are a lot of opportunities on the ancillary side rather than the direct AI play.
And Parag Bhai, just one more query is there, since he spoke about cycles, and that's why when cycles are there is .com bubble, there is a SaaS apocalypse, or whatever that term is called.
Apocalypse.
SaaS?
Apocalypse. We all practiced it. Yeah.
So a lot of cycles are there. Despite that, the large cap IT companies have survived. Right now, the question marks are still coming. So your view on that, now what happens?
No, so basically I am not a technological expert, and now you all have become technological experts because, and first of all, I would congratulate your production team and your efforts for doing this.
Shout
it was
out
a wonderful
to Prakran
thing.
Tiwari, our chief executive producer, who put it all together.
It was a wonderful thing. So I would say that I will just go by what industry experts are saying. So Infosys is saying that the amount of deflation impact due to AI will be offset by more services work, and which is again driven by AI. But more or less there will be a growth in FY27 over FY26, at least in the two segments what they have said, BFSI and energy and utilities, which is 48% of their revenues. TCS, again Mr. Chandra, whom I believe him, is a godfather of this industry. And he has said that Indian IT services will have a role to play and it will actually grow. So I would go by that, and that's why I've always
just a counter. Could he or anyone in that business say anything else? Just say.
I agree with you. I agree with you. But the point is, see, that
can that be the last word?
No, I am not saying that.
What is going to happen?
No, I am not saying that that can be a last word. But I see, basically, when this kind of people say something on a bigger, large platforms.
Agree.
Definitely, and as he said, definitely, Indian IT services has adapted to the changes and come out even stronger actually.
Very, very quickly, levels for the day and picks.
Okay, so very quickly, I still remain, in the camp where this is a buy on dips market. We're close to the resistance. Despite Nifty having closed higher, for the third straight session, I still don't think the risk-reward ratio is favorable, to buy right now. Buy on dips. Intraday dips have been bought, so at least you could use those, not on, gap up openings. Bank Nifty is where I have a slight concern. Like I've said, let me reiterate. I'm very bullish on Nifty and Bank Nifty from a medium-term perspective. Very near-term, I think the risk-reward ratio is not favorable. On Bank Nifty, very close to all-time highs, but HDFC Bank not performing, SBI on overheated levels. I think there could be a 3 to 5% correction, if not deeper, on SBI, and that's when you buy into if you want to buy afresh. So that's just a broad view on Nifty and Bank Nifty. Now, as far as stocks go, there has been tremendous action on the stock-specific side. I'll give a few updates, but before that, stocks for the day: Bank of Maharashtra, Nippon Life, and Lumax Auto. Some of these stocks have been doing rather well, but with the kind of volume accumulation and the positive uptrend, I think this could well continue. For Bank of Maharashtra, your targets are 72 and 75, with 66 being your stop loss. Nippon Life, by the way, something that we've discussed in the past, second target's been hit. So I think this could be a continuation of trade for very near-term targets of 1000 and 1020, but I think the strength is much stronger in these names. 960 is your stop loss. Lumax Auto, again a stock that we've discussed very widely in the past. Here too, with the recent momentum, 1725, 1760, these become your targets. 1645 is where you keep that stop loss. And I'll just take another 30 seconds for a quick update on a lot of names that we've discussed very recently. Torrent Power, target 2 hit. Cummins India, target 2 hit. HDFC AMC we discussed yesterday, but the first call was on 10th of February. There too, target 2 hit. And Union Bank, which we discussed just yesterday, there we've had target 1 hit. This is not to suggest that I'm great. This is just to suggest that the stock-specific action in the market is a plenty. Index would perhaps it just might consolidate. Even it might just see some profit booking. But the stock-specific action is where you really have to focus on.
Okay, stock-specific action is in focus, but so is the Q-commerce space. Let's talk about some companies and products and services which are tangible and real, that you can touch and feel, and Q-commerce is definitely one of them. Jignanshu Gore joining us this morning. He's director and senior analyst at Bernstein. Jignanshu, very good morning to you. And you've talked about the dark store picture as far as Q-commerce is concerned. Just outlay the basis for your report.
Sure. So one of the when you look at quick commerce as a retail business, the big question that keeps coming up in all our conversations is how far can the dark store land grab that started in 2024 last for the top 3 quick commerce players, and then everybody else now, including Flipkart, Amazon, etc., who are growing their network as well. So that's the basis of our report. We try to understand where the current locations are, where are they going, what is the potential in each of these which is already being serviced, and we come up with some very interesting points in our view. 3 buckets, right? One is we feel that in the top 8 cities that we define as sort of metro cities, there already are almost 2,500 dark stores. So that's an average of around 350 per city, with something like NCR very heavily penetrated, Bangalore and Mumbai about in the 350 to 400 range. So the next rollout of a lot of dark store networks should be happening in tier 1 and tier 2 cities and so on and so forth. But the viability of those dark stores, how number of those dark stores remains the question. So that's, I think, the second point. And interestingly, we think almost a quarter of people in Mumbai MMR are broadly ordering through quick commerce every month. And I think that was a number that surprised us as well.
You're saying a quarter of people in Mumbai MMR are ordering on quick commerce?
Yes. So if you see, there are around, so we have the backup presented in the report on how we come to this conclusion. There are, of course, a lot of assumptions here, given the same consumers might be ordering through multiple platforms. But almost 20 to 25%, at least 1/4 to 1/5 of people in Mumbai are being serviced by quick commerce in one shape or form. So either their household is ordering, somebody in the household is ordering, or they are ordering for themselves through one of the 7 platforms.
Pretty much interesting data which you have given. But Jignanshu, I want to know about the 3 players in this segment: Blinkit, Instamart, Zepto. What are they doing? Who is winning? Who is losing? Who is stable? What's the entire report all about?
So on the between the top 3 players where we have the data for the dark stores, of course, Blinkit has the largest dark store network, with Swiggy, Instamart, and Zepto broadly neck to neck in terms of number of stores. Part of this is because Blinkit has been more aggressive in capturing a larger part of the market through retail store presence, but also in experimenting the viability of quick commerce in slightly smaller towns outside the top metro cities. So because of both of this, Blinkit's network is sort of double the size of Swiggy and Instamart. And they are growing also faster. As we know, Swiggy, Instamart has slowed down their network addition in calendar year 25. In our view, so has Zepto. And they have focused more on improving their own unit economics at a dark store level or at an order level. Whereas Blinkit had that sorted before these two, and hence it has tried to replicate the business and grew the network as well. So today, in terms of dark store network, Blinkit is the leader and sort of increasing the gap with the other 2 players as well.
Okay. Jignanshu, then my question coming to you here is, good morning, Hiral this side. What is the impact you're seeing with this kind of expansion, this kind of usage, in terms of the profitability timelines of these companies? Because you're assuming the 2,000 orders per day is what I was reading. Now, if the competitive intensity continues to remain high because there is an overlap, there is no brand loyalty that continues between a Zepto, Blinkit, or an Instamart. Whoever is giving you a better offer, that's where the buyers flock. How are you looking at that aspect, and what's the impact you're seeing in terms of financials?
Yeah, so I think there are 2 impacts of this. So far, over the last 1.5 to 2 years, a large part of the growth surprise that we saw from both Blinkit and Instamart as the listed players came because the market was underpenetrated, and a quick sort of penetration seems to have happened. Behavior change to consumers seems to have happened in metros, where a large portion of the stores exist. Where we believe there is a broad saturation level in metros, where the room for growth isn't as high in terms of new stores or in terms of even acquiring new users, brand new users. We believe it is either about sort of getting users from the other platform, which you rightly said, Hiral, is about discounting, or it is about the other approach which Blinkit and Instamart have, and Zepto are all doing as well, is saying to the same consumer that I can offer you everything, not just groceries. So we can offer you apparel, we can offer you footwear, beauty, cosmetics, home care, and so on and so forth, and expand the share of consumer wallet at that stage. Having said both of these, I think unless the competitive intensity sort of reduces a little, it's tough to see a scenario where anyone will make money. This is similar to what you would sort of harken back to a food delivery or a ride-hailing app. So when there was so much intense competition, and hence it's tough for winners to emerge and make a reasonable amount of margins. So the competitive intensity in 2026 that we see has pushed out the margin trajectory for both Blinkit and Instamart, and that is why the stock reactions in the last 3-4 months have what they have been.
Jignanshu, to add to that, your valuation multiples, according to me, seem very steep. a 30 times FY30 adjusted EBITDA multiple for Blinkit, and a 28 times for Instamart. What are those key performance milestones, according to you, that these companies should hit actually to justify these aggressive forward multiples?
So even the forward multiple is just a small correction that while they are on F30 EBITDA, they have been discounted by 3 years to get to an F27, F28 numbers, right? So and then the WACC that we use is around 12+%. So just a small point there. But having said that, I do agree that one is this adjusted EBITDA multiple. What is expected of these companies? I think two things. One is the growth number should not crash. And the assumption right now built into the models is it does not crash the same way that it crashed for, let's say, the food delivery business, where it came down from 100% to 20% in the space of a couple of quarters. The second is the sustainable margin profile is possible at around 4.5% to even 5% of EBITDA. That's the range which is possible. So margin trajectory and growth, very simply put, are the two metrics which we expect the companies to deliver in order to sustain both the multiple as well as the share price.
Just Zepto is IPO bound. You have Swiggy and you have Eternal right now in the listed play. How are they stacking up in your view, Jignanshu?
I think it's very tough to comment on Zepto beyond what we know of their operations, given the lack of data as they are a private company.
Let's make it about Eternal and Swiggy.
Yeah, so I think Eternal versus Swiggy are very different stages of evolution. Eternal is more about they have a very clear idea of their business, of their processes, their positioning within the customers, and they have so I would say the most sorted operational supply chain. Swiggy Instamart is younger, and hence the trajectory is different. So Eternal's objective right now is capturing as much market share as possible without going into the red in terms of adjusted EBITDA. Whereas Swiggy needs to hit its milestone of contribution margin profitability, right? So what we expect to happen over, let's say, the next couple of quarters is, in terms of order volumes, the growth for both of them may slow down a little compared to the previous quarters because A, competitive intensity has increased, and B, they are both going after they both intend to keep the profitability intact, and hence we expect a little bit of slowdown but an improvement in profitability over the next 2 quarters, and that's the approach that they have taken. They've also decided that deep discounting on grocery is unsustainable, as they mentioned multiple times in their shareholder letters, which again seems to be slightly different approach from what either Zepto or Flipkart or Amazon are doing today to get market share. So we see two kinds of approach, and the listed players and sort of the unlisted players are behaving differently today. So listed players, better margins, but we expect lower growth.
Okay, listed players, better margins, expecting lower growth. Thank you so much for that, Jignanshu Gaur there, who looks at this very, I think, highly watched space closely on where the dark store pattern pairs out. I just want to address a story that you saw on your flashes, which is that Bill Gates will not be delivering his keynote address today. And let's see if we can pull up those lines, which were on our flashes as well. So basically, they've put out a post, the Gates Foundation, in which they are saying, after careful consideration and to ensure the focus remains on the AI Summit's key priorities, Mr. Gates will not be delivering his keynote address. The Gates Foundation will be represented by Ankur Vora, President of Africa and India offices, who will speak later today at the summit. The Gates Foundation remains fully committed to our work in India to advance our shared and development goals. Now, this is after a bit of back and forth about whether Bill Gates will present as well in light of all of the controversy recently in the United States around the Epstein file. So now that has been made clear. All right, let's get back to the point that we were mentioning on AI plays. And I think, Parag Bhai, this is what will be interesting for people to understand. What will happen with AI and all of that? We can keep debating and talking about it till kingdom come. Can you make money out of India's AI move today is the question.
Yeah. So as he was mentioning, there are various other infra plays also, right? Data center plays, the cable plays like Tata Communication, data center Anantaraj is there. I think Adani's are also putting up, Adani Enterprises also putting
in
up.
Sovereign, that also in sovereign data center,
Yeah.
so that's much bigger.
Yeah. So I would say that there are various opportunities which every new technology shift will throw, and so it is just not fair to focus on only IT services companies. There are a number of companies which will benefit due to this. Even I would say, just for the sake of it, even steel cement will also benefit. So much of data center is getting built in Andhra. So I'm saying that it will be a big benefit, and this is a new capex cycle, right? New segment capex cycle which India will see.
New capex cycle. In fact, on this, Nuvama, I was just reading a note right now on Hitachi Energy where they've maintained a buy. They've increased the target price to 26,400 from a 24,500. But the key highlight over here was that they're targeting a 15% wallet share in the data center business for a Hitachi Energy. Yesterday, all of these counters were also buzzing in trade.
Kush, I think the
Probably
capital goods segment also we discussed about. Good buying is starting to happen, Cummins India, and even you could say Thermax. Just look at the technical charts.
One of the largest portfolio stock which I have in my portfolio, luckily LG Equipment also benefited from it. Also they make compressors which also might be
just
going
a part of the
center.
ecosystem.
Yeah. So that was also up by around 6%. So, and we hold 7% in our portfolios, that particular stock.
That's LG Equipment.
LG, yeah.
Anything on this LG or a Hitachi Energy, Crompton that you like on the charts?
All of them. I mean, it could be AI play, could be more, but if you look at the momentum in some of these names has been phenomenal. I mean, Cummins is a stock that we've Cummins is a stock we've discussed a couple of times already. Yesterday, the volumes were practically double of the last, 20 to 25 days of average volumes on this one. Phenomenal moves on L&T. After that kind of correction that we saw in L&T, which brought it close to the 200-day moving average, it's been practically a one-way rally. And I think that the rally is just beginning. There is a lot of steam left here as well. So I remain very constructive. LG and Hitachi both, they've had a breakout on the back of fairly decent volumes. Hitachi not so much, but LG on the back of fairly good volumes. So yeah, this could very well continue for some time. Now the resistance levels become support levels. You could very well hold these with trailing stop losses.
Okay, now Soumit Sarkar on a mini break. So Hiral joining us with what's heard on the street this morning.
I mean, interesting names, Tamanna, and it's interesting to fill in for Soumit Sarkar as well, because to go and get that khabar is...
Are your ears buzzing?
Ears, everything is buzzing when you hear a couple of them, like really is this happening? But yes, Eternal Swiggy continue to be on our list as well, because sell flows have continued. 2 consecutive sessions of downtick is what we've seen, and what dealers are indicating is that there are potential short positions that are coming in on both these counters. So watch out for Eternal and Swiggy in trade today as well. Secondly, you have Aurobindo Pharma. Now, the Cipla ex-CEO is expected to join. Aurobindo. The pressure was there yesterday's session on the back of the US FDA inspection in Unit 7. It's going to be very difficult for the ex-CEO of Cipla to fill in terms of all of this that's happening at Aurobindo as well. So watch out for Aurobindo in trade. Secondly, Persistent System. Now, the AI play is absolutely in focus. Now, there is a buzz of a potential acquisition announcement that could be on the anvil from a Persistent System. It could be in the AI space. It cannot be in the AI space. It's anyone's guess. But it's a $2 billion acquisition that Persistent could be eyeing, is what dealers are indicating on this one. So watch out for that. And lastly, we have a Reflex Industries that should be on our list as well, because we're expecting positive development regarding some taxation issues that Reflex Industries was undergoing. Now, if that is resolved, you could see that up move that could be continuing. In fact, yesterday itself, the stock ended with gains of 6.5%. So potentially dealers are anticipating a positive development on this one. So watch out for these names pretty closely. But I think I want to talk to you about Aurobindo Pharma as well, Parag bhai. Any view on this one? Yesterday, you had the US FDA inspection report that did come in, where they found bird droppings in their Unit 7. Couple of days ago, it was another unit that was inspected as well. And we were talking to a pharma analyst who was saying that if they have to have extensive remediation, it's going to be a 2 to 3 year period. If that happens, it's going to be a major impact with regards to UK and US market revenues.
Yeah, so basically, I would say that this was a very critical plant for them, Unit 7. And I would not have imagined that this plant will have this kind of problems. But I am being told that actually the data integrity issues have not been that big, that this plant will not be able to supply the existing products which they are supplying to US. They might not be able to supply new products. So the existing revenues does not get affected in a base case scenario. And from that perspective, if you see, it is a very cheap stock, very, very cheap stock. I would say 15 times only, and debt-free company. And there are a lot of exciting offerings coming up, biosimilar, injectables, various other opportunities coming up. So I would say that we have 1.5% in our portfolio, and will be a buyer on dips in this stock.
Okay, Aurobindo Pharma in focus. So is Paytm. Now a lot of news flow around Paytm, and especially as PhonePe gears up for a D-Street debut, will we see a fintech face-off in the offing? PhonePe, which is targeting a valuation of around $15 billion, may well aid a re-rating for Paytm, with the company seeing valuation catch up and good earnings boosting sentiment. I'm going across to Sharad to explain why we may see a re-rating in Paytm because of the possibility of a new entrant.
Yes, exactly. And of course, investors might remember this jingle of Paytm Karo. Maybe this might be valid now. For the 2 sessions which we have been observing the stock, it has been closing on the day's high level for the last 2 trading sessions. So we dig a little bit, and there is a trigger for the re-rating coming in. There is a valuation catch-up to PhonePe that's going to be there. I'll be explaining you the maths also behind it. RBI's approval is expected for their wallet business, and this was also covered in the Khabar segment by Somit. The third one is the delivery-based buying has started. The accumulation has started in the last 2 trading sessions. As per my calls with the brokers, they have suggested that more buying is expected to come in the coming days. Apart from this, also showing a good strength near the 200 DMA levels as well. That's the bounce happening. So technically, fundamentally, there are important positions looking for re-rating for Paytm as well. But the Q3 con call was something very much important. Of course, the Q3 numbers were very strong. The Q4 also, the commentary is coming good. But the promoter, Vijay Shekhar Sharma, he had stated important points, and that is the revenue profit that's going to keep getting momentum going ahead. Also, looking at the second point which he had mentioned in the con call is the PDIF initiative. That impact will be offsetted by high margin products going ahead, and there was a big downtick in the fall. And remember, he had stated this Paytm wallet will be back, and now if the RBI approval comes in, we can see a good up move. And also he's more sure to focus on the core business model. That's something, the commentary coming in, and a huge upside left for merchant business. So these 5 points was very much important in the con call, and that's a very important revision for you. But remember the valuations, that's what the street is looking like. PhonePe versus Paytm. Current valuations, we converted in dollars, it's roughly $8.5 to $9.5 billion. Expectation was on the higher side, but the monthly active users, of course, PhonePe is having more. But remember, Paytm has a different business model as compared to PhonePe. Other important trigger is the EBITDA. Paytm is EBITDA positive, PhonePe is EBITDA negative. And the key differentiator is they are a leader in the UPI space in terms of volume as well as value, but there is a diversification at play for Paytm as well. But they are going head to head, and the street is expecting there might be a valuation catch up for Paytm when it comes to PhonePe.
Okay, so is a Paytm re-rating on the cards? I want to get Parag Thakkar's view in on this. You heard some of the points that Sharad made, and the largest one seems to be that you have now another company to come in and actually be compared to. Would it first of all be a fair comparison?
No, basically my view in the past, what I have always practiced in my fund management is that if there is some IPO coming and the same sector goes up in a euphoric manner, you sell that. Okay. That is what I have always followed, and luckily I have been proven right. But in this case, I would agree that Paytm performance is improving. So I would not do that here. Of course, I don't hold it also, but I'm just saying that the performance I have been seeing, that Paytm performance is gradually improving. So I would not apply it here. But I think, this space is very interesting, of course, and
Very crowded as well, though.
So basically, see, right now you are in a flux in the market, right? For example, the boring businesses like hair oils and of like Dabur and Marico, nobody is coming in. They are making good money. They are also going in double digits. But that market does not like, because market feels that it is a boring business. Market likes Eternals and Swiggies of the world and quick commerce and Paytms of the world, where there is again, because you are giving so much of market cap that the competition keeps coming, right? And you are giving money also to them. So, as Hiral said that people are selling Eternal and Swiggy ahead of Zepto's potential IPO, right? Because Zepto is also now again going to get money. So everybody is getting money. So finally, I hope at least the customer benefits.
At least the customer benefits. I think the customers anyway have been benefiting with more and more options, and digital payment landscape has changed all of our lives. Kush, on charts for Paytm very quickly.
Yeah, not a bad setup. The 200-day moving average acting up, the year-long, or rather, the downward sloping trend line resistance that started this year, that had been taken out on Thursday. So yesterday also, if you remember, we spoke that Paytm looks like an interesting buy, could continue. Risk-reward ratio, I would say, is fairly favorable. So 11.25. That being your stop loss, on the way up about 12.50, and then the 13.30, 13.25 zone, which has been a very tough line for Paytm to cross, very much in action. So yes, you could continue. Momentum also fairly decent on this one.
Okay, TCS in focus as well, and an announcement, exchange filing this morning actually, saying that the Tata Group and OpenAI have come together for a foundational partnership for advanced AI transformation. Now this comes on the back of Infosys announcing its partnership with Anthropic. Let me go across to Jasmeet for more details of the tie-up and its significance.
Well, Tamanna, thank you for that. As rightly said, this thing comes immediately after the Anthropic and Infosys collaboration. And maybe quickly we can understand what exactly in this filing of TCS. Now, what TCS has done is TCS has collaborated with OpenAI at various fronts. Firstly, they want to deploy the ChatGPT option to a lot of their employees and make them advanced, innovative in that stance. Further, they want to also collaborate with OpenAI to launch AI infrastructure programs for their clients. And they also want to make a go-to-market strategy for their clients to make new AI models. Alongside that, OpenAI to also support the data center which the TCS has announced in the last quarter, where they want to expand it from 1 gigawatt to up to 1 gigawatt from the 100 megawatt capacity, and it's a multi-year partnership with OpenAI. All in all, well, Sam Altman also mentions, the CEO of OpenAI also mentions that they see India as a good market when it comes to the AI, and they want to scale in India market with, given the supports of policy and government, they see it's a fairly ideal for them to partnership with TCS and scale going ahead. Well, now it's a wait and watch of how does the other player come out with their partnership, as we have already seen partnerships of HCL Tech, Infosys and TCS in the picture.
Okay. TCS, now, will TCS get the love that Infosys got, is my question. Because Infosys got that love, but for a day. After they announced Anthropic, and everyone is like, wow, you're on top of the AI game, but then the next was like, no,
that
not really.
I expected that it will fade away.
Expected.
Yeah, exactly. But I will still say IT companies are good gradual SIP kind of buys on every dip, where still this entire dust settles down.
If you want SIP kind of returns. No, I'm asking because, we have different kinds of viewers watching this program right now.
Absolutely,
So they should know the other side of
so basically,
the outcome
if you average it out on a lower price, and if your average is very comfortable, which is 16, 17, 18 P for Infosys, TCS, Tech Mahindra, LTI, Mindtree kind of businesses, then you might get 15% CAGR return.
That's what I'm saying. The PEG ratio is something which everybody talks about. So,
but say you have to see it from other angle also. No? The 4 to 5% dividend yield is also there.
Exactly, it's in the highest levels.
So basically, a contrarian value investor will look at dividend yield. A growth investor will say that मुझे क्या मिल रहा है, growth तो है नहीं. So that is a debate it is going on. But finally, they are great managements, great balance sheet, great cash flows. So you cannot ignore them.
No, the other than debate, if we're talking about, and I'll get Kush's view on TCS on the charts, the whole sort of complaint, quote unquote, was Indian IT companies are not really on top of the AI race, right? That was the criticism. And there's a news report this morning that TCS is going to present to the Tata Sons board what it's doing on AI, because they were questioned about the stock price fall, etc. The response has been, let me tie up with the hottest AI companies. Infosys with Anthropic, TCS with OpenAI. Is that going to be convincing enough for the question that they needed to answer, that are we on top of the game? That is what we need to think about, isn't it, Parag Bhai? I know you're
in
coming...
In short term, the market will not get convinced, in my view.
No.
In medium to long term, market will have to get convinced. That is my clear view.
Just simply because of the way the business is run.
No. The way they will unfold their future plans. See, just an announcement will not excite market because market is in a denial mode for IT companies.
That's the line.
That's very important.
The market does not want to see this. Market does not want to see FMCG businesses boring, ये भी boring, सब कुछ boring है, right? जहाँ पैसा नहीं बनता है वो exciting है. तो ठीक है. So let it remain like that. But it cannot continue for long. You cannot ignore money making, profit making, high ROC businesses for long.
Okay. Kush, on charts, TCS, and actually the IT pack.
Yeah, great. I was actually going to start with that, top-down view, which is, see, we've maintained this level, 31,000 on the Nifty IT index. We've seen the index rebound multiple times from that level in the last year and a half, right? So if it comes to that level, again, if you see that follow-through of that dip, which we called the dead cat bounce day before, and then yesterday we saw it, fizzle out. If it does come again close to those levels, becomes a very interesting buy. Even at these levels, like Parag Bhai said, SIP mode mein kar sakte ho. Don't expect a V-shaped recovery. Stocks like TCS and Infosys and even Persistent for that matter, don't stay in oversold territories for too long. There could be a time-wise correction. You might get a mild uptick from here. I don't expect a V-shaped recovery. The risk-reward ratio, though, from 6 to 12 months, maybe longer, time horizons, remains very favorable. But again, if you're trading momentum, you've got better place. If you want to hold, buy and hold for a long time, then yeah, these are good levels to start accumulating.
Okay, so that's with regards to your broad-based large-cap IT companies, right? But now you're seeing a lot of your mid-cap IT companies also who forayed, got onto the bandwagon where they are doing tie-ups. You have a NetWeb, which we were looking at with NVIDIA. Hexaware was another one which has already done a tie-up. So how are you looking at the broad mid-cap, small-cap IT companies right now in terms of charts?
So, speaking about these two in particular, NetWeb stands out. NetWeb stands out, and it does for a very different reason. Right? It's had a correction. It's had a good run, by the way. Before that, it's had a correction which has gone into a long consolidation phase. It's been consolidating for the last 5.5, 6 months nearly. Right? The retracement also from the highs is close to that 61.8% golden ratio that we speak about. So yes, this is one stock that I would keenly be interested in. 3030, 3035. Those are your support levels. Those are your stop losses, fairly deep. But then the risk reward ratio is also favorable. On the upside, you've got 3700 as the first level, and then about 4000. So like I said, this is the one that stands out because it's not really rallied as much before, and it's not corrected also. So it's holding its ground, gaining some in fact in the last couple of sessions. Hexaware I would avoid. This looks very much like what's happening with the rest of the IT pack, which is Persistent in TCS.
All right, so that's the view coming in from that. But now we are having Ajit Mishra, SVP Research at Relegare Broking. Good morning, Ajit. Always a pleasure to have you. Looking at the markets, Nifty Bank touching distance of all-time high levels, and even Nifty technical levels look good. But we might see some kind of flat opening or slightly negative opening. Your views on the indices and then your technical picks as well.
Yeah, good morning, Sharad. Good morning, everyone. So what we are seeing right now is that the banking is doing the major lifting while others on the rotational basis are supporting the market. So what we are seeing that after the more of consolidation tone, eventually we see that some of the heavyweights, in the later half of the session, help the index to manage or extend the positive tone from the last 3 trading sessions. Yesterday, we could manage to cross this hurdle of 25,800 mark. So eventually, we are inching towards 26,000 mark, which is the strong hurdle based on the price action as well as the derivative data. Today, being the Sensex expiry, obviously the volatility is likely to remain high. But since banking is closer to its record high zone, and then we have trendline resistance are also around this 61,500, 61,600 mark. There could be a bit of a breather in banking today, and the other sectors like energy, metal, auto, alongside with select counters from the pharma space also are likely to contribute much. So broadly, the tone looks positive, but the move is going to be gradual and grinding. So 26,000 is what we are eyeing in Nifty. So one can continue to look for any dip, let's say close to around 25,700, 650 zone as a buying opportunity, with 500 as a stop loss and 25,900, 26,000 as a positional target. And for recommendation part, since our view is positive and we feel that banking is likely to maintain this positive tone amid slightly consolidation every now and then. So Axis Bank from the private banking space is something wherein we are seeing fresh traction after this recent consolidation. So 1475 is what we are eyeing as immediate target. So with stop at 1325, Axis Bank is still a fresh buy. Bajaj Auto from the auto space, yesterday we witnessed a consolidation range breakout with decisive price action and volumes. So here also we are anticipating that this up move is likely to continue. 10,700 is what we are eyeing as the immediate target with stop at 9,600 mark.
Bajaj Auto and Axis Bank. What's moving in the pre-market session is Oil India. We should look at ONGC as well because oil prices spiking, crude prices spiking nearly 4% overnight would help both of these counters in the reversal of trade, and we spoke about this at the start of the show. Look at an MCX. So MCX has essentially dropped its extra margins which they had put out effective today. Remember when gold, silver prices were going all over the place and spiking, MCX had added extra margins on both categories for future trade. They have removed that. So the 3% extra margin in gold futures is scrapped, and the 7% additional margin in silver futures has also been scrapped, which is why you're seeing some kind of movement in MCX. Watch out for that. Coforge is the other one, and it's an important brokerage note, which is why you're seeing Coforge seeing some action. We talked to you about Intellect Design, and we'll hear from the company also on the show. They have this new the new tool that they have released is for banking services and has 500 agentic bots. I don't know if I'm saying that correctly, but 500 agents which are going to be part of it. So watch out for Intellect Design as well. Cochin Shipyard order win. That's what's worked for Cochin Shipyard. But let me go across to the big brokerage call of the morning, and CLSA has maintained a high conviction outperform rating on Coforge. This is perhaps why you might see the stock in some action when we open as well. Varsha joining in with the rationale and all the details.
Well, 77% of upside potential is what we are talking about, and Coforge is the top pick of CLSA, and hence they have they have a high conviction outperform. Now the whole note is about the Sabre risk, which is under control as per CLSA. Now Coforge is heavily dependent on Sabre, which is a global travel technology leader. Recently Sabre faced financial stress and lowered its growth guidance, and hence that concerned investors. But CLSA is saying that the market has overreacted while Sabre is struggling. The risk to Coforge is manageable because the services that Coforge provides are mission critical. Now Sabre's 2026 outlook matches what a market was already expecting. So there shouldn't be any new nasty surprises for Coforge as per CLSA. Now Sabre has a high debt and solvency risk heading into 2029, but CLSA believes that even if Sabre's restructures its debt, the 13-year contract provides Coforge a very long runway of growth. Coforge has been aggressive when it comes to the AI strategy as well, launching platforms like Quasar and Agent Sphere. They believe that AI will create more work, leading to more higher margin services for Coforge. Now, why the outperform rating has been given now? Because valuation, if you see, the stock took a hit recently due to Sabre's weak earnings, and CLSA thinks that the current price is a deal, and hence we are talking about 77% of upside potential with outperform rating by CLSA.
So, Ajit, what do you make of a Coforge? Coforge, and let me add a TCS, because news this morning from TCS also about a tie-up, Tata Sons tie-up, actually the entire group with OpenAI. So I want to pull up the TCS stock also for you, and let's get Ajit Mishra's view on Coforge and TCS.
So, Tamanna, after this slide, definitely the stock looks oversold, both TCS and Coforge. And Coforge comparatively looks better, considering that we are still very close to the record high zone in terms of the percentage decline. But for any decisive sign of recovery, we need to surpass this hurdle at 1500 mark. So in case if we manage to surpass this hurdle in the opening tick, probably we can see a gradual recovery towards 1600, 1680 area. So in case if somebody is having long position, they can continue to stay put with 1320 as a stop loss. For fresh buying, one should wait for a close above 1500 mark for decisive action. TCS, on the other hand, on the price parameters, is underperforming within the large cap IT space. And for that underperformance to negate, we need a decisive strength or closing above 2900 mark. So as of now, it looks sideways to negative. So if the view is short term, preference should be given to the HCL Tech within the large cap IT names.
So HCL Tech is the pick coming in from Ajit, but moving on to the metal space, so that has been also buzzing in trade. The Jefferies has come out with its report on Hindustan Zinc. They've cut the target price to 700 versus 750 earlier. They've stated that the global silver market is expected to remain in deficit for 6th consecutive year in 2026, though the shortfall may narrow versus 2025. Overall, the demand is likely to be broadly flat, with rising investment demand offsetting weakness in industrial demand. Global mine production is expected to peak in 2026 as well, and they're seeing 6 to 7% EPS cuts on lower silver prices. Kush, of course, you have been bullish when it comes to the positional setup of the metals, but an EPS downtick coming in from the brokerages. Will that change your thesis?
So look, for me, Zinc, Copper, both of these have been stocks that have run up quite a bit. They deserve a bit of break, so to speak. So this consolidation could well continue. Do I believe that there could be a next round of rally? Very likely. But I think that there could be a brief time correction that could come about. So I would look for consolidation in these names. As in when that uptick resumes, you could get into it. You don't have to be the first one to jump in and buy the trade. But yeah, I mean, right now there is consolidation on the cards. Volumes also thinning. So yes, there could be some more sideways movement. 565, 570. That's the support zone. If anyone's been holding on to these, that should be a stop loss.
Interesting. And Parag Bhai, anything in the mid-cap space which you are seeing it's getting attractive? Because yesterday and even day before yesterday, the mid-cap indices were doing really well. Anything, any sector, any stock which is good?
So it will be very stock specific, I would say. So LG Equipment, as we discussed. The other one is Aadhar Housing, which is doing well, growing at 20%.
It came out with its analyst meet also.
2 times price to book with 4% ROA, steady business, asset quality is fantastic, 25 bips credit cost. So many things, and of course, if now the stocks like Dabur has also become something which is 90,000 crore market cap only. That I have spoken yesterday only. Yeah. With this new India business CEO Harjit Bhalla coming, I have got fantastic feedback about him. And stock has not done anything from last 6 years, trades at 40 times. I think it's a no-brainer in my view. Nothing to lose in this stock because the stock has anyway not done anything. Now we are looking at mid-teen EBITDA growth in Q4 and the new energy coming from, and I got excellent reference.
Yeah,
from
but
that.
if it's done nothing in the last 6 years of stock, and the earlier CEO has actually been promoted to a global role. So I don't know how much one executive change can do.
Plus earnings are also at an inflection point. For example, the beverages part of the portfolio, which was growing in a negative 14% negative growth, it will now stabilize from this quarter. That's what they have said on the con call.
On the call. Okay, I want to just draw your attention to the Nifty IT. Even as we have just 4 minutes to go for opening, and we were talking this morning when we were talking about factors for the day as well, and how you might see a reversal in trade in the Nifty IT. I mean, Coforge in that sense leading the pack, but you have Wipro, Infosys, Emphasis, all of them coming through. Now, here's the key. Is this an opportunity to sell your positions or now accumulate? Because here's where it gets tricky. Kush, I'm going to come to you.
No.
Buy,
you don't sell.
buy
You don't sell at these levels. Definitely, you buy at these levels for long to medium terms, perspective. But you definitely don't sell at these levels. So that is one thing that's very clear. As far as the momentum bit goes, clearly missing. So you don't buy for a trade. You buy for medium to long term. Absolutely. All of these are oversold, and these big boys will not remain oversold for a very long time.
So IT, private sector banks, and FMCG, I think these are the 3 pockets where I feel that you should not sell. If you cannot buy, it's okay. You should not sell.
What is your top call, IT?
So IT, Infosys, TechM, TCS, LTIMindtree.
These are your top 4.
And of course, Coforge is also following in Coforge. I have, in fact, on your show, I have said that I am bullish at 1600. I'm still bullish.
At 1600 and still bullish at 1400 as well. What about you, Ajit Mishra, your top IT picks? Because IT looks like it's resurging today.
So Tamanna, I personally follow the relative strength, principles, and basis that HCL Tech, it was among the top performing name before this carnage also, and still we are seeing that the stock is still holding its long-term averages on the weekly chart. So in case if there will be any recovery, I expect HCL Tech to lead from the front. Then from the mid-cap IT name, Persistent also looks very strong on charts. Means after this failed breakout from its record high, we are seeing bit of a consolidation after this marginal dip. So here also we see the potential of stock again inching towards the record high the moment we cross 6,000 mark. So both HCL Tech and Persistent something that you should keep on your radar.
Pull out NCC, and we're seeing a significant downtick. We had earlier mentioned also in the show that when these announcements come, the company is debarred from NHAI and one of its unit also for the next 2 years. It's showing almost 8% downtick coming in. And of course, we had seen that in PNC Infratech, and Hiral had also mentioned it was KEC International. Exactly. Yeah. Parag Bhai, just a quick view on that, NCC.
No, so I'm not sure about this debar. See, this company has a very long track record of doing, and they have been very well disciplined throughout the cycles. So this particular news I have to actually go to. I don't hold this stock, so I don't track it very closely. But this kind of debarment actually keeps coming for various infra companies, and that's why actually I have stayed away from entire this EPC pack. Okay, whether they are good companies, but somehow it's unfortunate that this keeps coming. For example, KEC International, this happened with reference to power grid orders. So I have stayed away from this, and these are very working capital intensive businesses, which I actually don't like.
Okay, so very quickly, at this hour, any view on HUL and ITC? Yeah, quick view is always technical. Yeah,
we'll have to wait for that. I think Kush's AI avatar was answering that for a second. Okay, here are the top rates this morning. Well, don't worry if it's real or not, because you're going to feel it on your portfolio that you have a slight uptick, as the implied indicated, on the Nifty 50. Actually, it's not a bad start to the morning after the recovery that we saw yesterday midday. This seems to be continuing in that trend. The advanced decline ratio also looking positive. I want to pull up the Nifty IT, please, if we can. You have the bank Nifty here completely flat, but Nifty IT is the story of the morning. And if you had tuned in this morning, you would have heard us say that you're set for a rebound, especially looking at what's happened in the US markets, where there seems to be a sense now that the sell in IT has been overdone. That's why you saw your mega caps also recovering, and this is the trend you're seeing in Nifty IT as well, about 1.5% up. I'm actually going to pull up the internals of the Nifty IT, but after I get the heat map up, let's get the Nifty heat map up, and that's pretty much dominated by IT stocks. So you will likely see them all on the top row. Of course, along with ONGC. Crude prices have spiked nearly 4% overnight after the US Vice President J.D. Vance has come and said that the United States reserves the right to strike at Iran. Their talks don't seem to be going very well, or maybe it is another sort of a strategy in the middle of those talks to threaten them. But 2% up on ONGC, HCL Tech, Infosys, Tech Mahindra, TCS, Wipro, the entire lot there. TCS with that announcement for tie-up with OpenAI definitely helping. Infosys finding some love again. Hindalco also looking decent. Remember, steel stocks were flailing, and steel is now seeing a comeback of sorts. Dr. Reddy is expected to be over here. They have a strategic foray into a hormone replacement therapy segment, which strengthens their gynecology pack completely. On the losing side, you have some consumption names. Indigo, about 1% down. Not massively, but Indigo about 1% down. Nestle seeing some pain. HDFC Life, Apollo Hospitals, Adani Enterprises. These are some of the ones on the losing side. But overall, even Stevens on the Nifty. And it's really, let's pull up the Nifty contributors, because when tech is firing, even if banks aren't really, it can still be managed, and that's what you're seeing, which is why a spot of green on the Nifty. SBI also contributing to the gains there, but Infosys and TCS pulling most of that weight. Reliance Industries maybe because of what's happening with crude prices, seeing a bit of a dip. And Indigo as well, again, for an airline which has to import crude prices going up, not good news, and which is why maybe you're seeing that on the other side of the coin. Financials also not doing too great, but broader markets and stock specific will be interesting to see, Hiral, and especially what's happening there.
Absolutely. I think stock specific action is going to be interesting. And if you look at broader markets as well, 2 sessions is where we've seen good gains coming in. Today, again, it started off slightly somber. We're seeing 0.2% kind of gains on the mid-cap and the small-cap index. But usually the trend has been that it plays a catch-up in the second part of the trading session. There you go. See, small-cap is continuing to fire. 0.3% higher on this one as well. So good moves there. Let's just look at the sectoral heat map, because the breadth is absolutely in favor of the bulls. That's what is evident. And in terms of individual sectors, IT, as Tamanna mentioned, metals, second day where the catch-up has continued. Defense is seeing that buying interest. Auto has come back today after that kind of selling that we've seen in yesterday's session. But real estate, consumption, private banks, slightly on the weak foot right now as we speak. But clearly, still it's more of greens versus reds. And if IT continues to be the way it is throughout the day, that support will continue for the markets. And likewise, if your banks start participating as well in today's session, especially the private banks, you could see this up move that could continue. Overall, if you see in terms of individual counters, on the back of order wins, Cochin Shipyard, that is going to be one that we should be watching out for as well. Let's see what that counter is doing in trade along with the BL Kashyap. Both of these counters, strong order wins. BL Kashyap was on Tamanna's list, 8.5%, 9%. Up move coming in on that one. Cochin Shipyard, 1.5% there. DCX Systems and Page Digitex have also seen order wins along with the Tejas network. Page, yes, reacting. No major moves coming in on a Tejas. And a DCX Systems is another one which did see an order win. Now, Brent crude has jumped on the back of it. ONGC, Oil India, both of these counters are in focus. Some respite coming in for these names, 2% up move seen. NCC, NHEI has actually bought the company for 2 years, 3%. Initially, we did see 8%. It has actually settled down at around 3% right now. Rallis India has entered the aquaculture business, but no major, respite coming in on that counter. Tips, your GST searches have been conducted on the back of, on the accounts and in terms of the offices, but the stock not really reacting too much in terms of Tips Music as well. And you have a MCX where we're talking about extra margin in gold and silver has been removed, and that stock is up nearly 3%. HEG, the promoter buying has continued. Now, HEG Graphite, both these counters were seeing some strong moves in yesterday's session. Today, it's slightly, probably going somber in spite of the promoter buying in terms of HEG. Coforge, Hinsing, both of these counters, different reactions on the back of brokerages. Coforge, 1.5%. Hinsing is seeing gains of 1.5% as well. And Intellect Design, it's the AI play that continues, and that stock seeing gains of nearly 2%. So very interesting names. The breadth is in favor of the bulls, Sharad, but anything else that you're spotting in terms of individual stocks right now?
In terms of individual stocks, there's a stock or effects industry. The good gap up is coming. It was in your herd on the street also. Hiral had mentioned, if you could just point that out, Reflex Industries, there's some action happening here. Positive developments might be coming in regarding the taxation developments. So that's something to watch out for. But apart from that, let's pull out Eternal and Swiggy to see what reaction is happening there. Of course, the technical chart setup we see was a bit positive, and now we're seeing some reversal happening in Eternal as well. Swiggy also almost 1% up in trade. Kush, quick view on the technicals for both of these stocks?
Yeah, so I think right now, from a very near-term perspective, both of them are seeing some selling pressure from slightly higher levels. So I would avoid these for trade. But as far as positional bets go, avoid Swiggy, buy Eternal. It's very interesting to see some cooling off on Bank Nifty. I think that could continue. I'll give you the same. I'll just quickly give you the reasons for that. SBI massively overheated. HDFC not performing. PCR at 1.5. And the volumes are on a relatively lower side, especially considering the fact that this is the week, penultimate week before the monthly expiry is when you have rollover activities. Especially when you compare to that, the volumes on the higher side are a little muted. So, like I said, overall the setup's positive, but for any fresh trades, buy on dips is the strategy on the index, especially Bank Nifty.
Okay, let's just get one quick view from Ajit as well. Ajit, what are you spotting once markets are opening?
Like what we've discussed at the beginning, that banking might take up, either the other sectors might follow on. So across the board, if you see that be it metals, auto counters, Bajaj Auto was the recommendation that we've discussed at the beginning. It's holding well, it's inching higher. Then we have Titan also, Tamanna, which should be on your radar, considering that after this strong move post results, we are seeing a bit of a consolidation. So still we have more rooms on the upside, considering that it was a long consolidation range breakout the stock has witnessed in the recent month. So gradually, let's say towards 44, 50, 4500 is something that the stock might test. So one can even accumulate Titan at current levels with 4150 as a stop loss. And among the IT packs, since we were discussing in the morning, NetWeb is showing noticeable strength and momentum as well. The stock is already up 6%. So in case if we see any cool off towards, let's say, 3550, 3560 zone, here also you can look for long positions with 3400 as a stop loss and 3800 as the immediate target.
Okay, so NetWeb you would look at favorably today as well. What about anything in terms of those hit by crude prices? Because that's quite a volatile movement. Would you look at an Indigo today? Would you look at an RIL, some of those?
So Indigo is still trying to form a base after this sharp slide that we saw in the recent past. I feel that this consolidation might continue. So it's more of a time-wise consolidation that we are seeing now, because price has somewhere stabilized. For Reliance, we feel that a hurdle close to around 1460, 1480, that might continue to carry the upside in the near future. So both counters should be considered as an accumulation candidate, not as a short-term buying bets. If you are okay with that, let's say 10 days to 15 days kind of time horizon, you can start accumulating even at current levels.
Okay, thank you so much, Ajit, for speaking with us today. Time to bring in a very special guest this morning into our studio, Nimesh Chandan, Chief Investment Officer of Bajaj Finserv AMC, joining in. Nimesh, very good morning to you. The two buzzwords right now, AI and IT. And I'm wondering how you're looking at it, or are you sticking to the straight and narrow, or, as a regular guest on our show, Parag Thakkar says, the boring stocks?
Actually, if you take any technology shift, any major technology shift, it creates opportunities for some and it creates some problems or challenges for some. I think overall, India will actually benefit from AI. In terms of IT, there will be some areas where the efforts, let's say, will be reduced. In some areas, there will be new projects that will be coming in. Now, if I take the impact on stock prices and say divide it into three parts: technology, fundamentals, and behavioral factors. Technology, it will create some opportunities, but people will wait to see exactly what AI can deliver and take a judgment on that. So there's some uncertainty there. On fundamentals, most of these large, at least IT companies, were growing between 4 and 8% revenue growth. Even if there is a slight decline there, then people start questioning the valuations there. So the growth anyway was a little slow, and now there are questions on that. The third part is typically how crowds react when something like this happens. When there's uncertainty, people factor in their worries in the valuation, which means the valuations fall. So even if you are seeing from here on earnings not really changing or earnings downgrades not as much, we'll definitely see some valuation pressure. And we've been at Bajaj Finserv AMC, we've been underweight on IT for some time. So with these reasons in mind, that
so
there
even
could
the
be some
current valuations,
compression.
just to get that clear, even the current valuations, which some have described as mouth-watering, are not looking exciting to you right now, of some really stellar, top-notch blue-chip IT companies?
When I look at their dividend yields and cash flow, they look attractive. But when I look at growth, which is also an important component of the valuation part, it's not so mouth-watering.
Okay, what levels in terms of valuations, if you have to give a broad range for the large cap IT companies, do they become attractive? Because we have been having this conversation over the last 2 to 3 days, and a couple of analysts are not happy with the way price to earnings to growth ratio, the PEG ratio, is concerned for IT companies. Anything that you would want to add on that front?
I think you've hit the nail on the head that it's a PEG ratio that most people are worried about, that there are other sectors which are growing at a faster clip and available at similar or probably slightly premium valuations, but because of the growth it justifies. higher growth companies by 2008, 2029, 2028, 29 valuations, they will become attractive then compared to IT companies then. So I think the PEG is the issue. Now, whether there can be a bottom in these stocks, yeah, probably they may not decline much from here. Now, we are bullish on the market. So I would want a portfolio which participates in the bull market. So till the time these worries sustain on IT sector, they may not give me that kind of gain. So I find other sectors, or my team finds other sectors more attractive to be in.
Okay, so categorically bullish on markets, but not on IT.
Absolutely.
Which is one of the heavyweights that contributes, right? The other sector that contributes to that kind of bullishness, when you have to just look at the large cap universe, is your financials. Where are you in terms of financials right now? And if you have to get that divide between the PSUs and the private banking space?
So we are bullish on the economic cycle. We are seeing upgrades in GDP growth and economic growth. We are bullish on the profit cycle. We are seeing corporate profits being revised upwards. We are bullish on the interest rates or the credit cycle. Interest rates have come down, credit is picking up. When these three cycles do well, markets typically do well once there is a change in sentiment. And I think the sentiment has been under pressure. Now, whenever these three cycles are doing well, you go bullish on cyclicals like financials, industrials, and materials. And these are the sectors we are bullish on. So financials being part of that, we are quite bullish. We have tilted the portfolios more towards private banks.
Okay.
Both large as well as mid-cap private banks, which are now having access to large capital, and reduced a little bit on NBFCs and PSU banks.
You know, I'm just wondering, when you talk about corporate results as one of the three reasons, there seems to be a bit of a mixed view on that as well. Are corporate results actually looking as good as they are optically? Is there some of base case which is playing through? Has that tough corner been turned? Would you say in large part corporate results have been better than you expected?
So we look at slightly longer term rather than just one quarter. This quarter has been satisfactory, I would say. I'm not saying there's too much excitement, or I don't think there have been many misses also.
If I look at the last 4 quarters, then it looks more depressed, doesn't it?
So let's look at the trend. So in say FY25, Nifty earnings grew by about 6.5%. FY26, we are likely to grow at double digit, somewhere high single or low double digit, 9 to 10%. Next year, the projections are between 14 and 17%, depending on whose estimates you are taking. Now, I can see clear acceleration there. And all the changes that have come in the economy, in the fiscal policy, in the monetary policy in the last year, will start showing the numbers in businesses in the coming year. Consumption has triggers, capex has triggers, and government spending also continues. So I'm quite bullish in terms of cyclical.
Will this be an earnings-led rally from here on? And if that is the scenario, are you seeing any revision or upgrade in terms of the valuations? Is there a re-rating possibility in terms of Nifty?
It is always an earnings-driven rally. So if you look at the longer-term Nifty movement, it coincides very well with the earnings growth of Nifty. So whenever there is an acceleration, you actually see Nifty performing better. And compared to the time correction that we've gone through in the last 1.5 years, now the valuations are also attractive.
Okay.
What about the broader markets? Do they fit in with this kind of a move? Because you've seen that cycle turn there as well.
Yeah.
And the earnings growth, I was just looking at the small cap, I think what is 35-40% in terms of profitability. Your mid caps is somewhere in that 15-18%. Large caps is still lower than that. Is it going to be the broader markets?
So in December 24, small cap earnings were not doing so well, but valuations were very high and people were so bullish on small caps. Now, 1 year down the line, small caps earnings are good, but people are not so excited about small caps. I'm not saying it's because it's a very broad category and you cannot time it that you have to look at, say, a particular time to buy small caps or sell small caps. But within overall, if the small caps are doing well in terms of earnings, there are many pockets that you can pick where you get good growth to valuation ratio and you can pick them. So this is a good time to selectively pick up small caps.
Yeah, but obviously you can't give us any specific names, and I understand that completely. But thank you so much for coming in and speaking with us today, Nimesh. Absolute pleasure to have you in our studios.
Pleasure being here.
Thank you. You know, while this is what you've been hearing all day from all of our experts, stick to right now, all of them saying stick to the companies that we understand those that are giving real returns, good valuations, etc. But the fact is that all of the excitement is about a new shift, a new trend. So as we get to the India AI Impact Summit, and you just saw pictures of Prime Minister Modi meeting and greeting all the top leaders who have come in. I mean, this is a show of strength diplomatically as well for India. But Rishabh Bhatnagar joining in to tell us who is the lineup or what is the lineup that we're going to see. Rishabh, this morning is where you see the global heavyweights in AI coming and speaking. And one notable change is that Bill Gates was supposed to speak this morning, but has now withdrawn and chosen not to. Hiral, I thought that was, quite interesting, because all of this question started when Jensen Huang decided not to come in. And though his team has very clearly explained that he was traveling for 3 weeks straight and that's why he was feeling unwell, and there was no other reason that Jensen Huang didn't come in. But then it raised those questions. Was it the presence of Bill Gates that could be
triggering his absence?
Because right now, a lot of these CEOs that will speak today, from the head of Anthropic, Sundar Pichai, all of them, these are largely American companies. And right now, the mood in America and the big conversation point in America is the Jeffrey Epstein files. So that's not something that can be really stayed away from, which is why that statement from Bill Gates coming in saying that, or from the Gates Foundation, more likely coming in and saying that we won't really be going ahead and speaking this morning. But some exciting names that I'm looking forward to hearing, and Rishabh Bhatnagar joining in to tell us about some of those names. Rishabh, who will be speaking? What are the keynote addresses? And this really is a show of strength for India, because this is the top card of, or the top deck of AI movers and shakers at this venue behind you today.
Absolutely. You have the Prime Minister has already reached the venue. There's about 20 heads of states, heads of governments alongside him. All of these leaders all there to sort of discuss the road ahead for the adoption of artificial intelligence. So this is really India staking its claim on the global stage. Let me tell you a few keynote speakers as well. There's of course Ashwini Vaishnav, India's IT Minister. There's Sunil Bharti Mittal's Google's Sundar Pichai, Adobe's Shantanu Narayan, Vishal Sikka of Vine AI. There's OpenAI's Sam Altman, father of Indian AI, Nandan Nilekani. Apart from that, you have N. Chandrasekharan of Tata Sons, Anthropic's Dario Amodei, the hottest AI company right now. A bunch of power-packed names all set to sort of debate and argue about what the road ahead really should be for artificial intelligence. And all of this is very important because India is poised to be the leaders in terms of artificial adoption, not just thanks to our population, but the sort of enthusiasm that has come across through this India AI Impact Summit is also unbelievable. And also in sort of in a nice touch, what we are also hearing is that the Prime Minister will be making this open address, and there will be AI-generated sign language interpretation alongside that as well. So it's a nice little touch that is being added to this inaugural ceremony, and lots to look forward to. This is the penultimate day of this 5-day summit. The leaders will start working on their joint leaders declaration now, and it is expected to come out either today or tomorrow. So that's what we're looking forward to the most.
Yeah, we are, and you're seeing some of those pictures coming in. Live address by Ashwini Vaishnav right now. Let's just dip in quickly for a couple of seconds if we can, just to listen to what the Union Minister is saying as he sets the stage.
The second layer is the model layer, and that's where the sovereignty comes in. While we understand that very large models will continue to push the frontier, we also understand and believe that more than 90% of the use cases can be addressed with smaller focused models. These specialized models will deliver greater value to our masses by addressing specific use cases at much lower cost per token as well as overall cost of access. Our bouquet of sovereign models, many of which have been launched during this summit, they are all focused on multimodal and multilingual capabilities, because we have a very diverse culture and we have hugely diverse linguistic scenario in our country. We have launched some of these models during this summit, and these models have stood their ground against frontier models on the points that matter most to us. The third layer is the compute layer, and here, once again, our Prime Minister's vision of democratizing technology is clearly visible. We treat compute as a public good, and that's why, in a public-private partnership, we have created a common compute platform where we are providing access to 38,000 GPUs at a very affordable rate for our startups, academia, researchers, and students. And we will be adding another 20,000 GPUs to this common compute platform.
Okay, the flavor is all AI this morning, and who are we to fight it? Which is why we're speaking to companies that are making new strides in the space. Intellect Design Arena has unveiled the eMAC AI, an AI-first banking ecosystem featuring 550 domain-aware agents who are designed to power comprehensive banking operations. The company has also earlier launched Purple Fabric as an enterprise AI on-tap subscription service. But I'm going to go across to Arun Jain, founder and CMD of Intellect Design Arena and chief architect of Purple Fabric, to explain to us what this means. Mr. Jain, let me humbly submit that I need to understand what are these 500 agents, what will they do? Please explain to us in the simplest of terms. कि ये करेंगे क्या, इससे होगा क्या?
इसे we are challenging that जो बैंकिंग है, मोबाइल बैंकिंग जो है, वो एक आम आदमी के लिए भी मुश्किल है, वो एक सीनियर सिटीजन के लिए भी मुश्किल है. Natural language banking is the future of the banking. The way you can talk to your relationship manager, जो हम पहले करते थे, एक ब्रांच में जाके बोलते थे मुझे टेलर से मुझे ये करना है, वो वाली बैंकिंग चाहिए मुझे. एंड वो बैंकिंग है एआई फर्स्ट बैंकिंग. उसके पीछे 500 एजेंट काम करते हैं जो ऑर्केस्ट्रेट करते हैं. ये लैंडिंग का काम करेंगे, ये ट्रेड फाइनेंस का काम करेंगे, ये वेल्थ की एडवाइस देंगे, ये क्रेडिट कार्ड की एडवाइस देंगे, ये हमारे रिस्क एंड कंप्लायंस का काम करेंगे और टेक्नोलॉजी का काम करेंगे. तो ये 500 एजेंट जो हैं, ये पूरा एआई फर्स्ट बैंकिंग स्वीट है जो पर्पल फैब्रिक में हमने लॉन्च किया है इधर.
And who are the takers for this service, which you have just launched? This banking service. Who are the takers for it? Are the clients already tied up? What is the sort of pipeline coming in?
So we are talking to at least 20 different financial institutions in India. But before coming to India, we have launched it in UK, and one of the largest wealth manager is using as a bank GPT. So the entire bank employees need a lot of information which is confidential to the bank. So they need bank GPT, and that is being launched in London, where 7,000 people of a bank are using on a GPT, and all the products are being used, and they are using at least 100 agents out of the 500 agents in UK market. So now this is a time when we are bringing that to India, because India trusts something which is done outside India. So we are finding now very good traction in the stall, where many bankers are coming, and we are just about to implement few of them.
Okay. Mr. Jain, good morning. Hiral on this side. I was just seeing the pricing. 99,500 per month, which offers 50 AI agents, right? How do you actually, how do you look at getting that market penetration, like the way, you had peers also who've done it in the enterprise AI on tap model? What is the strategy going to look like there?
The strategy is that what Ashwini Vaishnav was just mentioning, layer 3 and layer 4. He was talking about compute, which is layer 3, and there's the layer 4 he was about to come to, which is a platform layer. On the platform, one can do it. We have put 2,000 man-years of effort in research and R&D to bring down the cost by having a better knowledge accuracy, reasoning accuracy, and context accuracy to drive the cost down. And it's like a frugal India. We think frugally, and that's the power of India, that we can innovate to drive the SME sector to be at par with large corporates who can afford AI. So Bajaj Finserv can have their own AI team, but there are many financial companies who cannot have their own AI team to drive the value for them. And that's where this 99,500, 1 lakh rupees for 50 user license, which we are saying, to give them a team space to operate and create value with the AI, which is a highly accurate, trustworthy with governance and using the lowest optimized LLM models.
So now, let me get this clear. You are offering an alternative to a product which, say, OpenAI is also offering, Google will also offer, Anthropic will also offer. Am I understanding that correctly, Mr. Jain? Is that?
No.
I'm wondering who's your competition?
No, that's not. Our competition is in the line of Palantir, C3 AI, which is a platform company of Americas. And India, there is no platform company. So it's a platform where we will be using OpenAI, will be consuming. So like a co-work is there, Anthropic has launched, which is for individual productivity. For enterprise productivity, we are using enterprise AI on tap. So it's like a ERP of the AI. While ChatGPT or OpenAI is individual productivity, where 80% accuracy is okay. For business function, we need 95% accuracy. And that's the difference between enterprise AI and personal AI.
Okay, just stay on with us, sir. I request you, because N. Chandra is speaking right now at the AI Summit, and we'll just, as we're having this conversation, let's just listen to what the chairman of Tata Sons is saying.
And every citizen in this country, we should put the AI tools in the hands of the lost person in the country and, in fact, on the earth. And that's the vision that we should all work towards. A couple of days ago, we witnessed 1,500 rural women here in Bharat Mandapam who had no background to computing, no background to digital tools. In a matter of few hours, could learn AI, could build products, could build marketing materials, campaigns, all in front of a global audience, and they did it in 4 hours. AI will have huge impact on our public services delivery. It will have huge impact on enterprises around the world. Since I come from the background of IT industry, one word for the IT industry. It is, in my opinion, the biggest opportunity for the tech sector and the IT industry, because the IT industry's real value is the context, an understanding of every enterprise's business and technology landscape, and make the right technology work inside the processes and the ecosystem, the supplier, customer, and all the other connections an enterprise has. AI will expand that role much further. It is the opportunity to integrate AI and AI agents into workflows, reimagine processes, and make it work, and carry out the transformation so that every enterprise can realize the moat and realize its vision. Now I want to talk a little bit about the Tata Group. At the Tata Group, we are adopting AI across the stack, from silicon to systems to AI-ready data centers to applications and AI agents. And we believe such a vision and such a journey is going to be extremely exciting, and it will require us to work with world-leading partners in India and across the globe. I would like to make 5 points. The Tata Group is establishing India's first large-scale AI-optimized data center, purpose-built for the next generation AI training and inference. I'm very happy to announce that we have partnered with OpenAI to build the first 100 megawatt capacity, which will scale to 1 gigawatt. And we made an announcement with AMD yesterday, where we will combine the world-class AI rack architecture with Tata's strength in infrastructure, engineering, power, and solution capabilities to create a sustainable high-density AI capacity in India for global standards. The third, we are already building an AI data insights platform. Minister Ashwini articulated the layers of data architectures. What we are building is totally based on diverse Indian data assets on top of the foundational models. So intelligence becomes available across the diversity of Indian contexts. And the fourth, TCS and our other company, Tata Communications, together, we are building an AI operating system for industries. What we will do is to build agentic industry solutions for every industry. We are already well on that journey, and we will work with partners to be able to launch it and take it to all enterprises around the globe. And finally, again, I want to thank the vision of our Prime Minister, which made it possible for us to make a serious foray into chips and semiconductors. What we will do next is to build chips that are very domain-centric, which will be totally AI optimized for every industry, and we will first launch or work towards getting it ready for the automotive sector. So these are the areas that we are focused on. I think it is the time for promise to take action into practice so that we can deliver prosperity. Finally, in conclusion, I just want to say that we are standing here at a very defining moment. It is the age of abundant intelligence, where the scarce resources are trust, stewardship, and human capability. So let us send out a simple standard for the AI decade. Capability with dignity, high impact for every watt of energy, and progress with agency and collaboration. Thank you all very much.
Very, very important commentary coming in from the Tata Sons Chairman N. Chandra on what the plan is for one of India's largest conglomerates. And you saw that spike in stocks, whether it's Tata Communications, Tata Tech, TCS, of course, and the whole platform that they are going to create with TCS for enterprise. That's why the stock 1.5% up. We have Arun Jain with us. So I hope you had an opportunity to listen into what N. Chandra was saying while we cut into it.
Definitely.
Yeah, so
That's definitely.
So
yeah,
I have a question to you which came to my mind. If the big boys are going to get into providing AI solutions for enterprise, is that a threat for a company like yours, or is that an opportunity?
I still believe our 9 years of research in AI, we are ahead of the technology equivalent to Palantir. What TCS is thinking right now is a much later part of the journey, where our technology has been deployed in US, working it out. We are delivering the highest accuracy, about 95%. And our platform architecture is one of the unique architectures. So in this space, it's not the big that matters. It's not the Microsoft that matters. It's the OpenAI that matters. It's not the AWS that matters. It's the Anthropic that matters. So what Anthropic Cowork is doing, intellect enterprise AI on tap with team space will be challenging that world. And we are looking to make it at a price point which big player may not be able to offer. So these are the three unique capability what Intellect is bringing by creating the appropriate technologies by the superior architecture, because we optimize knowledge accuracy by deterministic knowledge design, which is a patentable item to us. We have 29 patents in AI, which are very unique to our Purple Fabric. So it's a game is open. I think we should be fighting the big boys, and in this race when the technology shifts, and this is a tectonic shift in technology.
I love that. Game is open. We should be fighting the big boys. Arun Jain, thank you for speaking with us, talking about a newcomer who is now a big boy, Dario Amodei, CEO Anthropic. Listen in.
Displacement. India has an absolutely central role to play in these questions and challenges, both on the side of the opportunities and on the side of the risks. As a sign of our commitment, we just this week opened an office in Bengaluru and hired Irina Ghosh, who has spent 3 decades building businesses in India as our managing director for Anthropic India. We've also announced partnerships with major Indian enterprises this week, including Infosys and others. On the opportunities, one dynamic that we have observed is that technology and practices pioneered in India have historically set a standard for the global South and have helped to diffuse technology and humanitarian benefits through the global South. We're therefore we have been partnering with for several months, nonprofits such as the XSTEP Foundation, Pratham, and Central Square Foundation to use our models to advance digital infrastructure, education, agricultural efficiency, and health, in the hopes of spreading AI's benefits across the global South, starting with India and diffusing out to the rest of the global South. We're also partnering with Karya and the Collective Intelligence Project to build evaluations and metrics of our model Claude's performance on India's many regional languages. On practical and locally relevant tasks, we'll benchmark like agriculture, legal tasks, and educational content. On the risks, India is the world's largest democracy and can be a partner and leader in addressing the global security and economic risks of the technology. We'd like to work with India on testing and evaluation of models for safety and security risks in the tradition that was started by many global and national AI security institutes that have been stood up around the world. Even more, we see a particularly strong opportunity to work with India on studying the economic questions as part of the New Delhi Frontier AI Impact Commitments, which we're excited to join. As part of our Anthropic Economic Futures Program and Anthropic Economic Index, we publish statistical insights into how AI impacts jobs in the economy. We're excited to increasingly share this information, exchange information with the Indian government to share insights and inform evidence-based policy making, convene meetings with economists, labor leaders, and policymakers to adjust, to adapt to the economic impacts of AI. We believe that AI will greatly grow the economic pie, including in India and the global South, but that because it is happening so fast, it may lead to a time of disruption. And we need to work together between companies and the government to better manage that time of disruption and bring better prosperity smoothly to all. I and Anthropic are very grateful to be part of all these efforts, and I'm honored to be here and working on these questions with all of you.
Thank you, Mr. Dario Amodei. Okay, we'll have to take a very quick break, but don't go anywhere. Sundar Pichai is going to be speaking next. We will get you that broadcast. Meanwhile, what's happening with IT stocks? Down from its lows, but still the only index that's really firing. Infosys on top of the pack, about 1% up. So is Coforge, so is TCS after those announcements. Very short break. We're coming right back. All the action is right here.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can.
AI to people and businesses across India. Sitting on that train, I never imagined Vizag becoming a global AI hub. Just as I couldn't have imagined that one day I'd be spending time with teams figuring out how to put data centers into space. Or taking my parents for a fully autonomous car ride in San Francisco. Seeing a Waymo right through my 83-year-old dad's eyes, I saw the progress in a whole new light. Of course, he said he'd be more impressed if it worked on India's busy roads. Still working on that one, Dad. The progress shows what's possible when humanity dreams big. And no technology has me dreaming legacy gaps. But that outcome is neither guaranteed nor and new discoveries that can help emerging economies leapfrog legacy gaps. But that outcome is neither guaranteed nor automatic. To build AI that is truly helpful for everyone, we must pursue it boldly, approach it responsibly, and work through this defining moment together. Why bold? Because AI can improve billions of lives and solve some of the hardest problems in science. For 50 years, predicting protein structures was a grand challenge and a blind spot that stalled drug discovery. Demis Hassabis and his team at Google DeepMind asked an audacious question: how could we use AI to solve this? It didn't just win a Nobel Prize, it compressed decades of research into a database that is now open to the world. Today, over 3 million researchers in more than 190 countries are using it to develop malaria vaccines, fight antibiotic resistance, and much more. And we are asking similarly bold questions across the scientific stack, from cataloging DNA disease markers to building AI agents that act as true partners in the scientific method. We must be equally bold in tackling problems in regions that have lacked access to technology. Take El Salvador, where Google has partnered with the government to bring affordable AI-powered diagnosis and treatment to thousands who could never afford to see a doctor. Or in India, where our work together is helping farmers protect their livelihoods in the face of monsoons. Last summer, for the first time, the Indian government sent AI-powered forecasts to millions of farmers, possible in part because of our neural GCM model. I see language inclusion as another exciting ambition. In Ghana, we are collaborating with universities and NGOs to expand research and open source tools across more than 20 African languages. We need this bold thinking in more places to tackle more problems across health, education, economic opportunity, and more. Technology brings incredible benefits, but we must ensure everyone has access to them. We cannot allow the digital divide to become an AI divide. That means investing in compute infrastructure and connectivity. I mentioned our Vizag investment, and we have others in Thailand, Malaysia, and more. We're also building a vast network of subsea fiber optic cables, including 4 new systems between the US and India, as part of our America-India Connect initiative announced yesterday. Responsibility also means navigating profound economic shifts. AI will undeniably reshape the workforce, automating some roles, evolving others, and creating entirely new careers. 20 years ago, the concept of a professional YouTube creator didn't exist. Today, there are millions around the world. Training is their jobs available globally. Finally, trust is the bedrock of adoption. We have created tools like SynthID used by journalists and citizen fact-checkers globally to help verify the authenticity of the content you read and see. But no matter how bold we are or how responsible, we won't realize AI's full benefits unless we work together. Governments have a vital role that includes as regulators, setting important rules of the road and addressing key risks. And importantly, also as innovators, bringing AI to public services that improve lives and accelerating adoption of these technologies for people and businesses. There are glimmers of this from around the globe. from the Ugandan government using AI and satellite imagery to locate priority areas for electrification, to getting potholes fixed for residents more efficiently in Memphis, Tennessee, by using AI scans of road surfaces from buses. Tech companies must also step up, building products that boost knowledge, creativity, and productivity to help people achieve their dreams. And we also need companies of all sizes thinking about this, harnessing AI to innovate and transform their businesses and sectors, and to skill up and empower workers. We have the opportunity to improve lives at a once-in-a-generation scale. I know we have the capability to do this, and looking at the leaders here today, I believe we also have the will. Now we must do the work together. Thank you.
Okay, we're getting you all the action from the AI Summit in Delhi, from the markets, and of course the best voices. Manish Sonthalia, Director and Chief Investment Officer, MK Investment Managers, joining in on the show this morning. Manish, very good morning to you. I know it's the whole conversation everywhere is AI right now. Do we need some super artificial intelligence to figure out what is ailing Indian markets? What is your take? Can't quite hear you. I think you're on mute, Manish. You'll have to unmute.
I think as far as the entire market is concerned, entire market, I think we have already bottomed out in spite of the AI stuff which is going around. But as regards the IT space, I think AI is clearly a disruptor, that is for sure. Whether turnover of Indian IT services companies will fall off the cliff, maybe not. And, the stocks have corrected. But we got to figure out the margins, the benefits of AI broadly are all going to percolate to the client. And the key thing to ponder about is the margins figure. So in all of this, valuations are getting reset. And let's assume for a moment that, of course, there should be growth. But let's assume for a moment that there is no growth. And how do you build margin of safety around IT stocks? Then basically look at free cash flow yield of businesses, which are almost zero growth or very little growth. Let's say 0 to 2% or 3% sort of a growth. Basically, you should buy free cash flow yield businesses where you have 5 to 6% free cash flow yield business. I think at those sort of valuations, there'll be ample margin of safety. So, we still are trading slightly higher on the valuation side as far as the Indian IT companies. And, it's basically the short term versus the long term. Short term, you have a knee-jerk reaction on the downside, but we've got to figure out where the value resides in the long term. I think Indian IT companies will wrap around the AI applications to make themselves useful to their clients, overseas clients. But in the short term, maybe valuation reset, exit multiples, growth, these are things to ponder.
If you let's just take that question a little further as far as Indian IT companies are concerned, Manish, because it's been a seesaw of investor interest that we're seeing. And the question is whether what we're hearing from the top IT companies is convincing or not. I mean, we heard the Tata Sons chairman, we've heard Infosys a couple of days ago talking about its plans, and every large IT company is gearing up. Is that enough to come up to speed with what is required right now at a time when no one's sure what the future is looking like?
The whole point is we are late in the investing game in the AI. The world was investing 5, 10, 20 years ago, and we are talking about when the revolution is upon us. And it's basically better late than never is basically where we are in the Indian IT space currently. So had we done it a few years ago, we would have been in a much better position. But nevertheless, we are doing it now. So that's where we are. And so the entire business model of Indian IT services is going to get disrupted. That's for sure. So, we can go back in history and say that, you had ICE and an EV, but both flourished. So similarly out here, Indian IT, traditional IT business model incorporating AI will continue to exist. But the whole point is, how is the transition going to look like? So again, coming back to the same point, look at margins. And I think here is where the entire conundrum of the valuation growth on the PAT level is going to play.
You know, at the NDTV, just to your point, Manish, and then I'll come back to a specific question on which IT stocks do you think or which IT companies do you think are going to make the cut. On being late, at the NDTV AI Summit yesterday, there was a professor from UC Berkeley who was saying that it doesn't matter if you're second or third, it just depends on who lasts longest and who does well. Who remembers the first search engine? But it is Google who came in later that has dominated for the last several decades. That was the point he made, and the first search engine was Alta Vista, and no one really remembers it. So in that context, do you think that on this debate on whether we need to re-look at Indian IT companies instead of writing them off, that the largest ones will survive or the smaller, more nimble, agile ones?
The nimble and the agile ones are going to survive because we are dealing with very large workforces in large Indian IT services companies where when the business model gets disrupted, the time and material model gets disrupted, it's outcome-based pricing, incorporating AI platforms, then basically reskilling those large workforces are going to be challenging. And, there's a social angle also to it, whether you're letting go so many people and all of that. But I think the Indian IT services, the Indian IT pack, first of all, the product-driven companies, they will be much better off. Second is basically your mid-tier IT companies incorporating very fast AI platforms for their clients and, which have a nimble workforce. So transition is where the entire focus is going to be, and who is going to be fast enough to do that is going to capture a lot of the market.
Okay, so in fact, this is with regards to Manish, IT, and where you're saying that product-oriented companies are going to be absolutely interesting. Just stay with us. We'll cut across to a keynote address by French President Emmanuel Macron at the India AI Impact Summit. Let's listen in.
CEOs, ladies and gentlemen, namaste. Thank you very much for welcoming us in this magnificent city, in this magnificent country. And it's great to be back after my 2024 state visit for this Artificial Intelligence Impact Summit hosted by you, Mr. Prime Minister. And I want to start with a story. 10 years ago, a street vendor in Mumbai could not open a bank account. No address, no papers, no access. And today, the same vendor accepts payments on his phone, instantly. Instantly, for free, from anyone in the country. That is not just a tech story. That is a civilization story. And India built something that no other country in the world has built, a digital identity for 1.4 billion people. A payment system that now processes 20 billion transactions every month. A health infrastructure that has issued 500 million digital health IDs. Here are the results. They call it the India Stack. Open, interoperable, sovereign. That, dear friends, is what this summit is about. We are clearly at the beginning of a huge acceleration, and you perfectly described it during your interventions. But let me just recap during 1 year what happened. Last year, when France and India co-hosted the AI Action Summit in Paris, we set a global guiding principle for technologies that would transform our societies and our economies. We said then artificial intelligence will be an enabler for our humanity, to innovate faster, to disrupt healthcare, energy, mobility, agriculture, public services, for the good of mankind. Both of us, we do believe in this revolution. 1 year ago, the landscape started to shift. The US announced Stargate, China launched DeepSeek, AI has become a major field of strategic competition, and big tech got even bigger. And a lot of them are in this room and still accelerated during the last year. AI, GPU, chip tensions are now directly translated in geopolitical and macroeconomic terms. Sometimes for the best, sometimes for the worst, I have to say. But clearly 1 year ago, we demonstrated something else. Hegemony from any quarter is not a fatality. There is a path for innovation, independence, and strategic autonomy. And this path, I'm convinced, is one of the countries like France and India must take together. And we've already achieved a lot. If we speak about models, you perfectly described the acceleration and the diversity of this model. India made a deliberate sovereign choice. SML, small language models. Task-specific, designed to run on a smartphone. And India built the first government-funded AI and deployed 38,000 GPUs at the cheapest rate to every startup in the country, as you perfectly described, Mr. Minister. We took a complementary path. We invested in European large language models. Mistral, founded in Paris a little bit more than 2 years ago, is now valued at 12 billion euro, backed by Dutch leader ASML, German SAP, and French CMS AGM, serving over 100 of major clients all over the place in Europe and elsewhere. They announced last week a new investment in data center in Sweden and a new acquisition of Coyeb, building an actual European AI cloud. India chose granular and smart, and Europe chose sovereign and scaled. But both chose independence, and both were right. And this is as well the cooperation with LLMs coming from the US, and through cooperation, but cooperation based on mutual respect and independence, which could pave the way for progress. After the model of the infrastructure, you just described all the infrastructure made by a lot of large companies in India, and all of us, we are building new infrastructure, computing capacity. 1 year ago in Paris, we announced $109 billion in AI investments, and we are delivering this project with a lot of data centers, 58 billion euro in 2025, powered by our decarbonated nuclear energy. With a great asset, and this is very important indeed, to have low carbon and available energy. Last year, France exported 90 terawatt-hours of low-carbon energy and pilotable energy, which is a huge opportunity to build faster and bigger data center. At the European level, 200 billion euro have been committed with the arrival of the Alice Recoq exascale supercomputer, key component of our AI factory ambition shared with Netherlands and Greece, and we share the computer with them. Models, infrastructures, talents. India trains hundreds of thousands of AI engineers every year. With 500,000 engineers, India has the second largest developer community in the world. In France, we are doubling the number of AI scientists and engineers trained, and we've now more than 1,100 AI startups thriving in France, creating dozens, thousands of jobs. Harmattan AI partnering with Dassault, Gradium for voice AI, Poolside, Ash, Hugging Face. I could quote the stories of these unicorns and large caps, and this is clearly one of our strengths. In quantum computing, the next frontier, France is not placing one bet. We are placing four technologies. 4 French companies, Pascal, Pandela, Alice and Bob, Quobly, and one ambition, to make Europe a quantum power, which is also the ambition of AMI Labs, Advanced Machine Intelligence Labs, from our dear Yann Lequin for Frontier Research. The smartest AI is not the most expensive. It is the one built by the best people and for the right purpose. Models, infrastructure, talents, capital, and adoption. This is where the Indian model is truly revolutionary, providing solutions for everyone in the country. From 200 million of Indian farmers in their own dialect, to travel advice for 400 million of pilgrims. or AI diagnostics for rural clinics, all are running on India's digital public infrastructure. Open rails, near zero cost, adoption is key, and being inclusive is key. In Europe, our AI factories optimize energy grids, transform logistics, reinvent healthcare administration, and we are proving you can build a competitive AI industry while protecting your citizens' data. And opposite to what some misinformed friends have been saying, Europe is not blindly focused on regulation. Europe is a space for innovation and investment, but it is a safe space. And safe spaces win in the long run. I'm sure of that. Now, the point of this summit was not only to say, let's do more. It was to say, let's do better together. AI may be a powerful accelerator of productivity and a major shift for labor markets. This is why access to AI for all is critical. France and India share a common vision, a sovereign AI used to protect our planet and to foster prosperity for all. In health, we launched the Indo-French Institute for AI in Health, a partnership between Sorbonne's Brain Institute and AIIMS Delhi, and the partnership between ASH and St. John's Research Institute in Bangalore will use AI to transform hospital administration as well. In language, we jointly launched Current AI for sustainable and sovereign AI access. And this year, we announced an open hardware tool for translation into Indian languages and dialects. Because AI that doesn't understand dialects is not AI for all. And this is why we do endorse this initiative for diversity in language. In sustainability, our Coalition for Sustainable AI now has more than 200 supporters. Today, with India and UNESCO, we launch an international challenge for sustainable AI models. Last year in Paris, we called it action. This year in Delhi, we call it impact. But the real name is simpler, AI together. AI and digitalization will be a key theme for the months to come. And the key theme of the Africa Forward Summit we will host with Kenya in Nairobi in May. The continent, the African continent, with the youngest population that will double in 25 years, deserves the best digital tools. And at a time when tensions are rising, there is an increased sense of urgency to direct all our digital tools towards this inclusive approach. And in order, indeed, to be strong here in India, but to be strong as well on the African continent. And let's focus all together towards bridging rather than dividing, creating rather than destroying, sharing rather than taking. France intends to use its G7 presidency to foster that vision. I know, Mr. Prime Minister, that India will do the same through your BRICS presidency. No country is bound to serve only as a market where foreign companies sell their models and download their citizens' data. No country. One of our G7 priorities will be as well children's protection against AI and digital abuse. You just mentioned it, Mr. Secretary General. There is no reason our children should be exposed online to what is legally forbidden in the real world. Our platforms, governments and regulators should be working together to make internet and social media a safe space. This is why, in France, we are embarking on a process to ban social networks for children under 15 years old. And we are committed here in this journey with a lot of several European countries being present here today. Greece, Spain. I know, Mr. Prime Minister, you will join this club. And this is a great news that India will join such an approach in order to protect children and teenagers. And we stand ready to take all necessary actions to ensure that our young citizens are truly safe and wish to engage with all willing partners to make this vision happen for all. And this is a new coalition of willings in order to protect our children and teenagers. Protecting our children is not regulation as well. It is civilization. To conclude, the message I have come to convey is that we are determined to continue to shape the rules of the game. And to do with our allies, such as India, because we believe in core shared values, science, rule of law, global balance, efficient multilateralism, innovation for the benefit of all. Now is the time to channel our forces toward what works. Concrete action and solutions that make AI more sustainable, efficient, and accessible. Targeted funding to leverage talents and creativity. Appropriate rules to prevent abuse and protect all our citizens. Strong partnerships that help build new AI solutions, more safe and more sustainable. I want to thank all the governments and business leaders present in this room and engaged in this journey. I know your goodwill and now your commitment in order to deliver these concrete results. We do believe in innovation, but we do believe in a better place, in a better world as well. And I don't believe one second it's incompatible. And let me say one more thing about partnerships, because this is not a two-player game. Last week, India and the UAE announced a joint AI partnership, a supercomputing cluster, shared data centers and innovation corridor. And India brings the engineers and the frugal models, and the Gulf brings the capital and the infrastructure. And together, they build faster than either could alone. France knows this equation well. With UAE, we engaged and they committed billions of euros for innovation and data centers in our country, and this partnership creates more value together. This is not dependency. This is intelligent convergence between governments, with companies, large caps, startups. And this is clearly this intelligent convergence which can provide results. The old world said you compete or you lose. The new world says you connect or you fall behind. And I started with a story about a street vendor in Mumbai. 10 years ago, the world told India that 1.4 billion people could not be brought into the digital economy. India proved them wrong. Today, some say AI is a game only the biggest can play. That you need $400 billion to be in the race.
So that's Emmanuel Macron talking about the kind of partnerships and the usage when you're looking at in terms of AI as well. But interesting commentary coming in from there. But markets not very enthused with what's happening. You are seeing profit booking that's coming in at higher levels as well, and you have Nifty 50, which is at the day's low. In fact, that correction that has come in terms of Nifty IT is probably what is causing that pressure. If you see Nifty IT index, from the day's highs, it has started to come off slightly.
But it's the only Lone Ranger.
Lone Ranger and starting to come off. So I think that support that was needed from IT and financials to let Nifty be at those higher levels is not yet there, right?
Yeah.
So I think it's going to be interesting because tables turn in the second half of the trading session. That's what we've been seeing over the last couple of days.
We also have Sensex expiry today.
So expiry play plus that profit booking at higher levels. And again, the moment you dip, you see that buying interest that comes in, and that's why you see that uptick. But it's going to be interesting to see how the day pans out. We'll quickly slip into a short break. You have lots more lined up. You have Prime Minister Narendra Modi, who will also be speaking at the AI Summit. Please stay tuned.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. But the AI Impact Summit is on, and let's just quickly pan to show you those images as well. It's a key one we've seen since the morning. People like Sundar Pichai, amongst others, have been speaking consistently about what AI means to them. But PM Modi has started speaking. Let's quickly cut in.
Innovators, entrepreneurs, researchers, डेलीगेट्स, अन्य सभी महानुभाव, देवी और सज्जनों, नमस्ते। दुनिया की सबसे बड़ी और ऐतिहासिक AI इम्पैक्ट समिट में आप सभी का हार्दिक अभिनंदन है। ये समिट जिस भारत में हो रही है, वो भारत 1/6 ऑफ ह्यूमैनिटी को रिप्रेजेंट करता है। भारत दुनिया की सबसे बड़ी युवा आबादी का देश है, सबसे बड़े टेक टैलेंट पूल का केंद्र है, सबसे बड़े टेक एनेबल्ड इकोसिस्टम का उदाहरण है। भारत नई टेक्नोलॉजी बनाता भी है और उसे अभूतपूर्व तेजी से अपनाता भी है। नई टेक्नोलॉजी के प्रति उत्सुक 140 करोड़ भारतीयों की ओर से मैं आप सभी हेड्स ऑफ गवर्नमेंट्स, ग्लोबल एआई इकोसिस्टम के लीडर्स और इनोवेटर्स का इस समिट में स्वागत करता हूं, आपका आभार व्यक्त करता हूं। इस समिट का भारत में होना भारत के साथ ही पूरे ग्लोबल साउथ के लिए गर्व का विषय है। इस समिट में एआई जगत के हुज हू यहां पर मौजूद है। दुनिया के 100 से ज्यादा देशों का रिप्रेजेंटेशन, दुनिया के कोने कोने से यहां आए महानुभाव इसकी सफलता को नई ऊंचाई पर ले जा रहे हैं। इसमें यंग जनरेशन की जो उपस्थिति हमने देखी है वो एक नया विश्वास पैदा करती है। आमतौर पर नई टेक्नोलॉजी को लेकर कुछ लोगों में शुरुआती में संदेह होता है, लेकिन जिस तेजी और भरोसे के साथ दुनिया की युवा पीढ़ी एआई को स्वीकार कर रही है, उसकी ओनरशिप ले रही है, एआई का इस्तेमाल कर रही है, वो अभूतपूर्व है। यहां एआई समिट की एग्जीबिशन को लेकर भी बहुत उत्साह रहा है। खासकर यंग टैलेंट बहुत बड़ी संख्या में आया है। एग्रीकल्चर, सिक्योरिटी, दिव्यांगजनों की मदद, मल्टीलिंगुअल पॉपुलेशन की तमाम जरूरतों से जुड़े जो भी सॉल्यूशंस यहां प्रेजेंट किए गए हैं वो इस फील्ड में मेड इन इंडिया की ताकत और भारत की इनोवेटिव कैपेबिलिटीज का बहुत बड़ा उदाहरण है। साथियों, मानव इतिहास में हर कुछ शताब्दियों के बाद एक टर्निंग पॉइंट आता है और वो टर्निंग पॉइंट सभ्यता की दिशा रीसेट करता है और वहीं से विकास की रफ्तार बदलती है। सोचने, समझने और काम करने के पैराडाइम बदलते हैं। और दिलचस्प बात यह है, जब हम ट्रांसफॉर्मेशन के उस दौर में होते हैं तब उसके वास्तविक इंपैक्ट का अंदाजा भी नहीं होता। जब पत्थरों से पहली बार स्पार्क निकला, किसी ने नहीं सोचा था कि वही चिंगारी सिविलाइजेशनल की फाउंडेशन बनेगी। जब बोली को पहली बार लिपि में बदला गया, किसी ने नहीं जाना था कि रिटन नॉलेज फ्यूचर सिस्टम की बैकबोन बनेगी। जब पहली बार सिग्नल्स को वायरलेस ट्रांसमिट किया गया, किसी ने कल्पना नहीं की थी कि एक दिन पूरी दुनिया रियल टाइम में कनेक्ट होगी। साथियों, आर्टिफिशियल इंटेलिजेंस मानव इतिहास का ऐसा ही ट्रांसफॉर्मेशन है। आज जो हम देख रहे हैं, जो प्रिडिक्ट कर रहे हैं, वो इसके इंपैक्ट का सिर्फ प्रारंभिक संकेत है। एआई मशीनों को इंटेलिजेंट बना रही है, लेकिन उससे भी अधिक मानव सामर्थ्य को कई गुना बढ़ा रही है। अंतर सिर्फ एक है, इस बार स्पीड भी अभूतपूर्व है और स्केल भी अप्रत्याशित है। पहले टेक्नोलॉजी का इंपैक्ट दिखने में दशकों लगते थे। आज मशीन लर्निंग से लर्निंग मशीन तक का सफर तेज भी है, गहरा भी है, व्यापक भी है। इसलिए हमें विजन भी बड़ा रखना है और जिम्मेदारी भी उतनी ही बड़ी निभानी है। वर्तमान पीढ़ी के साथ ही हमें इस बात की भी चिंता करनी है कि आने वाली पीढ़ियों के हाथों में हम एआई का क्या स्वरूप सौंप कर जाएंगे। इसलिए आज असली प्रश्न यह नहीं कि भविष्य में आर्टिफिशियल इंटेलिजेंस क्या कर सकती है। प्रश्न यह है कि वर्तमान में हम आर्टिफिशियल इंटेलिजेंस के साथ क्या करते हैं। ऐसे प्रश्न मानवता के सामने पहले भी आए हैं। सबसे सशक्त उदाहरण है न्यूक्लियर पावर। हमने उसका डिस्ट्रक्शन भी देखा है और सकारात्मक कंट्रीब्यूशन भी देखा है। एआई भी एक ट्रांसफॉर्मेटिव पावर है। दिशाहीन हुई तो डिसरप्शन, सही दिशा मिली तो सॉल्यूशन। एआई को मशीन सेंट्रिक से ह्यूमन सेंट्रिक कैसे बनाएं, संवेदनशील और उत्तरदायी कैसे बनाएं, यही इस ग्लोबल एआई इंपैक्ट समिट का मूल उद्देश्य है। साथियों, भारत एआई को किस दृष्टि से देखता है, उसका स्पष्ट प्रतिबिंब इस समिट की थीम में है। सर्वजन हिताय, सर्वजन सुखाय, वेलफेयर फॉर ऑल, हैप्पीनेस ऑफ ऑल। यही हमारा बेंचमार्क है। एआई के लिए इंसान सिर्फ डेटा पॉइंट न बन जाए, इंसान सिर्फ रॉ मटेरियल तक सीमित न रह जाए। इसलिए एआई को डेमोक्रेटाइज करना होगा, इसे इंक्लूजन और एम्पावरमेंट का माध्यम बनाना होगा और विशेष रूप से ग्लोबल साउथ में। साथियों, हमें एआई को ओपन स्काई भी देना है और कमांड भी अपने हाथ में रखना है। जैसे जीपीएस होता है, जीपीएस हमें रास्ता सुझाता है, लेकिन हमें किस डायरेक्शन में जाना है, इसकी फाइनल कॉल हमारी ही होती है। आज हम एआई को जिस दिशा में लेकर जाएंगे, वैसा ही हमारा भविष्य तय होगा। साथियों, आज न्यू दिल्ली एआई इम्पैक्ट समिट में मैं एआई के लिए MANAV मानव विजन प्रस्तुत करता हूं। मानव का अर्थ होता है ह्यूमन, और मानव विजन कहता है M मोरल एंड एथिकल सिस्टम्स, यानी एआई एथिकल गाइडेंस पर आधारित हो। A अकाउंटेबल गवर्नेंस, यानी ट्रांसपेरेंट रूल्स, रोबस्ट ओवरसाइट। N नेशनल सॉवरेनिटी, यानी जिसका डेटा उसका अधिकार। A एक्सेसिबल एंड इंक्लूसिव, यानी एआई मोनोपोली नहीं, मल्टीप्लायर बने। V वैलिड एंड लेजिटिमेट, यानी एआई लॉफुल और वेरीफाइबल हो। भारत का ये मानव विजन 21वीं सदी की एआई आधारित दुनिया में मानवता के कल्याण की अहम कड़ी बनेगा। साथियों, दशकों पहले जब इंटरनेट की शुरुआत हुई तो कोई सोच भी नहीं पाता था कि इससे कितनी जॉब्स बनेगी। यही बात एआई में है। आज कल्पना करना मुश्किल है कि आने वाले समय इस फील्ड में किस तरह की जॉब पैदा होगी। एआई का फ्यूचर ऑफ वर्क प्री डिफाइंड नहीं है। ये हमारे निर्णय पर, हमारे कोर्स ऑफ एक्शन पर निर्भर होगा। मैं समझता हूं हमारे लिए फ्यूचर ऑफ वर्क एक नई अपॉर्चुनिटी है। ये ह्यूमंस और इंटेलिजेंट सिस्टम्स के साथ मिलकर काम करने का युग है। वी आर एंटरिंग एन एरा वेयर ह्यूमंस एंड इंटेलिजेंट सिस्टम्स co-create, co-work and co-evolve। एआई हमारे काम को और अधिक स्मार्ट, एफिशिएंट और इंपैक्टफुल बनाएगा। हम बेहतर डिजाइन करेंगे, तेज बिल्ड करेंगे और बेहतर डिसीजन ले सकेंगे। इससे और ज्यादा लोगों को हायर वैल्यू, क्रिएटिव और मीनिंगफुल रोल्स भी मिलेंगे। ये इनोवेशन, एंटरप्रेन्योरशिप और न्यू इंडस्ट्रीज के लिए बड़ा मौका है। इसलिए हमें स्किलिंग, रीस्किलिंग और लाइफ लॉन्ग लर्निंग को मास मूवमेंट बनाना होगा। साथियों, फ्यूचर ऑफ वर्क इंक्लूसिव, ट्रस्टेड और ह्यूमन सेंट्रिक होगा। अगर हम मिलकर आगे बढ़ें तो आर्टिफिशियल इंटेलिजेंस पूरी मानवता की क्षमता को नई ऊंचाइयों तक ले जाएगी। साथियों, कहा जाता है सनलाइट इज द बेस्ट डिसइंफेक्टेड, यानी पारदर्शिता ही सबसे बड़ी सुरक्षा है। कुछ देश और कंपनियां मानती है कि एआई एक स्ट्रैटेजिक एसेट है, इसलिए इसे कॉन्फिडेंशियल तरीके से डेवलप किया जाना चाहिए। लेकिन भारत की सोच अलग है। हम मानते हैं कि एआई जैसी तकनीक तभी दुनिया के लिए लाभकारी होगी जब उसे शेयर किया जाएगा, जब कोड ओपन होंगे और शेयर किए जाएंगे, तभी हमारे मिलियंस ऑफ यंग माइंड्स उन्हें बेहतर और सुरक्षित बना पाएंगे। इसलिए आइए हम ये संकल्प लें कि एआई को ग्लोबल कॉमन गुड के रूप में विकसित किया जाएगा। साथियों, आज की एक बहुत बड़ी आवश्यकता ग्लोबल स्टैंडर्ड्स बनाने की भी है। डीप फेक्स और फैब्रिकेटेड कंटेंट ओपन सोसाइटीज में अस्थिरता ला रहे हैं। फिजिकल वर्ल्ड में हम फूड पर न्यूट्रिशन लेबल्स देखते हैं ताकि हमें पता हो कि हम क्या खा रहे हैं। ठीक उसी तरह डिजिटल वर्ल्ड में कंटेंट पर भी ऑथेंटिसिटी लेवल्स होने चाहिए ताकि लोगों को पता हो कि क्या असली है और क्या एआई से बनाया गया है। जैसे जैसे एआई ज्यादा टेक्स्ट, इमेजेस और वीडियोज बना रहा है, वैसे वैसे इंडस्ट्री में वाटरमार्किंग और क्लियर सोर्स स्टैंडर्ड्स की जरूरत बढ़ती जा रही है। इसलिए ये जरूरी है कि ये विश्वास टेक्नोलॉजी में शुरू से बिल्ट इन हो। साथियों, हमें चिल्ड्रन सेफ्टी के प्रति और अधिक सजग होना होगा। जैसे स्कूल का सिलेबस क्यूरेटेड होता है, वैसे ही एआई स्पेस भी चाइल्ड सेफ और फैमिली गाइडेड होना चाहिए। फ्रेंड्स, आज दुनिया में दो तरह के लोग हैं। एक, जिन्हें एआई में भय दिखता है, वो हमेशा वैसी बात करते हैं। ऐसे लोग जिन्हें एआई में भय दिखता है, और दूसरे वो जिन्हें एआई में भाग्य दिखता है। और साथियों, मैं जिम्मेवारी के साथ कहता हूं, गर्व के साथ कहता हूं, हमें भय नहीं, भारत को एआई में भाग्य दिखता है, भारत को एआई में भविष्य दिखता है। हमारे पास टैलेंट भी है, एनर्जी कैपेसिटी भी है और पॉलिसी क्लैरिटी भी है। और मुझे आपको ये बताते हुए खुशी है कि इस समिट में 3 भारतीय कंपनियों ने अपने एआई मॉडल्स और एप्स लॉन्च किए हैं। ये मॉडल्स हमारे यूथ के टैलेंट को दिखाते हैं और भारत जो सॉल्यूशंस दे रहा है उसकी डेप्थ और डाइवर्सिटी का भी प्रतिबिंब है। साथियों, भारत सेमीकंडक्टर और चिप मेकिंग से लेकर क्वांटम कंप्यूटिंग तक एक रिजिलिएंट इकोसिस्टम बना रहा है। सिक्योर डेटा सेंटर्स, मजबूत आईटी बैकबोन, डायनेमिक स्टार्टअप इकोसिस्टम भारत को एफोर्डेबल, स्केलेबल और सिक्योर एआई सॉल्यूशंस का नेचुरल हब बनाते हैं। भारत के पास डाइवर्सिटी भी है, डेमोग्राफी भी है और डेमोक्रेसी भी है। जो एआई मॉडल भारत में सक्सीड करता है वो ग्लोबली डिप्लॉय हो सकता है। इसलिए मैं आप सभी को आमंत्रित करता हूं, डिजाइन एंड डेवलप इन इंडिया, डिलीवर टू द वर्ल्ड, डिलीवर टू ह्यूमैनिटी। एक बार फिर आप सभी को मेरी बहुत बहुत शुभकामनाएं। थैंक यू, धन्यवाद।
Well, that was Prime Minister Narendra Modi speaking at the AI Key Summit. Some key aspects that he spoke about, the 3 new AI models launched by the Indian companies as well. India is seeing and not fearful of AI, seeing this as a key opportunity is something that he highlighted, and putting those notions to rest that have been building up. Design and develop in India, deliver for the world. This was the key message coming in from Prime Minister Narendra Modi as well, but it is still Ask Profit. Let's go across and start these queries that you have sent in to us. Let me welcome in Kush Bora, who's of course in the studio with us, as well as Sameer Dalal from Natwar Dalal and Sons Stockbrokers. Both of you, thanks so much for joining in today. Let me go across and immediately take the first query. This one is coming in from Andhra Pradesh. Venkat has a question for us on Federal Bank. Now, Sameer, he is holding shares at 129 and he's bought 800 shares. So he's sitting on a very decent profit. Asking if he should continue to hold on to this story, to this stock. What would you recommend, Sameer?
Yeah, absolutely. Please continue to hold on. They are doing extremely well. Growth is coming good. We believe going forward, NIMs will increase. The new management is taking it on the right path. I think this stock has more upside over the long term. I'm very positive on the entire banking as well. So just stay put.
Next question is from Radhakrishnan, who's from Kochi. He's asking on Kelton Tech Solution, though this is a very small company around 1,000 crore market cap, but he has bought at an average price of rupees 19.25, 365 shares. He's asking, is it good to keep at this level considering AI show scenario? Sameer, what's your view on that?
Unfortunately, no coverage on this one.
All right.
Do you track this by any chance on charts? Very small, I agree.
I've heard this for the first time, so I'm going to have to pass this.
Okay, no worries. Well, the next question that's coming in is from Ram from Hyderabad. It's on AB Capital. Now, he's holding roughly 160 shares, bought at 180. Kush, he's asking if it's a good time to book out of this position. What would you recommend?
Yeah, so if the view is still medium to long term, I would suggest stay put because the stocks had a phenomenal rally. I mean, just in the year of 2025, it went from 150 all the way up until 360 odd. So some bit of consolidation is par for the course. I don't see a structural damage or structural weakening per se. I would still hold it, but keep a stop loss at the 315, 320 zone, not too far from here. If that is broken, then the slide could worsen. But if not, you should continue holding on to AB Capital.
Got it, Kush. But viewers, as well as Sameer and Kush, it's now time for the rapid fire round in this edition of Ask Profit. Request you to keep your answers on buy, sell and hold. The first one's coming in from Hyderabad and our viewer is holding KPR Mills at 1084. Kush, should he continue to hold this position?
1084 you said, right? Yeah, you could continue to hold. Deepish stop loss at the 840 mark.
Nirmala is asking, is it right time to invest in NewGen Software or CMS Info Systems? Sameer, your view?
At the moment, I'm not as positive on either of those two counters, so I'll pay it out. I'm not positive on the entire IT space as such.
Got it, Sameer. Advait Energy, Kush, Chandra is asking if it's a good time to enter the stock now.
Very, very limited data, so again, I'll have to pass this one.
Well, Balu Forge, this question is on Balu Forge. The viewer is holding 100 shares at 432 per unit and he wants to know if he can hold, average or exit at current juncture. Kush, I know you're not a fan of averaging, but what do you suggest?
Yeah, so that view remains no averaging, but yes, you should definitely continue to hold this one. Stop loss, I would suggest at 465.
Bharat Forge, Samvardhana Motherson or CI Automotive. Sameer, either of those stocks for the long term, what would you recommend Mansi to do?
So Bharat Forge and Motherson Sumi are two stocks that we do have a positive view on at this point of time. We think the opportunity in the defense is good, so Bharat Forge will be the top pick.
Suman from Kolkata is asking, she has 5 shares of PM Industry. Can she stay invested or buy more? Long-term views, Sameer?
Wait for a correction to buy. long term, like I said, is a good option, but wait for a bit. I think wait for a correction closer to 2000.
PG Electroplast, Samir bought at 547. Should GS7 continue to hold?
Yes, absolutely. Please hold on for a little bit longer now. The worst is in the price, and with a good summer, you never know. Sales could start seeing an uptick.
Jesse from Vijayawada is asking on Deep Industries. He's holding 35 shares at price of 478. View for 6 to 9 months. Currently at a loss. Can she recover the loss? Kush, your view?
Yeah, so there are headwinds. I would say just to give yourself an opportunity, hold with a stop loss at 350, but start exiting close to the 410, 425 zone.
Right. Viewers, time for a quick short break. Stay tuned to NDTV Profit.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand.
Welcome back. You're watching Ask Profit. Well, moving on to our next query, which is from Lakshmi. She's asking on Sula Vineyards. She's holding 100 shares at 50% loss. Can she hold for next 3 to 5 years? Sameer, this question is from you for you. What should she do?
So, I was actually also quite positive on Sula back in the day, but after seeing the dismal performances and also now with all these free trade agreements getting signed, where wines could probably get imported at a better, cheaper rate, I think pricing pressure would happen for Sula and the profitability could come under pressure. Now, the only hope for Sula is that they manage to get tie-ups with some of these international wine companies and do the distribution here and earn some money off of that. If they're not able to do that, I think Sula is going to be a stock that languishes. So for the time being, without clarity, I would avoid it. Book your loss and find something else and recover your money somewhere else. I have done the same.
Understood. Well, time to dive into the F&O market setup and the Q shaping up trade today. Let's get in Sharad for all those details. Sharad, over to you.
Well, after 2 days of up move, a little bit of profit booking coming in, but remember it's expected to be in the consolidation range, be it Sensex or even BankX. To be honest, we see a sea of red coming in. Of course, the IT pack is holding up, but Reliance, that's the number to look at. That's down almost 0.9%. And also M&M, Interglobe Aviation and Trent also giving a little bit of pressure. It's largely a stock-specific market. And let's just see the key long build-up which is happening in this market. The numbers are few, but let's just pick them out as well. The key long build-up. Which are those stocks which should be in focus? And they are... If you could just point that out, these contracts are there. Of course, the movement is there, but let's just show the long build-up. Yeah. So, of course, there are these important stocks you would be tracking, and also the short covering. Also, there are some important stocks which you would be getting, but other details we'll get them as soon as we get.
Well, got that, Vishal. Thanks so much for that. Definitely a technical glitch there on the stock, so we'll try and load that up. Bring you that perspective again in just a few minutes, but let's go across and take the next query. This one's on Sky Gold. Our viewer has actually has bought it at 285. What would you recommend, Sameer? He wants to hold it for the next 2 to 3 years. Should he continue to hold this particular counter?
So unfortunately, Sky Gold is one of the few companies in the jewelry space I don't cover. But I remain very constructive on the organized retail, but I have not studied Sky Gold at all to know whether they're doing B2B or B2C. So I'll take a pass on Sky Gold, but I remain positive on the entire organized jewelry business. I think there's a lot of growth there.
Kush, any quick view on Sky Gold?
Pretty sure Sameer is going to go back and read up on this immediately. I don't think he likes to fly blind. No, but this one is one of the stocks that actually has done well in the sector. I remain constructive. Breakout zone above 400. So yes, if you should continue to hold. I would suggest a stop loss at 365.
Right, Kush, this is the next question is for you on Nalco. So Satya is asking, he has purchased 80 shares of Nalco at the rate of 150. Should he sell it or keep it? What should she do?
150, that is a phenomenal price, and I think you should continue holding on to it. What you are seeing off late in the last 3 to 4 weeks is more of profit booking rather than anything else. I don't think there is an aggressive selling that's come into this sector yet, especially Nalco. There will be a rebound right now. The golden ratio 61.8%, retracement support comes in at 335. So yes, you could keep your stop loss there or maybe just under, so about 330, just to factor for volatility. Keep your stop loss there, but continue to hold, National Aluminium. I think there's a good chance that, the second wave of rally could well come about soon.
We're getting a lot of queries, recently on Nalco as well. Ever since last few weeks, consistently getting, we have been taking them as well. So, very good price to enter, 150 definitely on this counter. The next question is coming from Suresh from Kerala. He's asking a long-term perspective on ITC hotels. Sameer, what would you recommend? Is it good to buy today is actually his question. So he's looking to enter this counter. What would you recommend?
Yes, absolutely. This can be bought at this point of time. I think, you've seen a sharp correction in the stock. Looking at the expansion plans that they have, the current hotels that they have, the occupancy rates, the ARR is all moving up. We think the profitability will increase and then the stock will probably get revalued. Very positive on it. I would go ahead and buy it.
Well, the next question is from Sriram from Chennai. He's holding 500 shares of Blue Cloud Softech Solution at average price of rupees 34. He wants to know 1 year view on this stock. Should he hold or add more at present price? Samir?
Wow, I'm feeling a little useless today because even this is another counter I don't cover.
It's a very small one, Samir, so we'll give you that pass. But just in terms of what do you make of the number of these AI players that have come now in focus because of the AI summit, how are you looking at them just in general? So I think that was the reason for getting across that question to you. So any perspective that you can offer, because we're seeing a lot of wild moves on a bunch of stocks, and this is roughly around 1,500 crore of, in terms of market cap. So what can investors look at in that sense?
So look, the AI opportunity in India is obviously going to grow because we are going to be setting up our data centers and we're going to get the LLMs, that's the language models ready. All of that is going to take time. Now, unfortunately for me or for anyone in the market, I don't think too many people know who's going to be doing what. What we do know is that the data centers will get some tax breaks, and that will be where foreign money comes in. So companies that are working on the data center space will be the initial benefactors in the AI space. Honestly, very difficult at this point of time without the study to tell you where the benefits are going to come in AI over the next 5 years. But keep looking, keeping an eye out, and if something is interesting, and please keep eyes on valuation. Overpaying for something and hoping for returns is something very difficult. Now, I've not covered Blue Cloud. I don't know the valuation. I don't know what they do, but I would be very cautious in making investments in AI at this point of time till I get more clarity.
That view, Samir, but very quickly, just to highlight some stocks that Sharad was mentioning in the BSE FNO setup. So just want to show the stocks very quickly. MCX was one of them that he wanted to point out in terms of what we are seeing essentially at this point of time in terms of longs being built into the system for MCX. So let's pull up those graphics very quickly on the screen as we speak. So MCX as well as Coforge seeing long build up. When you move on and look at the second plate as well, which is of short coverings, you're seeing that on RBL Bank and Oil India. Long unwindings largely seen on a couple of stocks, Paytm as well as Keynes Tech. Now, Keynes Tech continues to be in that band of 3,900 to 4,100, and so it's coming back to that earlier level. And in terms of short build-up as well, a couple of stocks that Sharad had picked out. Dixon Tech definitely seeing a short build-up, or a negative note by CLSA also cutting target prices, as well as on HPCL. So that's a quick view on the FNO setup as well. But let me go across, take the next query. That's on Aegis Logistics. Now, a viewer actually holds 160 shares. This is NKS from Mumbai at 845. Kush, he's asking if he should continue to hold on to this counter or exit. Now, this was in favor a couple of months ago. Multiple brokerages came out with views, but is it a good time to average down, or can it come back to his buying price?
I would suggest an exit on this. The primary trend on this one has been negative for a long time now, consolidative to negative, but that it's turning a little bearish even now. Volumes also on the downside fairly close to averages. I wouldn't say something super normal, but because the stock's not participated in the rally that the markets have given, primary trend being negative, not a bad idea to exit at current levels.
Right. The next question is for HAL. So Dikshit from Bangalore is holding 1,000 shares of HAL and he's asking if he can hold it or sell it off, bought at 4,562. Samir, what's your view on this?
Yeah, so unfortunately, I've been for a while saying that, all the defense counters, especially stocks like HAL, are trading at very high valuations with very limited risk reward in your favor. And my view hasn't changed. I'm not denying the fact that they have a lot of orders and more orders are coming for helicopters, planes. They're going to get into civil aviation as well. But all of this is going to take time, the gestation period. We don't know how the profitability is going to get affected. If there's delay in certain engines, which we've seen in the past, if they continue in the future, how it affects their profitability. So, with risk reward not in your favor, I feel the stock should come off further. I would advise to get out of this at this point of time. If the stock comes closer to 3,500 to 3,200, at that point, I would consider looking at entering the stock.
Got that view, Samir. So definitely, and barring what we've seen, the sell-off from the highs, the stock's still up 25% in the last 1 year. So definitely valuations at a time when execution has been a challenge, getting engines has been a challenge. It's one that you continue to monitor on HAL as well. But the next question that's coming in is on Infosys, Kush. Now, Shyam from Bhubaneswar has bought 3,544 shares, bought at 1,393. Now he's asking if he should hold on to this particular counter or sell out, given it's a big position, but what would you recommend?
Yeah, if it's a very short-term view, anywhere from, let's say a week or maybe a month, I would suggest, you should perhaps hold it because the stock is very oversold and there could be a rebound coming around. So the recent lows close to the 1300 mark will act as your stop loss. So you hold it, with that as your stop loss. But on the way up, I wouldn't really hold it on for a very long time. So once I see levels of, let's say, about 1425 to about 1460, those are the zones where I would look to exit. I wouldn't really hold on to this one for a long time.
Got that point. Well, moving on, Marathon NextGen Realty reported a steady third quarter with healthy margins and strong cash collections, even as its sales mix shifted across projects. The company has also raised 900 crore through QIP to par debt and accelerate development. I spoke with Mayur Shah, who's the vice chairman at Marathon NextGen Realty. Do listen in. How was Q3? What were the key highlights? What were the misses? And how are trends looking for Q4 and overall for FY26?
Yeah, good morning, Varsha. Thank you for having me on your show. Marathon has really given a robust 9-month performance. Like we already have a PAT of 161 crore during this 9 months. And it's a very consistent with the 18% growth over last year. And the forward looking, we are looking at very consistent, steady growth in all our projects. Like commercial particularly is moving very well. It's really giving not only good sales volume as well as there is an increase in the realization up to 10% year on year. So, that is really a positive trend which has been showing in the commercial property of Marathon Future X, Marathon Millennium. These are the main portfolio right now we have in Marathon.
Right. And sir, looking at the quarterly charts, what trend do you observe when it comes to, booking value and the area sold from Q3 FY25 to Q3 FY26? Because we have seen some kind of, pressure when it comes to booking value versus earlier quarters. So if you could, highlight on those points as well.
So basically, Varsha, you have to see real estate in kind of a 4 to 6 quarters on an average basis, because what is happening is some of those deals which happen in last quarter or this quarter gets prolonged because of some commercial deals go through a lot of longer due diligence. So in this particular quarter, you're not seeing some of the deals which have been realized. However, the deals have really happened, and I think those things will be seen in the next quarter. Otherwise, the residential portfolio is very steady. Monte South, consistently we are selling 120 crore a quarter, and even residential in projects in Bhandup, Panvel are also kind of consistently selling at a good rate. With airport coming up, I think we will see much better realization, better sales in the Marathon Next Zone project, which we already launched. Another 6 new inventory of around 600 crore, around 4.9 lakh square feet in recently. And I think those things will be realizing in the next 2 to 3 quarters as a booking and pre-sale numbers. Similarly, we also launched Bhandup projects. Out of total 370 crores which are announced, we have already launched around 180 crore of a Bhandup Neo Homes product, and some more projects which are in that pipeline. So pipeline is very strong. The pre-sales and sales numbers, realization number may not really match quarter to quarter, but overall, if you look at on an annual or 4 to 6 months quarters, you will see a good growth as Marathon really envisage on a very strong pipeline of projects.
Well, that was Marathon outlining the growth outlook when it comes to next 2 to 3 years. But viewers, quick break. Let's take a quick break and stay tuned to NDTV Profit. Be right back.
we respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance.
Welcome back to Ask Profit right here on NDTV Profit. The next question that's coming in is on MOIL. Kush, our viewer Ravindra Nathan has bought it at 280 rupees per share, holding 500 shares. He's asking if he should continue to do so and what's the future. What would you recommend?
Yeah, I'd recommend an exit. I would say that he's relatively lucky in this case because despite the kind of fall, because his buying price is lower, he's still in the green. So the support zone of 315, 310, that's also been broken down. Primary trend consolidated to negative. It's a good idea to exit MOIL at the current levels.
Right, next question is on Ujjivan small bank. So Abhilash from Mumbai is asking, he's bought at rupees 35, which is now at 63. It's constant since few months. Shall I still hold or take the profit and invest in other growing opportunities? Kush, any view on that?
Oh, no, you should continue to hold. The reason you're seeing the stock consolidate for the last 3 to 4 weeks, 5 in fact, is that the stock's already had a magnificent run from those 31, 32 odd levels, right? So it's already run up quite a bit in the last 8 to 9 months, almost about a year actually. So some consolidation is par for the course. The breakout level for this one was anyway 60. So it's trading above that also. So that will now start acting as support. So I think you should continue to hold. Keep a slightly deepish stop loss at the 57 to about 55 zone, but continue to hold Ujjivan.
Got that view, Coach. But Sameer, the next question is coming on Shakti Pumps. Now, let's pull up that counter. Our viewer actually bought it at 814. This is Afreen from Hyderabad. Since then, a deep correction on this particular counter. Sameer, how do you view both these, like essentially the pump story? Because Oswal pump also seems to have hit that high and then down the cliff and some more. But for Shakti pumps, is it a good time to add more for Afreen? What would you recommend? What was your analysis of the results?
So, first question, to answer the question, yes, I think one should add on to Shakti pumps at this point of time. You look, what happens is, when momentum happens, people get carried away and they buy stocks at very high prices. And unfortunately, at that time when she bought it, there was a high momentum. Everyone wanted the pumps. Oswal pump was probably listing. And, everyone thought, look, the opportunity is great. Now, the fact remains the opportunity for the solar pump space is actually very good. And it's going to continue to see momentum going forward, replacements, new pumps, all of those things are going to happen. But it's not going to happen overnight, right? It's going to take the next 3 years, 5 years to scale up operations. And from that perspective, from a 3-year view, yes, Shakti Pump makes a good investment. Results were okay-ish, not the best. But we think it's, like I said, it's something that will scale up over time. So I wouldn't worry about 1 quarter or 2 quarter results. What I want to see is the long-term growth. And at the end of the day, if the market, you can get more market share, I think which Shakti Pumps is working on, I think it will do well. So buy on to it, add on some more here at this point.
Got the view, Sameer. But time now for the rapid fire in this edition of Ask Profit. Sameer as well as Kush, on the drill. The first question is on ITC. Sameer, bought at 326. Post the price hike, is it a good time to hold, add more?
So I've always been someone who likes to hold on to ITC. I think it's a great story, so hold on.
On Motherson wiring, Sameer Subramanian wants to know if we can hold it for medium term, bought it at 46.7.
Yeah, I think hold on to it.
Jindal Saw bought at 600 rupees per share, price at 210, holding 600 shares. Kush, what should you do?
You should continue to hold on. 160 is your stop loss, exit at cost.
Praj Industries bought at 341 for short to medium term. Kush?
Similar view, you should continue to hold 295 to 290. That's your stop loss. Again, you should exit at or just close to your buying price.
Bharat Seeds, Kush, we don't discuss it too often, but our viewers bought at 200 rupees per share. What should Sushila do?
Sorry, what's the
Bharat Seeds.
Price?
200.
You should continue to hold this one. I would suggest a stop loss at 195, but a partial book profit at the current level.
On Infosys, Senthil is asking, can you tell the future of Infosys bought at 300 shares at 1,568? Sameer?
So, compared to an FD, Infosys makes a great investment. You'll get your 5% div yield plus maybe 3 to 5% growth. So from that perspective, very good. From an equity investment point of view, not something I'd recommend.
Well, I wouldn't expect any other reply, Sameer, on Infosys, but on PI Industries, a viewer bought it at 2910 at 25 shares. Week Q3, what do you recommend?
So I think for the time being, hold on. I think things will turn around, but wait.
Right. On InfoEdge, bought 700 shares at around 1,122. Should she hold it? Any bullish term for 1 to 3 days? Kush?
Exit.
On Dixon, Sameer, 11,778 is what Anjali bought it at. What should she do?
Well, now, if you bought it at such a good level, hold on to it. Look, it's going to take a while. The telephone business is slowing down a bit. But given their expansion, given the opportunity, I think hold on, you will make money. I'm saying 14,000 maybe in 2 years' time. So at that point, you will have made decent returns, right?
Got it.
Partha, senior citizen from Chennai, is holding 50 shares of EI Hotels at rupees 388, a loss of 14%. Should he hold, sell or add? Kush?
No, you could continue to hold this one, not going anywhere, but has supports around the 310, 315 mark. So with that stop loss, you could continue to hold.
Brainbees, Sameer, do you track this counter and is it a good buy for the next 3 to 4 years?
Yeah, I do track this counter. I'm feeling the pain at the moment. The results were not so bad as the market makes it out to be. I think the company is going from strength to strength, especially in the baby care space. I would be buying, and disclaimer, I have bought yesterday and day before.
Okay, got that view, Sameer. But unfortunately, that's all the time we have on this edition of the Rapid Fire as well as this edition of Fast Profit. Sameer as well as Kush, thank you so much for helping us solve all the stock-related queries that we could in this truncated Ask Profit session. But We will try and pick up a lot of those queries, in the afternoon edition of Fast Profit. So hopefully we will see you there at 2 p.m. But KYC comes up next.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, one of the most loved KYC shows in media, and we get a lot of love from our viewers, and of course we have picked up this stock as a viewer pick. The stock, lekin, I'll give you some hints. They are very easy, but it's up to you to guess. The first one is, it's the fourth largest mutual fund distributor in India in terms of retail AUM. That's a hint. It's only one mutual fund distributor is technically listed. Others are there, but they are ancillary plays. The stock is already a multi-bagger, 368% in the last 5 years. The entire COVID up move which we saw, key beneficiary here. But the industry is giving mixed set of numbers. Yields are a little bit of pressure, return ratios under pressure. That means there is a cyclicality involved as well. But three important guesses I have already given to you, but the company is very interesting, a stable business model, and that's why I have got this, especially in the capital market space. And you need to be prudent in life. And not only that, the company's name is also Prudent. Prudent Corporate. This is the company we'll talk about. But why are we calling this company? The earnings had come 2 weeks ago, but what is that interest which has come in the markets because of that? That's what we have got this company for, and this is a thesis which I have researched. The first question is, it's a stable capital market play. We have seen so much volatility happening in the markets, especially for the broking and the exchange stocks. So does the flow move to the brokerages, or I mean to say the AMCs, or stable ancillary plays here? Because India's long-term growth story is still definitely there, and the company itself is a second-order effect, and we have seen its growth journey coming in. So for long-term investors especially, I have got this company for you to actually learn and understand in KYC, is there any value here? Remember, cyclical pressure is there in this type of industry where the yield pressure is still continuing, and that's plaguing the numbers, and that's what in the last 6 months nothing much has happened in the stock. This is very important, de-risking the product portfolio. Already it has insurance distribution also. Does it go into new products or is it new geographies? That's what we will be asking the management of Prudent Corporate, because the future acquisition plans, the company is sitting on healthy cash balances. Will there be a fintech acquisition? Any AI usage would be coming in, because that's something very much important. And that brings me to the last question. Is there a new product pipeline coming from Prudent Corp? Because the market needs something new, and of course company has already established a safety brand or an industry they are working in, but will they take the next step? And to answer that, we'll have Sanjay Shah, the chairman and MD of Prudent Corporate, where he'll give his views on how the industry is changing, how the performance has happened in earnings, and also outlook ahead for Prudent. But that's not all. Let's go into much more layers for Prudent and explain you why this company itself, despite being a stable business model and a stable industry, there are some issues. Of course, this data we have already shared. In the retail AUM front, the company is the 4th largest, but let's get into much more details. And it's operating as a distributor of mutual fund, insurance, roughly around 11% stake in terms of revenue, and other financial products as well. But net, it is still a distributor of mutual fund. Now, 40% CAGR AUM growth has been coming in from FY20 to 25. Remember, this is the time when the explosion happened. There was COVID, there was a new entrance in the market. So the base is very high already. The insurance products, they are improving from 7% in FY20. They have increased it to 12% in FY25. That means the de-risking portfolio is going on, but it is very, very slow. It's not very fast because of the size of the company. That's the reason. The monthly mutual fund SIP flow is coming in at 1135 crore rupees, and the data which we checked, still now the SIP inflows are near their record high levels. So that's a key beneficiary, the company coming in. The AUM is at 1.3 lakh crore. And let's look at the other numbers also as per the Q3 numbers. MFD is the mutual fund distributors we talk about. It's interesting that it's around 36,000 odd levels, likely to go up, touch the 40,000 mark by the end of this fiscal. The investors, this keeps on growing as the long-term investment habit builds up in India. So the company is a proxy to that story. But that story does have hiccups also. But investors, this is the story I'm talking about, the growth story of India, the way the long-term investment is happening, the SIP is happening, HNI book is happening. That's roughly 60 to 70% you could assume for the entire mutual fund AUM space. So this is pretty much interesting, and we are seeing the entire setup coming in, but there are a lot of questions to be asked. The big questions is, will the capital from the broking of the exchange stocks move into AMCs or ancillaries in this space? Will we see that capital changing? The second question I want to ask is the mutual fund industry. Is it still reeling under the yield pressure, or things have they bottomed out? Because that's one of the key reasons which we generally don't discuss on the mutual fund growth industry, but there are pressures and they need to be addressed. The third one is, how will Prudent Corp de-risk its product portfolio? That's the big question we are asking. What's new? What's next? Are you just stable business? The growths are coming low. What happens next? And usage of AI in wealth management industry. How does that speed up? Is it that manpower costing comes down and you get more business? That's one of the key questions to be asked. Of course, it doesn't reflect on the numbers now, but stock market always comes on futures and earnings. But these are the big questions. But another big question you must be wondering is, Sharad, what are the ratings for KYC? And very important it is. It's a holy grail, the financial numbers. These important numbers, we get them for you. Judge the company, give them the rating so that you make informed decisions and do consult your financial advisor as well. Return ratios is something you should be looking out for. Apart from that, there is shareholding, looking at how the institution movement is happening, and also promoter, the view on promoter. Is the promoter selling any stake? If yes, why? Street cred, valuation, comparing with itself. We are not keeping any direct peer to it. And just to show how the history is panning out, an analyst take. Are the analysts still bullish on the stock? Because let's be honest, last 5 to 6 minutes, 5 to 6 months, this stock has tested the investor patience as well, but on the long term, it has been a multi-bagger. Let's move on to the first one, that's income statement, to see how the numbers have panned out, and it's a good growth numbers coming in. And FY23, the income was 611 crore rupees. That's almost doubled up in 2 years. A good set of numbers, you name it, revenue, EBITDA, PAT. But where's the concern coming in? My concern is the margins. Because these numbers are good and all looks 2020, but margins, that is where the stress starts coming in. Is it a commoditization happening in the sector, or is it more competition, or is it just a cyclical play that we're in a downtick where the margin pressure, the yield pressure is coming in this mutual fund industry? That's all the questions, the management will be asking us. But net, because of the margin issue, compared to a very strong revenue growth, I'm giving this a neutral rating when it comes to prudent corporate. Let's talk about balance sheet. Balance sheet in these type of models is nothing to be concerned about. They hardly have any debt. It's an asset light model, and that is why the street, likes these type of businesses. And just look at the cash balances. That is I'm much more interested. Why? Because will the company come out with any good deployment or an acquisition, or maybe a reward to shareholders? That's the interesting part. So just look at 178 crore rupees. Other numbers are fine, decent, but your time should be going in that number. This is a strong one. So a thumbs up coming in when it comes to the balance sheet. So income statement we spoke about, balance sheet we spoke about, but at the end of the day, it's the cash flows which matter, and largely in a business model as such, the cash flows, there isn't much issues. This is a very differentiated business model. Asset light it is, and when it's asset light, the cash money, it's coming, and it's a good reflection. The cash flow to PAT, it has remained same. PAT numbers have gone up, cash flow from operations have gone up. A little bit of lumpiness definitely coming in the net cash flows, but these two are the numbers to actually look at when you're judging the company. And right now, the cash flow statement is positive. Let's talk about the return ratio. Generally, these type of business models, the return ratios are on the higher side, and you are expecting 30% plus return ratios considerably all the time for the model like this. And during its IPO, we are expecting this could actually hit that 35 plus mark as well. But it's a cyclical thing. There's a market cycle at play as well. So those higher 30s ROE numbers, that has started coming down. It's around 28.8 now. The yield pressures are coming. 29.3, so it has dipped. I spoke about margins, I spoke about yield, now I'm speaking about ROE, and the major expansion also hasn't taken place. A little bit of acquisitions are definitely there, but if company does more acquisitions, there will be more significant pressure coming in. Why? Because the street is expecting the company to de-risk the portfolio. If they go on a slower rate, maybe the ROEs will be maintained, but as of now, it is not, it's falling. So because of that, current data, I'll give a strong thumbs down when it comes to return on equity. Let's talk about shareholding, how things have moved. It's largely a stable asset play, but has the money moved amongst the institutions? If yes, what's the trend? Let's look at that. Promoters have reduced a little bit of stake. Each quarter 1% stake is being reduced, so that'll be pretty much interesting where those proceeds are being used. FIs was a good jump from 12 to 18%, but then again a profit booking coming in. So out of 3 major shareholders, 2 of them have actually reduced their stake, and that's where a little bit of my concern comes. But to negate that, the DIs have come up. They have lapped up also from 16% stake to 22% stake, so it kind of balances out. So it's a neutral rating when it comes to the shareholding pattern. Let's talk about street cred. Has the money been made if you have invested in the stock, and if it's for the short term, maybe you haven't caught the bottom of the market. And remember, the entire capital market theme stocks were under pressure. This is not an exception to it. That is why we are seeing the very measly returns, or you could say lower returns coming in. But long term, multi-bagger hai ye stock. 1 year, 32% returns. And let's just pull out the 5-year return to show you that if you have held conviction in India's growth, the mutual fund industry growth, then you have been rewarded by 368% gains for your investments in Prudent Corp. So net, short term, medium term, if you have entered, it was a wrong entry. If it's a long term, it is a good one. So it's a neutral rating when it comes to the street cred. Also, let's talk about valuations, how things pan out. I've just taken the 12-month forward PE ratio. The current one is at 41 times. And if you look at the peak valuation, this 2024 peaks, that was 58 times. But after that, it is a sanity has come back into the markets, I would say. And now it's at a decent level of 41 times. You must be wondering what's the 5-year average. So I'll just put that out as well. That's 51 times. It actually doesn't mean that its stock is trading at a big discount. Now I'll tell you why. There's already a yield pressure happening. That's why the numbers are suppressed. Secondly, the capital market cycle, it's not at a very big peak. There has been changes. The capital allocations are changing, and that is why we have called this company to see whether now a new rate of re-rating comes for this company or not. So definitely it's a neutral rating right now, and we need to wait and watch. That's why we need to keep it fair in our analysis. But apart from valuations, also a very key analysis is the analyst. What are the analysts thinking about the stock? Are they getting tired? Are they still holding up, or they want to get into the stock? And yes, analysts are very patient, or let's say very prudent in their calls. 4 of them have given a buy call, not a single sell call. Hold also 2. That means technically nobody wants to sell this stock. It's a good stock. But on the other hand, the expectations is not very high also. Just for 12 months is just 9%. That means it's a very flattish or a slight positive move coming in until and unless some major announcement in the industry or a big corporate move comes from the company itself. So there is an inflection point, and the market is asking what's next, Prudent Corporate. Net, it's a positive takeaway for the analyst, but let's just add up, all of our ratings, how things actually pan out. Largely, income statement has been good, but my concerns are there on the margins. We will get that question from Sanjay Bhai. Balance sheet, cash flow, they have been really good. It's an asset-light model. That's what the institutions also like. Return ratios are on the decline, and of course, that makes sense. Street cred, it's been decent. Short term, medium term, nothing much. Long term, it's been a multi-bagger for you. Valuations, it's decent enough, but I wouldn't say that it's the cheapest right now to enter into the stock. But analysts are still bullish, but the return potential is not so high. Nevertheless, it's hot, cold, but the KYC rating for this company, I've given it 5 out of 8, slightly on the higher side. And the reason for that is that there's a flight to capital happening from the brokerage and exchange stocks. So will that benefit the AMC stocks? Will that benefit the AMC ancillaries? And that is why Prudent Corp is coming in KYC. But joining us would be the Chairman and Managing Director Sanjay Shah of Prudent Corp. He has more than 2 decades of experience in wealth management, and also he is a qualified chartered accountant from ICAI as well. We'll be talking with Sanjay Bhai on this entire setup. And it's always a pleasure to have you, Sanjay Bhai, with us in KYC show. It's a new format. First time the company is coming. The first query is, of course, going to be on India's growth story. The AI part is also there. But the growth which is happening, the AI, the mutual fund, a little bit of hiccup is there in the markets, because we have seen that in 6 to 8 months. How is the mutual fund industry holding up? Is there any kind of a yield pressure coming in? Give us a ground channel check.
Thank you very much for having me on the show and covering my organization in a very detailed way. I really appreciate the way you have been talking about the know your company. For us, the know your customer, which is the KYC for customer onboarding. You have done a very great company onboarding to give the very detailed perspective. Now, if you look at the entire mutual fund industry, I believe that in the wealth management segment or in the financialization of the economy, I think the mutual fund is coming out as a very strong product. If you look at last couple of years experience, I think people's experience in the mutual fund has been reasonably good. If you look at all the competing product, whether you're investing directly into the equity or chit funds or for that matter any other asset class, I think the experience has not been very, very great. To be very frank, we represent very, very strong retail of the country. And if you look at last 12 to 18 months, market has been definitely going through a consolidation phase through many ups and downs. However, all who has probably committed their money through SIP, because of the rupee cost averaging, their return in last 12 months, 18 months is it's at least close to double digit or probably a higher single digit. So I think overall experience has been pretty strong. And because of the strong role which has been played by the regulator to make the industry very, very transparent and very competitive as far as pricing is concerned. So I believe the growth of mutual fund industry is going to be there for a long period of time. And in spite of we being reaching almost about 82 lakh crore of AUM, we have hardly about 4.5-5 crore investors. So there is a long tail which is pending, and we all need to do a very strong role to make sure that the financialization, the participation of people becomes significantly larger. And I believe each household should have SIP as far as investment is concerned, because that will play a very, very quality addition to their strategy for the retirement planning. So I'm not worried about the growth. Coming to a second question about the margin, I think as you knew that the structure itself is prepared by the regulator in such a way that as the AUM increases, incrementally some amount of reduction in the total TR will be automatically priced in, and the benefit of scale will be transferred to the investor. So gradual decrease in the yield is probably something which is you have to always keep in mind. However, I think the growth potential is so large that the yield pressure will not be going to create huge impact on the profitability and the operating margin. So I'll just give an example. Say, for example, in last 3 years, my yield has moved down from, let's say, we used to be at 95 basis point. Now we are at 90 basis point. So there is a 5 basis point compression in last 2.5 years. However, my AUM has gone up by 4 times in last 4 years. So same is the story for everybody. So probably I think I will be more looking at the growth of the AUM rather than the yield pressure, because growth will definitely compensate some amount of margin pressure which is going to be there over a period of time. But yes, it's a reality. Another important thing would be that if you look at now, lot of a big scheme has already crossed the threshold of 50,000 crore of AUM, where incrementally margin pressure will not come. So we believe that some point of time you will also see that this margin will plateau down and some amount of stability will definitely prevail.
Right. Sanjay bhai, of course we talk about the company, but KYC is a very special show. We want to give our viewers a 360-degree angle of analysis, and the private wealth management space, we have been associated with more than 2 decades of experience in that. Now this AI also comes in. Now if AI comes in, if you are using or the industry is using, what benefits is this private wealth management coming in? Because it's still a one-to-one kind of a sector, especially for your clients which are having a larger corpus. But I want to know about the AI usage right now for the wealth management industry.
So you are absolutely right, because say we believe that AI, the way we have seen the digitization in 2014-15, I think it's going to be a time for another wave of change in the industry from the point of AI. However, you are very bang on as far as the personalized approach to the investors' portfolio creation is concerned. So my belief is that AI will play a significant role in data analytics. I think having the information on your fingertip. Say for example, today I'm meeting my partner or my client. AI will tell you that what is the behavior of this client, how much activity he has done in last 1 year, 2 year, 3 year, whether this guy is investing into particular SIPs or not. So you will be having the information at your fingertip, which will help you to do the business much better. Another thing would be probably AI will help you to analyze because say today, frankly, if you look at, we have a large customer database of about, let's say 25 lakh customers and the 30-40,000 distributors. Now you can't work on everybody at one point of time. So if you have the data analytics, which is supported by AI in a much better way, I think it will help you to increase your productivity. So all in all, AI is going to be the reality going forward, but the role of advisor advisor to understand the client's behavior, his greed and fear, and how to manage him during this greed and fear phase is going to be very, very prominent. So rather, my belief is that as technology becomes more and more intense on AI side, the role of the investor behavior also become critically important.
So it's a very important take on that. But apart from the mutual fund also, the street is concerned about prudent de-risking its portfolio. Insurance segment also, your revenue has increased, but street is expecting more non-mutual fund segment revenue coming in. What's your take on that, and क्या नया कर रहे हो आप?
So I think you are absolutely right, because we believe that so there are two things which is happening. We have started looking at the non-mutual fund products in last couple of years. However, the growth of mutual fund was so strong that the other product could not be able to cope up with that growth. That is number one. Number two, if you look at my insurance, premium growth is very, very robust. However, in the insurance also, there is a huge change as far as your entire revenue structure is concerned, because if you look at the beginning of this year, there was a clawback provision which has came in, that if you're probably there is a clawback of let's say about 4 to 5% has probably factored in. So my revenue yield has came down by 4 to 5% at the beginning of the year. Then in last quarter, again, as you knew, that government has removed the GST from insurance. So the what you call the GST impact has also came as far as my revenue is concerned. So because of these two, even though we have done significantly better on the insurance side, I think the profitability or the revenue is not visible. But I'm very, very confident that insurance will be a very, very significant product in our kitty. Apart from that, we are now also distributing almost all PMS AIF. We also have a loan against security. We also have a stock broking. We also deal in bank FDs and corporate FDs. So these all put together, I believe that they all have a growth potential, which is even better than the mutual fund, because they are very small in my segment. So all in all, probably today mutual fund is about 85% of my revenue, and 15% is for other category, wherein about 10 to 11% comes from insurance. So 85 from mutual fund, 10 to 11% from insurance, and another 4-5% from non
right. Sanjay bhai, there is a significant cash balance on your books, and viewers have written to me that will there be an acquisition coming in just to prop up your AI angle, or something which is not related to mutual fund and acquisition comes in, or any dividend announcement? Investors are looking at that.
No, I think that is one of the main reason when you have looked at my return on equity has came down, not because of my core business, but because of the cash which is getting piled up. We have been always on lookout for some good acquisition. And as you know that last quarter, we successfully acquired Indus, and we spent about 8,500 crore, and another 35 crore is going to be spent over a period of next 3 years. So it's not that we are not looking for the acquisition. We have been seriously considering various options and regularly scouting for meeting the people. But at the end of the day, I am the custodian of investors' money, and I should buy something which is very, very fit to my fitment. Number two, I believe that dividend is not the effective way of payout. So I'll try to preserve the cash for at least another 1 or 2 years to make sure that we can do a better acquisition. अगर मैं नहीं कर पाऊंगा तो I think after a year or so we'll define the dividend policy.
Sir. Right, Sanjay sir, it's wonderful talking with you. You give an interesting perspective about your company. A lot of misconceptions were cleared, and we will share that with our audience at KYC. And best of luck for the future and for the industry as well. Always a pleasure talking to you. Well, this is the management of Prudent Corp, and they have, given out some misconceptions which are there in the market, and some clarity has definitely come in on the company's strategy. So we'll be definitely focusing on that. So that's all, folks, for KYC. But of course, the action moves on to the Indian AI Impact Summit. Please take it in.
AI can help us find answers to these questions that we've pondered over for thousands of years. We're already starting to see the beginnings of this with systems like AlphaFold that we built to solve the 50-year grand challenge of protein folding. And we hope that this will just be the first example of amazing advances in science and medicine that have been enabled by AI. And we and others are working on many other branches of science now to bring AI tools to help advance material science, fusion, physics, and mathematics. In fact, almost every branch of science and medicine can be impacted by AI. And now in 2026, we're another threshold moment where AGI, artificial general intelligence, is on the horizon, maybe within the next 5 years. And we're seeing these general purpose systems, foundational model systems, becoming increasingly capable almost week by week. So this is obviously an amazing opportunity that we should all grasp, economic and productivity, as well as in the sciences. But it's also something that we have to approach with humility and understanding that we don't have all the answers yet as to how this technology is going to develop and to be deployed into the world. I've been really impressed with what I've seen in India. I spent some time prior to the summit in Bangalore. We have a really big office there, Google and DeepMind, a great research office where we do some really critical research that we then bring to our products and our technologies around the world in areas like efficient models, continual learning, and multilingual capabilities. I also had time to give a talk at the Indian Institute of Science at Bangalore, and I was incredibly impressed by the students and the faculty there, their enthusiasm and their energy for AI, and their ideas for how to use AI to improve India as standing in the world, and to also seize all the new economic opportunities and scientific opportunities that AI opens up. It was incredibly impressive to see the energy around the country. And I think that India will indeed be a powerhouse for AI across the globe. We have many partnerships. Sundar, you heard Sundar announce many Google partnerships that we have with India. I'm especially proud of our deep partnership with Mr. Ambani and the Reliance Jio group to bring intelligence to everyone in India with our Gemini foundation models in partnership with Reliance. So we hope to build on that in the next few years. So if I was to try and quantify what's coming down the line with the advent of AGI, I think it's going to be one of the most momentous periods in human history, probably something more like the advent of fire or electricity. One way maybe we can quantify that is, I think it's going to be something like 10 times the impact of the Industrial Revolution, but happening at 10 times the speed, probably unfolding in a matter of a decade rather than a century. So really, this is an enormous amount of change is going to come, and it's still to be written how we can make that beneficial for the whole world. And I think the main way we should try to do this is by taking a scientific approach, using the scientific method to understand what the capabilities of these systems are, to build good guardrails and monitoring systems, to understand more deeply what these systems are capable of and how we can make sure that they serve the purposes that we want. And then, of course, simultaneously, we also have to be bold to grasp these new opportunities to advance science and medicine and to improve human health and the human condition that society and the globe badly needs. So I think we've got to try and navigate this moment very carefully, very thoughtfully. And if we do so, I'm very optimistic that we'll usher in a great new era. But of course, this can't just be left to technologists. And that's why summits like this are really important, to bring together all parts of society, the technologists that are building it, the scientists that are building it, governments and how to deploy it for the best use of their citizens, but also artists, social scientists, and philosophers. We need to bring all of these debates into the tent to understand how we should navigate this next period in human history. And I think summits like this, international summits like this, are critical to encourage this kind of international dialogue and cooperation. And if we get this right, these next steps right, I think we can usher in a new golden era of scientific discovery and improve the lives and health of everyone in the world. Thank you.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, Real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
More importantly, we can do unprecedented things with this, things that we could never do before. So this astonishing effectiveness, and Joshua referred to this as a jagged frontier, it is not uniform. Not everyone sees this. So that's my second point. Being effective with AI requires not only a knowledge of AI itself, but understanding its limitations and how to overcome those limitations. There is a huge gap between LLMs and the business users inside enterprises especially, and how to bring value to those users. And overcoming that gap is where a lot of value creating opportunity is. Bridging that gap requires delivering correct systems, trusted, verifiable, reliable systems that deliver value to people. My own company works in this area, a layer that sits above the language models and delivers value to business users while ensuring correctness and things like that. When we overcome that gap, we can deliver massive value. Mukesh Bhai talked about it just now. We can transform every existing system, legacy systems, enormous complexities inside enterprises can be removed, industries can be transformed. We can give end users wings. We can amplify them to deliver things that were not possible to do before, or in the best case, it required professionals to do this. Doing that also requires not just overcoming the limitations of AI, but also imagination, to see what is not there, to see what is possible. India has all of this in great abundance. The Honorable Prime Minister has called for 1 billion entrepreneurs, people who can overcome these and deliver value using AI. And I think this is exactly what the world needs and what India has the potential for. My third point is that we not only have to master today's AI, but we have to leapfrog it. AI today has enormous limitations. I have worked in AI for the last 38 years. You know, one of our scriptures is Bhaj Govindam. It was written by the Shankaracharya, and it has a beautiful line. Samprapte sannihite kale, nahi nahi rakshati, dukrin karane. What it means is that when you are faced with a life or death situation, the knowledge of a book does not help you. Knowledge without wisdom does not save us. That wisdom comes from living, from doing, from being in the world. AI today has plenty of limitations. Joshua mentioned hallucinations. That's one of the main issues blocking the use of AI in enterprises. But beyond hallucinations, understanding the world, understanding physical activities, the physical movement, this is one of the next frontiers. Safety of AI, and the Honorable Prime Minister talked about this today, is an existential issue. Swarms of agents can be made to do completely reckless things, and we don't yet have ways to understand or deal with this. And Joshua and Demis also talked about this. We have to solve this issue. We have to deliver AI that is safe. We have done this with nuclear power for the last 80 plus years. We can and we must do this with AI. Energy is another one of these issues. Where I live in California on Highway 101, just north of San Tomas, I drive by there every time I go to see my dad. There is a massive data center that is coming up. It's 720 megawatts. And this idea that I write a prompt and these gazillion GPUs blast into existence to produce a response, and then I make a tiny change to that prompt and then do that again, it just seems like a completely absurd idea, especially to someone who has been around AI for such a long time. I have, thanks to the Ministry of IT, Honorable Ashwini Vaishnavji, I have a colleague who has been accompanying me throughout this conference. And he told me that yesterday he walked 32,000 steps. And I asked him, what did you eat? And he said, I ate 2 burgers. Shubham, if you're here, 2 burgers.
Right, so that was straight coming in from the AI Summit. Vishal Sikka there giving his insights on the huge artificial intelligence momentum in the world that's really taking shape. Let's now move forward and talk about the markets. Markets at the lowest point of the trading session. So let's just focus on that. And in fact, it's a broad-based weakness that we are seeing in the market currently. It's Nifty 50 at 25,650 odd levels at the current moment, 0.7% down in trade, and there has been a consistent weakness and sell-off that is being seen. Not just Nifty 50 and the key indices. Remember that the broader market is also in line with the weakness shown in the key indices. So mid-cap universe also down by 0.7%. Now, when we take a look at the internals of what's really contributing to the fall on Nifty 50, take a look at the contribution chart, and Reliance Industries, big boy, is the biggest dragger in trade today. Along with that, some of the other heavyweights like ICICI Bank and other banking counters are also there. When we talk about the IT sector, that's a mixed bag today. After falling for several last few days and weakness, there is a tinge of green that is being seen in the IT space as well. But let's focus on one important aspect that we are following as a top story today on Markets at 12. We're talking about Relegare. Remember that the demerger was announced a few days back, and since there, Relegare Enterprises has lost about 10% in since the time the demerger announcement happened till today. day, and there has been a consistent sell-off and pressure on the counter that we have seen for the last 5 trading sessions. In fact, that is the chart that we are really looking at. In fact, today as well, with the market momentum, the stock is down close to 3%, and we talk about the last 5 trading sessions, it's down 10%. Now remember that this particular company has announced its demerger process, where Relegare Enterprises will be demerged into 2 separate entities. One will be Relegare Enterprises with its subsidiary Care Health Insurance, where the largest part of its business and value comes in from this Care Health Insurance business. On the other hand, the other businesses under Relegare Finvest would be really listed on the exchanges, with lending, broking and investings, that those are really placed under a separate category. Now, what has really transpired with this particular demerger announcement, that the stock is seeing consistent pressure? Let me welcome on the show Amrish Baliga, independent market analyst, to talk more about this. Amrish, looking at this particular structure, and of course the demerger was very, very closely watched out for, there have been several questions that have been raised in the investor call, and we can really address and talk about that. But to begin with, what is your view when we talk about this demerger process, and your view on Relegare Enterprises with this restructuring?
See, typically whenever a demerger happens, normally it adds value to the shareholders. Now let's take this example of Care Health Insurance. The market valuation should be in the region of about 20,000 crores. I mean, there are figures which are coming out at 17,000 crores, and there are a few figures coming at 23,000 crores. So I've taken the middle level, which is about 20,000 crores. Relegare, holds 63% of this. So the valuation as far as Relegare is concerned is about 12,500 crores. And they also have like the broking and the NBFC business in Relegare, which is worth about 3,000 crores. So totally 15,000 crores should be the value, where it's quoting at half that value. Look at the look at the market cap is about 7,350 crores. So this normally happens when there's a holding company with multiple investments. Now that we will have the broking and the NBFC business listed separately, I expect that to at least quote closer to the intrinsic value, which is about 3,000 crores. And the health insurance, which is going to the holding company, and we should remember that that will be the sole investment. So a sole investment in a holding company should not get a similar discounting which other holding companies get, because they have multiple investments. So even there, I see the holding company discount reducing. So overall, I think it should add value to shareholders.
Just one question, Amrish, on the question of Care not being merged with the holding company.
Like one of the options, going ahead, clearly is to merge the insurance business into the holding company. But then it is easier said than done. There are a lot of restrictions to merge insurance subsidiary into a non-insurance holding company. But like I said, since there is no other investment or activity in the holding company, that possibility remains. But again, it is subject to IRDAI approval. Because if we go back to 2015-16, there was a proposed merger of Max Life, which was the insurer, with Max Life Financial Services, and that had to be called off because IRDAI did not approve it. Now, assuming that going ahead,
Sure.
If the merger is allowed,
yes,
the question is, will the existing external shareholders of Care agree to with the holding company?
All right.
Okay.
So Amrish, we'll have to intervene because we have to jump back to the AI summit. Let's cut across Nandan Nilekani as well as Dario Amodi of Anthropic. They are speaking at the summit.
About with Nandan was, we're both obviously very interested in, making sure that this technology gets to everyone. And Nandan has devoted a big part of his life to many things, many things in that direction, and has built out India's digital public infrastructure. And so, I think this question of diffusion is very tied to the question of how do we make sure that everyone benefits.
So when the foundation models came, Nandan, you said that we should do use cases. And it sounds like Dario is saying the same thing, that even if we do the foundation model, we will still need to do use cases.
No, I think it's great what the foundations models are doing and the speed of evolution. But what we have learned is that diffusion of technology is a different ballgame. And how do you get technology to 1 billion people? And I think India, we have a little bit of experience with that. 1.4 billion people on Aadhaar, 500 million people on UPI, 20 billion transactions a month, the world's largest cash transfer system, the largest financial inclusion system, you name it, all that stuff. And we learned that diffusion is a technique. It's both an art and a science. It involves institutions, it involves policy making, negotiations, dealing with incumbents, dealing with newcomers, strategies for execution. So the whole, trust building, so a whole host of things. And I think if all the investments in AI are going to deliver the value to society, not to just to individuals, we'll have to look at diffusion pathways to take this to everyone. And I think India will lead on that. That's why I've always been saying that India should focus on becoming the use case capital of the world.
Dario, you had a more recent essay, which you call The Adolescence of Technology, which is a little more somber. Spoke a little bit about sort of dimming the enthusiasm of the first essay. And I want you to perhaps unpack that a little bit. We all have spoken about the risks of the technology, but particularly in the global south, where we think that AI is going to be hugely beneficial for us, we perhaps will have a different calculus on the risk-reward ratio. What do you think about that, and how would your essay address that?
I think that's an insightful comment, which is that I think in the global south there's an opportunity for AI to accelerate catch-up growth, to solve a bunch of problems that are in the way of catch-up growth. And so I think AI is a technology that has big risks and big benefits, but in the global south, the benefits may be even bigger than they are anywhere else. But at the same time, that doesn't mean, of course, that the risks aren't real. India is the world's largest democracy. We need to think about how democracies handle AI, and how we confront other countries that are authoritarian. That's one of the risks I talk about. Another risk I talk about is making sure that AI systems are safe and predictable, and autonomously behave in a way that's under our control. And everyone in the world has to worry about that. That affects everyone in the world. And then, I think of particular relevance to India is, the concerns I raised around economic displacement, right? Where, I think the signature of this technology is going to be that it greatly grows the economic pie for the whole world. And again, huge upside because of the opportunity for catch-up growth, growth can be very, very fast. But there's things are going to change, and there's some potential for disruption. And I think what I've been thinking about as I visited India these last few days, and the last time I visited, is how can we work together with the companies in India to kind of drive this growth for everyone, to make sure that the existing companies, large and small, continue to prosper along with us and the other makers of AI, and also on a philanthropic basis, how we make sure that the benefits reach everyone, both in an economic sense, in a health sense, in kind of other senses. So, I think India, it kind of offers a particularly keen distillation of especially the benefits, but also the risks.
Nandan, you've had experience with an adolescent technology with the whole DPI. In the early days of DPI, it was challenging. There were challenges with getting the big vision, which of course now we're looking at, and in hindsight it looks like it was easy, but the early days was difficult. So, as the father of a mature technology, would you want to give the father of an adolescent some advice?
I don't know, that makes me a grandfather. So I think when you talk about diffusion, and you have to think of AI, everybody agrees, is like a general purpose technology, like people give the simile to fire or electricity or whatever. It's about starting from the user and how can we improve their lives? How can we take 1 billion people and help them to learn better? How can we take 1 billion people and give them better healthcare? How can we take 500 million farmers and improve their earnings? You have to start from there and then figure out how to make it happen. And it's not just technology. Technology is just one piece of the puzzle. It's about institutions. It's about trust building. It's about negotiations. It's about guardrails, which Dario mentioned. It's about working with different stakeholders and making them go towards a common vision. So it's diffusion is difficult. It's not a simple task. So I feel that India will demonstrate this because we have the experience of diffusion at population scale in all the various areas. And obviously, diffusion of AI, there are some differences that we need to think about, data, guardrails, and so on. But I think we can build a pathway or multiple pathways to that goal. And that will show the world. Because I believe right now in AI, there's a race to the top and a race to the bottom. And the race to the bottom is faster than the race to the top. So I think all of us who have a stake in AI being useful to humanity have to accelerate and redouble our efforts to make the diffusion happen. Otherwise, the consequences are going to be very, very difficult because there's going to be a backlash. If the only thing that AI does is create deep fakes or raise the price of your power bill or all the other things that are happening, people are going to respond. I mean, the resentment of the blue collar worker led to the train wreck of globalization. The resentment of the white collar worker is going to lead to the train wreck of AI. So I think we really have to work very hard to show profound, useful cases of AI.
Dario, you were in India in October, and you're back again now. You spend a lot of time actually with the developer community. You clearly were impressed because you've come back so quickly. Could you tell us a little bit about, what your experience is with how India is building and using AI? Perhaps just go through the stack. I mean, enterprise, small business, startups, then developers. What's different about the way India does it?
Yeah, so I would say there's just an excitement here and technical acumen, and we can even see it in the statistics of usage of Claude. Use of Claude for technical kind of programming and software engineering, mathematical tasks. The fraction is substantially higher here in India than it is in most other places in the world. And every time I go to speak at one of these, we'll host these builder or developer events in India. Just there's a lot of excitement. I can feel the brimming excitement of what is something that we can build. In just the last 4 months, the use of Claude and Claude Code has doubled. Has doubled in India, and I'm sure it's the same for the other. I don't say that to promote Claude and Claude Code. Like, it's more a statement about the kind of excitement in India on the enterprise level. I mean, the two of us just announced a partnership just yesterday. So we're really excited to work with all the large enterprises in India. They know much more about the Indian market. They know much more about, distribution. They know how to serve enterprises within India. And, they're much better at that than we are. And can we plug our technology into what they do and create something that kind of wins for both sides, right? We would like to be able to, jointly win with the companies in India. And then finally, I think there's another element that's almost unique, which is that there's an excitement to build, but there's an excitement to build for public good and for philanthropic benefits. So, Nandan kindly introduced me to the XSTAP Foundation, of course, builds digital infrastructure, and we've already started to work on a number of projects really to reach people in rural areas. We're trying to combine Claude with something called Open AgriNet, which helps farmers in rural regions to kind of find better information and better advice to be more effective and efficient, and we're looking to expand that a great deal. So I think that's something totally unique to India, and that through folks in the private sector we would get connected to these efforts, and there would be mutual enthusiasm to promote these efforts.
And you of course have an office. You've declared a managing director, but actually more importantly, Sonnet 4.6, which dropped yesterday very inconveniently, so I couldn't try it, apparently is doing very well on 10 Indic languages. So there seems to be a bit of a focus in your development as well on India. Can you tell me why that's important, why language, cultural context is important, and what India can play, what role can play in that?
Yeah, so language models have always been multilingual, but of course they're better at languages than that they've been trained more on. And of course, as I learned when I first came here, India has a very long tail of regional languages, and we see this as something related to access, something related to making sure we provide benefits for everyone, right? If you can only speak the most common languages, then there's a long tail we're not reaching, right? The farmers that we mentioned, many of them speak one of the less common regional languages, and so we've put in place a push, collaborating with folks in India to acquire more data for this long tail of Indic languages, and Sonnet 4.6 represents an improvement. We're not all the way there yet. We want these models to be as good, even far out in the long tail of these languages as they are at speaking English.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Daria, and Sharad Dubey standing at the NDTV Profit market pit with all the action in the market today. Sharad, what are the markets looking like? Because the pressure has again built up when it comes to IT. Few pockets performing well, but what is it that you're looking at?
That's true. Thanks a lot, Hiral, for that. But look at the markets. We are near the day's low level, and there is a sustained selling coming in. And remember, it's form of a profit booking. We are near the day's low level, and the Nifty bank also, if you could pull out the intraday chart to show how the movement has happened, and that's also mirroring same as Nifty. That means the private banks are also not holding up. Let's talk about the key factors which are much important. Remember, after 2 days of good up moves coming in, now profit booking is also coming in. And remember, there is a Sensex expiry at play, and that's why the volatility that has spiked up as well. But looking at how Nifty and Nifty Bank have been performing, overall, looking at the sectoral churn that's going to the defensives like FMCG right now, so a little bit of volatility is there in the market. But nevertheless, remember, more volatility can come in the closing session also, and this is coming in because of the Sensex expiry. Apart from that, let's look at the other factors also which are important, and the strategy. If you're a medium term investor, buy the dip. That's the important view coming in for both Nifty and Nifty Bank at the current levels as well. India VIX has spiked 7% and it's above the 13 mark as well. And the global sentiment, if you look at it, it has turned sentimentally mixed right now. The key support levels, this is the one, 25,400 to 25,600. And for Nifty Bank also on the lower side, it's between 60,500 to 61,000. So this is the entire picture coming for the markets as of now. But yes, it's developing. And Hiral, we might see some kind of a choppiness also going ahead, at least this week.
Absolutely. Choppiness is something which is being envisioned by all. Consolidation is the word that everyone is using as well. But let me quickly take you through the watch list for the show. Coforge, CLSA is positive, and they're saying that Sabri risks are manageable, strong moves coming in there. Rising crude prices becoming beneficial for ONGC and Oil India, so reversal coming in on those counters. Dr. Reddy's has signed a pact with Mercury Pharma, which is working for them. And NewGen Software is seeing a recovery after an extended fall. Along with that, you have a Datamatics, which is buzzing on the back of heavy volumes. And you have MCX, which has actually gone ahead and withdrawn the additional margins for gold and silver. And that's the reason why that stock is in focus. Intellect Design Arena, pretty confident of beating the biggies when it comes to the AI first moment for them. And Cochin Shipyard, no major moves on that one, but a 2,000 crore mega French contract is what they have won. Rallis India has entered the aquaculture business, and you have Anantraj, which is in focus on the back of the data center boom that we will see on the back of AI. TIL also is considering a fundraise along with a Naven Fluorine on the back of their Investor Day call, and Alkem Laboratories commentary pretty strong, those two counters in focus as well. So these stocks are what we are looking at. But Sharad, let me come across to you on the back of the rapid fire that you are going to do with Nilesh Jain of Centrum Finserv.
Thanks a lot, Hiral, for that. Good afternoon, Nilesh. Always a pleasure having you. We are going to start the rapid fire segment. Buy, sell, hold. Three options would be there. The first one is Coforge, a broking upgrade also coming in. Stocks did show a good up move in the initial trading session and holding up. Your view on that?
Well, it's an avoid restructure looks weak.
All right. The next group of stocks is ONGC Oil India. Big technical reversal came in as Brent crude jumped more than 4%, touching that 70 barrel per mark. Your views on that? Any trading bet?
Yes, both can be bought. ONGC for the target price of 280 plus, keeping a stopper below 265, and Oil India is also a buy for upside target of 480. Stop loss should be placed at 445.
And Nilesh, your views on NewGen Software, one of the top gainers in the Nifty 500 index?
Only a pullback play, which may extend further towards 640, 650. Stop loss should be placed at 550. Not advisable to buy at current market price.
And Nilesh, MCX, the stock, its arm has actually reduced the margins for both silver and gold. A good up move coming in. Important levels to track?
Well, important support as of now is placed at 2300 and resistance at 2500, trading exactly in between. So at present, no clear trend, no clear trade. buy and decline should be the strategy.
And the last one, Intellect Design Arena, an AI-related tool announcement, a pact also coming in the banking space. Your views on that?
Only pullback play, it's an avoid, the structure appears weak.
All right. All right, thanks for that. But over to you, Hiral.
These are interesting names that you're watching out for, but let's see what's trending on Google Trends in terms of stocks that are being searched the most by investors and viewers as well. And that we'll take a view from Nilesh on that. Netweb Technologies, yes, hasn't been in focus. NCC, Godfrey Philip, Ola and NewGen Software. Let me first look at a NCC with the pressure that has been built on this counter. Nilesh, any view, would you say these are good levels to enter, or are you seeing further pressure?
Well, the stock is in a clear downtrend, continuously forming a lower top and lower top formation. Although today we have seen some bit of rebound from the lower levels, but this should be treated purely as a pullback play only. And as long as it trades below 162, the structure appears kind of a sell-on rise. So not advisable to chase the pullback, and it's an avoid.
Okay. What about a Godfrey Phillips and Ola Electric? Both of these have been being picked on Google Trends in the last 2 trading sessions as well. What are charts indicating for both these counters?
Well, Godfrey Philip is comparatively looking better. We have seen an inverse HNS pattern breakout from the levels of 2200. This pullback may extend further towards 2700 to 2800. So structure appears positive, but it has already surged close to 22% this week. So better to wait for some bit of meaningful correction before making any fresh longs. Stop loss should be placed at 2200. Now coming to Ola Electric, the major structure is looking extremely weak, but the stock is trading in the oversold territory. So we may see some bit of a pullback move, but it's an avoid.
Okay, so that's an avoid coming in terms of Ola Electric. And anything with regards to NewGen Software?
NewGen Software is looking better purely from a pullback perspective, and also it has surged close to 27% in last 3 sessions. So given this kind of a spurt of over 26%, we are not recommending to buy at current market price because the risk and reward is not looking favorable. But if somebody is already holding the long position, can continue to ride this momentum up to 650 to 700. And trading stop loss should be placed at 575.
Okay, so these are the trends that we're looking at in terms of Google. Thank you, Nilesh, for that. Sharad, over to you. What are you picking up next?
Well, yes, Coforge we have spoken about, but to give in more details, CLS's report has come in, and Jasmeet is here to give us all the explanations about it. Jasmeet, a very bullish report coming in. Views of that?
Well, yeah, Sharad rightly said. What CLSA report says is they have maintained their stance with a high conventional rating on the stock, and they see a 77% upside for the particular stock. While the reason for the report is to inform the public about the Sabre deal. While the Sabre deal looks in trouble, the deal worth $1.56 billion the company had signed was in trouble over time given the leverage that the Sabre company has, and the deal might not continue further. But the report says that overall Sabre risk seems to be manageable for the company, and the company has already built in those things in their guidance. So they see a strong momentum in the company's performance, and they see a good upside. While they also make a note that the Coforge as a key beneficiary when it comes to upcoming AI projects, given what the company has been doing in AI.
All right, thanks a lot for that. And speaking of AI, let's move on to the discussion in the Indian AI Summit also. There's a Wipro spokesperson there. Listen in.
Access, need, data quality, and infrastructure. That raises the bar, but it also makes success meaningful. We already see what this looks like in practice. In education, AI can support learning outcomes in local languages and help address teachers' shortages across skill mismatches. In healthcare, it can enable earlier disease screening and strengthen rural care, especially where access is limited. And in public services, it can help build smarter, safer infrastructure and reduce leakages in welfare delivery. Which brings me to India's strengths and why I believe India is well placed today to take advantage of all of this. Let me just highlight a few that matter most and have been highlighted by many. One of the most significant is our experience with DPI. UPI today processes over 20 billion transactions every month and has transformed how individuals and businesses participate in the digital economy. It has demonstrated that technology can scale rapidly when it is accessible, reliable, and most importantly, inclusive. India also has one of the largest and fastest growing pools of AI talent in the world. We are truly the AI and talent destination of the world. Approximately 650,000 professionals in India work in AI related roles today, and this number will double by 2027. This talent brings not only technical capability, but importantly, practical experience in applying technology in complex real world environments. Equally importantly, many of the foundations to build out this talent are already in place. Government initiatives to train 10 million young people in AI, along with industry partnerships with universities, are expanding access to practical, job-ready training. Curricula is evolving, and people are giving opportunities as apprenticeships to get exposure to real-world applications. This capability is reinforced by a vibrant innovation ecosystem. India is home, as many of us know, to the world's third largest technology startup base, including more than 4,000 startups in the deep tech and AI space. Together, these companies are helping translate technological capability into practical real-world applications. We are already seeing what this looks like on the ground. In agriculture, for example, farmers across Karnataka, Maharashtra, Telangana, AP, and Punjab are using AI systems trained on satellite imagery and local crop data. These systems provide early pest alerts and in some regions have reduced crop losses by nearly 25%. In small commerce, artisans in Gujarat, Tamil Nadu, and UP are using AI-related platforms connected to open networks. Products are automatically cataloged, descriptions translated across languages, prices optimized, and logistics coordinated, allowing small sellers to reach markets that were once out of reach. And we are also seeing deliberate investments in the future. National initiatives are expanding access to compute infrastructure and building capacity across the AI stack in our country. At the same time, and equally importantly, we as a country are taking a very pragmatic approach to governance, putting early guardrails in place, but balancing accountability with innovation, so AI can scale safely and with confidence. All of this lays a strong foundation for India to lead in the AI era. But there is one more factor that I believe positions us as a country uniquely: our long engagement with global enterprises. Today, the constraint, as many have said, is not access to technology. The real world begins when AI is introduced into large, real-world organizations. In those environments, technology has evolved over many years. Application landscapes are complex, data is fragmented, workflows are siloed, processes vary across geography, business units, and regulatory regimes. Decision-making is rarely uniform. Making AI work in this environment means modernizing legacy architectures. It means curating and labeling data to create highly specialized context-aware models. It means orchestrating across agents in ways that are reliable and secure. And it means earning confidence of security teams, risk leaders, regulators, and critically, the people who are expected to use these systems every day. This is where a more practical pattern has emerged in enterprises. Models designed for specific processes or decisions tend to deliver the most reliable results. When AI is closely aligned to a defined workflow, it becomes more predictable.
All right, that's the management talking about Wipro, but my analysis suggests the product-based companies is also something where the AI benefits will start coming in, something like a Map My India or a RateGain. Out of these two stocks, Nilesh, anything which is looking good on the charts, maybe a positional bet?
Sir, could you please repeat the name of the stock?
Nilesh, two stocks, Map My India, and you could also say RateGain Technologies. Both of them are mid-cap companies, product-based. Any positional setup here?
First of all, RateGain has given a breakdown below its long-term 200-day moving average. So I would rather wait for a counter to break above 575. Then only it's a buy. As of now, it's an avoid. we may see some consolidation in the range of 525 to 575. Similarly, MapMyIndia, in fact, this particular counter has a very weak setup, and the structure appears like we may see a follow-up on the lower side towards 1100 to 11. In fact, 1050 kind of levels can be seen on the lower side. So sell on rise structure for MapMyIndia, it's an avoid.
Well, that's the view also coming in when it comes to this segment. But also, let's talk about the non-IT segments also, where the action is definitely there. Reliance has been very volatile. A very quick check on Reliance charts also. What kind of levels either sides the stock can move? Your views on that, Nilesh?
Well, as far as Reliance is concerned, today we recommended to buy put. Reason being the counter is looking weak from intraday point of view. But these are the accumulation zone for a positional trader. For investor, I would say if at all you get the levels of 1350, 1380, that can be a good entry point because there's a very strong support area. So from current level, there is still some more room left on the lower side, and we may see some bit of correction towards 1400 to 1380 in the near term. So overall, positionally buy, but from a short-term trading perspective, it's a kind of a sell structure.
Okay, so that's the structure coming in terms of Reliance, which is trading at the day's lowest levels. And staying with the AI theme, at the India AI Summit, Tata Sons Chairman Chandrasekaran announced plans for an AI operating system led by TCS and Tata Communications, along with a 100 megawatt partnership with OpenAI and new data centers expansion. Let's listen into what he had to say.
We are adopting AI across the stack, from silicon to systems to AI-ready data centers to applications and AI agents. And we believe such a vision and such a journey is going to be extremely exciting, and it will require us to work with world-leading partners in India and across the globe. The Tata Group is establishing India's first large-scale AI-optimized data center, purpose-built for the next generation AI training and inference. I'm very happy to announce that we have partnered with OpenAI to build the first 100 megawatt capacity, which will scale to 1 gigawatt.
So that's the word coming in. Lesh, you know, from a TCS to a Tata Tech to a Tata Capital, all of them have been moving in trade. Tata Communications as well. Post the speech, any stocks that you like from this basket?
Well, Hiral, out of all the names that you have just mentioned, Tata Communication is looking better placed. The reason being, if you pull up last 6-month chart, the stock has formed a double bottom kind of a structure at 1525 level. And from those levels, we have seen a sharp rebound as well. So overall, structure is hinting that we may see the continuation of a pullback towards 1740 to 1800 on the upside. So keeping a stop loss below 1610, Tata Communication is something that can be bought for a pullback move on the upside towards 1700 to 1750 in the near term. Now, comparatively, if you look at IT space, we did see a strong pullback move, but this pullback is unlikely to be a sustainable because there are multiple resistance on the upside. So avoid Tata Tech, avoid TCS, or beat any IT stocks. As of now, it's an avoid from a short-term trading perspective.
Right, but let's pick out Aadhar Housing Finance. Let's take out the intraday chart for that stock, and they had an interesting analyst day also. Broking houses seem upbeat as well. Citi has come out with its report, maintained buy rating, target price of roughly 650 rupees per share. That AUM growth which they are expecting, the company, that's roughly 20 to 22%, and the guidance for the AUM, that's roughly $500 billion rupees. Also, to put that in perspective, the credit cost guidance, that is coming in at roughly 25 to 27 basis points of improvement as well. And net, to put it simply, the operational parameters are expected to improve going ahead as well. I want to get Nilesh on this, especially on the charts. Any kind of a moves or any signals are starting to come for this counter Aadhar Housing Finance?
Well, if you pull up last 4-5 months chart, you can clearly see the stock has been trading in a falling channel kind of a structure. And as of now, it is still trading well below its long-term 200-day and 100-day moving average. But in last 2 sessions, we have seen some bit of a pullback move. Purely a pullback play towards 485 to 490 on the upside. I would rather wait for a breakout for a confirmation above 500, then only it's a buy. But it's an avoid because we may see some selling pressure at the high levels as well. So purely from a positional perspective, it can be bought. From a trading perspective, I would suggest to better wait for a breakout above 485, 490 zone. Then one can go long in this particular stock.
Okay, so that's with regards to other housing finance. Intellect Design is another one. We did speak to the management, and the comment that we got from the management on the back of launching eMAC.ai, which is AI first banking platform, was pretty encouraging. In fact, they've launched Purple Fabric as an enterprise AI on tap services as well. Now, to add to this, what the management has actually indicated is that they are way ahead in terms of adoption from here on, and that's the reason why you're seeing some strong moves. But coming back to AI and the AI Summit, let's cut across to Sam Altman, CEO of OpenAI, speaking at the India AI Impact Summit.
Much more has been great to watch. More than 100 million people in India use ChatGPT every week. More than a third of them are students. India is also the fastest growing market now for Codex, our coding agent that works to help people develop software faster and better. India, the world's largest democracy, is well positioned to lead in AI, not just to build it, but to shape it and decide what our future is going to look like. And it's important to move quickly. On our current trajectory, we believe we may be only a couple of years away from early versions of true superintelligence. If we are right, by the end of 2028, more of the world's intellectual capacity could reside inside of data centers than outside of them. This is an extraordinary statement to make. And of course, we could be wrong. But I think it really bears serious consideration. A superintelligence, at some point on its development curve, would be capable of doing a better job being the CEO of a major company than any executive, certainly me, or doing better research than our best scientists. As we prepare for this possibility, we are guided by three core beliefs. Number one, we believe that democratization of AI is the only fair and safe path forward. Democratization of AI is the best way to ensure that humanity flourishes. On the other hand, centralization of this technology in one company or country could lead to ruin. The desirable future a couple of decades from now has got to look like a world of liberty, democracy, widespread flourishing, and an increase in human agency. Some people want effective totalitarianism in exchange for a cure for cancer. I don't think we should accept that trade-off, nor do I think we need to. AI should extend individual human will. We'll probably need superintelligence to help us figure out the new governance mechanisms to ensure that this happens fairly at scale, and to avoid problems like extremely unbalanced compute access or something else. Second, we believe that AI resilience is a core safety strategy. We don't mean that this is the only safety strategy. We will continue to need to build safe systems and solve difficult technical alignment challenges. But increasingly, we need to start broadening how we think about safety to include societal resilience. No AI lab, no AI system can deliver a good future on their own. For an obvious example, there'll be extremely capable biomodels available open source that could help people create new pathogens. We need a society-wide approach about how we're going to defend against this. And third, the future of AI is not going to unfold exactly like anyone predicts. And we believe that many people need to have a stake in shaping the outcome. The development of AI has already held many surprises, and I assume there are bigger ones to come. We understand that with technology this powerful, people want answers. But it's important to be humble about what we don't know, and always remember that sometimes our best guesses are wrong. Most of the important discoveries happen when technology and society meet, sometimes have some friction, and co-evolve. For example, we don't yet know how to think about some superintelligence being aligned with dictators and totalitarian countries. We don't know how to think about countries using AI to fight new kinds of war with each other. We don't know how to think about when and whether countries are going to have to think about new forms of social contracts. But we think it's important to have more understanding and society-wide debate before we're all surprised. Of special note, and related to all 3 points, we continue to believe that iterative deployment is a key strategic insight.
and that society needs to contend with and use each successive new level of AI capability, have time to integrate it, understand it, and decide how to move forward. This has been working surprisingly well so far. If we are right, and systems continue to improve at this pace, it's going to change the economics of a lot of things. A really great thing about AI progress is that it looks like many things are going to get much cheaper. We can have much faster economic growth. We're already seeing what AI is doing for access to high quality healthcare, education, and more. In the coming years, we expect to see robots make many products and physical goods cheaper as supply chains get automated. The limit to how far this cost reduction can go may only be government policy. But the other side of this coin is that current jobs are going to get disrupted as AI can do more and more of the things that drive our economy today. It'll be very hard to outwork a GPU in many ways. It'll be easy in some other ways. For example, we really seem hardwired to care about other people much more than we care about machines. We're somewhat less concerned about the long-term future. Technology always disrupts jobs. We always find new and better things to do. The people of 500 years ago would have thought that our current jobs often look silly, like ways to entertain ourselves, create stress. And the people 500 years from now hopefully will look at us, hopefully look to us, like impossibly rich people playing games, trying to find ways to pass their times. But we should all hope that they feel much more fulfilled than we do today. I'm confident we will keep being driven to be useful to each other, to express our creativity, to gain status, to compete, and much more. But the specifics of what we do day to day will probably look very different. Each generation has built on the work of the generations before. And with new tools, the scaffolding gets a little taller. This collective external lattice, the set of tools that we have built up around ourselves, is remarkable. And we are capable of doing things that our great-great-grandparents couldn't have dreamed possible. It is a moral imperative to make sure that our great-great-grandchildren can say the same. And technology, and especially AI, is how we're going to get there. For a democratic AI future, it is not enough to just give people tools and wealth. We also need to give them agency and power. The vision that AI companies lay out fundamentally reduced to either unilateral control or decentralized power. Sharing control means accepting that some things are going to go wrong in exchange for not having one thing go mega wrong. Cemented totalitarian control. This is a fundamental trade-off of democracy, and it is one that we believe in very strongly as the way to give everyone collective agency over the future. Of course, this is not to suggest that we won't need any regulation or safeguards. We obviously do urgently, like we have for other powerful technologies. In particular, we expect the world may need something like the IAEA for international coordination of AI, and especially for it to have the ability to rapidly respond to changing circumstances. The next few years will test global society as this technology continues to improve at a rapid pace. We can choose to either empower people or concentrate power. Thank you very much.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your Automate.
New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company.
Bears make a comeback on Dalal Street market near day's low with the Nifty below 25,600, Sensex sheds over 750 points. Realty consumption lead losses. Pharma and IT on the flip side lead gains. And PM Modi inaugurates the AI Impact Summit in the national capital. PM also outlined his Manav vision that strives to make AI more ethical, accountable and inclusive. And more takeaways coming from the India AI Impact Summit. Then French President Emmanuel Macron called for stronger safeguards against digital abuse and praised India's digital public infrastructure, while UN Secretary General Antonio Guterres highlighted the summit's significance as the Global South's first major AI platform. Big tech voices, the likes of Sam Altman, Sundar Pichai and Dario Amodei and Rishabh Premji, as well as Mukesh Ambani, share insights on AI innovation, safety and global partnerships, underscoring India's rising influence in the global AI ecosystem. And Tata Group Chairman N. Chandrasekaran calls AI India's next IT boom, unveiling OpenAI partnerships and announcing the country's first large-scale AI-optimized data center to power next-generation innovation forward. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But first things first, let's take a very quick look at the markets, and whether you look at Nifty or Sensex, both of them in fact hovering close to the day's low. When you talk about Nifty, you're looking at a loss of about 200 odd points. When you talk about the Sensex, it's actually a much deeper cut. You're looking at about a 800-point drop coming in for the Sensex. When you talk about the sectoral picture, that is very sharply tilted in the favor of red. Just one sector holding on to a tinge of green as we speak. So that's Nifty Pharma, that's remaining quite resilient as we speak. And other than that, on the flip side, there's realty leading losses, consumption, auto, FMCG, rural index, even the Nifty Bank on the back foot with some cuts coming in as far as all of your sectoral indices are concerned, except pharma that's holding on among the major sectors to that tinge of green. When you talk about some of the top losers as well, there's actually a bunch of losers that you're looking at across the board. When you talk about the Nifty 50, there's a trend that's holding on to a cut of about 3%, M&M, Interglobe Aviation, something like a Bajaj Auto, Even Kotak Bank and heavyweight Reliance also almost a 1.5% cut coming in for Reliance Industries. And that's the kind of picture that you have when you talk about some of those stocks that are on the back foot. What's doing quite well from within the Nifty 50 pack is something like an Infosys, still holding up after that AI bet they've ramped up. TCS, just about a 0.5% uptick coming in for that particular account. And there's actually a bunch of stocks, the likes of something like a NewGen Software, something like E2E Networks. Those are the kind of stocks that are buzzing away in trade right now. And the entire story right now is tilted very sharply in the favor of IT. There's a bunch of announcements that you've had this week, and AI is, of course, the buzzword. But let's also put the spotlight on a very important space right now, because you do have the entire commodities complex that is very much in focus on the back of the MCX margin announcement coming in. So basically what's happened here is that MCX has withdrawn those additional margins that they had imposed, something close to a 7% margin coming in on silver, and even that 3% additional margin as far as gold futures were concerned, they've been withdrawn for both MCX as well as NSE. The key rationale when you talk about it in terms of why they were imposed, three things that you were looking at. So it's largely risk management based measures that you had coming in. So currently, it was a reaction to those sharp prices that we had seen, but it was aimed at curbing risks, like I mentioned, amid that heightened volatility that we also saw. But let's also take the conversation forward, try and understand what the picture also looks like when it comes to both of your metals. So in terms of the precious metals complex, you're looking at gold and silver right now in focus on the back of that entire announcement. And Bireen Vakil, who's a commodity consultant at Paradigm Commodity Advisors, joins us on the show. Mr. Vakil, thank you so much for taking time out and joining us this afternoon. It has been a very interesting entire week thus far for the entire commodities complex, especially precious metals. But today, you do have that announcement in terms of those additional margins being rolled back. What are you looking at when it comes to this? Do you think that the dust has settled and this is, a little bit of an appreciation, a cognizance of that entire dust settling right now?
The grotesque volatility recently seen in entire commodity space, especially bullion. Now it seems volatility is a little bit declining, and market is in consolidation form. So MCX has reduced the margin, which would give some liquidity support, and retail traders maybe get relieved because of less stringent margin requirements.
No, absolutely. And that's something that we're looking at in terms of what's really happened here with that rollback of the margins as well. Do you think that better times are in store for commodities traders, especially the ones that are looking at precious metals? Because it's been quite the roller coaster ride for them. Do you think that the volatility from here on is going to recede just a tad bit?
Money or liquidity is always raw material for profit or wealth. So if it is available at a cheaper cost, it's a good thing. So far, bullion is concerned, we seem a little bit conducive environment in the face of Gulf risk, Middle East tensions between US and Iran. So I think overall it looks like path of least resistance to the upside. China market is closed, so there is no queue from other Asian markets, and especially China, which is largest in bullion trading. But hopefully we may see return of rally or resumption of uptrend going forward, maybe from next one day.
And when it comes to the bargain hunters, do you think that they're snapping up this sort of drop that we had coming in as far as gold is concerned? Do you think that is what is happening here? Or are you seeing strong fundamentals when it comes to both gold and silver right now?
The broader picture, like debasement story, hedge against dollar or hedge against fiat is still very much intact. Technically speaking, 4800 or 4850 seems to be a very good support. Market is rejection that level. On the upside, we may see 5250, 5370. So near-term range seems to be 48.53. Though it looks volatile, but compared to previous weeks, still it is well contained.
No, absolutely. After that January route that we saw coming in, this is quite contained, Mr. Vakil, and that's something that we're looking at. But in terms of the near term, if somebody is already invested, be it through the physical commodity or through ETFs, what do you think that they should be doing? Should they be waiting for the dust to settle a little more, or should they actually be looking at some sort of a different strategy right now?
Gradually, those who miss the bus or maybe earlier spike, they may add exposure, or those who are not in the market may go for ETF on a scale down basis. I'm still sensing meaningful upside potential in gold ETF space, which is also a little bit less risky because of there is no margin.
No, well, absolutely, and that's something that we're looking at when it comes to the entire precious metals complex. But I quickly wanted to divert your attention to the entire Bitcoin space as well, because, that's been in the spotlight right now. You've seen a little bit more of a pullback, and I remember that, you had said that it's like catching a falling knife right now. I just want to try and understand if you retain the same outlook when it comes to the entire cryptocurrency space, especially Bitcoin. What are you looking at? Any price levels that you have in mind there?
There is sizable put option position in 40,000 strikes. So there may be general sell side crowding out, but at this level, I think market down move is a little bit overextended, I would rather say. So at this level, I would watch if market able to recapture 70, 72, we may see pullback towards 85, 87. And if market breaks key support area, that is 60, recent low, we may see further downside. But at this level, risk seems evenly spreads, 50-50 to be or not to be kind of dilemma.
No, absolutely. To be or not to be invested in Bitcoin is really the question right now. And with those levels, those volatile, very choppy levels that you're looking at when it comes to Bitcoin, it's quite the catch-22 right now, quite the googly that the market is looking at. But I quickly wanted to, before we let you go, try and get a sense of what you think about copper. Do you think that people should be investing through copper futures if they want to get in on the entire FOMO side of it, or should they be looking at some of the listed plays? What kind of strategy and what kind of outlook do you suggest when it comes to copper?
Big picture is still supportive for copper. Yesterday we have seen nice rebound. I think a market is based around 12,000 in domestic term, and in LME basis, I think 12,500, 800 seems to be a good base. Going forward, we may see 1380, 1400 in domestic term. This is 4 to 6 week view, and in terms of LME copper, we may revisit 14,500 or above. Largely constructive and bullish view.
No, absolutely. And just wanted to get a sense before we very quickly sort of let you go. I just wanted to get a sense of what you're saying here in terms of copper. Should people, given the kind of volatility that we've seen of late, should they be looking at listed plays with a sharper focus? Or should they be looking at something like your copper futures and be willing to invest on that horizon as well?
There are two routes. Proxy route could be equity play in copper list related markets, or in leverage bets. Copper futures are good because we don't have copper ETFs. Any long side position should be protected with the purchase of put option as a part of risk mitigation.
And Mr. Vakil, thank you so much for taking time out and joining us. So there you go. That's the entire outlook coming in as far as gold is concerned, silver and even copper. And those are the two investment routes that you can be looking at. But more news and updates on the other side of that very short break.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance.
Welcome back. Thank you so much for staying tuned into Lunchtime Trades. Time now to take a look at the IT sector that has been reeling away in trade. Right now, of course, it's holding on to a little bit of strength. But when you talk about India's IT sector, there's something else that is also happening. It's rapidly adopting AI faster than global peers, seeing gaps in high-end compute, limited fundamental research capacity, and rising infrastructure complexity as well. However, you do have services-driven companies that can still carve leadership by deploying AI at scale across segments. So can Indian IT companies drive a competitive edge against global peers? And who would win this particular race? In fact, Jasmeet is standing by with some more insights on this. Jasmeet.
Well, thank you for that. As we saw the entire watch list, which is focused on the AI, well, now we have the entire IT pack list, right? So IT companies are divided into two parts. One is product and service based. So here's the analysis of how the product industries are doing and how the service industries are performing in Indian IT. Starting off with the key aspects of what's happening exactly. Software companies are rapidly shifting towards AI-led growth, while the hardware companies are constantly getting AI-based order in terms of AI infrastructure and data center. If you look at the other key aspects, the firms are reporting that AI is becoming a key central part of a lot of the deals and a lot of client interactions, which remains in the focus. While further the focus is moving towards manpower heavy work,
to AI-based heavy work going ahead. Now let's quickly understand the percentage of revenue which the software companies, hardware companies drive from this AI to drive a comparison. If we look at the software companies like Infosys, TCS and HCL, they get roughly 5 to 6% of the revenue which comes in from AI, but a hardware company, something like a Blue Cloud and NetWeb, get almost 50 to 60% of the revenue coming in from the AI sources. Well, if you look at the overall aspect of what exactly are the companies doing towards AI and what their progress is in the AI, if you look at the companies, they're either partnering with the AI companies or they are acquiring companies. That's the inorganic growth of way. That's how they're increasing the stance in the AI. Let's quickly understand the companies which are partnering with other AI companies to increase the AI stance. Firstly, Infosys, they're partnering with Anthropic to increase the enterprise AI. Then we also have TCS, who is partnering with the OpenAI. The news just came in today, partnering with OpenAI to increase the AI enterprise further. We also have Wipro, that's enterprise transmitted with the Microsoft AI tools. Further, we have Tech Mahindra, who has partnered with Sina XG to advance in 6G networks in the telecom business of theirs, while Hexaware is collaborating with Raplets to increase their overall AI stance and the AI software usage by the SMEs. Further, if you look at the companies that are engaged in the inorganic way of inorganic growth, we have something like a Coforge acquired Encora. It was into AI space for roughly 21,000 odd crore in the previous month, while we also have HCL Tech, which acquired Jaspersoft, Wobby and HPE Telecom Solutions for roughly 2,000 odd crores to increase the stance in the AI. Well, we also have TCS, who acquired Coastal Cloud in the previous quarter for roughly 6,200 crore, and Infosys also acquired in the previous year Wilson Group, the 75% stake, for 1,300 crore to increase the stance in the AI. Now, well, the question comes to the overall AI development. We have one more stance of how the companies are reporting the AI developments. Something like a Oro Pro is getting an order for data center. That's the moment in terms of the AI play. While NetWeb has launched Make in India AI projects to make supercomputers to make AI infrastructures in India. Further, Intellect Design has announced the launch of an AI product for the banking systems to make it easier in multi-language. While Anant Raj is partnering with Sember to make AI infra the data centers for the overall infra space. While in terms of the Blue Cloud company to invest $1 billion to increase the stance in terms of the overall data center. Further, they also secure the national ISP license to advance in the AI in terms of data centers and servers in cloud and digital engineering further. While lastly, the question still remains, is product or service company going to lead the overall race? If you look at the service companies, the overall advanced AI first delivery is something driving the revenue. Further, in product companies, we do see that the firms are leading with the scalable and IP address, with helping them grow. While the overall Indian AI growth story still remains a question which is growing day by day. With the AI somewhat in the picture, we see a huge scope of AI still flowing in Indian IT sector, both in product and service, and they see a huge momentum going ahead.
No, well, absolutely, Jasmeet, and thank you so much for getting us that entire outlook when it comes to India's AIT sector also. But, you know, what you talk about in terms of AI, there's Ixigo also to look at. The company is looking at targeting an AI-first travel experience. In fact, Hiral Daria caught up with Alok Bajpai, who's the co-founder and group CEO at the company. Let's go across and listen in to a slice of that conversation.
Wherever you look at, whatever you want to hear, it just starts with AI. That's what we've been looking at right now. That's what we've been staring at. What is the plan that you're looking at when it comes to the partnership with OpenAI, and how do things really change for you?
Hi, Hiral. Thank you for having me on the show. I think we've been very early to AI at Ixigo. You know, we've been building AI-led customer products, back since 2012. And we are actually now, if you think about it, we are now entering an era where every company needs to become an AI diffusion company to bring the benefits of AI to their customers, their partners, their employees. And, you know, the agentic workflows that AI enables today, whether it is inside the organization or whether it is for the customer. And I'll give you a few examples. You know, today, when you book a flight ticket on Ixigo, you know, an agentic agent goes and web checks you in, sends you your boarding pass, manages your trip, starts sending you updates about your boarding gate, about your, check-in desk, about your baggage belt when you land, behind the scenes, right, preemptively. And some of these workflows, you know, we want to double down now on integrating these advanced AI capabilities, which is why we are deepening our collaboration with OpenAI, where we'll be using their enterprise platforms to, basically reinvent our technology stack inside out, right? So we want to put AI at the heart and core of our operations, as well as bring the benefits of AI to the next billion users, where we have more than 500 million users using our platform every year.
Okay, so Alok, my question to you is, for a layman, help us understand. I mean, you've probably jumped onto the bandwagon of AI much earlier as compared to the other players right now, if you have to talk about Ixigo. With OpenAI partnership deepening, how does it change your business model from before to now?
Well, I think the core business model doesn't really change. If you think about Ixigo, unlike many other companies out there, we were not that obsessed about just selling a ticket. We wanted to make sure we handhold the customer right from the time they start thinking of a trip till the time they're actually not just booking, but also in the trip. And if there's a change, if the train gets delayed, if their PNR is not confirming, if their flight is delayed, we want to be using AI to preemptively handhold customers, because travel is actually one of those complex domains where things go wrong, right? There's moments of anxiety. There's moments when nobody's there to tell you what to do next. And I think the power of AI is being able to be omnipresent at that time and preemptively personalize that experience for your needs, kill that anxiety and always be around to help you within that journey, whether you are before, during, or after the trip, right? And if you think about customer support, it's the most obvious use case. I mean, we've been building AI agents since 2017, 2018, and today, 90% of our voice calls and chat support last quarter was handled by AI. We handled 1 million plus voice calls last quarter.
Alright, and there you go. That's the entire commentary coming in from Ixigo as well, and they're doubling down on their AI play. But that's all the time that we have on this edition of Lunchtime Trades. Thank you so much for tuning in. Stay tuned.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
afternoon. You're watching Small Cap Buzzers with me, Varsha, and my co-anchor, Puneet. Today, we're going to talk to two managements, and of course, we're going to talk two stocks on this Small Cap Buzzers. Let us start with what's on the show today. Bajaj Projects. Well, we'll be speaking with the management of this company as company announces JV with the Saudi Arabia's company, and this will expand its international footprint. Moving on, Stanley Life Sciences, we're going to speak to management on Q3 FY26 numbers, wherein revenue was subdued primarily by near-term demand softness and higher depreciation and new store expenses impacted margins for the company. Well, we'll be also speaking on BL Kashyap, wherein they've secured 300 crores of order from CRC Greens. Order is for civil works for group housing project. Next on the list is Lakshmi Dental, wherein if you see, volumes are trading at 8x, and we'll be talking about, and also they're expecting 20 to 25% of growth with EBITDA margin of 18%. So these are all the stocks which we'll be discussing in Small Cap Buzzers as of today. Talking about markets, let's see what Nifty is doing. We were seeing quite a profit booking today. Well, Nifty is down almost 0.87%, but let's see what broader markets, especially small cap segment, is doing. Puneet, over to you when it comes to small cap segments, and which are the stocks, which are in focus.
Well, it's certainly a day of profit booking, and that is visible across the mid-cap as well as the small-cap index as well. So mid-cap down 84 points as we speak. The small-cap 250 as well. We've been speaking about it, that individual names continue to be in focus. There as well, we're seeing almost down 85 points. And the BSE 500 shows you the individual names before we move on to the management of the day as well. But in terms of the BSE 500, seeing some big gains coming in on Tata Investment Corp. Godfrey Phillips is continuing the momentum, and those cigarette price hikes passed on to the consumer is one of the biggest beneficiaries in terms of Godfrey Phillips, as well as of course on ITC, but the moves much wilder in terms of that stock. ONGC, MRPL, some of the other ones in terms of losers though, Aditya Birla Real Estate, Shoppers Stop, Lloyds Metals are all some of the counters that are down in trade today. Easy Trip, Persistent, Rallis are also some of the other names that are down today in the trading session as well. But let me welcome in Rajesh Ganesh now. He's the Managing Director and CEO of Bajaj Projects to talk about the recent joint venture as well as what they're looking at the company. Mr. Ganesh, very good afternoon. Thanks so much for joining in today. It's Puneet this side. Firstly, if you can spell out the scope of this strategic joint venture with Al Sharif, how does the benefit happen for Bajaj Projects in terms of having a newer geography in terms of getting those order wins, but could you give us some perspective of what are some of the key quick highlights about this joint venture that we need to watch out for?
Yeah, thank you, Puneet, for having me on your show. We are progressing in a very deliberate fashion in terms of growing our international footprint. We had a rather small list of countries that we would like to enhance our presence, and Saudi Arabia was right at the top of that list. So we're quite pleased in that sense. Saudi Arabia is a market that is growing rather rapidly. They've got a big infrastructure push. In fact, if you look at power generation itself, they've got a capacity of 94 gigawatts now. And they have this Vision 2030 footprint put together by the leadership of the kingdom, where they would like to move their renewable percentage as part of the mix from the current 13% to take it to 50% by the year 2030 through an investment totaling $270 billion over a period of from 24 to 30. So quite a significant market in that sense. And there's a lot of work happening out there. The power transmission in network is due to expand at a rate of 8.1% CAGR. So, I mean, all these things do make it quite attractive market. And in Al Sharif, we believe we found the right partner.
So Mr. Ganesh, sorry to interrupt you, but what should be some of the, in terms of, would it be continuing the scope in power transmission projects, even in the newer geographies like Saudi Arabia? And could you spell out some kind of targets that you might have for FY27, or is it that it could take some time and the orders could start coming in maybe in the second half of FY27. Could you give us some timeline for that?
Yeah, sure, Puneet. So the scope is pretty much the same. I mean, we're going to stick to our core, so we're not moving out of power transmission and distribution sector. So hopefully that answers the first one. On the second one, I mean, we've just announced the JV. Now there is certain formalities we need to get ourselves approved by the Saudi Electric Company. So there's a bit of work to do out there. So our eligibility to bid for projects would only happen after that. So first target really is for us to get that done. But we're quite optimistic that once we get that done, we should have a pretty strong pipeline of projects that we can then sit down and think about participating.
Hello, Mr. Ganesh, Varsha this side. With this, how big can your international revenue become in the next, 3 to 5 years, number one? And what percentage of current order is international for you if you have, the international projects?
Sure. So, thank you, Varsha, for those questions. Current percentage is very small, really, because we're probably last off the stable. Others have already have a presence in the international market. So we're looking at say around 30% of our order book should come from international projects over a period of the next 5 years, which is part of our stated Rasta 2030 strategy. So, and Saudi Arabia is a big part of it. It's a big market. There's a lot of infrastructure push happening there, and we are quite keen to grow in that market.
Understood. And also, what capital commitment is required from you in this JV?
Well, at the moment, it's an equal JV. So whatever is the commitment would be shared by both the partners. In terms of actual sort of working capital, etc. requirements for the project, I think that would get clear once we've registered by SEC and once we start working on the projects.
Ganesh, in terms of your financials now, because we've seen a decent performance in terms of the EBITDA margins, especially in this particular quarter. But first question on growth in terms of revenue, because last year you had a very, very strong base coming in FY25 versus FY24. Is it that this year it'll be flat revenues in FY26 given how the first 3 quarters have done, and also on what led to the strong margin profile in quarter 3? Is there some key measures that you've done that help boost these EBITDA margins in the range of 5 to 6%?
So let me answer the second question first, Puneet. So what we did was, again, a deliberate effort in terms of bringing our COGS down. If you look at COGS as a percentage of revenue, we've come down. And that's largely because we now have a hedging desk for commodity, which we are monitoring it sort of quite closely. We also have hedging for Forex. And we have a whole lot of operational excellence programs that's been rolled out, which we're starting to see the benefits of it coming through. Yeah, and I think they'll continue to happen as we move forward. So those are the reasons why you're seeing margins go up. We also now very circumspect in terms of the projects that we bid for and the assumptions that we use in these projects. So it's it's a bit of both. We're managing the cost really well. We're also bidding for projects with reasonable expectations of margin so that, we're not caught at the wrong end of the stick later on. Now, as far as the revenue is concerned, well, I think there's been a bit of a dip in the orders coming in from our clients, which is PGCIL among others, because there's been a general dip in TBCB projects over the last 2 quarters. Now, we're seeing those things come through now. And as I said last time when I was invited on your show, we're working on an active base of about 6,000 crores now. And we are L1 in about 2,000 crores. Now, we announced a few projects early on in the month. And this was part of that 2,000 crores where we are L1. And we expect more to come as we move forward. So it's a timing issue, to be honest.
So, Mr. Ganesh, on that note, just continuing on that, stretching out that point, so will you see a muted FY26? What is FY26 looking like? And as you said that you're seeing continuing the order inflow, maybe I'm expecting a strong growth in FY27. Am I on right track?
Well, yeah, certainly. FY27 onwards, the trajectory is going to be, is going to be much better because as I said last time as well, for the last couple of years, we've actually been building the fundamentals of the company. We've been building the foundation, for lack of a better way of saying it. And those would start to yield results a little bit later. So we're working on putting together our data systems, process, and people together. And that's the work we're doing, which I'm fairly certain will start to yield results as we move forward.
Just one quick question, Mr. Ganesh, on your return on average capital employed as well saw a decent improvement in FY25. It rose to 12.8 versus 5.1. Is it expected to come at the 15% level in FY26? Because your long-term target also states, of what you mentioned of 15%. So is there a chance to go above that level, or is it that once that level reaches, you'll want to, go into newer aspects like international expansion? So that will put some pressure on the capital employed, and hence you're very comfortable with that 15% level. Is that the thesis?
Yeah, you're absolutely right, Puneet. We should get to 15% first. That's mission one, right? We'll get to that. And as we move forward, as we're growing the business, we'll need cash. Yeah, we'll also need investments that we need to put in our supply chain. So to that extent, we'll have to take on some debt, or we'll have to raise some capital going forward. But the key priority now is to get to that 15% quickly, and hopefully we hold it, or if not, do better.
Right. And also, Mr. Ganesh, just wanted to understand what's the current order book and what are the execution timelines for the same?
Well, I mean, as I said, sort of last time, we're looking to end the year with anything upwards of 4,000 crores. That's sort of what we're looking at, and margins would pretty much we'd look at it getting better than what we did in the last quarter. As these operational excellence programs starts to kick in, and as we start to garner up the benefits of commodity hedging and forex hedging, we'll be curtailing some of the losses that we faced historically in the past with, say, things like aluminium, for example. I mean, those are things that we have under control now, so we should see the margins go up.
That view. Well, thanks so much, Mr. Ganesh, for answering all the questions, and all the best for the business.
Thank you very much. You have a lovely day.
Thank you so much. Well, this was Bajaj Projects outlining the growth prospects when it comes to next 2 to 3 years. But let's invite our guest for the day, Lancelot D. Cunha, who's the CIO at ValueX Wealth Connect. Well, Lancelot, welcome at NDTV Profit. You heard the management of Bajaj Projects. What are your views when it comes to this counter, and considering the overall transmission sector also, what will you suggest to investors?
Right. Good afternoon, and thank you for having me on the show. Well, we did listen to the Bajaj Projects, and Bajaj Projects actually has been a spin-off from Bajaj Electricals. They were the EPC and power transmission arm of Bajaj Electricals, which has been spun off as a separate company. Now, the business of this power transmission, it's an attractive phase because there's a huge amount of work that's going on in India for domestic, power transmission setup. So while the business is attractive, I think the major players in this are Kalpataru Power and KEC International, and we've seen that Bajaj Projects has not really got very large allocation from Power Grid, and even the development of this joint venture in Saudi Arabia, it will take maybe a year or two before we start to see any earnings from these joint ventures actually come into the company. So given that scenario, if you look at the stock at the moment, it's trading over 100 times its earnings. And even if you anticipate that, you are going to pay some premium for the earnings that will come in after 2 years or at the end of 2027, you're still paying a lot higher premium, and it doesn't really justify it from a risk perspective, because the quarters in the intervening period could see some negative impact, and that could actually result in re-rating of the stock on the downside. So while the overall business remains attractive, the opportunity is attractive, it is going to take a year or two before we start to see the benefits, and hence one should wait for a long at this point in time, it is expensive, and maybe one needs to wait for a little bit of a correction, and when that correction happens and it becomes attractive, then one can look at investing in it.
Right, understood. Well, moving on, this now time to dive into the F&O market setup and the cues shaping trade today. Let's bring in Sharath for more details.
Thanks for that. And today we see Sensex is giving up the gains which they were getting over the last two trading sessions. A sea of red coming in, only Infosys and TCS there, but nothing much convincing, to be honest. A sell-off has intensified. Of course, Reliance also there, giving a push towards the constituents for the Sensex. M&M, Ultratech Cement and Trent are also in this list. Some kind of a profit booking, but on a medium-term basis, market might go under the consolidation. BankX also, the story remains the same. No major support coming in from the key constituents. It's a day where stock-specific moves are there, but in bits and pieces. A long build-up, of course, for ONGC and Oil India, both of them going up. Yesterday, there was a good technical reversal happening as the Brent crude spiked up by 4%. So it's positive for both of these players. Looking at the short covering candidates, RBL Bank and Aurobindo Pharma comes in. There was a big sell-off in Aurobindo Pharma, but now some shorts are getting covered. But RBL Bank, our traders' favorite stock, that's also doing well. Long unwinding for Lodha and Keynes Tech, both of these counters 3% down each. And lastly, the short build-up. Of course, there has to be one IT name. We have been discussing that. And Dixon Tech also makes it to the list. That means the high beta stocks, some kind of sell-off is happening in the F&O space. So largely stock-specific moves, nothing much for indices.
Got that view well. Thank you so much, Sharath, for all the details. Moving on, BL Kashyap. Let's pull up that stock, BL Kashyap and Sons. You know, this stock is buzzing in trade today. It's on the back of order wins. There you go. The stock has come off a little bit, but it was up almost 6 to 7% in trade. Now, this is on the back of order win from CRC Greens, and the order is for civil work, a group housing project which need to be executed in next 42 months. Now, onto the Q3 FY26 highlights. Well, company has seen steady execution with margin recovery. Gross margins were at 21%, which is up on the mix and the cost control that the company has seen. Staff cost includes one-time impact of new labor codes. And talking about the order book and wins, order book stand at around 5,200 crore as of December 2025, and the new orders book, if you see on year-to-date basis, is at 3,200 odd crores. Onto the order book side, the mix includes, you have 95% order book from private, which is residential and commercial, and rest from the government and infra. Onto the outlook, government projects is expected to at 25% of the mix by FY27. They want to scale data centers, more high-end residential and commercial projects which they want to go in, and monetize non-core asset by FY27. So overall, if you see, the stock is buzzing on the back of order wins. Well, Lancelot, coming to you, on BL Kashyap and Sons, what's your view considering the order book that the company has, and overall, the growth outlook that the company will see going forward?
The business that this company operates in has a very low operating margin. Like, its operating margin is between 5 or 6%, and some years has gone up at 7-8%. So if you look at the company, its revenues in March 2022 have been about 1,100 crores, and this March 25 has been 1,100 crores. So the revenues for last 4 years have been standard in that particular range. This year we are seeing a little bit of improvement in the revenues, but if you look at the margins, they still continue to be in that 6%. So considering the fact that the valuation of this company, it's trading almost 130 times earnings, and you're actually having a very small margin, any setback on the sales front can easily result in a severe correction. So at this point in time, I think it's very expensive. Maybe in anticipation of the fact that the cost has the orders are coming in anticipation, the stock has risen, but it still is an expensive stock to invest in at this point in time.
Got the view, Lancelot, but the big voices continue to galore at the India AI Summit. Let's cut into the management of Accenture, who's addressing the summit right now, and see what they have to say.
We also, as an industry, embrace the new technologies of digital and classical AI, and we created many, many more jobs. We helped our clients adopt RPA, and those who did created investment capacity to invest in new technologies and to grow. And in fact, the IT services industry has thrived over the last decade, including many of India's most successful companies that you've heard from today. At Accenture alone in 2013, we were roughly 275,000 people and $29 billion in revenue. And today we're over 750,000 and growing and $70 billion in revenue. What the last decade has taught us is a critical lesson. When companies and countries embrace new technologies and then use them to drive growth and productivity, they prosper. Advanced AI should be the same. In fact, in our latest quarterly survey of C-suites across 20 countries, they agree. 78% say AI's greatest value is in growth. Now, as we think about what growth should look like, there's two important considerations. First, AI should make the impossible possible. AI should make the impossible possible. If in a few years as a CEO, you cannot point to new products and services, new levels of performance that were not possible before, then you have not captured potential of AI. Think about the consumer and retail industries. LLMs are about to become the new mall. This is an entirely new way to engage customers and to engage in commerce that did not exist in 2022. If you think about pharma, we see a path toward bringing drugs to market much faster than the average of 9 years.
Well, of course, that was the CEO of Accenture. You can also catch the whole event live right now on our YouTube channel. But time now to get back into the corporate action. Sunil Suresh, the Managing Director of Stanley Lifestyle, is now joining us to have a conversation post-Q3 results as well as what the outlook going forward. Mr. Suresh, very good afternoon. Thanks so much for joining in today and, patiently waiting by as well. A tough quarter, Mr. Suresh, in this one for Stanley. Revenues were down 5%, but the EBITDA took a major knock in this particular quarter. If you can spell out what hurt the margins and what hurt EBITDA in this particular quarter to start us off with.
So as you see, in the last 7 months, actually, we have 9 new stores that have kicked in. When you look at our entire store count, as of now, more than 50% of them are actually below 24 months. So that equation will start playing out as we move into the next quarters. So the count of the new stores are going to further expand because we have 6 more stores coming in this quarter. So all put together, we'll have 15 new stores opened up this year. So this is basically slightly, you need to wait for close to 3 to 4 quarters for the stores to mature. They start yielding better results post 1.5 years, and then they start growing between 1.5 and 3 years. So that store count is what is actually, kind of eating our EBITDA right now.
Right. Hello, Mr. Suresh. This is Varsha this side. Pleasure to have you at NDTV Profit. Well, you just said that we need to wait for 1.5 years to get that growth back. Because why I'm asking this is, since March 2023, we are stuck in that 400 to 450 kind of revenue mark. When can you see that bounce back? Maybe in FY27 or second half of FY27, just wanted to understand. And also, if you could, for the benefit of viewers, if you could give us a ballpark range, what kind of revenue growth will you be expecting once this stores matures?
So not only these stores, now this year we complete 30 years as a brand, as a promoter-driven company. We have been using this whole of last years to completely restructure. It's been a deliberate move. We did not chase, sales and, we wanted to restructure completely. We have a top management team, industry best people have been hired. That phase is over. They're getting acclimatized now and we are starting to move towards tech implementation. So this was a sort of a pause for us, but nevertheless, we believe that we will start seeing impressive growth coming from Q1 itself, because there is the order books are still very robust and the new stores have started to kick in well. And I think we will start seeing a fairly good growth starting from Q1 of next year itself.
Will 15% be a decent number to target, Mr. Suresh, for FY27 in terms of revenue growth?
I think for FY27 we are a little more ambitious than that.
Okay, a little more ambitious. Got it. You spoke about the in terms of opening new stores, and that has eaten away the EBITDA margin. Could you give us some rationale of going back to the company-owned, company-operated store model? Because a couple of years ago you had migrated into the franchise-owned model, and that share kept increasing. So we've seen the COCO model essentially come back from 59 to 61%. And you're saying that will be something that we'll continue to do going forward as well. Any rationale? Because it does require a lot of capital, does require to maintain that inventory as well. So the rationale of going back to that model, Mr. Suresh?
So when you look back around 3 to 4 years ago, our COCO models were successfully implemented in Bangalore, our home market. We did what is known as a very clear growth in a particular city. And we were able to, show and articulate much healthier profitability. And keeping that in mind, we started acquiring our franchisees. Last year, we've also acquired our Hyderabad franchisee, our Pune franchisee. So we understand that, from data that we obtain from RERA and other good sources, that a lot of premium housing is actually scheduled to come to market for fit out in the next 3 to 4 years in the major 6 cities. And right now we have all the major 6 cities, we have moved towards the COCO store format. Yes, initially the COCO store formats will involve a little bit of capex, but we have secured some amount of monies for that in our IPO. Those monies still remain fairly unused. Right. Yeah, and so that's how we are going to grow the COCO way going forward.
Right. Also, sir, the furniture, the quality control order of 2025, what impact would that lead to? And I mean, will you see imports coming down? Just a quick view on this.
Yes, I think 13th February, the first gazette was passed. A lot of annexures are happening. And I think due course of this year, it is going to be a phenomenal opportunity for integrated organized players like ourselves who have a backward integration. We already got some of the QCO BI certification done for our furniture. So I think this will really stall the imports to a large extent, and I think Indian manufacturers and retailers who are manufacturing and retailing, manual retail, they are definitely going to benefit.
Right. Well, thank you so much, Mr. Suresh, for joining in and having a conversation with us, and all the best for the business. Thank you so much.
Thank you so much. Thank you.
Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. on NDTV Profit for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all the stock-related queries. So do start sending them on the number that'll be flashing on the top of your screen. You can also call us, talk to us directly for the stock-related queries as well. A very quick check of the markets are doing, because we are seeing that the main story for today has been in terms of IT, it was the gainer today, and then we saw the sell-off across a bunch of stocks that's visible on the Nifty 50 as well. But the big India AI summit continues to be one of the biggest news points and talking points as well. So we will keep cutting into the important conversations as well. But quickly, firstly on the Nifty 50, let's look at the heat map also to give you that perspective on the stocks that are dragging the Nifty 50 today. While there aren't too many in terms of the gains anyway, ONGC probably the lone one. And you're seeing Infosys, Wipro as well as TCS trying to hold the Nifty in the green, but largely a sell-off that's seen across a bunch of stocks. Ultratech, Trent, Nestle, BEL, all of them down, and largely the breadth of almost 43 stocks on the Nifty 50 down in the red, and hence you are seeing pressure on the index. The mid-cap, small-cap also a similar notion that we are seeing likely in terms of the sell-off. Continuous movement on the downside now, so the last hour and a half of the trading session becomes very important now as to where we end, because we mentioned in the FNO setup today that there is a lack of support between 25,500 and 25,900 in that sense, and we've been a lot of times going up, coming back down again to those levels. So continues to be something that we monitor. The BSE 500 finally, in terms of individual movers, we spoke about it just about half an hour ago of the key ones, and that picture has been largely consistent as well. But let's cut across to Alexander Wang. He's the chief AI officer at Meta, addressing the summit. Listen in.
1 million people with disabilities in India who are locked out of education, jobs, and digital services because the digital world wasn't designed for them. So iSTEM built voice-first, AI-powered infrastructure that helps people with disabilities to learn, discover careers, and complete digital tasks independently, like converting textbooks into usable formats or giving personalized career guidance that takes into account their disability. In healthcare, researchers at Ashoka University used our SAM3 model, which is trained on billions of natural images, to speed up the identification and segmentation of cancer tumors and at-risk organs. Their model, OncoSeg, can help radiologists and radiology oncology teams do in seconds what it takes hours to do manually. The beauty of general purpose models is the same technology that can segment tumors in the brain can segment leaves to help farmers assess the health of their crops, as AgriPoint has done. We recently open sourced our omnilingual models, which recognize speech across more than 1,600 languages and can rapidly adapt to new languages with just a few audio samples. It's not a fantasy that in a few years we'll have real-time, voice-to-voice translation for every spoken language on Earth. Now build that into your glasses, real-time translation in any language just for you. That's transformative, perhaps most especially in countries like India, where so many languages are spoken. In fact, language is an area where we're collaborating with the Indian government on through its AI Kosh platform. We're providing datasets in 10 major Indian languages so people can build AI models that deeply understand Indian languages and contexts. I'm sure you're used to people from big tech world making lots of grand but vague assertions about what AI will be able to do. But we don't have to be vague. People use our AI right here, right now. They're getting value from it, and they're building amazing things with it. And that gives us confidence about what we're building towards. We're releasing new models this year, with the first coming in the next couple of months. These will be deeply integrated with our products in a way we're really excited about. We're optimistic about the trajectory we're on. The first models will be good, and as the year goes on, I think we're going to be pushing the frontier. Our vision is personal superintelligence. AI that knows you, your goals, your interests, and helps you with whatever you're focused on doing. It serves you, whoever you are, wherever you are. We all lead busy lives. I'm sure you'd want to do more if only you had the time and headspace. That's how I think about personal superintelligence. Say you want to be healthier. Your personal AI could help you see through a personal health plan covering diet, exercise, and sleep, and your daily routine. Or you have a project you'd like to get done, like putting on an event. It can track your progress, reach out to venues, arrange invites, remind you of things you haven't considered, and more. If you love to go fishing, or paint, or want to travel more, it can help free you up so you can do more of these things, and it can give you advice when you need it, or help you show up as a better friend or in your community. Do your admin.
Well, that was, of course, Meta, and talking about some of the key use cases that are already present. They spoke about them all being used at Ashoka University, amongst others. But let's get back to Ask Profit now. Let me introduce Chandan Taparia. He's the head technical and derivative research analyst at Motilal Oswal. Narendra Solanki, the head fundamental research analyst at Anand Rathi, joining in on the fundamental side. Gentlemen, both of you, thanks so much, and very good afternoon to both of you. Let me go across and take the first stock-related query then. It's on Rajesh Exports, bought at 230 rupees per share. Now, Sriram Raghuraman from Chennai is holding 50 shares, asking what he should do with this particular counter and if it's a good time to add more. Narendra, would you recommend adding more positions of Rajesh Exports at this point of time?
Yeah, good afternoon. Right now, we do not have any recommendation on the stock and coverage, so I think I won't be able to recommend as of now.
Export space largely because post in terms of what we see in the FTAs, is it a good time to look at and reevaluate the space now?
See, sectorally things have turned positive for these stocks. However, I think translation into the top line and bottom line would take some time because due to tariffs, the supply chains had broken, and now the companies have to reestablish all the supply chains, and then it would take around 2 to 3 quarters for them to show some significant ramp up going to happen. So I think if the investors have that kind of a patience, then definitely it can hold on to and see through it. And the sector is definitely have turned positive, and the sentiments have turned bullish.
The next question that's coming in, and it's very topical at this point of time, is the IT pack. Sagar from Chennai is asking if it's a good time to buy into Coforge right now. Chandan, good afternoon and welcome to the show. Would you recommend Sagar to do that? Is it a good time to add Coforge at this point of time?
Good afternoon. Thanks for having me. So we have seen a corrective move in Nifty IT index in last 12-13 trading session. In fact, in this month, Nifty IT index is down by around 14-15%, quoting at multiple months low level. And if I look at the trend wise, it has been making lower top, lower bottom. Looking at the specific on Coforge, the counter has seen a corrective move from almost 2000 to now 1380 marks, trading at multiple month low level. So trend is negative, and I believe corrective move can continue for next couple of more days. We have seen significant build-up of short position, and I believe till the expiry doesn't happen, that short covering would be tough to cover. So as of now, till it doesn't surpass above 1430, 1440, weakness could continue, and this counter can head towards 1320 to 1300 kind of level. So I believe we should wait for more decline in the counter as immediate trend and structure is negative, and index itself is not finding support and follow-up activity. So let it correct towards 1300, 1320 before we go for bargain buying. And I believe we need to wait post the expiry. There are a few more days, then only some stability could be back in the Nifty IT and selective counter in IT pack.
Got the view, Chandan. Chandan, one more coming your way on IDFC first. Now, our viewer G. Shrikant is holding 1,000 shares at 72 for the short term. Would you advise him to book profits right now that he's in the gains?
So IDFC first started to witness some buying interest. However, it has been moving in a broader range. But the good part is even after consolidative nature of the market, multiple supports are intact near 79 marks. If I look at the price behavior in the last year, it rallied well from 52 to 86 and now has been consolidating with higher base near support of 79.80. So I believe one can hold, but need to keep in mind if your view is for short-term point of view, then you need to exit the position because the counter has tendency to remain range bound. So the overall range is likely to be in between 80 to 87. Above 87 only fresh leg of rally can be seen towards 98 to 100. But for short-term point of view, you can book profit because it is likely to remain in consolidation manner.
Got your view, Chandan. The next question that's coming is from Lalita from Bengaluru. Now, she is a regular viewer asking on a couple of stocks. I can only take one of them, Lalita. You know the drill. So let me take it on Britannia. She's holding not too many, but 4 shares bought at 6020 of Britannia. Asking what she should do with this particular position yet again in the short term. Chandan, what would you recommend on this one?
Yeah, so very less quantity, but again, whatever the quantity she is holding, better to hold the position because I believe a small follow-up could lead to the next leg of rally. But the only concern is the stock has been consolidating in a range from last almost 24 weeks with multiple hurdle near 6200 to 6250. In fact, in last 2 days, it made the high near 6200, corrected to 6100. So multiple hurdles are there, but trend is intact and declines are big both. So my suggestion is can hold the position with the support of 5850 and any decisive move above 6200 can take the counter to a 6500 level. One need to keep in mind that selective FMCG counter are doing well, while Britannia has been consolidating, but I believe counter like Marico, Colpal, Tata Consumer can do better in this space.
There are some options by Chandan in terms of some counters that could do better than Britannia at this point of time. But time now to take the first caller for Ask Profit, the afternoon edition. And this one's coming from Shiv Kumar from Bengaluru. Shiv Kumar, very good afternoon. Welcome to the show. What's your query?
Good afternoon.
Good afternoon, Shiv Kumar. Go ahead.
I would like to invest in Bharti Airtel and Apollo Hospital.
Okay.
Is it the right time to enter for the long term of 2 to 3 years?
Got it. And do you have any other similar similar stock in the hospital or the telecom space in your portfolio, or would this be the first time you're entering this space?
This is the first time I'm entering.
First time, got it. Narendra, would you recommend getting into Bharti Airtel as well as Apollo Hospital for the long term is what Shiv Kumar is asking. What would be your view?
Yeah, definitely. We have a positive view on Bharti Airtel. So definitely you can go and invest for medium to long term in Bharti Airtel. And now coming to the hospitals, as a sector, we are very positive on the hospital segments. Apollo, we do not have any active recommendation right now, but in hospital segments, we have recommendations on KIMS Hospital, which is again going through a capex cycle, and a lot of rules are also coming online. Then we have Jupiter Lifeline Hospitals, Intrust, the Medical Corp. So these are the options in the hospital where you can invest, and Fortis Healthcare as well.
Got your view, Narendra. But taking across the next question now, this one's coming from Ashok Pai from Mangalore. He's holding 1,500 shares of ITC Hotels at 194 and 1,300 shares of Indian Hotels bought at 745. So a couple of them. He's asking if what he should do for the next 3 years and if it's good to accumulate more shares at the current rate. Narendra, what would you recommend on both these counters?
Yeah, we are positive on hotel segment as well, hospitality. Right now, we do not have any active recommendation on ITC Hotel, but yeah, since he's already having, and we have a positive outlook on the hotel segment, I think we can continue to hold on for medium to long term. And if he wants, he can diversify into the stocks like Chalet Hotel, then Lemon Tree Hotels as well.
Got your view, Narendra, but the next question as well. Now, this one's coming in on Samman Capital, bought at 150 rupees per share. Let's pull up the counter now, trading at, so he's bought it very recently then, but he's bought 12,000 shares of this counter. Now, he's asking if he should continue to hold for the next 3 years. Narendra, would you recommend that given the size of the position with the company is and the ample opportunities in the financial space? What would you recommend on Samman as well as in terms of the positioning size as well?
Yeah, again, we do not have any active recommendation on this specific stock, but overall, we have a positive outlook on NBFC sector. And on a consumer-facing side, I think we can look at for options like Chola and Bajaj Finance as well, wherein the growth should also improve for these two stocks.
Got that view. We have another live caller now coming in from Bengaluru, and Akshay has a stock query for us. Akshay, good afternoon. Welcome to Ask Profit. What's your query? Hi, Akshay. Can you hear me? Okay, I think we seem to have Akshay on a bad line, so unable to hear him. But it's a massive position that he's amassed in Utkarsh Small Finance Bank. 4 lakh shares bought at 21 rupees per share. So he's sitting on a loss of almost 27 lakhs. He's not mentioned if it's a long-term or a short-term query, but let me just get both views actually. Chandan, first to you. He is sitting on a very meaningful loss. What would you recommend him to do in terms of Utkarsh Small Finance Bank? What should he do?
So the immediate trend of the counter is negative. It has been making lower top, lower bottom on monthly, weekly, and the yearly point of view. In last 2 years, it witnessed a corrective move from 57 to now below 14 levels, quoting at its lifetime low territory. However, it has been consolidating in a range from last 4 weeks, but major trend is negative. So my suggestion is better to reduce the position, and suggestion is also not to invest so much amount in one counter, better to focus on the blue chip heavyweights with the looking of margin of safety. So as of now, my suggestion is try to exit some position on any bounce to a 16.5 to 17.5. And you can use this money to deploy in some other banking name, including PSU or the private. So ultimate suggestion is try to exit some position in bounce back move. Immediate trend is negative, and it would be tough for the counter to get the revival or get the momentum as per the current chart setup.
Got that view, Chandan, and thanks for the recommendation in terms of the target prices as well. But Narendra, by any chance, do you have coverage on Utkarsh?
No, we do not have any active recommendation, but since he is invested into small finance area, so we have he can see and look for an option like Mass Financial Services, where we have a buy rating, and also Fusion Microfinance, which is also another stock we can look at for investing in medium to long term.
Definitely. I mean, there have been a couple of challenges with Utkarsh. There was a rights issue at 14 rupees, if I'm not wrong, and you had investors like Madhukila also interested in the stock, but the quantum of the financial deterioration in terms of gross NPAs amongst others, definitely a key factor that's having an impact on the stock. So hopefully that helps answer your questions, Akshay, and better luck with exiting this position as well. One more live caller coming in from Ahmedabad. Now Suraj is dialing in for a stock query. Suraj, very good afternoon. Welcome to Ask Profit. What's your query?
Sir, I have 100 shares of Senco Gold.
Okay.
At 330 price. I want a technical chart view for 3 to 6 months.
Okay, 3 to 6 months. Got it, Suraj. But Chandan, on Senco Gold, he's bought it at 330. What should he do for the next 3 to 6 months?
So it has been consolidating in a range from last almost 8 to 9 months with multiple support at 300. But at the same time, hurdles are visible near 375, 380. And now it's exactly trading at the middle of the trading band. So I believe the trading range could continue because sustained buying interest is visible near 300, but somehow supply occurs and gets the hurdle near 375, 380. So my suggestion is better to play the broader trading range. And as of now, I'm not expecting bigger move in the counter, but at least one can churn the position in this trading range. This is what I advise if someone is looking for trading point of view.
Well, Chandan, as well as our viewers and Narendra, it's time now for the rapid fire in this edition of Fast Profit. Request you, both of you, to keep your answers on buy, sell or hold so that we can take as many queries in the next 3 minutes. First one's on Som Distillery. Chandan, Satyan, who is holding shares at 150, is asking if it's any chance of coming back to that level. What would you recommend?
Better to exit on any bounce.
The next one's on BSC, bought at 3,100. 10 shares what K Guru is holding. Narendra, what would you recommend? Should he average down, wait for a pullback?
I think wait.
The next question is on Wipro. Now, Chandan, we got your view on Coforge, but is it a good time to enter Wipro as well?
wait for some more decline.
Next one that's coming in is on SIS. It's a counter we've not discussed too much, but shares held at 380 by Lakshmi. Now, what should he do with this particular counter? Narendra, do you have any active coverage?
No, we don't have any active coverage.
Chandan, any view on the charts holding at 380?
Trend is negative, try to exit.
LIC Housing bought at 540, Chandan. Should he continue to hold?
Yeah, he can get the target of 555 to 570.
Is it a right time also, Chandan, to buy KEC for the next 3 months is what Manohar is asking.
So it would be tough to comment on 3 months because it can correct first towards 550. And I think better to buy on decline rather than attempting to bargain buy at current level.
Tata Power is the next one that Prakash is asking a question on. He's bought at 376. Narendra, should he continue to hold his 200 shares?
Yes.
The next one that's coming is on Chennai Petroleum. He's asking if it's a good time to enter this counter, Chandan.
Yeah, it looks quite promising. Can hold or can buy Chennai Petro, and MRPL could be other name as well in the category.
Mohan Kapoor has a question on Coforge. Narendra, he's asking if he should continue holding his shares at 1490 from a long term.
Yeah, see, from a sectoral point of view, things are turning positive, and the pessimism has been coming down, and optimism has been getting up. So I think holding on to would be a better strategy as the downside is limited.
Sunil from Hyderabad is holding 500 shares of Reliance Power, bought at 48, Chandan. Should he hold or sell out?
Try to exit.
Next one's on Tube Investments. Now our Raj from Jaipur is holding shares at 2833. Any active coverage, Narendra, on this one?
No, we do not have any recommendation.
Chandan, on the charts, any view?
Yeah, I can continue to hold.
MMR is holding Railtel, bought at 400 rupees per share. He's saying that the stocks come down from those levels. Should he average down, Chandan?
He can do the averaging.
Welspun Living bought at 142 by Ramesh. He's holding shares of almost 500 shares. Should he continue to hold this counter, Chandan?
Yeah, he can hold. It can head towards 150, 175.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. So Narendra as well as Chandan, thanks so much for joining in, giving us your stock views across a whole bunch of stocks and spaces. But viewers, all the time we have on this edition of Ask Profit, we've been able to solve 63 queries across the 2 shows today. Of course, a lot of, in terms of quarterly conversations as well as what we've seen largely of the India AI Summit to play out. But stay tuned. India Market Close comes up next. Thanks so much for watching.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets
Finally, the bears have woken up. That's what it seems like in today's session with the kind of profit booking that's coming in the last couple of hours of trade. Welcome to India Market Close on NDTV Profit with me, Hiral Dadia and Sharad Dubey. Sharad, clearly, you know, the sleeping bears are up after 3 days. The kind of gains that we've seen,
it
profit
seems
booking,
like it's getting erased.
Absolutely, profit booking coming in. And if you see in terms of what markets are doing, we're below the 25,600 mark yet again. We were cheering the kind of gains that we were looking at
and
this
it has
morning.
reversed.
Absolute reversal. You see the advanced decline ratio as well. It's absolutely reversed over here, and that's what you're staring at. A 1% downtick on Nifty 50. You see the way the mouth has widened on the advanced decline ratio. 1,800 declines versus 642 declines. So the breath is clearly telling you that the bears have taken charge. For how long is anyone's guess.
And we have one more trading session left for
absolutely.
the week.
And probably it's the Sensex expiry also to some extent which is playing out in today's session. So these are a few of the things we are watching out for. But very quickly, look at Bank Nifty. That's what has also given up gains, and that is what is causing this kind of pressure in today's session, which that's also down almost 1%. Let's look at the Nifty 50 heat map, and then we look at the sectoral heat map. More of reds versus the greens. You just have a ONGC which is trading in the positive, but that again is a beneficiary of the way crude prices are panning out. Your IT sector has also given up gains in a way because it's just Infosys, Wipro and TCS which are trading in the positive, but that also is less than 1%.
And look at Reliance, the heavyweight, that's down 2%.
Exactly. That is what is causing this kind of pressure as well. Indigo, the cuts have deepened on the back of ATF price hikes that could be happening. Trent also seeing some bit of profit booking. Auto names, consumption names is what you're looking at in today's session. But categorically, it's your financials which are putting pressure. It's your Reliance Industries which is putting pressure also in today's session. Let's look at the sectoral heat map as we speak, and then we look at the broader markets. Clearly, pharma, I mean, I don't even know whether to call it.
Literally flat.
Absolutely flat. And major cuts coming in terms of real estate. And this is very interesting. 2.2% downtick on this front. Consumption continues the downward pressure. In fact, the cuts have deepened, but across I would say it's a C. I mean, metals has also completely reversed, Sharad, if you go to see, because that was one of the sectors which was trading
thing with the FMCG.
In the positive.
It was a defensive pack. We had earlier pointed at 1220, but look at the reversal. That's a concern, definitely.
These are concerning areas, and if you look at broader markets as well, you know, the anticipation was that the small cap index, which has been gaining in the last couple of days, that will stay. But there you go, mid cap 150, pretty much in line with what the benchmarks are doing. And if you have to look at the small cap as well, the cuts are slightly lower, but not that much. I mean, you're still down 0.7%. So I think it's a market where the bears have actually taken control. From here on, where is going to be the key question? But the factors will be important now to understand.
Exactly, and we might be at a point of inflection, at least for a short-term trader. Just looking at the key factors, we will be actually looking at the Sensex expiry. That's all at play. Remember, profit booking is happening across the counters after last 2 trading sessions we saw a good move. There was a sectoral churn, 2 defenses, but even that has reversed. So you can see how the market breadth has evolved towards the bears. The volatility is also at play, but remember, for the medium term, traders buy the dip opportunity is still relevant for both Nifty and Nifty Bank. Apart from these triggers also, if you look at the other set of numbers, the India VIX, that has spiked 8% and going past that 13 mark, while the Nifty's key support range, the lower one you should be tracking, the 25,400, the closing is very much important. Nifty Bank's also around 60,500, that's what you should be looking at. And the overall, the global sentiment is still very mixed. AI trade one side is there, and the other side, if you look at it, the geopolitical tensions are going up, and the European markets, if you talk about it, they have also opened in red right now. Over to you, Hiral.
Okay, so those are the cues one should be watching out for, but it's time to look at the watch list for today. Coforge, on the back of the CLSA note, has been in the positive. Let's see how long it sustains. ONGC Oil India rising crude prices is something which is benefiting both these counters, and in consonance to this, you have Reliance Industries, which is trading under pressure. Indigo also, which is trading under pressure. Dr. Reddy's Labs on the back of the pact with Mercury Pharma is another stock that we are looking at in today's session, along with that recovery that has come in on a new gen software. Datamatics Global also is buzzing on the back of volumes, and the margin withdrawal that has happened by MCX is what is keeping that stock in focus. Intellect Design, we did speak to the management, and they're pretty much confident of really looking at and outpacing the biggies when it comes to their AI-first banking platform. Cochin Shipyard, no major moves, but a 2,000 crore mega French contract is what they're staring at, along with Aralis India, which has entered the aquaculture business. Anantraj also in focus on the back of data centers, and Naven, Fluorine, TIL, Alkem Labs are a few of the other names that we have been watching out for. But clearly, an interesting day of trade, because the gains that we've seen in the last couple of sessions have been reversed. The bears have taken control. Let's get in Vineet Bulinchkar of Ventura Securities, and we have Rajesh Palvia of Axis Securities joining in. Rajesh, welcome to the show, and Vineet, welcome to the show as well. My first question coming to you, Rajesh, is with the kind of reversal that has come in the markets, bears taking control, we've broken, I beg your pardon, below the 25,600 mark. What are the levels that you're tracking, and are you seeing further pressure?
Yeah, good afternoon. So, looking at the supply pressure, and especially in today's session, so almost the last 2 trading session, whatever gain which we have registered for Nifty is already, gone now. And Nifty is now trading near to 20-day moving average, which is very crucial for this near-term setup. 25,550, we are almost trading around these level. If we breaks below 25,550, yes, possibly we may see further more profit taking in the Nifty, and maybe Nifty can slide further towards the next put-based concentration, which is placed at 25,500, 25,400 zone. So I think that downside we may see if we break below 25,550 now. So that level needs to keep closely on the those who are already on the long side trade, follow that stop loss of 25,550 on spot. Bank Nifty is also witnessing supply pressure and now slipped below to 61,000 level. Here also some unwinding trade is taking place for Bank Nifty also, and if we sustain below 61,000 level for next couple of days, I think here also we may see some more profit taking. Though PSU banking basket is still holding the ground, but looking at the pressure in broader market may put more pressure on the banking stocks also, and I think here also we could see some profit taking. But some select pocket like pharma is showing sign of buying interest. Some oil and gas stocks are showing buying interest. So I think very select stocks are still holding the ground, and I think traders may find out opportunity on the stocks front instead of trading in the Nifty at this juncture.
Yes, there is, you could say the indices portion is confusing for the medium term setup. Some analysts say buy the dip opportunities there. Somewhere, on a short term basis, some shorts are being created. But a stock specific approach, Rajesh, what would be your technical picks?
So I think, as I mentioned, that banking space is looking attractive. From that space, RBL Bank is looking promising. The way RBL Bank is now, managed to give breakout of its previous swing high of November 2025. I think here we could see some more traction. Looking at the weekly chart also, this is the third consecutive week where stock is making higher high-low formation. So sustained buying is taking place in RBL Bank, and this volatility also stock is trying to hold at higher levels. So we are projecting target of 345 to 350. The downside, one can keep stop loss towards 328. And another stock where we are focusing at this juncture is from the pharma space, and I think one can focus on Biocon. From lower level, recovery is taking place. We have seen that stock has attracted some profit booking post earning, but looking at the near term, short term structure, now stock is trading about a 50-day moving average. So we believe that this momentum can extend further 395. We are projecting targets for near term to short term. On the downside, 380 needs to keep as a stop loss.
Okay, so Biocon comes in terms of one of the picks. Let's also get in Vineet. Vineet, good afternoon and welcome to the show. Always a pleasure to speak to you. What are you reading in terms of markets in today's session? Because clearly there is profit booking that's coming in after the last 3 sessions of gains that we've seen. What's the sense that you pick up?
See, actually, there's a lot of bullish noise around the markets, basically the kind of structural deals that FTAs and all have taken place. But, in the larger scheme of things, internationally, there's a lot of, reversals happening in terms of trend. And those are weighing very extensively on international markets. So while, internally we look very strong, externals are really putting pressure out here because, the macros are really, really slowing down and getting deteriorating day by day. So this kind of approach purely requires a stock specific and very, very sector kind of approach. And we think that the, PSU banking space, which has been holding out very well, and certain pockets of the market where the governments have been making announcements in terms of electricity, power generation, AI, and manufacturing global exports are those stocks wherein investors should look to seek opportunities, as I see it.
That's where the opportunities are, but stock-specific also moves are happening in the F&O space as well. Just to give us a perspective, we are joined in by Puneet. Puneet, what's happening in the F&O space?
Well, definitely some very stock-specific action, as you guys rightly highlighted. In terms of the long build-up, we are seeing stocks like ONGC and Oil India continue to be in terms of the positive momentum, and that seems to be where, barring the oil and gas space, we're not seeing too many moves across the space. So even the likes of IT has seen sell-off from the day, from starting off in the green. That momentum has definitely waned out. So a down and out market. So only ONGC, Oil India seeing that kind of in terms of long build up. In terms of short coverings as well, some key couple of stocks that are doing well, RBL Bank as well as Aurobindo Pharma, after what we saw yesterday in terms of the observations coming in for Unit 7, seeing short coverings on that as well. In terms of long unwindings as well, very quickly it shows you stocks like Loda as well as Keynes Tech. And Keynes Tech, we've been discussing about it today, that there is this narrow 200 to 300 point band between 3,900 and 4,200. While it did run up a couple of times to that upper end of the level, now seeing that come back down to 3,900. So continue to monitor that after what we've seen over the last couple of quarters. A tumultuous one, definitely guidance cut on the fundamental side, but continue to monitor this. And finally, in terms of the short build-up as well, we're seeing stocks like Persistent Systems and another peer of Keynes Tech in terms of Dixon Tech. So the MS space definitely down and out, and IT is not supportive as of today.
Thanks a lot, Puneet, for that. Interesting stocks, but I'll just borrow 2 stocks from your list. That's ONGC and Oil India. Rajesh, I want to get your views on that. Of course, they are doing well because of the Brent crude jump coming in, but let's just show the OMC stocks also. IOCL, HPCL, BPCL, generally it's negative for these companies as their marketing margins get squeezed. ONGC, Oil India day is high, but let's look at the IOCL, HPCL, BPCL, all of them are down in trade as well. Any kind of a trading opportunity on the either side being made, Rajesh, and if yes, which stock would that be?
So Sharad, yeah, definitely ONGC is looking promising. The way ONGC managed to do breakout of long consolidation range on monthly, weekly chart. So I think ONGC is well poised to extend its gain going forward. So buy and accumulate would be the strategy, as long-term charts are also indicating that stock is now came out from the long consolidation. So if it continues to trade above 365, 368 zone or 265, 268 zone, I think stock has potential to extend gain towards 290, even 300 zone also on a positional perspective. For ONGC, yes, we do have a hold bullish view. On the downside, 265 needs to keep as a stop loss. As you rightly pointed out that OMC stocks are under pressure, and I think here one can find out some shorting opportunity as Hindustan Petro is looking weak on the near-term chart as its stock has already broken its 20-day moving average support area also in today's fall. So I think HPCL one can look to go short. On the downside, if it continues to remain below 445, possible downward target towards 425, 420 we may see in the near term to short term.
Okay, so those are a couple of counters that Sharad picked up. I want to look at Keynes Technologies and Dixon Tech as well. Both of these counters have been trading under pressure. There have been concerns when it comes to rising input costs as well. And completely this sector has been beaten down over the last couple of months as well. Vineet, a quick view when it comes to EMS as a sector and the kind of pressure that both these counters are seeing in today's session as well.
So generally, our view on the sector is bullish, but we have been doing an internal modeling and we find Keynes Technologies and Dixon also a little bit overvalued. So we have been kind of staying away from these two particular stocks.
Right. Of course, we have heard about Relegare's recent announcement on value unlocking, but the street is factoring something else. The stock is down 10% since the demerger announcement. Anisha is over here to explain us. Anisha, what's the entire story for Relegare Enterprises?
So lots has really gone down when it came to the narrative that was built in the market after this announcement came in, and therefore we are seeing the stock react negatively to the demerger announcement, which was much anticipated as well. More than 10% downtake and a huge amount of the market cap really eroded after this particular announcement. First, to the structure, they have demerged the insurance as well as the financial services business, and the impact has been the downfall of the stock. Entire financial services, which includes its broking business as well as lending and investing businesses, they have moved into Relegare Finvest, which will be listed later. On the other hand, the present existing company, Relegare Enterprises, will be left only with the healthcare company, which is Care Health Insurance. Now remember, a huge amount of value of Relegare Enterprises is ascribed to the healthcare business of the company. Post this particular demerger, in terms of the shareholding pattern in both the companies, the promoter group will own about 29.75% and about 70% will be owned by the larger public and the retail as well as institutional participants. So the two important points that really came out in the investor con call were very pertinent questions, which also really give a sense on why the stock has been under pressure. The first one, why Care Health Insurance was not merged as part of the overall restructuring with the parent company Relegare Enterprises, which is the holding company. Now remember that the investors and shareholders have really expressed their disappointment on this because of the holding company discount, which really comes in on Relegare Enterprises, because a large part or almost all of the value of that particular enterprise will now come only from this insurance business. On the other hand, the management really commented that at this particular point, that is not part of the plan, but may be explored in future. On the other hand, the second important question that really came up is that of promoter shareholding norms of insurance regulator IRDAI, and does that really prevent Care Health Insurance from being merged into Relegare Enterprises? Now to that, the management has commented and given out for the unlisted entity Care Health, the amount that is owned by promoter, which is 18 to 19%, is what they stated. Now, remember that IRDAI rules, they state that any company holding above 25% or 26% in a listed insurance company is called and tagged as a promoter. Now, remember very clearly that Care Health, as part of subsidiary of Relegare Enterprises, is not into the listed space. It's a subsidiary. When it merges, it becomes a listed insurance company. So looking at this, Nomura had once stated that 80% of the Relegare Enterprises value comes in from Care Health Insurance. So that's how important this particular business is for even the stakeholders to derive value out of their shareholding in Relegare Enterprises. On the other hand, the stakeholding when it comes to the promoter is currently approximately 18%. Kedara Capital, which invested in 2020, holds around 18%, and Relegare Enterprises will end up owning 63.2% stake in Care Health. So this is the bone of contention, which is putting pressure on the demerger and post the announcement on the stock.
All right, thanks a lot for that, Nisha, and it's a very complex setup, and she kind of made it very simple. But I just wanted to get some views in from Vineet also. Vineet, you are tracking this company, and there's a value unlocking announcement coming in, but the street is not happy. Your view on that?
Basically, I think until the point that the demerger happens with the infrastructure entity, I don't think that any kind of upside would stem from the stock. Given all these facts, also, if you look at the results of the insurance vertical, was not that encouraging, in the context of what we had projected much earlier. And obviously, this has got to do with the recent disruptions emanating from GST. But, we continue to remain positive. I think that company has done well to keep cost under control. The claims ratio has expanded, which has caused the loss. And we think that, this will get rectified in the coming few months. Apart from that, we think that, this listing of Relegare will get sorted out very soon. And hence, we think that there is a value emanating from the stock, and we continue to, recommend the stock to you.
Okay, you're still positive on the counter. In fact, let's get in Gurmeet Chadha, Managing Partner and CIO at Complete Circle as well. Gurmeet, welcome to the show. Always a pleasure. Hiral on the side. Any view that you hold when it comes to the Relegare demerger and plus the additional con call takeaways that Nisha took us through?
No, I broadly agree with what Vineet said. We don't have this stock in the portfolio, neither in our coverage, so would not be able to comment too much on it.
Okay. Apart from that, Gurmeet, in terms of markets, we've just been discussing 3 days of, Chandni, or Chandi, we would say over here.
Chali gayi hai.
Absolutely. I mean, the kind of bears that have taken over in today's session, it's seeming to be very interesting. I mean, sell on rally, buy on dips. That's what I think the markets are focusing on. How are you looking at it?
No, I think today's move could also be a little bit technical with expiry and also bank holiday. So I don't know much. I mean, technical guys can tell you better. But you're right. It's quite annoying and frustrating both as an investor and as a portfolio manager. The market is not responding to too many positive triggers the way it should. Earlier, the narrative was that India is underperforming because we are not part of the AI. Now we have an AI summit and markets are still going down. Then there was this US trade deal hangover, which to a large extent has been addressed. The third narrative was India does not have the earning growth. I think the Q3 numbers were pretty solid. Nifty 500, if you see as a broader base, and if you take labor court impact as outside, it's done 15% kind of an earning growth. So I think the earnings are also coming back. There's something maybe market knows which we don't. Markets are always right. And there's some more spot of botheration, and I think it will climb eventually the wall of worry. I think the macros and fundamentals are getting better. That's what our belief is. So we can just hope for the best.
Gurmeet, the consumption portion, I know a lot of macro data is there, which is showing a good move coming in. The credit numbers are coming good, macro you expected, but that consumption pack hasn't performed so much, even if the defensives you talk about it, even the new age. Now will we see these things coming into the numbers also, because those numbers will be big in Q4, Q1. How you're looking at this consumption space now?
See, I think market has been selective in rewarding this space. So I think couple of names stood out. So I think Tata Consumer reported good numbers. The stock has been very steady, hasn't really underperformed, let's say the way NHL would have done. Nestle reported very good volume growth. It got rewarded. I think Eternal also had, coming to New Age, which is again a quasi-consumption play, was good. But I think that Dipinder Goyal news of him stepping out, and I think that created a bit of an overhang. So I think market is selectively looking at this space. Also, despite let's say a large time correction, valuations aren't like downright cheap. What you're still looking is a single digit consumption. But I agree with you that if you look at, for example, the private capex, if you look at, for example, the bank credit growth, you look at the M3 supply, I think that all, if you see the macro dashboard, which is power demand, etc. It's all pointing to a sustained economic momentum. And I'll not be surprised we get double-digit nominal GDP growth soon. I would also wait for the new series to come in, and that possibly could be one trigger. And until that time, I think you got to be patient. I think equity investing is all about patience.
It's all going to be about patience, and I think that's what the street is watching out for. But thank you, Gurmeet, so much for joining in. It's always a pleasure to speak to you and get a little bit of expert and positive advice when it comes to investors. So that's what the markets are staring at right now. But it's that time where we do herd on the street. I mean, I'm just filling it for Somit Sarkar, who gets us all the chatter from the dealing room. Today, we're just looking at two counters that the dealing room is looking at. First up, UPL. You pull up that counter on the screens, and there are buy flows that are coming in on the institutional desk when it comes to UPL. That stock is up 2.5% in trade, and the expectation is of some positive news flow that could be announced as well. So watch out for this counter pretty closely in trade. And the second one that we're looking at is a Polycab. Now, there is a buzz of an income tax notice with regards to where Polycab is concerned. And to be noted that there have been concerns on a Polycab in the past as well, though that stock is trading in the positive as we speak with 2%. Let's see where it goes. So both of these counters that are in focus in today's session, Sir Sharad.
Exactly. That's pretty much interesting. And looking at the overall stocks, the movement which is happening, I think the focus is slowly shifting to the AI play again.
Yeah.
It's like a profit booking is happening in the same week itself. And remember, the Indian AI Summit is not over yet. It's still Saturday now. There's an extension coming in. But just want to show the markets right now. There's a downtick coming in, but Nifty has gone below the 25,500 mark and slightly just trying to come up. So that's an important level to actually watch out for. Rajesh, any kind of an option strategy here for us?
I think, Sharad, the Nifty is already at oversold trajectory on the near-term structure. So I think 25,500. So option strategy, I think if someone wants to play some contra trade, then he may look to buy 25,500 strike call option slide in the money call option, because this is the crucial and important support area for the Nifty. And put-based concentration is still around these level only. So some, contra bet can be done at this juncture, but one needs to follow very strict stop loss, because we are at crucial level. So 25,500 call option, which is trading around 151 rupees slide in the money, one can buy. On the downside, stop loss needs to place at 120, which is very important to keep. So 120 stop loss for 25,500 call option. On the higher side, 200, 210 would be the target, because this could be slightly expiry adjustment also. And we have tested the major put-based concentration ahead of monthly expiry. So there is a high possibility that, as we are already in oversold trajectory for Nifty, so some pullback action cannot be ruled out from here, but follow the stop loss of 120 if you are buying call option.
So that's the view coming in there. But, stay with us, Vineet, as well. It's that time of the show where we do a quick rapid fire with our technical guest. Rajesh, Newgen Software, strong volumes in today's session. What would you advise investors to do? Book profits?
I think trail stop loss at 610 and hold the position for 675.
Okay. What about a Tata investment? Because the volumes are more than 50 times its 20-day average. The stock seeing gains of 9%.
I think hold the position and, Book profit if you get another couple of a couple of percent up move from current level.
Okay, Netweb Technologies, volumes again very strong on this counter, and you have the entire AI play which is on the bay.
Book profits around 36.50.
Okay, 36.50 is what one should look at. Godrej Industries, again, a very strong volume player in today's session. The stock also seeing some smart moves.
Trying to exit in pullback, 1070 is the level where one can book profit if it comes.
Okay, so 1070 is the profit booking level. Lloyds Metals again is a strong volume play in today's session. The stock, though, trading at the day's lowest levels with cuts of 6%. What should the strategy be?
I think avoid at this juncture. Furthermore, down move we can see.
Okay, so further down move that could be expected when it comes to Lloyds Metals. But moving on. Overall, if you see in terms of the other aspects that we need to look at as well, is completely in terms of the AI play that we've been talking about. Let me get in Vineet and his view. Vineet, you know, I mean, a lot of chatter when it comes to what India is doing in AI. Initially, the conversation was that probably we are late in terms of AI. Now you have the summit. We're talking about AI adoption. We're talking about AI creation. All of that's happening in India right now. How are you looking at the IT players, and if you have to divide it between services and if you have to divide it between products, anything that you would want to add?
I think productized services is the way to go. And, your service offerings have to keep up with what is happening. Currently, the kind of service offerings that we are providing, do not really create value. And because of that, we have seen stocks sell off, and we have seen the slowdown over the last 2-3 years. But having said that, the kind of commentary that is coming, it provides an interesting opportunity for the existing set of service companies to re-augment and innovate their business models. So at this point in time, if you see the valuation of the stocks now, they're fairly reasonably valued. And if this kind of growth story emanates from them, it will be definitely a new lease of life for them. But for the time being, I think that we need to track how this promise of AI explosion plays out for this sector.
Right. So AI is a developing story, and to give it more flavor, NDTV Profit's Rishabh in conversation with Arundhati Bhattacharya, Chairperson and CEO of Salesforce India, on the sidelines of India AI Summit. Do listen in.
Right, hello and welcome to this very special conversation that we're having on the sidelines of the India AI Impact Summit. I'm joined here by Chairperson and CEO of Salesforce India, Arundhati Bhattacharya. Thank you so much, ma'am, for taking time out. We're at, the fourth day of the summit. Lots of chatter about AI adoption, diffusion, a lot of chatter about how India is now staking its claim at the global stage of AI. My first question to you is, talk to us about the sort of evolution that India is going through. Firstly, India was a consumer of AI. Now India wants to become a creator of AI. We're seeing participation across all layers of AI. Talk to us about where India's focus should lie as we now embark on this journey.
So I believe that, being a consumer is also very important because it brings a lot of benefit to our people. We have seen even earlier that given the populous nation, the nature of our country, it's very difficult to bring services of the level that is required to our population unless we use technology. We saw this during the financial inclusion program, the PM Jan Dhan Yojana. We saw it again in the spread of UPI, which has made payments so much easier for us. So, for a population level of our size, technology is what enables us to improve the standards of living of our people. So to be a consumer is important, but to be a creator is also important. And if you consider the digital awareness or the skill levels of our people, that is very deep. We have a very deep pool of expertise in the country at the individual level. And because we have that, there is really no reason why we should not be creators of AI as well. Having said that, it's also a fact that AI adoption across industry has not been as much as we would have liked. Whether it be industry, whether it be government, while the government, I think, actually has been doing better, given the India stack and the other things that the government has been doing, whether it be ONDC, whether it be the GEM portals, the government has actually been a little ahead, I would say, of industry. But industry as such, I think, still has a lot of catching up to do. And that is important because of the sheer amount of efficiency and productivity increases that AI can bring in. I think it's important for us, if we want to be globally competitive, to see industry coming up much faster and much better in these areas. Regarding us being creators of AI, really no reason why we shouldn't be. And if you've seen the expo, or rather the exhibition grounds, you've seen the various stalls, and the various startups that are working over there, some of them with really, really differentiated and very great ideas. So hopefully, in the coming future, we will see many of these scale and become, producers of AI, with which they will be able to solve not only local but also global problems.
Ma'am, you speak about some sort of a lag between industry and government adoption of AI, right? What are those impediments? Why is the industry, why is India Inc. lagging in that sort of an adoption? Because they are cash rich, balance sheets show that there is a lot of money on hand. Why is AI adoption a concern, even if money is not?
So I think one issue is a little bit of a trust deficit. Even today, I think a lot of industry is very wary of using the cloud. And of course, I come from a company that is cloud native, and I have felt this at every step, that there's been a lot of discussion, especially where the public sector is concerned, regarding whether cloud is safe or not. In spite of the fact that if you go to the Western world, you'll find that, most of the agencies over there, even agencies that are in the defense sector and things like that, even they are using the cloud. So, there is nothing to say that the on-prem systems are safer than the cloud systems. You cannot say either way, because, either can be subject to certain cyber risks. That is part of the way things are. But having said that, Indian industry does have its own reasons for not being very trusting about all of this. So that is one area. The second thing is, Indian industry is still trying to determine whether they can get the kind of ROI if they actually put in a lot of money into AI. And to that, my response always has been that find one or two use cases that give you the maximum value and go all in for it. You are in, like, Srini, our chief of engineering, he says that you are in this purgatory of pilots, pilot purgatory, where out of which you never get out. And that's not where you want to be. At the end of the day, you can't dip your toe into a swimming pool and expect to learn to swim. You have to get in and swim, actually. So use one or two use cases which can give you maximum value and go all in. So you have to scale fast, fail fast if required, and then try again till you get success. And I think that's the playbook that people need to follow. Companies that are doing this, by the way, it's not as though nobody is doing it. Companies that are doing this are seeing quite a bit of value. But we need to understand that when we are doing this, we have to do it in a holistic manner. It's not only a question of just putting in AI. It's a questioning first. For instance, yesterday, I was in a conversation with Nandan Nilekani, and he was talking about the fact that our data, though companies have a lot of data, much of it is dark. Which is true. You have to first illuminate your data. You have to ensure that your data is giving you the right kind of leverage, the right kind of intelligence. The second thing is that you have to look at your processes, and many a process will need to be changed in order to give you the best kind of results. Okay, so if you're not looking at your data and organizing it properly, if you're not looking at your process and ensuring that those processes are conducive to what you are going to do, make the changes in respect of AI, then you will not really be able to realize the full value. But when you go down the full value chain, when you look at the entire proposition in entirety, and then you use AI on top of that, you definitely will see very good results. You will see a lot of changes in your efficiencies and productivities. You will see more and more opportunities open up. You will see both top line and bottom line changes.
Right, so trust deficit and an ROI, those are the two sort of issues that India needs to tackle right now. Very interesting take there. You're also echoing what Google DeepMind's Demis Hassabis said yesterday. He said that India should just double down on what they're good at, which is perhaps agriculture, which is a major employee generation, and also Bollywood. Why not indulge more in the creative industry in AI? So very interesting points there, ma'am. You also spoke about AI safety, right? What are the sort of human-centric guardrails that you feel that should be built into India AI's mission, right? Not just, let's not talk about the global perspective, let's talk about India. What are the sort of human-centric guardrails that are needed for India to sort of build a safe AI and also drive more adoption, essentially?
So basically, I think, if you're looking at human-centric thing, the first thing is awareness.
Okay.
Where is the awareness? And we know the people that are going to be targeted. We know it is the old and the vulnerable who are basically targeted because they are the ones who don't really understand. They are the ones that don't have the education of understanding what they should be careful about, what they should start thinking or being suspicious about, and who they should really trust. Okay, so it's important for us to improve awareness. And by the way, there is enough funds with the regulators for awareness improvement, which can be used by industry, by the regulators to improve the awareness of our people as to what they should guard against. If this awareness improvement exercise is done on a regular basis, in respect of all medium, whether it be print, whether it be TV, whether it be digital medium, then I think, that would have a very beneficial effect. At this point of time, most people get taken in because they are very trusting. They don't really believe that something like this can actually happen. And things are happening. If you look at the deep fakes that are coming out today, if you look at the way people are getting, digital arrests and things like that, people just do not understand that such things can never happen. But we don't speak about them enough. And in fact, I would say that you are a representative of media. It is also media's, responsibility to bring this to light in as many forums and as many episodes as possible, so as to raise the awareness amongst people that they need to be more careful, they need to be less trusting, they need to share less about themselves, because people share everything on social media. It's like an open book. You are telling where you're going, you are saying when you are going, everything is out there, giving the chance for these people to take advantage of it. So it is important for us to begin to realize what we need to do ourselves in order to protect ourselves.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma, and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds.
Welcome back to India Market Close, and of course we are looking at the geopolitical tensions that has been also going up, and because of that the Brent crude prices that has also seen a significant up move. Just to decode this move and what lies ahead, we are joined in by Jatin Trivedi. He's the VP Research Analyst of Commodity and Currency at LKP Securities. Good afternoon, and thank you for waiting. Jatin, the question is the Brent crude that went up 4% overnight, near that $70 per barrel mark on Iran and US tensions. How do you see this development, and what are the key levels to watch out for?
See, whenever there is this geopolitical tensions across borders between major of the countries, just like 2020, we had seen the crude oil, spiking up rapidly. So there are some initial, hints that the crude oil prices will shoot up. So as of now, there is no such confirmation of anything, breaking out between the US and Iran. But whenever it does, then definitely the prices are going to shoot up by 10 to 12% easily. So right now, the prices that we are looking at is around, support of around 68 to 67 dollars into the Brent prices and 60 to 63 on the WTI price. On the extended side of resistance, so what we are tracking is around 68 for WTI on the higher side and 74 to 75 for the Brent. On the MCX, if we look at the same, then we can easily target around 62 to 6300 on the higher side, which is around 6000 right now. See, the developments are definitely on the significant side, which is also reacting negatively for the riskier other assets against the crude oil prices like the equities and the overall currency market. Now, the benefited parts will be the gold and silver prices, and the crude oil prices are reflecting the rising tensions between the US and Iran. If and all that does plan out into that war like situation, then definitely the crude oil prices, as I said, can jump up around 10 to 12%.
Okay. So overall, Jatin, what is the kind of timeline that you're looking at for this kind of a price range?
See, the last time something like this, which happened in 2021 between the Russia Ukraine, it was a rapid, rally in the span of like within 1 or 2 weeks, where the crude oil prices, jumped more than 10 to 15%. So that is a case. Whenever this happens, I cannot judge about the moves that the US will take. But if and all that does happen, then definitely the prices will jump up more than 10 to 12% within a fortnight or so.
Okay. And apart from this, in terms of a stable range, what should that look like in case stability comes in on the geopolitical front?
If and all that happens, that the easing tension comes between the two of the sides of US Iran from either of the side, then definitely the prices will price in this effect of positivity, and it might stabilize below 5600, 5700 odd zones in our MCX prices, and on WTI it will reverse it back to around 62, 61 zones, and on the Brent easily around 66, 65. So this rally of 5 to 4 to 5% recently that we have seen in the last 24 to 48 hours, that is on the back of rising tensions. So if and all that does not escalate, then it will erode all the gains that it has registered in the last 48 hours.
Thanks a lot, Jatin, for taking out your time and giving us the entire picture of this commodity space. Rajesh, I want to get you in here. Any kind of a BTST trade here for tomorrow?
I think one short idea where one can focus, that is DLF stock is now trading below 220-day, 50-day moving average, and the way this stock has attracted more short position in today's session, I think furthermore down move towards 610, even 605 we may see for DLF. So one can go short DLF future with stop loss of 630.
Okay, a stop loss of 630 is what you're looking at in terms of DLF as we speak. In fact, the real estate index as a whole is the top losing sector in today's session, the kind of cuts that are coming in. Vineet, how are you looking at this space? Because it was one of the worst performing sectors in 2025 as well. And it seems after those couple of days of respite, the downtick has started yet again. What would you advise investors to do?
So, we saw pockets of exuberance, like we've seen what happened in Gurgaon market. We've seen Bangalore market remain very strong. And these were the tom-tom sectors. Now, what is happening is there's sharp corrections happening out here. And this is entirely got to do, to my mind, in relation to what we are seeing in terms of the threat to the IT sector, because these were the primary buyers of these properties. So, to my mind, I think we are going to see this trend continue. And it will be a while before this thing really kinds of bottoms out. So clearly staying away from the realty sector and not looking to enter this at this point in time.
Right, that's the view coming in from the real estate pack. It's a void from Vinita. But coming back to our rapid fire segment, Rajesh, I'll be asking you 4 stocks, buy, sell, hold. It will be in a fast manner. Starting with Fractal, of course, the data is less, but nevertheless, for short-term basis, the company has launched a new healthcare AI model. Stock is relatively doing well in the trade. Your view on that, buy, sell, or hold?
I think hold with the 840 stop loss.
All right, MCX, additional margin has been withdrawn in gold and silver futures. Stock doing well.
Hold, but follow a stop loss of 2350.
Coforge, CLSA expects Sabre risk to be manageable.
No, avoid at this juncture.
Another AI news flow, Pine Labs. They're expected to collab with OpenAI for agentic commerce in India. Your views on that?
Follow 200 as a stop loss if you bought.
All right, that's the end of rapid fire. And we are seeing the stocks, which are actually in focus as well. But Aurobindo Pharma, there's a news coming in. And there's a tax notice of around 170 odd crore rupees. The stock has dipped again, and earlier we had mentioned Polycab also. Let's just pull out that chart also and see what's happening for Polycab. It was earlier there in our Khabar segment as well. Stock is down from day's high level. But let's just see Nifty. It's the day's low. It's below that 25,500 mark. But you must be wondering why the sudden fall coming in after 2 days of good gains. The Iran and US tensions, that's rising, that's being a key concern. Apart from that, there is 2 global trades panning out. One is the AI uncertainty, which is there definitely. Globally also we saw volatility, and the Fed rate cut trajectory. That's also actually impacting, and a risk of sentiment is developing globally as well. A little bit of profit booking seen, and also there is Sensex expiry at play. these are the important reasons why Nifty has fallen below the 25,500. But moving on, now we shift to Adani Digital Labs Director Jeet Adani, who will be speaking on the Indian AI Summit.
The central question before our country, India, is not whether we will adopt AI. The questions are, will India import intelligence or architect it? Will we consume productivity or create it? Will we plug into someone else's system or build it itself? The time for asking these is now over. As my country, India, rises, she does not rise to dominate. She rises to stabilize, she rises to anchor a world searching for balance, and she rises to build systems that are inclusive and enduring. And when India builds technology, she does not build for exclusion or control. She builds for inclusion. But in this geopolitically charged century, I believe that inclusion without capability is weakness, and capability without sovereignty is foreign dependence. So today I want to speak about 3 pillars of sovereignty that will define India's AI century: energy sovereignty, compute and cloud sovereignty, and services sovereignty. These are not technical abstractions, but they are the foundations of modern nationalism. The first pillar, energy, is actually intelligence sovereignty. AI is written in code, but it runs on electricity. As we all know, under peak load, advanced processors generate extraordinary heat. Systems throttle when power falters and performance drops. This is not just an engineering detail, it is the strategic truth. If a nation's energy systems are fragile, its intelligence systems are fragile. In today's AI era, power grids and data grids have become inseparable. This means that India's renewable expansion across solar, wind, and storage is no longer just climate policy. It is strategic infrastructure policy. And energy security is going to be equivalent to intelligence security. In this era, sustainable energy has become our competitive advantage. So what is going to be different in India because of all of this? We see that renewable clusters will co-locate with AI data centers. Industrial corridors will integrate energy and compute planning. Storage and grid stability will become national priorities. The second pillar, compute and cloud sovereignty. If energy is the fuel, compute is the factory. In earlier centuries, nations built steel plants and shipyards. In the digital age, nations invested in semiconductor ecosystems. And in today's AI age, sovereign compute capacity has become strategic infrastructure. It matters now where compute resides, under whose jurisdiction it operates, and who controls this access. Cloud sovereignty does not mean isolation. It means autonomy. It means India must host critical AI workloads domestically. It means we build data center ecosystems at scale. It means domestic access to high-performance compute for our startups, academia, defense, healthcare, and manufacturing. If intelligence infrastructure is concentrated externally, strategic leverage concentrates externally, and external concentration creates national fragility. In earlier centuries, nations have built navies to secure those important trade routes. Today, we build sovereign compute to secure our intelligence routes. And lastly, the third pillar, services sovereignty. We all know that India's IT revolution made us a global digital services powerhouse. But much of the productivity dividend accrued not in our nation, but elsewhere. The AI revolution gives India a once-in-a-century opportunity to change that equation. Our AI must first amplify our Indian productivity. It must enhance our agriculture resilience. It must personalize our education at a massive scale. It must optimize our networks of logistics and ports. It must improve our energy and distribution efficiency. It must modernize our manufacturing competitiveness. It must expand our healthcare and diagnostics across rural India. It must deepen our financial inclusion across tier 2 and 3 towns and villages. AI must become a force multiplier for Indian citizens before it becomes a margin multiplier for others. This is not protectionism, this is preparedness. This is not isolation, this is strategic maturity. Earlier this week, the chairman of the Adani Group made one of the most transformative announcements in India's technology history. Our group will invest $100 billion to build a sovereign, green energy-powered AI infrastructure platform for the nation. This is not just data center expansion. This is the trigger for a 5 gigawatt, $250 billion integrated energy and compute ecosystem engineered to anchor India's intelligence revolution. It signals a decisive shift from importing intelligence to architecting it, from consuming AI to creating it. By integrating renewable energy, grid resilience, and hyperscale compute into a unified architecture, this commitment ensures that India's AI future is not only powered, but secured, sovereign, and built at a national scale.
So that's Jeet Adani, talking with regards to the power of AI and the way businesses are getting built across as well. Vineet, with all the announcements that are pouring in, any view when it comes to the Adani group of companies as well? Because you're talking about logistics with ports, you're talking about Adani Enterprises, which has made good investments as well right now. How are you looking at this space?
So we are very, very optimistic on the Adani growth story, and it's only a matter of time, not when, this story fructifies. So I believe that we are facing structural weaknesses driven by sentiment factors related to some litigation issues in the US. But if you see the way the group has been playing its moves, I think they're getting into an area of dominance. And they're very well placed for investments for growth. I think one of the few opportunities over the next 5 years that are really, really going to play out promisingly for the investors.
All right, that's the view coming in, but a standard disclaimer is definitely there. NDTV is a subsidiary of AMG Media Networks Limited. It's an Adani Group company. But let's focus back on the earnings. ABB is expected to come out with its results today, of course, post-market hours. Puneet is here with the expectations from this preview. Puneet.
Well, thank you for that. So very, very delayed in terms of the numbers coming in. We were almost, very relaxed in terms of the earnings season getting over. But for expectations in terms of revenue, 8.5% revenue growth is what we're expecting for ABB India. EBITDA should subsequently grow to 9% as well, with the net profit also seeing a similar growth area. What are some of the key expectations that generally are with ABB is more on the commentary as well as what to look forward to is also some of the key aspects. So robotics as well as motion will likely offset the weakness that we're seeing in electrification as a space. And that's largely the expectations from ABB India in terms of the higher import content, also in terms of the raw material that is expected to have its impact negatively on the margins. The unfavorable mix also will be something that we continue to monitor as well. And finally, in terms of the order inflows, now they have been largely tepid in that sense, but the growth, the expectations from the next quarter is something that we'll be watching out for, both in terms of ABB India as well as ABB Global, if anything. Apart from that, there will be a couple of updates that we'll also be watching out for. The update on the QCO compliance, as well as what impact does it have on the orders. Prospects of any larger ones, if any, in the near to medium term will be something to watch. And finally, in terms of the export outlook, what could be some of the things to expect? General, of course, are some of the key expectations they watch out for. But fag end of the earnings season, definitely ABB India, one that you should have your eye on for today.
Okay, so that's with regards to where ABB goes. So let's see what happens to this one. If you just pull up the stock as well on the screens, you'll see the kind of moves ahead of the result, down 3% at the day's low. But this is absolutely, an impact of the way markets are panning out. But thank you, Vineet. Thank you, Rajesh, so much for joining us on the show. It's always a pleasure to speak to you. Sharad, the close is seeming pretty interesting right now as we speak, because constantly we have been inching lower right now.
Exactly, that's right, Hiral. If you look at it, the global factors are also at play. That's where the impact is coming in. The geopolitical issues which are there between US and Iran, it seems like there is some seriousness happening. That's why the risk of sentiment is there. But coming back to the market, a significant sell-off below the 25,400 mark, and throughout the day that sell-off has been happening. And the advanced decline ratio, the story has completely changed. Look at the broader markets, largely all of them are in that bearish phase as well. And the divergence is keeping on increasing, and this is happening right from around 11 o'clock onwards till right now. Mid cap also, that's bleeding 1.8%, it's down. Looking at the small cap, let's see, that's also down 1.4%. So of course there is a basket selling happening as well. Some concerns are there. Let's pull out the Nifty 50 index to show you where the stocks are in the green. Hardly anything is there except ONGC on the rise of Brent crude prices. But look at most of the stocks, they have reversed. Even the larger IT players are in the red. Reliance not supporting, SBI in the red, ITC, Trent, M&M, Ultratech Cement, BL, Interglobe Aviation, 47 out of 50 stocks are in the red. Let's look at the sectors, what's happening there, and a significant sell-off happening across the board. Pharma, healthcare, CPSE, these were the ones in the green earlier in the day, and they have turned back. But look at the consumption names, all of them down 2% and Nifty Realty down 2.5%. Majority of these sectoral indices are going to be ending at the day's low. Is market sensing something? Let's also pull out the BSE 500 index stocks to show you stock specific moves where it's there. Largely very few greens are there. Of course, Oil India holding the fort the way ONGC impact has been there. And we see Birlasoft, RBL Bank with some kind of a trading gain definitely coming in. But today, the losers are more than the gainers. And look at Shoppers Stop, that's down 8%. Profit booking coming in the OMC stocks. Of course, that's a mathematical equation where rising Brent crude prices is negative when it comes for HPCL, IOCL and BPCL. Paytm, big reversal. We had talked about a re-rating candidate, but it seems like a big technical reversal has come in this counter. Easy trip of profit booking continues, and the IT space and metals also, these stocks have reversed. So it's a day which we would all like to forget, but a very big blow coming in for both Nifty and Nifty Bank at the day's low level. But let's look at what to watch today. Tomorrow, and largely you see the US is continuing its jobless claims data. This is a very important data in the macro perspective. If you are tracking the Fed rate cut trajectory, Japan's inflation rate is also something which we'll be watching out tomorrow morning. Board meeting is there for fundraising for JSW Infra. That's all what the street would be expecting, and the IPO is opening as well. Gaudium IVF, interesting name, it will be opening tomorrow. We'll give you a detailed SWOT analysis on that. But post-market hours, ABB India, CI Automotive, both you could say companies would be there which will be focusing, and they'll react to the numbers in the morning tomorrow. That's all folks for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express by Himangshi.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And
Hello and welcome to Market Express. I'm Himakshi Bahugna. The markets have wrapped up the trade for the day and we are here with everything you need to know after the closing bell. So the biggest movers, the key stories shaping the sentiment. Let's get started with today's show. So first up, let's see how the markets have fared today. Markets have seen a sharp fall in trade, largely on the back of profit booking as the benchmarks, witnessed a steep correction in the last hour of trade. And Nifty has ended the day at 25,450 levels, while the Sensex has also seen a fall of near 1,500 points on the expiry day. If you look at the broader market, so they've also ended the day on a weak note with both mid and small cap index losing over 1.5% in trade. And sectorally, if we look at, so it was a tepid day as it was a sea of red across the sectors. Nifty Realty was the top sectoral loser today, followed by the auto and FMCG stocks, while pharma and metal counters have also, gave up their morning gains, reacting to the weak market sentiment. Now let's talk about a counter that hit a 20% upper circuit. Now TIL was in focus after the company announced that its board will meet on 23rd of February to review a major fundraising proposal, and the capital raise may include fresh issue, preferential allotment and also a qualified institutional placement. Now that is the QIP. So this update comes shortly after TIL approved acquiring 60% stake in Tulip Compression, strengthening its push into the clean energy ecosystem. And despite reporting a widened Q3 net loss and also a drop in the revenue, investor sentiment has surged on hopes of fresh capital and also strategic expansion. And viewers, shares of NetWeb Technologies have jumped nearly 10% on the NSE after the company unveiled a breakthrough Make in India AI supercomputing system powered by NVIDIA. Now, in its announcement, NetWeb has said that it has launched one of the world's most powerful AI infrastructure solutions, which is the Tyron and Tyron Camerero. And that's called GB200 system, and this is alongside the Tyron Camerero Spark, which is a compact petascale personal compute system. Now, the company is saying that the Spark is among the world's smallest AI supercomputers, bringing NVIDIA's complete AI stack into a desktop-sized form factor, and this is marking a major leap for India's high-performance computing capabilities. And viewers, next up we have Intellect Design that has launched eMAC.ai, that is its first AI banking platform. And this is aimed at reshaping how financial institutions adopt the artificial intelligence. Now, the platform comes with hundreds of built-in domain and also aware agents designed specifically for banking operations. Now, the company has also unveiled Purple Fabric, which is an enterprise AI service offered on subscription basis and with a strong focus on governance, audibility and also the regulatory compliance. Now, the architecture is also built to help banks move from heavy capital spending to a more flexible operation-led AI model. Now let's look at some brokerage notes. CLSA maintains a high conviction outperform rating on Coforge, keeping a target of 2,426 rupees. Now the firm also highlights Coforge as a net beneficiary of the AI wave following a massive $1.56 billion 13-year deal with US travel technology firm Sabre. Now, CLSA say that Sabre's financial risk appears manageable, and also its guidance for 2026 aligns with expectations supporting growth for Coforge. Now, viewers, the metals market, glimmered a little brighter today with MCX sweeping away the extra margins that had weighed on the gold and silver futures. Now, with the 3% additional charge on gold and also 7% add on the silver contracts now withdrawn, traders felt a wave of relief ripple, through this morning session, and the impact was immediate as MCX own stock sparkled and rising over 4% at the day's peak. Now, this move signals a return to smoother trading flows and also renewed market confidence and also freshly polished outlook for bullion futures. And in a market where margins matter, today's cut was pure gold. And viewers, next up we have BL Kashyap and Sons that has secured a fresh order worth around 300 crores from CRC Greens. And this contract is for civil works at a group housing project, and the company has said that the project will be executed over the next 3.5 years. And next, counter in focus is Pace Digitech that has secured a $1.35 million order from Yakin Chem for the supply of mobile battery system. Now, the company has said that delivery of the order will be completed by April 2026, and this is marking another milestone in its growth in the energy solution space. Yes, next up we have Cochin Shipyard that has signed a major deal with the French shipping company CMA CGM to build 6 feeder container vessels, and the contract worth over 2,000 crore rupees, and this is boosting India's shipbuilding industry. And also the yard begins work immediately, and also the first ship is set to be delivered within 2 years, and this is strengthening Cochin Shipyard's presence on the global maritime stage as well. Next, counter in focus is Naven Fluorine. At its analyst meet, outlined strong growth visibility across the segments, and the company expects HFO volumes to grow 20% and also see sustainable R32 prices at $6 to $6.5 per kilo. And this is a new 15,000 MTPA capacity that will, go live in Q3 of FY27, and projects, Nectar will ramp up to 50% in FY27 and also reach full capacity in FY28. Now, in specialty chemical space, the Chemers project goes live in Q1 of FY27 with large phase 2 potential, and also in the CDMO space, the Fermion run rate is also set to rise to $50 million annually, with a target to double the CDMO revenue by FY30. Next up, we have Alkem Laboratories that has outlined an aggressive entry into the medical devices as a new growth engine, and the company aims to build a 1,000 crore medtech business within 5 years, and this is targeting margins of 20 to 25%. And focus areas include orthopedic joint implants and also cardiac devices. And Alkem has tied up with the Advita, Ortho, and this has been acquired. This has acquired Bombay Ortho and also is buying a majority stake in Sweden-based Occlutech, which sells heart implants in over 80 countries. So the Occlutech deal will make Alkem the world's third largest player in occluder devices, and also the company expects cardiac products, to drive the growth, and also targets 10% share in India's large joint ortho market. Next, counter in focus is Hilton Metal. Forging shares have slipped to a 52-week low, even as the company, approved a rights issue to raise nearly 28 crores, and the board has cleared the issuance of 1.67 crores of equity shares at 16.68 rupees per share to eligible shareholders on a rights basis. And the total fund raise stands at 27.97 crores, and the company has not detailed the end use of the proceeds yet, but the move comes amid weakness in the stock, which has been under pressure in the recent sessions. Yes, next up we have Jindal SAW that has received a suspension of letter from the American Petroleum Institute after certain conformances were observed during an audit, and the suspension restricts the company from affixing the API monogram on its seamless pipes, and the company says that it is responding to the regulator and also implementing corrective measures, and management adds that the financial impact is unlikely to be material, as seamless pipe capacity is also fungible and also has already been diverted to other products as well. Now, Jindal SAW has assured that it will take necessary steps to regain the compliance at the earliest. And dear next up, we have National Highway Security of India that has, barred the NCC and also its subsidiary, OB Infra from participating in NHAI tenders for 2 years. And starting February 17, 2026, the company has said that it is reviewing the order and also plans to challenge it legally. NCC adds that there is no immediate impact on its current order book. Next counter in focus is Dr. Reddy that has entered the hormone replacement therapy market by acquiring the Progenova and also a Cycloprogenova trademarks in India from a UK specialty pharma company. Now, Progenova treats menopause symptoms, while Cycloprogenova targets estrogen deficiencies. With Progenova's sales at around 100 crore rupees, the acquisition strengthens Dr. Reddy's gynecology portfolio. Now let's look at some key brokerage notes. Citi maintains a buy rating on Aadhar Housing Finance with the target of 650 rupees, and the bank expects assets to grow steadily, crossing the 50,000 crore mark and also in the medium term. And the spreads remain above 5.6% while credit costs stay low. Citi also expects improvements in the efficiency ratios and also forecasts healthy returns, making the stock an attractive buy. And yet another partnership when it comes to AI in India. Pine Labs will embed OpenAI's APIs into its digital payments infrastructure to enable the agentic commerce in the country. And the new collaboration was announced on the sidelines of India's AI Impact Summit 2026. Now, this is said to be OpenAI's second collaboration with digital payments company after the AI giant entered into a partnership with the Razorpay. Now, the partnership is also set to facilitate conversational, AI shift from a medium of discovery to creating a mandate for the action. Viewers, now on to the big story dominating the global tech landscape and the AI summit in New Delhi, where governments, CEOs and also innovators are laying down the roadmap for humanity's next major technological leap. So at the center of the AI summit today was a landmark address by the Prime Minister, who unveiled India's new AI doctrine. Now, the Manav vision, where Manav stands for moral and ethical AI, accountability in the governance, national sovereignty, and also in data and compute, accessibility for all, and also valid, transparent systems. Now, the Prime Minister has framed India as not just a consumer of AI, but also a global architect of responsible and inclusive artificial intelligence. He has emphasized that India's future mantra must be develop in India and also develop for the world. So in his speech, he has called on the global leaders to build AI systems that uplift the poorest first, warning that innovation must never outpace humanity. Meanwhile, French President Emmanuel Macron made a clear declaration that his government and allies will take the lead in shaping global artificial intelligence rule, saying that the future of AI governance must be defined collaboratively and also not unilaterally. And Macron has highlighted that the European Union's AI Act, which was adopted in 2024 and is now being implemented in phases as a model for balancing innovation with the safety. He has said that Europe intends to be a space not just for the regulation, but for innovation and investment, and while protecting the citizens and also underpinning the ethical norms. So Macron has emphasized that France and partners like India are determined to shape the rules of the game together. But from optimism, now let's look at some caution, especially from one of the world's most influential tech voices. So Sundar Pichai has warned of an emerging AI divide. Now, a world split between nations that have compute access, data capacity, and AI models, and those that do not. So he has said that AI could easily become a technology that accelerates inequality unless global systems are put in place to ensure equitable access. So while recognizing AI as the biggest platform shift of our lifetime, he has insisted that the benefits must reach small businesses, students, developing nations, and also not remain isolated within a handful of global corporations. And on to a crucial update from the Gates Foundation. So Bill Gates, who was slated to be one of the marquee speakers at the AI summit, has withdrawn from the event. While the summit has not issued an on-record explanation, Gates' profile was removed from the summit's official website, mirroring wider scrutiny as several high-profile global figures were referenced in the US Justice Department's extensive Epstein records. So, however, the foundation has refuted the claims. The statement issued by the Gates Foundation read, and I quote, "After careful consideration and to ensure the focus remains on the AI Summit's key priorities, Gates will not be delivering his keynote address," unquote. Now on to the most consequential announcements of the summit. Tata Group and OpenAI have revealed a sweeping partnership aimed at accelerating India's AI readiness. And under this pact, thousands of Tata employees across IT, manufacturing, communications, and all the services will be trained on cutting-edge AI tools, including OpenAI's enterprise platforms. But the collaboration goes even deeper. Tata will expand its data center capacity and also creating large-scale compute infrastructure to support the advanced model training and also enterprise AI deployment in India. Industry experts say that this move positions India as a rising infrastructure backbone for global AI operations, especially in an era where compute power is becoming as valuable as the capital. Now let's look at key corporate news, but before that, quick look at the crude oil. Oil prices remain perched near a 2-week high as escalating geopolitical tensions involving Iran continue to unsettle global supply forecasts, and tensions between the Washington and Tehran remain high, and the market is reacting sharply to renewed fears of potential disruptions in West Asia, a region that still anchors a significant portion of the global oil output. Analysts are saying that traders are pricing in a risk premium, and this is expecting volatility to persist as diplomatic strains rise, and higher oil prices could have ripple effects across global inflation, logistic cost, and also emerging market currencies, including India. Now let's look at the aviation ambitions of an Indian carrier that is set for a major fleet boost. Now, SpiceJet has received a formal MOU to induct 10 additional aircraft, and this is a move that will more than double the airline's operational capacity this year. So this expansion is crucial for SpiceJet, which has been restructuring, operations while working to improve the profitability and also network reliability. And these new aircrafts are expected to, support the domestic connectivity, also strengthen the high demand routes, and also SpiceJet's leadership says that this MOU marks a revival phase for the carrier and also sets the stage for a stronger financial turnaround. Time now for the biggest stories from across India. Ganga Expressway, one of India's most ambitious infrastructure projects, is now set for inauguration, and stretching over 594 kilometers. This will become the longest expressway in the country, connecting Meerut all the way to Prayagraj, dramatically reducing travel time across the western and eastern Uttar Pradesh. Once operational, commuters can expect travel time between the two cities to drop from nearly 11 hours to just 6 hours, and the expressway will have 8 lanes, multiple access points, and also service roads, toll plazas, and also a high-speed design that aims to match the global highway standards. So officials have said that the project is also expected to be a major economic catalyst, and this is boosting logistics, industrial clusters, warehousing, and also rural connectivity across the Ganga belt. Years after the recent helicopter crash involving Maharashtra Deputy Chief Minister Ajit Pawar, his son Jay Pawar has publicly demanded a detailed investigation into what he calls serious lapses in the flight safety. And authorities have recovered the helicopter's black box, with experts noting that these devices are extremely difficult to destroy, which increases the chances of retrieving the crucial flight data and also voice recordings. Now, Jay Pawar has said that incident raises critical questions about the maintenance checks, emergency protocols, and also aviation safety standards for the VIP aircraft. And the state government and aviation regulators are now under pressure to ensure a transparent probe, as opposition leaders also demand accountability and also clarity. And amid rising concerns over biomedical waste and public health, the Delhi government has announced plans to set up new treatment facilities that will together handle 40 tons of biomedical waste per day. Now, this comes as hospital, labs and clinics continue to generate increasing quantities of the biomedical waste from surgical disposables to lab material, putting existing infrastructure under severe strain. And officials say that the new plants will use modern sterilization and also scientific disposal systems to ensure waste is processed safely, reducing the risk of contamination and also environmental hazards. Now, the move is also expected to streamline the collection, also improve the segregation practices, and also strengthen Delhi's readiness for future health emergencies. Now on to some legal news, viewers. The Supreme Court came down heavily on the state government's practice of pre-election handouts, or commonly known as freebies. So in a series of strong statements, the court has demanded to know how the states plan to fund actual development if they continued offering free food and free electricity. Now, a proposal from poll-bound Tamil Nadu's government to provide free electricity to its customers, irrespective of the financial status, was the trigger for scathing remarks on the state spending crores on subsidies while running into budgetary deficits and also complaining about a lack of money for development. And the court has also asked the state government to explain why the scheme had been announced at the last minute, leaving power distribution companies scrambling to adjust tariffs and also budget calculations. Viewers, the Directorate General of Civil Aviation has revised rules on handling unruly passengers. Airlines can now directly impose a flying ban of up to 30 days for certain disruptive acts without referring the case to an independent committee. Now, 6 new categories have been defined. These include smoking on board, drinking alcohol on domestic flights, or unauthorized alcohol on international flights, misuse of emergency exit, protest or sloganeering, intoxicated misconduct, and also other disorderly behavior, such as screaming or kicking the seats. Now, the move gives airlines faster powers to act against disruptive passengers mid-air. And viewers, ex-Prince Andrew Mountbatten Windsor has been arrested on suspicion of misconduct, according to media reports. Now, this amid UK police escalating their review of allegations tied to the recently released US Justice Department Epstein files. Now, the documents include emails and evidence suggesting Andrew shared confidential trade information with Jeffrey Epstein in 2010. Now, the renewed scrutiny follows years of controversy, including allegations from Virginia Giuffre and also images from the files placing Andrew inside Epstein's properties. And viewers, I'm getting to know that Roshni from HCL Tech is speaking at the AI Summit. Let's quickly cut across to that.
AI journey with awe. Can machine write? Can they see? Can they reason? Can they create? Today, those questions are getting answered at an accelerated speed. So instead of telling you what AI will do, let me suggest something more uncomfortable. AI is a mirror. It will reveal who we already are. The real question is not what AI can do, but how responsibly we will deploy it, how inclusively we will scale it, and how wisely we will govern it. Technology is a game changer, but only as long as humanity remains its master. This summit, therefore, is not just about AI alone, but also about leadership. Every technological revolution eventually asks a human question. The printing press asked, what should be preserved? The internet asked, what should be connected? AI asks, what should be delegated? And that question forces another. What is uniquely human? If AI writes, calculates, diagnoses, predicts, then leadership must mean more than knowing things. It must mean deciding things. For decades, India's technology growth followed a simple question. Scale drove revenue. As delivery expanded, so did output, influence, and global credibility. That model powered corporate success and became central to India's export story. AI is reshaping that equation, shifting us from scale-led growth to intelligence-led growth. The future will not be built by doing more of the same, but by reimagining how value is created. AI carries a powerful duality. It is both deflationary and expansive. It reduces cost. time, and effort through automation, while simultaneously unlocking new markets, industries, and possibilities.
Viewers, let's slip into a short break and we'll be right back with all the action on the other side.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar.
And it requires 3 decisive moves. First, from scale-led growth to IP-led value creation. IP compounds. It strengthens competitiveness, anchors strategic autonomy, and ensures long-term economic resilience. Second, from adopting to building. Deployment matters. Ownership transforms. Nations that build models, platforms, and software will define the era. India has the talent, the scale, and the complexity to be the ultimate test bed. Third, from fragmented effort to national AI infrastructure. Compute must be treated as digital public infrastructure. Democratized compute can unlock innovation across startups, universities, enterprises, and institutions. When compute is accessible, innovation decentralizes. When innovation decentralizes, IP multiplies. That is how an IP nation is built, not one by champion, but by an ecosystem. But ambition without purpose is incomplete. The true test of AI is not how fast it scales, but whom it serves. Responsible AI is not a feature, it is a foundation. From awe to accountability, that is the journey. Speed is meaningless without control. Scale is unsustainable without trust. Now, at HCL, we have 226,000 HCL techies with an average age of 26 or 27, similar to the average age of our nation. So I talk to them. You've been following the T20 World Cup. You'll know that India won by 61 runs on Saturday in Colombo. What a match. And if you watched Ishan Kishan's innings, 77 of 40 balls, you saw something that is a perfect analogy for AI. In T20 cricket, when a power hitter walks in and starts clearing the boundary From ball one, the captain doesn't take her fielders off the field. She resets the field. Deeper on long on, a sweeper on the leg side, third man back. Every ball, the field has to adapt, not because the fielders are less important, but because the nature of the game has changed. The batsman is hitting harder and faster than ever before. And the only way to compete is with smarter positioning, sharper reflexes, and better anticipation. AI is the power hitter. It is clearing boundaries that used to require entire teams. But the game is not batsman versus nobody. AI is a team sport. Our job is to set the field, to position our nation where the ball is going, not where it was, to invest in the skills that AI cannot replicate, the ability to read the game, to anticipate, to make the judgment call in the moment that no algorithm would risk. India is repositioning. HCL Tech is repositioning. And the repositioning will be deliberate and it will be supported. Let us commit to building AI that serves people, protects the planet, and accelerates progress. I started with the sound of the decade. The hum of AI will define this decade. But what the world would remember for centuries is the leadership who shaped it responsibly, wisely, and with clarity. Thank you.
So, viewers, that was, they were speaking at the AI summit, and India, is at the center of the globe AI conversation, and also innovation as top CEOs and leaders are descending in India. Today, the big announcement was made by Prime Minister Modi at India AI Impact Summit, and Prime Minister has unveiled the Manav vision for AI, which encompasses moral and also ethical systems, accountable, governance, and also national sovereignty in the acronym Manav, where M stands for moral and ethical systems, A for accountable governance, N for national sovereignty, and A for accessible, inclusive, and V for valid and legitimate. So it's day 4, and the energy has only accelerated with the presence of many global leaders, technology executives, and also live demonstrations of the AI capabilities. Now, this evening, in fact, Prime Minister Modi will be holding an exclusive conversation with 35 to 40 global CEOs, including those of Microsoft, Amazon, Google, Netflix, and also Zoom. But in the interim, NDTV Profit is on the ground, bringing you all the action from the ground. Let's begin by listening to Prime Minister Modi, speak at the AI summit as tuning, point in humanity.
AI मशीनों को इंटेलिजेंट बना रही हैं, लेकिन उससे भी अधिक मानव सामर्थ्य को कई गुना बढ़ा रही है। अंतर सिर्फ एक है, इस बार स्पीड भी अभूतपूर्व है और स्केल भी अप्रत्याशित है। जैसे स्कूल का सिलेबस क्यूरेटेड होता है, वैसे ही एआई स्पेस भी चाइल्ड सेफ और फैमिली गाइडेड होना चाहिए। हमें भय नहीं, भारत को एआई में भाग्य दिखता है, भारत को एआई में भविष्य दिखता है।
US French President Emmanuel Macron, during his keynote address today, called on India to work with France to make the internet and social media a safe space for children. Now, Macron has also hailed India's advancement in the artificial intelligence space. He has said that India has become a field of strategic competition and that the big tech is only getting bigger. Let's listen into his commentary.
1 year ago, the landscape started to shift. The US announced Stargate, China launched DeepSeek. AI has become a major field of strategic competition, and big tech got even bigger. And a lot of them are in this room and still accelerated during the last year. AI, GPU, chip tensions are now directly translated in geopolitical and macroeconomic terms. Sometimes for the best, sometimes for the worst, I have to say.
Whereas the India AI Impact Summit also brings together some of the most influential voices shaping the future of technology and enterprise. A distinguished lineup of global business and also AI leaders took center stage, including Tata Sons Chairman N. Chandrasekaran, Anthropic CEO Dario Amodei, and also Alphabet and Google CEO Sundar Pichai. And all of them spoke in length about India's AI stride and also the guardrails to be considered for the unknown future. Let's listen in.
We are adopting AI across the stack, from silicon to systems to AI-ready data centers to applications and AI agents. And we believe such a vision and such a journey is going to be extremely exciting, and it will require us to work with world-leading partners in India and across the globe. The Tata Group is establishing India's first large-scale AI-optimized data center, purpose-built for the next generation AI training and inference. I'm very happy to announce that we have partnered with OpenAI to build the first 100 megawatt capacity, which will scale to 1 gigawatt.
Back when I was a student, I often took the Coromandel Express train from Chennai up to IIT Kharagpur. To get there, we passed through Visakhapatnam, Vizag. I remember it being a quiet and modest coastal city brimming with potential. Now in that same city, Google is establishing a full-stack AI hub, part of our $15 billion infrastructure investment in India. Or in India, where our work together is helping farmers protect their livelihoods in the face of monsoons. Last summer, for the first time, the Indian government sent AI-powered forecasts to millions of farmers, possible in part because of our neural GCM model. We're also building a vast network of subsea fiber optic cables, including 4 new systems between the US and India, as part of our America-India Connect initiative announced yesterday.
India has an absolutely central role to play in these questions and challenges, both on the side of the opportunities and on the side of the risks. As a sign of our commitment, we just this week opened an office in Bengaluru and hired Irina Ghosh, who has spent 3 decades building businesses in India as our managing director for Anthropic India. We've also announced partnerships with major Indian enterprises this week, including Infosys and others. On the opportunities, one dynamic that we have observed is that technology and practices pioneered in India have historically set a standard for the global south.
And viewers, India is on the path to shape the future of AI, where, that were the words of Sam Altman, CEO OpenAI, during his speech at the summit today. And adding to this confident projection, he said that by 2028, more of the world's electrical capacity could reside inside data centers than outside of them. Let's listen in.
More than 100 million people in India use ChatGPT every week. More than a third of them are students. India is also the fastest growing market now for Codex, our coding agent that works to help people develop software faster and better. India, the world's largest democracy, is well positioned to lead in AI, not just to build it, but to shape it and decide what our future is going to look like. And it's important to move quickly. On our current trajectory, we believe we may be only a couple of years away from early versions of true superintelligence. If we are right, by the end of 2028, more of the world's intellectual capacity could reside inside of data centers than outside of them.
And although AI opens a plethora of advantages for all the sectors, however, its safety is supposedly an existential, issue. So this very precautionary point was brought about by Vishal Sikka, founder and CEO of Adani AI. During his address, he underscored the need to find a solution to the safety risk that AI possesses. Let's listen in.
Safety of AI, and the Honorable Prime Minister talked about this today, is an existential issue. Swarms of agents can be made to do completely reckless things, and we don't yet have ways to understand or deal with this. And Joshua and Demis also talked about this. We have to solve this issue. We have to deliver AI that is safe. We have done this with nuclear power for the last 80 plus years. We can and we must do this with AI.
Meanwhile, Nandan Nilekani referred to another intriguing challenge too. Now, in his words, the AI race is caught up with both from the top and the bottom. And also, according to the Infosys co-founder, all of us have to take serious responsibility to make sure that the diffusion of AI happens in the most measured manner possible. Let's listen in.
I believe right now in AI, there's a race to the top and a race to the bottom. And the race to the bottom is faster than the race to the top. So I think all of us who have a stake in AI being useful to humanity have to accelerate and redouble our efforts to make the diffusion happen. Otherwise, the consequences are going to be very, very difficult.
In fact, viewers, my colleague Danish has spoken to Tata Sons Chairman N. Chandrasekaran at the India AI Impact Summit. Let's listen in.
Well, we have been joined by Mr. N. Chandrasekaran. He's the chairperson of Tata Sons. So many thanks speaking to NDTV Profit. You have announced a partnership with OpenAI, and we just saw you also met the Anthropic co-founder. So anything new that is in the pipeline?
No, I think, we are building many different things for the AI world. And this summit has brought in a lot of leaders across the AI world. So it is an opportunity where we meet with all the leaders from different companies. We understand what they are doing and how the future is evolving. It's also a place where we gain knowledge. So it's not about deals every day.
Right. So we are seeing that, with AI, there is a fear that humans will replace AI, or whether AI will replace humans, or a human that knows AI will replace the other person. So at Tata Group, what is the strategy behind having AI in your day-to-day work?
So I already talked about it yesterday. I think AI will hugely empower human beings. And also the Prime Minister very beautifully spoke today morning how we need a human-centric AI. And I think that is possible. And I gave the examples of ASHA workers. ASHA workers were mere data collectors. But with the help of AI, now they have become caregivers. So they are doing a very higher level job than what they were doing before. So what AI does is it empowers people to reduce or subtracts the effort that is required in order for people to perform at higher levels.
Right. So because in the IT industry, we're seeing that there was a round of layoffs, and even at TCS there was a minimum kind of an impact.
TCS has answered it. TCS layoffs has nothing to do with AI. But unfortunately, whatever commentary comes, that comes. But basically, it has nothing to do with AI. In fact, I have explained yesterday, and TCS is fully geared for leveraging the AI and how it will create huge opportunities, not only for TCS, for all their customers globally.
Thank you, sir.
So, viewers, Wipro's executive chairman Rishad Premji has highlighted India's position as the world's third largest tech startup hub, with over 4,000 companies working in tech and AI at the summit. Let's listen into that as well.
India is home, as many of us know, to the world's third largest technology startup base, including more than 4,000 startups in the deep tech and AI space. Together, these companies are helping translate technological capability into practical, real-world applications. We are already seeing what this looks like on the ground. In agriculture, for example, farmers across Karnataka, Maharashtra, Telangana, AP, and Punjab are using AI systems trained on satellite imagery and local crop data. These systems provide early pest alerts, and in some regions have reduced crop losses by nearly 25%.
In fact, viewers, Mukesh Ambani has announced that Jio, along with Reliance Industries, will invest 10 lakh crore rupees in AI over the next 7 years, beginning this year. So he has stressed that this is not a speculative bet or an exercise in chasing valuation. Instead, he called it patient, discipline, and also nation-building capital aimed at creating durable economic value and also strengthening India's strategic resilience for decades to come.
Jio, together with Reliance, will invest 10 lakh crores over the next 7 years, starting this year. This is not speculative investment. It is not for chasing valuation. This is patient, disciplined, nation-building capital designed to create durable economic value and strategic resilience for decades to come.
And in an exclusive chat with Goa's Chief Minister Pramod Sawant, the Chief Minister has highlighted the various initiatives the state is taking in the field of artificial intelligence, and he has mentioned tourism and public services as some spaces that AI is being utilized in. Let's listen in to that conversation.
How is Goa increasing the AI laws?
The Goa government has already started the AI chatbot in the public services. Already the online services have not so many. The 140 services is we are doing in a community with the people. We had introduced the AI chatbot so that we can interact directly with them, so that they can day-to-day basis what exactly the difficulties they have, we can resolve through the AI.
And so very lastly, I wanted to check that, since Goa is a major tourism hub, so what AI solutions would you come out with in order to facilitate and increase tourism?
As you rightly said, my tourism department, IT department is working for the each and every tourist when step into the state of Goa. They should get each and every information through the AI. We are working on it. And within a short span of time, we will introduce this also, so that they'll get a maximum information, maximum knowledge about the tourism in the state of Goa. We'll introduce it shortly.
Because India's IT sector is rapidly adopting AI faster than its global peers, but it's still, seeing some sort of gaps in high-end compute, limited fundamental research capacity, and also rising infrastructure complexity. However, services-driven companies can still carve the leadership by deploying AI at scale across segments. Can Indian IT companies drive a competitive edge against global peers? Who would win the race? Jasmeet is here to share the insight with us.
As we saw the entire watch list which is focused on the AI, well, now we have the entire IT pack list, right? So IT companies are divided into two parts. One is product and service based. So here's the analysis of how the product industries are doing and how the service industries are performing in Indian IT. Starting off with the key aspects of what's happening exactly. Software companies are rapidly shifting towards AI-led growth, while the hardware companies are constantly getting AI-based order in terms of AI infrastructure and data center. If you look at the other key aspects, the firms are reporting that AI is becoming a key central part of a lot of the deals and a lot of client interactions, which remains in the focus. While further the focus is moving towards manpower heavy work to AI-based heavy work going ahead. Now let's quickly understand the percentage of revenue which the software companies, hardware companies drive from this AI to drive a comparison. If we look at the software companies like Infosys, TCS and HCL, they get roughly 5 to 6% of the revenue which comes in from AI, but a hardware company, something like a Blue Cloud and NetWeb, get almost 50 to 60% of the revenue coming in from the AI sources. While if you look at the overall aspect of what exactly are the companies doing towards AI and what their progress is in the AI, if you look at the companies, they're either partnering with the AI companies or they are acquiring companies. That's an inorganic growth of way. That's how they're increasing the stance in the AI. Let's quickly understand the companies which are partnering with other AI companies to increase the AI stance. Firstly, Infosys, they're partnering with Anthropic to increase the enterprise AI. Then we also have TCS, who is partnering with the OpenAI. The news just came in today, partnering with OpenAI to increase the AI enterprise further. We also have Wipro, that's enterprise transmitted with the Microsoft AI tools. Further, we have Tech Mahindra, who has partnered with Sina XG to advance in 6G networks in the telecom business of of theirs, while Hexaware is collaborating with Rapplets to increase their overall AI stance and the AI software usage by the SMEs. Further, if you look at the companies that are engaged in the inorganic way of inorganic growth, we have something like a Coforge acquired Encora. It was into AI space for roughly 21,000 odd crore in the previous month. While we also have HCL Tech, which acquired Jaspersoft, Wobby, and HPE Telecom Solutions for roughly 2,000 odd crores to increase the stance in the AI. Well, we also have TCS, who acquired Coastal Cloud in the previous quarter for roughly 6,200 crore, and Infosys also acquired in the previous year Wilson Group, the 75% stake for 1,300 crore to increase the stance in the AI. Now, well, the question comes to the overall AI development. We have one more stance of how the companies are reporting the AI developments. Something like a Oro Pro is getting an order for data center. That's the moment in terms of the AI play. While NetWeb has launched Make in India AI projects to make supercomputers to make AI infrastructures in India. Further, Intellect Design has announced the launch of an AI product for the banking systems to make it easier in multi-language. While Anant Raj is partnering with Sember to make AI infra the data centers for the overall infra space. While in terms of the Blue Cloud company to invest $1 billion to increase the stance in terms of the overall data center. Further, they also secure a national ISP license to advance in the AI in terms of data centers and servers in cloud and digital engineering further. While lastly, the question still remains, is product or service company going to lead the overall race? If you look at the service companies, the overall advanced AI first delivery is something driving the revenue. Further, in product companies, we do see that the firms are leading with the scalable and IP address, which is helping them grow. While the overall Indian AI growth story still remains a question which is growing day by day. With the AI summit in the picture, we see a huge scope of AI still flowing in Indian IT sector, both in product and service, and they see a huge momentum going ahead.
Viewers, King Charles' brother, Andrew Mountbatten Windsor, who is a former British prince, has been arrested by the UK police on suspicions of misconduct in public office amid the ongoing Epstein files now. Mountbatten Windsor faces allegations of passing confidential government documents to the late sex offender Jeffrey Epstein. And I'm about to get my colleague Vishal Vivek on the story, on this developing story. Vishal, what do you have on it?
Well, this is one of the most shocking, developments to come out of the Epstein file scandal. And this would be the first instance where a high-profile name has been arrested as a result of leakage of those files. So we'll have to see what the exact allegations are. There are several questions around it. Initially, we've heard from the police that say that he has been arrested on charges of misconduct during, his public office. So he was one of the trade envoys, so to say, from the UK side to the US side, when he had allegedly, transacted with Jeffrey Epstein and, given out some confidential information. That seems to be the gist of it. But what prompted the police to take this action to arrest him on the day that's his birthday? Yes. Prince Andrew's birthday, former Prince Andrew's birthday is today, and that is when he has been arrested. So these are some really, wild developments to come out of the UK. There were several police cars lined up from the morning in the UK, and people didn't know what was going on until he was arrested. And there are several questions, as I said, remain to be answered. Where he's being kept, has he been questioned? So we'll have some details as we go about the story.
Absolutely, Vishal. Thank you so much for getting us those details there on this very crucial story that is developing. And with that, viewers, that's all the time we had on this edition of Profit 360. But stay tuned to NDTV Profit for more news and updates.
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, Are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Where's Tamanna?
I think it was, and you know, this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, one of the most loved KYC shows in media, and we get a lot of love from our viewers, and of course we have picked up this stock as a viewer pick. The stock Lekin, I'll give you some hints. They are very easy, but it's up to you to guess. The first one is, it's the fourth largest mutual fund distributor in India in terms of retail AUM. That's a hint. It's only one mutual fund distributor is technically listed. Others are there, but they are ancillary plays. The stock is already a multi-bagger, 368% in the last 5 years. The entire COVID up move, which we saw, key beneficiary here. But the industry is giving mixed set of numbers. Yields are a little bit of pressure. Return ratios under pressure. That means there is a cyclicality involved as well. But three important guesses I have already given to you, but the company is very interesting, a stable business model, and that's why I have got this, especially in the capital market space. And you need to be prudent in life. And not only that, the company's name is also Prudent. Prudent Corporate. This is the company we'll talk about. But why are we calling this company? The earnings had come 2 weeks ago. But what is that interest which has come in the markets because of that? That's what we have got this company for. And this is a thesis which I have researched. The first question is, It's a stable capital market play. We have seen so much volatility happening in the markets, especially for the broking and the exchange stocks. So does the flow move to the brokerages, or I mean to say the AMCs, or stable ancillary plays here? Because India's long-term growth story is still definitely there, and the company itself is a second order effect, and we have seen its growth journey coming in. So for long-term investors especially, I have got this company for you to actually learn and understand in KYC, is there any value here? Remember, cyclical pressure is there in this type of industry where the yield pressure is still continuing, and that's plaguing the numbers. And that's what in the last 6 months, nothing much has happened in the stock. This is very important, de-risking the product portfolio. Already it has insurance distribution also. Does it go into new products or is it new geographies? That's what we will be asking the management of Prudent Corporate, because the future acquisition plans, the company is sitting on healthy cash balances. Will there be a fintech acquisition? Any AI usage would be coming in, because that's something very much important. And that brings me to the last question. Is there a new product pipeline coming from Prudent Corp? Because the market needs something new, and of course company has already established a safety brand or an industry they are working in, but will they take the next step? And to answer that, we'll have Sanjay Shah, the chairman and MD of Prudent Corporate, where he'll give his views on how the industry is changing, how the performance has happened in earnings, and also outlook ahead for Prudent. But that's not all. Let's go into much more layers for Prudent and explain you why this company itself, despite being a stable business model and a stable industry, there are some issues. Of course, this data we have already shared. In the retail AUM front, the company is the 4th largest, but let's get into much more details. And it's operating as a distributor of mutual fund, insurance, roughly around 11% stake in terms of revenue, and other financial products as well. But net, it is still a distributor of mutual fund. Now, 40% CAGR AUM growth has been coming in from FY20 to 25. Remember, this is the time when the explosion happened. There was COVID, there was a new entrance in the market. So the base is very high already. The insurance products, they are improving from 7% in FY20. They have increased it to 12% in FY25. That means the de-risking portfolio is going on, but it is very, very slow. It's not very fast because of the size of the company. That's the reason. The monthly mutual fund SIP flow is coming in at 1135 crore rupees, and the data which we checked, still now the SIP inflows are near their record high levels. So that's a key beneficiary, the company coming in. The AUM is at 1.3 lakh crore. And let's look at the other numbers also as per the Q3 numbers. MFD is the mutual fund distributors we talk about. It's interesting that it's around 36,000 odd levels, likely to go up, touch the 40,000 mark by the end of this fiscal. The investors, this keeps on growing as the long-term investment habit builds up in India. So the company is a proxy to that story. But that story does have hiccups also. But investors, this is the story I'm talking about, the growth story of India, the way the long-term investment is happening, the SIP is happening, HNI book is happening. That's roughly 60 to 70% you could assume for the entire mutual fund AUM space. So this is pretty much interesting, and we are seeing the entire setup coming in, but there are a lot of questions to be asked. The big questions is, will the capital from the broking of the exchange stocks move into AMCs or ancillaries in this space? Will we see that capital changing? The second question I want to ask is the mutual fund industry. Is it still reeling under the yield pressure, or things have they bottomed out? Because that's one of the key reasons which we generally don't discuss on the mutual fund growth industry, but there are pressures and they need to be addressed. The third one is, how will Prudent Corp de-risk its product portfolio? That's the big question we are asking. What's new? What's next? Are you just stable business? The growths are coming low. What happens next? And usage of AI in wealth management industry. How does that speed up? Is it that manpower costing comes down and you get more business? That's one of the key questions to be asked. Of course, it doesn't reflect on the numbers now, but stock market always comes on futures and earnings. But these are the big questions. But another big question you must be wondering is, Sharad, what are the ratings for KYC? And very important it is, it's a holy grail, the financial numbers, these important numbers, we get them for you. judge the company, give them the rating so that you make informed decisions and do consult your financial advisor as well. Return ratios is something you should be looking out for. Apart from that, there is shareholding, looking at how the institution movement is happening, and also promoter, the view on promoter. Is the promoter selling any stake? If yes, why? Street cred, valuation, comparing with itself, we are not keeping any direct peer to it. And just to show how the history is panning out, an analyst take. Are the analysts still bullish on the stock? Because let's be honest, last 5 to 6 minutes, 5 to 6 months, this stock has tested the investor patience as well, but for the long term, it has been a multi-bagger. Let's move on to the first one, that's income statement, to see how the numbers have panned out, and it's a good growth numbers coming in. And FY23, the income was 611 crore rupees. That's almost doubled up in 2 years. A good set of numbers, you name it, revenue, EBITDA, PAT. But where's the concern coming in? My concern is the margins. Because these numbers are good and all looks 2020, but margins, that is where the stress starts coming in. Is it a commoditization happening in this sector, or is it more competition, or is it just a cyclical play that we're in a downtick where the margin pressure, the yield pressure is coming in this mutual fund industry? That's all the questions, the management will be asking us. But net, because of the margin issue, compared to a very strong revenue growth, I'm giving this a neutral rating when it comes to prudent corporate. Let's talk about balance sheet. Balance sheet in these type of models is nothing to be concerned about. They hardly have any debt. It's an asset light model, and that is why the street, likes these type of businesses. And just look at the cash balances. That is I'm much more interested. Why? Because will the company come out with any good deployment or an acquisition, or maybe a reward to shareholders? That's the interesting part. So just look at 178 crore rupees. Other numbers are fine, decent, but your time should be going in that number. This is a strong one. So a thumbs up coming in when it comes to the balance sheet. So income statement we spoke about, balance sheet we spoke about, but at the end of the day, it's the cash flows which matter, and largely in a business model as such, the cash flows, there isn't much issues. This is a very differentiated business model. Asset light it is, and when it's asset light, the cash money, it's coming, and it's a good reflection. The cash flow to PAT, it has remained same. PAT numbers have gone up, cash flow from operations have gone up. A little bit of lumpiness definitely coming in the net cash flows, but these two are the numbers to actually look at when you're judging the company. And right now, the cash flow statement is positive. Let's talk about the return ratio. Generally, these type of business models, the return ratios are on the higher side, and you are expecting 30% plus return ratios considerably all the time for the model like this. And during its IPO, we are expecting this could actually hit that 35 plus mark as well. But it's a cyclical thing. There's a market cycle at play as well. So those higher 30s ROE numbers, that has started coming down. It's around 28.8 now. The yield pressures are coming. 29.3, so it has dipped. I spoke about margins, I spoke about yield, now I'm speaking about ROE, and the major expansion also hasn't taken place. A little bit of acquisitions are definitely there, but if company does more acquisitions, there will be more significant pressure coming in. Why? Because the street is expecting the company to de-risk the portfolio. If they go on a slower rate, maybe the ROEs will be maintained, but as of now, it is not, it's falling. So because of that, current data, I'll give a strong thumbs down when it comes to return on equity. Let's talk about shareholding, how things have moved. It's largely a stable asset play, but has the money moved amongst the institutions? If yes, what's the trend? Let's look at that. Promoters have reduced a little bit of stake. Each quarter 1% stake is being reduced, so that'll be pretty much interesting where those proceeds are being used. FIs was a good jump from 12 to 18%, but then again a profit booking coming in. So out of 3 major shareholders, 2 of them have actually reduced their stake, and that's where a little bit of my concern comes. But to negate that, the DIs have come up. They have lapped up also from 16% stake to 22% stake, so it kind of balances out. So it's a neutral rating when it comes to the shareholding pattern. Let's talk about street cred. Has the money been made if you have invested in the stock? And if it's for the short term, maybe you haven't caught the bottom of the market. And remember, the entire capital market theme stocks were under pressure. this is not an exception to it. That is why we are seeing the very measly returns, or you could say lower returns coming in. But long term, multi-bagger hai ye stock. 1 year, 32% returns. And let's just pull out the 5-year return to show you that if you have held conviction in India's growth, the mutual fund industry growth, then you have been rewarded by 368% gains for your investments in Prudent Corp. So net, short term, medium term, if you have entered, it was a wrong entry. If it's a long term, it is a good one. So it's a neutral rating when it comes to the street cred. Also, let's talk about valuations, how things pan out. I've just taken the 12-month forward PE ratio. The current one is at 41 times. And if you look at the peak valuation, this 2024 peaks, that was 58 times. But after that, it is a sanity has come back into the markets, I would say. And now it's at a decent level of 41 times. You must be wondering what's the 5-year average. So I'll just put that out as well. That's 51 times. It actually doesn't mean that its stock is trading at a big discount. Now I'll tell you why. There's already a yield pressure happening. That's why the numbers are suppressed. Secondly, the capital market cycle, it's not at a very big peak. There has been changes. The capital allocations are changing, and that is why we have called this company to see whether now a new rate of re-rating comes for this company or not. So definitely it's a neutral rating right now, and we need to wait and watch. That's why we need to keep it fair in our analysis. But apart from valuations, also a very key analysis is the analyst. What are the analysts thinking about the stock? Are they getting tired? Are they still holding up, or they want to get into the stock? And yes, analysts are very patient, or let's say very prudent in their calls. 4 of them have given a buy call, not a single sell call. Hold also 2. That means technically nobody wants to sell this stock. It's a good stock. But on the other hand, the expectations is not very high also. Just for 12 months is just 9%. That means it's a very flattish or a slight positive move coming in until and unless some major announcement in the industry or a big corporate move comes from the company itself. So there is an inflection point, and the market is asking what's next, Prudent Corporate. Net, it's a positive takeaway for the analysts, but let's just add up, all of our ratings, how things actually pan out. Largely, income statement has been good, but my concerns are there on the margins. We will get that question from Sanjay Bhai. Balance sheet, cash flow, they have been really good. It's an asset-light model. That's what the institutions also like. Return ratios are on the decline, and of course, that makes sense. Street cred, it's been decent. Short-term, medium-term, nothing much. Long-term, it's been a multi-bagger for you. Valuations, it's decent enough, but I wouldn't say that it's the cheapest right now to enter into the stock. But analysts are still bullish, but the return potential is not so high. Nevertheless, it's hot, cold, but the KYC rating for this company, I've given it 5 out of 8, slightly on the higher side. And the reason for that is that there's a flight to capital happening from the brokerage and exchange stocks. So will that benefit the AMC stocks? Will that benefit the AMC ancillaries? And that is why Prudent Corp is coming in KYC. But joining us would be the Chairman and Managing Director Sanjay Shah of Prudent Corp. He has more than 2 decades of experience in wealth management, and also he is a qualified chartered accountant from ICAI as well. We'll be talking with Sanjay Bhai on this entire setup. And it's always a pleasure to have you, Sanjay Bhai, with us and KYC show. It's a new format. First time the company is coming. The first query is, of course, going to be on India's growth story. The AI part is also there. But the growth which is happening, the AI, the mutual fund, a little bit of hiccup is there in the markets, because we have seen that in 6 to 8 months. How is the mutual fund industry holding up? Is there any kind of a yield pressure coming in? Give us a ground channel check.
Thank you very much for having me on the show and covering my organization in a very detailed way. I really appreciate the way you have been talking about the know your company. For us, the know your customer, which is the KYC for customer onboarding. You have done a very great company onboarding to give the very detailed perspective. Now, if you look at the entire mutual fund industry, I believe that in the wealth management segment or in the financialization of the economy, I think the mutual fund is coming out as a very strong product. If you look at last couple of years experience, I think people's experience in the mutual fund has been reasonably good. If you look at all the competing product, whether you're investing directly into the equity or chit funds or for that matter any other asset class, I think the experience has not been very, very great. To be very frank, we represent very, very strong retail of the country. And if you look at last 12 to 18 months, market has been definitely going through a consolidation phase through many ups and downs. However, all who has probably committed their money through SIP, because of the rupee cost averaging, their return in last 12 months, 18 months it's at least close to double digit or probably a higher single digit. So I think overall experience has been pretty strong. And because of the strong role which has been played by the regulator to make the industry very, very transparent and very competitive as far as pricing is concerned. So I believe the growth of mutual fund industry is going to be there for a long period of time. And in spite of we being reaching almost about 82 lakh crore of AUM, we have hardly about 4.5-5 crore investors. So there is a long tail which is pending, and we all need to do a very strong role to make sure that the financialization, the participation of people become significantly larger. And I believe each household should have SIP as far as investment is concerned, because that will be a very, very quality addition to their strategy for the retirement planning. So I'm not worried about the growth. Coming to a second question about the margin, I think as you knew that the structure itself is prepared by the regulator in such a way that as the AUM increases, incrementally some amount of reduction in the total TR will be automatically priced in, and the benefit of scale will be transferred to the investor. So gradual decrease in the yield is probably something which is you have to always keep in mind. However, I think the growth potential is so large that the yield pressure will not be going to create huge impact on the profitability and the operating margin. So I'll just give an example. Say, for example, in last 3 years, my yield has moved down from, let's say, we used to be at 94, 95 basis point. Now we are at 90 basis point. So there is a 5 basis point compression in last 2.5 years. However, my AUM has gone up by 4 times in last 4 years. So same is the story for everybody. So probably I think I will be more looking at the growth of the AUM rather than the yield pressure, because growth will definitely compensate some amount of margin pressure which is going to be there over a period of time. But yes, it's a reality. Another important thing would be that if you look at now, lot of big scheme has already crossed the threshold of 50,000 crore of AUM, where incrementally margin pressure will not come. So we believe that some point of time you'll also see that this margin will plateau down and some amount of stability will definitely prevail.
Right. Sanjay bhai, of course we talk about the company, but KYC is a very special show. We want to give our viewers a 360-degree angle of analysis, and the private wealth management space, we have been associated with more than 2 decades of experience in that. Now this AI also comes in. Now if AI comes in, if you are using or the industry is using, what benefits is this private wealth management coming in? Because it's still a one-to-one kind of a sector, especially for your clients which are having a larger corpus. But I want to know about the AI usage right now for the wealth management industry.
So you are absolutely right, because say we believe that AI, the way we have seen the digitization in 2014-15, I think it's going to be a time for another wave of change in the industry from the point of AI. However, you are very bang on as far as the personalized approach to the investors' portfolio creation is concerned. So my belief is that AI will play a significant role in data analytics. I think having the information on your fingertip. Say, for example, today I'm meeting my partner or my client. AI will tell you that what is the behavior of this client, how much activity he has done in last 1 year, 2 year, 3 year, whether this guy is investing into particular SIPs or not. So you will be having the information at your fingertip, which will help you to do the business much better. Another thing would be probably AI will help you to analyze because say today, frankly, if you look at, we have a large customer database of about, let's say 25 lakh customers and the 30-40,000 distributors. Now you can't work on everybody at one point of time. So if you have the data analytics, which is supported by AI in a much better way, I think it will help you to increase your productivity. So all in all, AI is going to be the reality going forward, but the role of advice advisor to understand the client's behavior, his greed and fear, and how to manage him during this greed and fear phase is going to be very, very prominent. So rather, my belief is that as technology becomes more and more intense on AI side, the role of the investor behavior also become critically important.
So it's a very important take on that. But apart from the mutual fund also, the street is concerned about prudent de-risking its portfolio. Insurance segment also, your revenue has increased, but street is expecting more non-mutual fund segment revenue coming in. What's your take on that, and क्या नया कर रहे हो आप?
So I think you are absolutely right, because we believe that so there are two things which is happening. We have started looking at the non-mutual products in last couple of years. However, the growth of mutual fund was so strong that the other product could not be able to cope up with that growth. That is number one. Number two, if you look at my insurance, premium growth is very, very robust. However, in the insurance also, there is a huge change as far as your entire revenue structure is concerned, because if you look at the beginning of this year, there was a clawback provision which has came in, that if you're probably there is a clawback of let's say about 4 to 5% has probably factored in. So my revenue yield has came down by 4 to 5% at the beginning of the year. Then in last quarter, again, as you knew, that government has removed the GST from insurance. So the what you call the GST impact has also came as far as my revenue is concerned. So because of these two, even though we have done significantly better on the insurance side, I think the profitability or the revenue is not visible. But I'm very, very confident that insurance will be a very, very significant product in our kitty. Apart from that, we are now also distributing almost all PMS AIF. We also have a loan against security. We also have a stock broking. We also deal in bank FDs and corporate FDs. So these all put together, I believe that they all have a growth potential, which is even better than the mutual fund, because they are very small in my segment. So all in all, probably today mutual fund is about 85% of my revenue, and 15% is for other category, wherein about 10 to 11% comes from insurance. So 85 from mutual fund, 10 to 11% from insurance, and another 4-5% from non
right. Sanjay bhai, there is a significant cash balance on your books, and viewers have written to me that will there be an acquisition coming in just to prop up your AI angle, or something which is not related to mutual fund and acquisition comes in, or any dividend announcement? Investors are looking at that.
No, I think that is one of the main reason when you have looked at my return on equity has came down, not because of my core business, but because of the cash which is getting piled up. We have been always on lookout for some good acquisition. And as you know that last quarter, we successfully acquired Indus, and we spent about 8,500 crore, and another 35 crore is going to be spent over a period of next 3 years. So it's not that we are not looking for the acquisition. We have been seriously considering, regularly scouting.
We've been joined by Mr. Sunil Bharti Mittal, the founder and chairperson of Bharti Enterprise. Many thanks for speaking to NDTV Profit. You're here at the AI Summit. A lot is happening around AI. What does AI mean for your group?
Well, AI is, just to start with, a great tool and tech innovation to make our networks better. They are becoming self-optimizing, self-training is going on. We are managing energy through it. And our customer-facing areas are finding great help with this. Our chatbots, our agents, which are dealing with the customers, I think we've seen a significant help. Most importantly, as you would see here also, the spam and the fraud control that we have been able to do through the help of AI tools is absolutely breathtaking. It's actually a global first, and even the authorities have acknowledged that a reduction of spam, of fraud on Airtel network has been significant.
So how do you plan to invest in AI? Any amounts that have been earmarked to invest in AI for the entire group?
We will keep on investing. We don't make any announcements of how much we are investing, but you know that we are one of the leading data center providers. So if you look at the arteries that will feed the AI revolution, one is the fiber network, which is huge and wide, and we continue to invest there. Submarine cable is the other part, which is absolutely essential. And third is AI data centers, which we are building at rapid pace. Airtel is committed to get to 1 gigawatt of AI data center capacity in the shortest possible time frame.
So what sort of synergies are you looking at with the companies like OpenAI and Anthropic?
Well, we have 400 million customers, better quality customers, which everybody wants to, reach out to. The idea is to bundle, distribute to our customers, let them taste and snack these wonderful, applications, and then start to become subscribers. So we are in conversation with all of them.
And so very lastly, one industry question. If you look at the SATCOM licensing, that is a major issue for the industry. What would you like to say on that?
Hopefully soon.
Thank you.
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Tamanna.
I think it was, and this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends
Hello and welcome viewers, this is Malika Mishra on Your Money Matters, and today we're diving into two very interesting subjects, and these subjects can be, I would call them as personal finance can get. We would be first diving into how to build a contingency fund, because when people start earning, especially youngsters, we're often told that either you need to start saving first or you need to start building a contingency first. And growing up, that was my first doubts as well. So today, to help us really answer all the doubts around building a contingency fund, we have Shweta Rajani, Head Mutual Funds at Anand Rathi Wealth. Thank you so much, Shweta, for joining us. My first question to you would be, that what is the right age to start building a contingency fund? And second, what should the right approach be? Because many people aren't aware of that.
Good morning, Malika. Good afternoon, Malika. So yeah, I think a very important topic that once you start earning, it's also, you need to start building a contingency fund. Now, what exactly is a contingency fund? It's basically taking care of if you have a sudden job loss, if you have a sudden expense coming in because of, maybe some accident or a medical expense that has overshot your insurance. So to take care of all those unplanned, unexpected events, you need to have a contingency, or as we may also call it, as an emergency fund in your portfolio. Now, of course, when you're starting off early, you may not have as many responsibilities as someone who's in their 30s, married, or having their children. So, one approach, or I would say a thumb rule, is when you're building an emergency corpus, ensure that you have at least 6 months of your expenses built in an emergency fund. What I mean is, let's say if you have 50,000 rupees as your monthly living expenses, and I'm not talking about lifestyle expenses, but basic living expenses, if that's 50,000 a month for you, then 6 months of that money. So 3 lakhs is what you need to start off as having your emergency fund in your portfolio. And right from the day you start working, I think you should work towards this goal as well.
Okay, Shweta, so yesterday when I was discussing with a friend on how they built their contingency fund, a question popped in my head and it confused me because, yes, I've heard before, of course, that 6 months of your expenses should ideally be pooled into a contingency fund for your Plan B expenses. And emergency, as you described already, it is for emergency purposes, maybe a hospital visit or an accident or perhaps a birthday gift, whatever it may be. But if you're saying, if I'm going to take 6 months, ideally I would take 6 months to save expenses of 6 months, right? Because I won't be able to pool them together in 1 month. And say next year my salary increases by say 30%, then do I still need to keep pooling into that emergency and building my emergency? Because, and if that's the case, then how do I balance investing in mutual funds and also creating an emergency fund at the same time?
Yeah, I think this is very important because, people often think it's either or, especially in the initial years, but it's not that. Both go hand in hand. And, while you start building your emergency corpus, you should not forget wealth creation for you. So, let me put some numbers here so that it's easier for everyone. Let's say when you're starting off you're in the initial years, 22, 25 years of age, you of course don't have so much responsibility and you don't need to build the entire emergency corpus in the first 3-4 months. So if you have, let's say you start off with earning a lakh of rupee and 30% of that is what you can save. So the rest of the 70% is your expenses. Now, this 30% that you have as your corpus, I would say 20% can go towards wealth creation. Anywhere between 15 to 20% can go as wealth creation. So long-term saving, SIPs and mutual funds. The 10 to 15% can go towards building your emergency corpus. In this way, maybe over a year and a half, you would have got to your 6 to 7 months of an emergency fund built in. And after that, you can start off with full-fledged investing towards your long-term wealth creation goals. Also, you mentioned about, if next year the salary increases, then should the emergency fund also increase? Yes, you can. But ideally, your emergency fund is not 6 months of your salary. It is 6 months of your expenses. So if your expenses have not gone up in the second year, and your salary has increased, you can continue doing the same proportion of what you were doing in the first year to build your emergency corpus. And if you've reached a stage where you've got your 6 months living expenses in your emergency fund, then the entire investment can go towards your long-term investing.
Okay. But Shweta, I think it seldom happens that people tend to pull back or maintain their expenses as it is when their salaries increase, because a checklist comes beforehand. But on a lighter note, do you think then an emergency fund should be strictly kept in a savings account, or can that also be put into a liquid mutual fund, because mutual funds, money from mutual funds can now be retracted at any given point in time. So do you think that would be a smarter way to also build wealth and at the same time pool emergency?
Absolutely. So, 2, 3 things that you should keep in your mind when you are also building your emergency fund is, one, it has to be in an instrument which is stable in the return generation. So it cannot be in equity. It has to be in something which is debt oriented. It should be easily accessible to you, which means the day you need it, today or tomorrow, you should have it available. So liquid, accessible instruments, and both savings bank account, liquid funds, ultra short-term funds meet this criteria. And the third one, therefore, comes in how do you bring in that little efficiency in your return? So if you're getting little more in your liquid fund than your saving bank account, which is the situation today, liquid / an ultra short-term fund, that's where you should park. In fact, I will take one step ahead and I will say you bring in a little tax efficiency as well in your portfolio. And today you have an option of an arbitrage fund, which also is low on risk, can give you almost stable returns. So if you are in a higher tax bracket, then rather than being in a liquid fund, you can also be in an arbitrage fund. If you are in a lower tax bracket, then it doesn't make too much of a difference whether you are in liquid or arbitrage. But if you are in that 20 or 30% tax bracket, then be in an arbitrage instead of a liquid fund.
Okay, then Shweta, can you explain the differences and the advantages of being in an arbitrage fund versus a liquid fund?
Yeah. So liquid fund generally invests in debt instruments or commercial papers which have a maturity of around 30, anywhere between 30 to 60 days. So it's parking in short-term instruments, and that's where it becomes easily accessible. They have 7 to 10 days of an exit load. Some of them don't have an exit load. So it meets that criteria because it's investing in shorter tenor papers, mostly with highly rated papers. The return that you get is also stable, but it is considered as a debt fund, and therefore the taxation comes in as, it's taxed at the marginal tax rate. So if you are in that 30% tax bracket, then the liquid fund, when you redeem, it will also be taxed at 30% for you. But it's still better than a savings fund by approximately 1.5% from a return standpoint. So compared to a savings fund, a liquid fund is better. Now here comes arbitrage funds. Arbitrage funds basically invest in equities, but they don't take any market timing risk because they buy that particular security, let's say in the cash market at 100 rupees. They also get into a 1-month future contract where they say we'll sell the security at 100.5, for example. Effectively, they are making a 0.5 or a 6% of an annualized spread. It doesn't matter after a month where that security is trading because you've already locked in your sale price. So that's, in simple terms, what an arbitrage fund does. It's not taking an equity market risk, and therefore it somewhere gives you a near stable return, just like a liquid fund would give you. Arbitrage funds, most of them may have a 1-month exit load, but after a month they are exit free. So here again, it's accessible. The difference comes in the taxation because it's investing in an equity instrument. The taxation is that it would be if you've invested for less than a year, then 20% short-term capital gain tax rate. If it is more than a year, then the 12.5% of the long-term tax rate. So this is where the difference comes in, where I was talking about a tax efficiency coming in also in the portfolio.
Okay, so arbitrage funds are not only just tax efficient, but they also hedge against risks by the way they work, as opposed to how mutual funds work. Shweta, emergency funds are often spoken in the ambit of salaried individuals. I'd also like to ask you, what should the strategy be for somebody who does not get regular income and perhaps is involved in a business? What changes then?
So here, an emergency fund becomes far more critical than a salaried individual, because if you're a salaried individual, you may be out of job or you may be away from your regular income for a few months. But when it comes to non-salaried, these cycles can be, longer, where you may have an extended period of your saving, your income not coming in. So base case scenario here, instead of 6 months, I would say you should have anywhere between 12 to 15 months of your living expenses parked as an emergency fund. That's one difference from a salaried person. Second, the moment you have to dig into your emergency fund because you're either facing where you're not getting an incoming cash flow or an emergency has hit in. You need to first ensure you're paying off your debts, no EMIs, all the expenses which can be cut down, which may be not your mandatory necessary expenses, that should be cut down for a non-salaried person. This becomes very critical. Third, I think I want to also highlight here, it becomes very important that your insurances are in place. So basic insurance, life insurance, medical insurance, car insurance is in place to take care of some of those kind of an emergency needs that may come in for you. So these, I would say, are clearly 3-4 differentiations between a salaried person setting an emergency fund versus a non-salaried person.
Thank you so much, Shweta, for explaining all those points to us. I think it is a basic and a fundamental take-home lesson that I've learned on emergency fund. Thanks so much for joining. And viewers, 3 very important points. Emergency is 6 months of expenses, not salary. For salary individuals, you can pool your emergency fund in arbitrage funds as they are more tax efficient. And thirdly, for non-salaried individuals, Shweta suggested that you could invest or at least save 12 months of your expenses, not just 6. Viewers, the second part of this conversation, as I was saying earlier, is about credit cards. Many of us, especially youngsters, are confused about whether we should get a credit card in the first place, how much should we spend from that credit card, how much should we spend via UPI, and is credit card really important for us to maintain a credit score so that in the future, whenever we need a loan, we can get it easily? To answer these questions and a lot more, we have Adil Shetty, CEO at bankbazaar.com. Pardon me for that. Mr. Shetty, very fundamental question. Personal confession, I don't have a credit card yet, but do you think it's absolutely necessary to have a credit card in order to maintain fiscal discipline in personal life?
So I think today, in my view, a credit card has become a necessity. So for example, I just went out for a meal. I paid with a credit card. I bought something online on an e-commerce site. I paid with a credit card. So it's good because, you get that 30-day free credit period. You're able to look at your expenses and pay it off at one shot at the end of the month. And I also get rewards, right? I get discounts, no cost EMI, and certain rewards when I spend. So I think, yes, it's absolutely essential to get a credit card today. However, right, a credit card is a powerful tool, but you have to use it prudently. So you have to pay your monthly bills in full every time. You need to keep track of your due date. You need to make sure you pay the bill on that due date. So there is a responsibility also along with this being a necessity.
Okay. So yes, responsibility, I understand. It would make me more disciplined if I have a credit card because you said I would keep track of when I have to make that payment. And I would, of course, keep a track of how much I can actually pay. But for somebody who's already managing their pockets well without a credit card, why should they go and get a credit card?
Great question. So I'll use myself as an example and talk about 3 reasons why I would do that, right? So the first reason, right, is let's say a transaction happens, but you want to dispute it. It's very easy to do it with a credit card because RBI gives you a golden window saying that if you report it, within a certain number of days, right, let's say 2 days, you can get that transaction reversed as long as you've not done anything wrong and the money hasn't left your bank account. Now, if you're not using a credit card, you're paying directly via your bank account, the money's left your bank account. So, you are fighting to get your money back. But in this case, right, you protected your bank account. This could be one reason. The second reason, right, is let's say that you're traveling abroad, right? You're not able to pay using UPI. But your credit card can be used to pay, let's say, in Europe, in the US, in Australia. So that could be a potential benefit. Third benefit, right, is let's say I'm buying a television. The television costs 40,000 rupees. Now, either I can pay 40,000 rupees via my debit card, or, right, if I'm using credit alone, I get a no-cost EMI. So I end up paying the same 40,000 as UPI, but now I get 6 months to pay it off which essentially is like a 10% interest-free waiver that I'm getting. So it's almost as if someone is giving me 2,500 rupees in my pocket, which is a benefit I get. So these are some of the benefits. Another thing is I went to a theater yesterday and I got my ticket at a 50% discount because I bought it on a credit card which offered a 50% discount when I buy movie tickets. So these are some of the benefits I think which are important, which you won't get on a standard bank account.
Okay, so protects you from, say, fraudulent transactions, can also give you no-cost EMIs. Got those points. But Adil, the market is flooded with different kinds of credit cards. There's a credit card for fuel, there's a credit card for international travel, there's a credit card for shopping, grocery, and so on and so forth. How many credit cards should one keep? And is there a healthy number to the number of credit cards one should keep?
So like you rightly pointed out, credit cards are beneficial for different purposes. So today, for example, when I use AI, and pardon the digression, but I know one AI is very good for video. So I use it to generate my social media video. I know another AI is very good for Excel, right? So you've got to use the product that suits that particular requirement. So for example, I have a Yes Bank Bank Bazaar credit card, co-branded credit card, which I use for no-cost EMI. Because whenever I buy electronics, let's say I buy a cell phone or I'm buying a laptop, that product gives me great no-cost EMI across 20 brands, right? Across all the large e-commerce sites. I also have, for example, when I do my fuel, right? I use an RBL Bank Bank Bazaar credit card because that gives me discounts on fuel and offline groceries. So I'd say a sweet spot in my mind is about 2 to 3 cards designed for different purposes. But I again want to iterate, this is a powerful tool that can get you a discount on a movie ticket, can get you a free summer vacation because your flight is bought on points. But you have to use it prudently because the worst thing you can do is max out all these cards, don't pay the bill in full, and then end up paying, 36% annual interest rate. So if you use it prudently, and I prefer to use a credit card when I step out because if used well, it can give you significant benefits.
Yes, definitely. And as you highlighted, credit card does come handy in daily life activities as well. While whether it is booking tickets or going out for concerts or theaters. Point noted. But Adil, I've seen worst case scenarios as well where people have gone into acute debt due to credit cards. They tend to pay their payments via credit cards and it just keeps looping on and on and on, and then it just becomes a mountain of debt to pay back. How should one prevent that from happening?
Yeah, I think you're absolutely right. Debt trap is a genuine situation, and it's also a very, very difficult situation. One should not, use credit to pay off other credit cards and so on and so forth. So I fully accept the point you're making. I think the point of using a credit card prudently is every time you pay your bill back in full on time, your credit score goes up. You do it for 6 months in a row and your credit score has gone up by 20, 30 points, right? So that's the right way to use it. Now, certain guardrails which people can put in place, I would say, is set yourself a certain day. So for example, I have a day every month wherein I say on that day, I'll pay all my credit card outstanding in full on that particular day, right? I'd say that, keep the utilization on the card you have, because a credit card typically has a credit limit. Keep the utilization on the card below 30%. On Bank Bazaar, we always tell people, don't utilize any card. So that's why it's also good to have multiple cards to spread it out. But by keeping your utilization below 30%, you indicate that you're using the credit card prudently and pay back the money on time. Prioritize paying this off, right, before any discretionary spends. So I think it all just comes down to being aware that a credit card is not giving you more money to spend. The money you have to spend is the money you have to spend to start with. A credit card is just helping you do it smartly by protecting your bank account, protecting your ability to dispute transactions without money leaving your bank account, giving you access to movie tickets, concert tickets, at a discount which other people might not have, giving you access.
I have one question. You spoke about protecting bank accounts, and I think because credit cards demands you to maintain and keep track of all your expenses, a lot of people don't enter it. Could you, and I'm going to, at the risk of sounding very basic, I would ask you to suggest our viewers, including me, on how to track your expenses, because somebody who is so accustomed to paying by UPI, by a click of a button, would not go and make note of every expense that the person has done. But with a credit card, you need to protect yourself from overspending. So what's that one technique or one advice that you would want to give that can help viewers from preventing themselves from overspending and also keep track of the payments systematically?
Brilliant question. So if I was to just give you one advice that you can do to prevent overspending, every credit card allows you to set a limit which you can decide on the card independent of the limit given by the bank. So I'll give you a very common example. So let's say someone takes a credit card on Bank Bazaar and the credit card has a limit of 2 lakhs. But let's say I know that my discretionary spend can be no more than 35,000 rupees a month. I can go on the credit card app and I can say my limit on this card is 35,000. So even though the available limit is 2 lakh, because I've set myself a 30,000 threshold, beyond that I won't be allowed to spend. This is if you ask me one technique, this is the technique I'll give you. And the technique for repayment is, I believe, set one day. On that day, go to every credit card, look at your last full credit card amount, and clear it out at one shot.
Okay. Adil Shetty, pleasure having you, CEO of Bank Bazaar, really helping us understand why should you have a credit card and how should you maintain a credit card. Thanks so much, Adil Shetty. And viewers, we've learned that while credit cards are important to have to maintain a fiscal discipline, it is also important for you to adopt a technique so that you prevent yourself from overspending, and definitely don't be scared of paying on time. This is Your Money Matters. Malika Mishra. Keep watching NDTV Profit.
From the invention of the telephone, it took around 75 years to get to 100 million users. It took the PC 15 years. The internet, 7 years. So how long did it take ChatGPT? 2 months. So we do need a regular forum where we can all meet and discuss this technology. And that is what this summit provides. Under Prime Minister Modi's leadership, this summit will deliver impact. It will show us how we can make AI work not just for the developed world, but for the developing world too. How it can improve health and education in every corner of the globe. How it can enhance human dignity. How it can raise the floor for humanity. And there is no better place to discuss this AI transformation than India. The AI debate is moving from technology to strategy, from what these tools can do to what countries choose to do with them. Indians are among the world's most prolific users of both mobile data and AI tools. You are the second largest contributor to AI projects on GitHub anywhere. The India Stack has shown people how technology can benefit them in their everyday lives. This digital public infrastructure, Aadhaar, UPI, and now Ayushman Bharat health accounts provide universal digitally verified foundations on which AI applications can now reach 1.4 billion people. The energy that I've seen this week, the young people that I've spoken to, are testament to the vibrant startup ecosystem here in India, which has produced over 125 unicorns, with new fantastic businesses like Sarvam AI leading the way. A remarkable culture of frugal innovation is why India could send Chandrayaan to the moon for less than the cost of making the movie Interstellar. And no country will realize the benefits of AI if its citizens are fearful of it. because people don't adopt a technology that they are scared of. Again, India has huge advantages here. At a time of mounting AI pessimism in the West, this nation stands out for the fact that almost 9 out of 10 Indians are optimistic about AI. And all of this is why, in the latest Stanford University ranking of global AI powers, India has overtaken the UK into the medal places. Although I should say, England remain just ahead in the ICC test rankings. Now, the sprint to be the first company, and indeed the first country to achieve AGI, dominates our headlines. But what India shows is that the real race is the race for everyday AI, to spread this technology throughout your economy and society. Now, history teaches us that leadership in technology does not only depend on who invents it, but on how effectively it is deployed and adopted in your country. Take the printing press, invented in 1440 in Mainz in Germany, but as Jeffrey Ding shows in his book, Technology and the Great Powers, it was the Dutch Republic that extracted the most value from it, and in turn became the publishing powerhouse of the world. Now, San Francisco may be today's Mainz, but it is increasingly India that is doing what the Dutch Republic did so effectively and maximizing the benefits of this new technology. Because when it comes to AI, adoption is all. It will be those countries and those companies that adopt who will be the biggest winners. Now, India can also lead the way on showing how AI can address the great challenges of our time and raise the floor for humanity. If we are to feed a global population of 10 billion people in 2050, food production must increase by 70%. By 2030, we will have a global shortage of 11 million health workers and 44 million teachers, meaning hundreds of millions won't get the care or education they need. And there is already a $4 trillion funding gap for achieving the Sustainable Development Goals. These problems threaten to cause famine and hardship, to destroy the human potential of billions, and to make the world an ever more unequal place. But AI can and is helping us solve these problems, and at a fraction of the cost. Look at how AgroSmart is enabling farmers in Latin America to access on their phones, in their fields, the kind of up-to-date weather and soil information that up to now has been the preserve of the largest commercial producers. And the results have been sensational. It is boosting crop yields by a fifth while halving water and energy use. Now, this technology offers the chance to achieve a breakthrough in agricultural productivity on the scale of India's green revolution. And if AI helps us achieve this, we truly can feed the world. Now, for most of human history, the most dangerous thing a woman could do is give birth. 1 in 18 married women died from childbirth in 17th century England. Now, that number has fallen by 99% today, but in sub-Saharan Africa, maternal mortality is comparable to what it was in England 4 centuries ago. And AI can help us tackle this inequality. Take the prompt service in Kenya, which offers 3 million pregnant women health advice by text message in their own language. The AI can flag high-risk cases and ensure that they quickly get the healthcare and medical care they need. For 74 cents a patient, this technology is saving lives and tackling one of the great injustices of our time. Now, no country has become healthier and wealthier without expanding education. As Kofi Annan reminded us, knowledge is power. Information is liberating. Education is the premise of progress in every society. in every family. But today, too many children lack access to quality teaching and resources. And again, AI can and is changing that. Take MindSpark, which is teaching 500,000 pupils already in India. These children are being provided with personalized lessons in just the way that the most privileged children in developed countries are. And for just a few dollars a month, their rate of learning has doubled. The genius of this technology is that it doesn't require super fast broadband and a fancy laptop, but just a simple tablet with preloaded content that draws on 20 years of research and 5 billion student interactions. Think of the dreams that are being sparked by this, the human potential that will no longer be wasted. So in conclusion, today, we can see the Bletchley vision of an AI that favors humanity becoming a reality. We're seizing the opportunities of the greatest breakthrough of our time while giving our citizens the peace of mind that we will keep them safe. AI will deliver huge economic gains. It will have twice the impact of the Industrial Revolution in just half the time. But what we are seeing here at this summit is how AI will raise the floor for humanity. Rural clinics will soon be able to offer the same level of medical expertise as big teaching hospitals. As the son of a doctor and as the parent of 2 girls blessed with the best medical care the world can provide, as the grandson of someone born in rural Tanzania, I know what a difference this will make. It will lead to an improvement in human health and happiness that we have not seen before. Farmers on their small holdings will be able to call on the combined expertise of the world's best agronomists and soil scientists. In the greatest step forward ever for equality of opportunity, every child will now have access to a personalized tutor. It won't matter if you're born in the Lutyens bungalow zone or in Ali Rajpur, you will, thanks to this technology, have the same educational opportunities. It will be the greatest democratization of knowledge ever. Friends, this is the new world that we are entering. Never before in human history will so many people receive a boost to their quality of life. That will be this technology's greatest achievement. And that will be your legacy. Thank you.
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Tamanna.
I think it was, and you know, this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hello and welcome to this very special conversation that we're having on the sidelines of the India AI Impact Summit. I'm joined here by Chairperson and CEO of Salesforce India, Arundhati Bhattacharya. Thank you so much, ma'am, for taking time out. We're at the fourth day of the summit. Lots of chatter about AI adoption, diffusion, a lot of chatter about how India is now staking its claim at the global stage of AI. My first question to you is, talk to us about the sort of evolution that India is going through. Firstly, India was a consumer of AI. Now India wants to become a creator of AI. We're seeing participation across all layers of AI. Talk to us about where India's focus should lie as we now embark on this journey.
So I believe that, being a consumer is also very important, because it brings a lot of benefit to our people. We have seen even earlier that given the populous nation, the nature of our country, it's very difficult to bring services of the level that is required to our population unless we use technology. We saw this during the financial inclusion program, the PM Jan Dhan Yojana. We saw it again in the spread of UPI, which has made payments so much easier for us. So, for a population level of our size, technology is what enables us to improve the standards of living of our people. So to be a consumer is important, but to be a creator is also important. And if you consider the digital awareness or the skill levels of our people, that is very deep. We have a very deep pool of expertise in the country at the individual level. And because we have that, there is really no reason why we should not be creators of AI as well. Having said that, it's also a fact that AI adoption across industry has not been as much as we would have liked. Whether it be industry, whether it be government, while the government, I think, actually has been doing better, given the India stack and the other things that the government has been doing, whether it be ONDC, whether it be the GEM portals, the government has actually been a little ahead, I would say, of industry. But industry as such, I think, still has a lot of catching up to do. And that is important because of the sheer amount of efficiency and productivity increases that AI can bring in. I think it's important for us, if we want to be globally competitive, to see industry coming up much faster and much better in these areas. Regarding us being creators of AI, really no reason why we shouldn't be. And if you've seen the expo, or rather the exhibition grounds, you've seen the various stalls, and the various startups that are working over there, some of them with really, really differentiated and very great ideas. So hopefully, in the coming future, we will see many of these scale and become, producers of AI, with which they will be able to solve not only local but also global problems.
Ma'am, you speak about some sort of a lag between industry and government adoption of AI, right? What are those impediments? Why is the industry why is India Inc. lagging in that sort of an adoption? Because they are cash rich, balance sheets show that there is a lot of money on hand. Why is AI adoption a concern, even if money is not?
So I think one issue is a little bit of a trust deficit.
Okay.
Even today, I think a lot of industry is very wary of using the cloud. And of course, I come from a company that is cloud native, and I have felt this at every step, that there's been a lot of discussion, especially where the public sector is concerned, regarding whether cloud is safe or not. In spite of the fact that if you go to the Western world, you'll find that, most of the agencies over there, even agencies that are in the defense sector and things like that, even they are using the cloud. Absolutely. So, there is nothing to say that the on-prem systems are safer than the cloud systems. You cannot say either way, because, either can be subject to certain cyber risks.
Okay.
That is part of the way things are. But having said that, Indian industry does have its own, reasons for not being very trusting about all of this. So that is one area. The second thing is, Indian industry is still trying to determine whether they can get the kind of ROI if they, actually put in a lot of money into AI. And to that, my, response always has been that find one or two use cases that give you the maximum value and go all in for it. You are in like, Srini, our chief of engineering, he says that you are in this purgatory of pilots, pilot purgatory, where out of which you never get out. And that's not where you want to be. At the end of the day, you can't dip your toe into a swimming pool and expect to learn to swim. You have to get in and swim, actually. So use one or two use cases which can give you maximum value and go all in. So you have to scale fast, fail fast if required, and then try again till you get success. And I think that's the playbook that people need to follow. Companies that are doing this, by the way, it's not as though nobody is doing it. Companies that are doing this are seeing quite a bit of value. But we need to understand that when we are doing this, we have to do it in a holistic manner. It's not only a question of just putting in AI. It's a questioning first. For instance, yesterday, I was in a conversation with Nandan Nilekani, and he was talking about the fact that our data, though companies have a lot of data, much of it is dark. Which is true. You have to first illuminate your data. You have to ensure that your data is giving you the right kind of leverage, the right kind of intelligence. The second thing is that you have to look at your processes, and many a process will need to be changed in order to give you the best kind of results. So if you're not looking at your data and organizing it properly, if you're not looking at your process and ensuring that those processes are conducive to what you are going to do, make the changes in respect of AI, then you will not really be able to realize the full value. But when you go down the full value chain, when you look at the entire proposition in entirety, and then you use AI on top of that, you definitely will see very good results. You will see a lot of changes in your efficiencies and productivities. You will see more and more opportunities open up. You will see both top line and bottom line changes.
Right. So trust deficit and an ROI, those are the two sort of issues that India needs to tackle right now. Very interesting take there. You're also echoing what Google DeepMind's Demis Hassabis said yesterday. He said that India should just double down on what they're good at, which is perhaps agriculture, which is a major employee generation, and also Bollywood. Why not indulge more in the creative industry in AI? So very interesting points there, ma'am. You also spoke about AI safety, right? What are the sort of human-centric guardrails that you feel that should be built into India AI's mission, right? Not just, let's not talk about the global perspective, let's talk about India. What are the sort of human-centric guardrails that are needed for India to sort of build a safe AI and also drive more adoption, essentially?
So basically, I think, if you're looking at human-centric thing, the first thing is awareness. Where is the awareness? And we know the people that are going to be targeted. We know it is the old and the vulnerable who are basically targeted because they are the ones who don't really understand. They are the ones that don't have the education of understanding what they should be careful about, what they should start thinking or being suspicious about, and who they should really trust. So it's important for us to improve awareness. And by the way, there is enough funds with the regulators for awareness improvement, which can be used by industry, by the regulators to improve the awareness of our people as to what they should guard against. If this awareness improvement exercise is done on a regular basis, in respect of all medium, whether it be print, whether it be TV, whether it be digital medium, then I think, that would have a very beneficial effect. At this point of time, most people get taken in because they are very trusting. They don't really believe that something like this can actually happen. And things are happening. If you look at the deep fakes that are coming out today, if you look at the way people are getting, digital arrests and things like that, people just do not understand that such things can never happen. But we don't speak about them enough. And in fact, I would say that you are a representative of media. It is also media's, responsibility to bring this to light in as many forums and as many episodes as possible, so as to raise the awareness amongst people that they need to be more careful, they need to be less trusting, they need to share less about themselves, because people share everything on social media.
That's true.
It's like an open book, you are telling where you're going, you are saying when you are going, everything is out there, giving the chance for these people to take advantage of it. So it is important for us to begin to realize what we need to do ourselves in order to protect ourselves.
In fact, the Union Minister Ashwini Vaishnav also yesterday, I believe, he also pointed that there is a need for more and more regulations against deepfakes. So that's an interesting one. Ma'am, I want to shift gears here. Given also your background at SBI, what do you feel are some of the challenges that are currently being faced by public sector banks when it comes to adoption and also deploying cloud-based AI when it comes to public sector banks?
I don't really think that there is, any big obstacle, other than the fact that it's a perspective, it's a mentality problem. If you feel that this is something that can't be done, it can't be done. But there is no regulation that tells you that private sector can do it and public sector can't. There is no regulation. There is no discrimination that is done by the regulator against the public sector. It's just that the public sector is not stepping up, mainly because it feels that, what has been done for so long has proved us well, has helped us till such period of time, and they don't really feel the need to change. However, I think, that is a short-sighted view. In my own reckoning, I think it's important for the public sector also to understand that as you go into AI and the fact that you are looking at billions of points of data, trillions of points of data, it's very difficult to do this on-prem.
That's true.
And the reason for that is none of these entities are very resource rich. You will be using a lot of your capital if you want to create everything on-prem. And when you are using a lot of your capital to create these servers and these capacities in-house, you are also taking on a huge technical debt. The evolution of the technology is very swift these days. If you're looking at, say, setting off the capital expenditure over a period of 7 years, you don't even know whether those servers will be useful for 7 years.
That's true.
The speed at which things are moving, you don't really know how long you'll be using that. And therefore, it is better to go for an asset-light model. SaaS offers you an asset-light model, right? Because you are not making any capex. You are doing only opex. So that's the asset-light model. Now, instead of doing that, if you prefer a capex high model, then, well, to that extent, you become, first of all, less agile.
That's true.
Second of all, you create a lot of technical debt. And third of all, the main thing is that the speed at which you can do things, that gets very badly impacted. Plus, your ability to do things at scale also gets impacted.
That's a very interesting take.
It's important for people to understand this and to obviously, bring about a change of view, to see how they can be, how they can keep pace with the changing world and, not really sort of hang behind or fall behind.
Right, relaying from that, also talk to us about Agent First, right? What's the best first use case that you see of Agent Force for an Indian SME or an MSME, someone who's at a decent enough scale but still a small or a medium enterprise? Talk to them about how and what their first and only, not only, but their first use case should be.
So, if you're looking at agents, agents can be of two types. One could be for internal use, another could be for external use, meaning customer facing and staff facing, employee facing. Now, both has its advantages. If you're looking at internal facing, there is always a big churn in your people who do your sales. Okay, sales teams naturally have a churn that is higher than the back office teams. Now, if that is the case, one of the biggest things that the agents can do is how they can ramp your sales team up at a much faster pace. How? First of all, by ensuring that you don't need to know everything on day one. Because if you have a question as to whether your particular product has this capability or not, it just has to give a question to the agent that is, addressed at them, and the agent will be able to tell you point by point whether yes, this particular product can give you this kind of result or not, and even for that matter, how you should pitch it to the client. So, on day 7, you can be actually quite an experienced seller instead of having to do it on day 60.
That's exciting, yeah.
That's really useful. Secondly, the other thing that you also must remember, if it's a customer facing agent, look at us ourselves. We are, for instance, customer zero on most of the things that we use for our own clients. So one of the problems that we used to have a very long line of inbound calls of very small value. And we just didn't have enough people to address all of these calls because people are expensive. Okay, now you can't use them for very small value calls. So these were literally falling behind. Okay, we were not able to address these calls. Now we created agents who actually would address these calls and qualify them. And when it came to stage 3 level of qualification, meaning that they seem to be real leads, they would get passed on to actual manual agents.
Super, yeah.
Okay? And by doing this, we have seen appreciable increase in the amount of business that we have been able to do. Now, again, for a small SME or MSME who can only hire this many people in order to address such inbound calls, this would be
solid.
This would be something which they could use these as agents to look at their calls, qualify them, and only the qualified calls then go to the few salespeople in order for them to close it out at that stage.
Yeah, interesting. Three very solid use cases.
Yeah, absolutely. These are absolutely solid use cases which we have tried ourselves, by the way.
Right.
And similarly, you have a sales person, you have a service person, you have a marketing person. Now today with agents, sales, service and marketing can all flow together. So somebody gives you a service call and you realize that the service call means that that person needs to maybe buy something else in order to make the servicing of whatever he has optimum. Okay, so you suggest a sale, and if the person says yes, then the whole thing can actually go to your marketing people who can create a deal specifically for you.
Absolutely,
personalize a deal. If that fellow accepts that deal, then it can go directly to sales. Sales creates the invoice, gives you the payment link, you make the payment, it comes back to service, who then allocates the person who will go and actually implement the whole thing in your place.
Right.
So all of these silos can actually begin to work together, which means that you don't need to have separate people for all of these things. These things can all work together.
We're almost out of time, ma'am. Just one last question before we let you go.
Sure.
Shortly, if you want to answer this, what is India's biggest competitive advantage when it comes to artificial intelligence right now?
So one thing, of course, is our depth of talent. I think there is no place like India where there are this many people who are not only skilled, but who can be upskilled very, very quickly. I think our people learn very well. They are also very hungry to learn. And that, I think, is a major difference. Because, attitude matters. For us, here in India, I think one thing that this also Nandan pointed out, and very correctly so, is that there is an optimism about AI which is not there in the rest of the world. Okay.
Yeah.
And that optimism results from the fact that a lot of people have seen technology improve their lives.
That's true.
You know, whether it be through UPI or whether it be through Aadhaar or whether it be through DigiLocker or DigiYatra, etc. The number of people who have seen their lives improve on account of technology is very large in this country, and therefore there is optimism that with the newer technologies that are going to come in, our lives are going to be better. So there is optimism, there is skill, and more than anything else, I think what India offers is a very diverse database. The diversity across the country is something that is quite unique. This diversity comes with scale. And again, this is not a scale that is available in most countries.
That's true.
So if you are creating something for India and it works in India, it will work anywhere in the world.
Absolutely,
That's for a fact.
Absolutely.
So I think these are basic advantages that we have in this country. It's up to us to actually leverage it.
Right. All right, viewers, that's all that we have time for today. This was Arundhati Bhattacharya, the CEO and Chairperson of Salesforce India. Thank you so much, ma'am, for a frank conversation with NDTV Profit.
Thank you. You're welcome.
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Where's Tamanna?
I think it was, and you know, this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having out.
Good evening, I'm Vikram Oza, and this is the big question on NDTV Profit. Now, over the last few years, the global AI conversation has largely been dominated by the two big themes. One is speed, the other is supremacy. Who builds the fastest models, who controls the chips, who writes the rules. But now, at the India AI Impact Summit in New Delhi, Prime Minister Narendra Modi has attempted to shift that frame and recalibrate the discussion. He has unveiled what he calls the Manav vision, which is this human-centric approach to artificial intelligence. So this is a framework that puts moral and ethical systems, accountable governance and national sovereignty, also accessible and inclusive technology, and valid legitimate systems. These are put at the core of the future of AI. Hence, the pitch is that AI must increase human potential, not replace it. And it's an important one because almost missing from the larger global voices that we've heard, which is why it is critical. He makes a few sharp points over here, that AI must shift from being machine-centric to human-centric. That means being sensitive and responsive, more humane. That humans cannot be reduced to data points or raw material. That's another important point. Also, he says AI must be a medium for inclusion and empowerment, especially in the global south, because we should not lag. And he says, as we enter an era where humans and intelligent systems co-create and co-evolve, the direction we choose today is going to determine whether AI becomes a disruption or it becomes a solution. Now, this couldn't have come at a moment too soon. The backdrop is of real anxieties, aren't they? And we've been talking about them on the show, whether it comes to jobs, the bias in automated decision-making, on deepfakes, those kind of issues, on data privacy, on copyright disputes, questions of accountability when AI systems cause harm. All of that are the anxieties. Now, globally, the debate is no longer about what AI can do. It is about what AI should do and who gets to decide what it should do. Listen in to what the Prime Minister has said earlier by way of this Manav vision.
आज न्यू दिल्ली एआई इम्पैक्ट समिट में मैं एआई के लिए MANAV मानव विजन प्रस्तुत करता हूं। मानव का अर्थ होता है ह्यूमन, और मानव विजन कहता है एम मोरल एंड एथिकल सिस्टम्स, यानी एआई एथिकल गाइडेंस पर आधारित हो। ए अकाउंटेबल गवर्नेंस, यानी ट्रांसपेरेंट रूल्स, robust oversight, and national sovereignty, यानी जिसका डेटा उसका अधिकार। ए एक्सेसिबल एंड इंक्लूसिव, यानी एआई मोनोपोली नहीं, मल्टीप्लायर बने। वी वैलिड एंड लेजिटिमेट, यानी एआई लॉफुल और वेरीफाइबल हो।
So taking into account whatever the Prime Minister is saying and laying it out as a vision, it's a stark difference from what we've heard around the debates about AI, because it has been about how it can change the world. Now, the question is not about AI changing the world. It already is. Now it is about how this change is going to unfold and what role India is going to play in the kind of change that we are likely to see because of AI. How human-centric can it be? Which is why that question, can India lead the world in balancing what AI can do and how humanity is going to be placed vis-a-vis the developments that AI brings about. Let's discuss this with our panel. We've got a great panel, like always, joining us on the show. Let me introduce you to them. Well, on the show tonight, we have Kelly Forbes joining us, council member at the AI Council at Click. Mihir Shukla is also with us, co-founder, CEO and chairman at Automation Anywhere. Anirudh Suri is with us, tech investor and author of the book, The Great Tech Game. Dr. Sanjay Gupta is Vice-Chancellor of World University of Design. And Geeta Manjunath is CEO and founder of Niramay Healthy Analytics. Great to have you all with us, and thanks for making the time for the big question. Let's begin with a quick round of questions first. We need one or two lines from you in response to set the tone and get your stand up front. And let me begin by asking Kelly. Kelly, the Prime Minister is urging to move from opaqueness to transparency. Do you think this can be mandated? A quick take.
Absolutely. Thank you very much. Pleasure to be here with all of you today. I think there's a few key things coming out of seeing the summit, and India hosted the summit this year and showing leadership. And I think that transition and what the Prime Minister's statements take us is towards how do we think about trust as a foundation for the AI developments that we must see ultimately for a government like India, the biggest question is how do we use AI to improve society and improve the country and shape various goals by adopting AI inclusively?
Mihir Shukla, in the next 12 months, what are the chances that AI in India can actually create more jobs than it actually displaces? Your response in a line again.
I think it depends on the leaders. I think, do leaders treat this with bhai or is it the bhavishya? I think Modi ji said it very well. And I think India, he challenged all of us to treat it as a bhavishya. I think leaders who will treat it as a bhavishya will generate more jobs.
So not fear, but treat it like our future and own
That's
it, right?
That's
Anirudh
correct.
Suri,
That's correct.
the Prime Minister is calling for clear authenticity labels. You think a legal duty to label AI-generated content, which could be watermarking, which could be some kind of authenticity tags, can that happen at the platform level?
No, thanks. I think that it's hard to mandate at the global level, right? But I think that the summit marks an important point for India to say, yes, that it matters to a sixth of humanity. It matters to one of the largest consumer markets in the world. And I think if we bring the global south together to make this a key point, I think then it can happen. I think it'll be very important for all the big tech firms, all the top AI firms that are here, Indian and global, to say that, yes, this is actually something that matters to consumers. And I think more than the Prime Minister as well, I think with his clarion call, it's important that consumers start to ask for it. I think ultimately these tech firms, any AI firm today has to meet the needs of the consumer. And if the consumers, I think as a group demand this, then I think it's very likely to happen.
Like you said, a sixth of the population of the world, and if that is the largest consumption market right now, then perhaps we do get a larger say in how we want the platforms to treat us and to be able to be transparent, not opaque. Dr. Sanjay Gupta, the Prime Minister is flagging child safety and family-guided AI. Do you think students under 16 should have that restricted classroom access to generative AI unless that usage is supervised by a teacher?
These questions have come up every time the technology takes a shift.
It does.
And so it is, and what we have seen in the past and what history has taught us is that the more you understand and absorb a new technology, the more easy it becomes to apply for the right causes. So yes, generative AI has its own problems, and there would need to be some supervision, which in any case for any education system and any new technology, the parents and the schools have continued to maintain. So I don't think we are looking at anything new.
Right. So you're putting AI at par with any other technological evolution that we've seen in the past. It's not going to be transformative in the way many others are seeing it, especially when it comes to the pace of change and its adoption. Geeta Manjunath, your take. AI as a multiplier, not a monopoly. Making AI as democratic and inclusive as the Prime Minister is pointing out. You think that's realistic without the subsidized compute, the unhindered data access, which is especially important for the global south?
No, definitely it is possible. And for a country like India, this is a must, right? If we want to use AI effectively, it has to be scalable and it has to be, able to do this at a cost-effective manner. So it's really about the numbers that get benefited. It is possible to provide this at a cost-effective manner. Using the same cloud, instead of crunching and doing 100 scans of breast screening, for example, it can do 1 lakh screenings at the same compute. It is possible.
Fair enough. Kelly Forbes, let me now begin and open up this discussion because the Prime Minister is saying that humans must not be reduced to data points and AI must be democratized. And in your opinion, is that the simplest way now to stop any kind of exploitative data capture? Is it going to be limiting what data can be taken for? Is it going to be that clear consent one needs? Is it going to be independent audits? What will actually work on the ground as we speak?
Great question. So I think it's very important for India, and it's been good to see this leadership, because as we think about democracies, we really think about how they cannot outsource AI governance to private platforms. And so it really takes a strong role from governments in thinking about what strong frameworks and governance must be in place as we go on this journey of developing and adopting AI. And the benefit here for a government like India is you can watch and observe what the lessons are from other governments that are perhaps ahead of the curve and represent and lead the global south, which we must also think about that in the sense that the global south is very much looking for an alternative to the US and China tech models. And I think what we can see here is that we can create something that can meet the local needs, but also equally think about how do we frame this accordingly so that we're setting the governments strong enough that we avoid potential risks and implications, as we are also seeing that globally speaking, right? So I think the benefits in thinking about transparency, trust, and how do we balance that, that is going to be an ongoing work, but that absolutely can be achievable if we're setting the right foundations and making sure that these are in place as we go about investing more in this area.
So indeed, the leaders, whether it's US or China, they're going to create their own models. And Mihir Shukla, when you're talking about models getting created, it's about who's taking the lead, because then once that lead is taken, then you set the tone, as it were, just taking away from what Kelly is saying as well. If India is able to do that, and the Prime Minister is talking about jiska data, uska adhikar, your data, your right. If India tightens data flow rules, how will the companies train the advanced AI models? How much do we have to compromise on data sovereignty to build world-class capability in the first place? Because we do have to rely on some of those countries that have taken a lead on AI.
Vikram, my and many of the other leaders' view is that India shouldn't follow Western companies and race for best model possible. That's not where India's big benefit lies. It's more about applied AI. How do you take AI and apply it in every aspect of the economy? And, you know, in history, all the inventions that have happened, people who have taken those innovations and applied it in various parts of the economy have actually benefited most. And India has an amazing opportunity to do that. And instead of following any other trend, I think we should chart our own path forward.
So are we in a position to chart our own course? And that's an important question that we need to ask. Where are we positioned right now? And as far as Anirudh Suri is concerned, you tell us. The Prime Minister is saying that AI should have this open sky, but with reins in our hands. How much of that is possible? Where do you draw the line on openness? Should everything be open, or do the high-risk AI systems need the tighter controls, even if it slows down innovation? Because pace is also important.
Yeah, no, I think that's a core question. But before I get to that, let me also add something to what Mr. Shukla said.
Sure.
See, I think the applied AI versus AI innovation debate, I think is a very important one for India to figure out. I think we've heard both perspectives shared. I think the applied AI perspective seems to be winning currently. But I think it's very important for me to share this, that I think the AI innovation piece is an extremely important one for India to not ignore. Because unlike in history, where someone who invented a railway engine did not actually then prevent anyone else from producing it.
Right.
Unfortunately, in the world of AI and technology today, the way IP systems now work compared to 200 years ago, you are not able to actually do exactly what you might have been able to do 200 years ago, to take a technology invented somewhere else and just start using it without having to pay them royalties. Here, we must realize that we are building a lot of dependence, economic dependence also, not to mention geopolitical, on the ones who innovate and make. And therefore, I think for India, it's very important to do both. Right? Now to your question, whether we can let this run free or do we need reins? Right? I'll invoke Lord Krishna here and Bhagavad Gita. See, in a way, the mind, as you know, Lord Krishna ji said, it wants to race ahead. It wants to go everywhere. But ultimately, as he also very correctly pointed out, we've got to rein it in also. Otherwise, the mind also runs amok. So I think similarly with AI, and given AI is actually trying to replicate our brain, I think that analogy makes a lot of sense for us to say, yes, the reins are actually important. You've got to win the race. You've got to win the war. You've got to do what needs to be done to win the game. But I think as humanity, we must have the reins. If we don't have the reins, I think AI can run amok. I think the impact on our health,
how much
impact
of
on
the
our value
reins
can
can
go
we
down.
how much of the reins can we actually hold when it comes to the education level in schools and colleges where AI will have to be used? How would you build a simple age-wise ladder for students? Let me ask Dr. Sanjay Gupta, the younger kids discovering AI, how to let them do it safely. The older students perhaps creating with AI, the senior students perhaps learning about the ethics and the bias issues. But which class gets what, and what is the kind of safety kind of guardrails that you need to put that you would apply at each stage of the education system that we have?
See, in higher education, as we, even right from 2019, when the AI first started building, we adopted a stance where we would aggressively adopt it. Because technology, as history has taught us, that when they start, change starts coming in. And if you do not adopt it, you get left behind. So the change has to be adopted and then used to make up further changes. So we think here that anything which is coming in, the change which is coming in, we must aggressively absorb and then use it to apply to newer technologies, new challenges, which would then eventually come. But that stands true for higher education. For schooling systems, what AI is bringing in is inclusivity at a level which is unprecedented. It takes education right down to the last person available. And there's benefit in that. How it needs to be controlled, yes, some control and some ethics and some parental supervision would need to remain.
Yes.
But this is a change which you cannot ignore.
You cannot ignore the change, so we need to adapt and we'll need to create the systems. I don't know where we are in creating those systems, but things are moving so rapidly that easily things can go amok, like we just heard. So, Geeta Manjunath, when you talk about health AI, because that's the space that you're coming from in healthcare, do you believe India should stop hospitals from using the black box diagnostic tools unless they can explain their decisions and are tested on Indian patients? Because there is this massive rush to be able to apply AI. What is the minimum evidence that one would insist on? Because especially when you're talking about guardrails, insisting on getting the evidence right becomes the cornerstone for something as important as healthcare.
Absolutely. Actually, when you talk about use of AI in healthcare, we can think about use of AI to sort of use the available resources well, for example, within a hospital, as you explained, or matching the patient to doctor, etc. The non-clinical use. But when it actually comes to the clinical usage, from where I come from, where we actually developed this breast cancer screening tool, it's absolutely critical to have elaborate clinical validation. And thankfully, healthcare is a domain where these kinds of clinical validation protocols have already been established with or without AI from a drug discovery standpoint. Now, in the last few years, we've seen a lot of traction and usage of what's called as new medical device category called software as a medical device, where AI is playing the role of a device that was initially being tested with clinical protocols called Helsinki Protocol, etc. So it's absolutely critical to go through the clinical validation. As a founder or a developer of a new medical device, it has to be part of the product design itself that, you do a retrospective analysis with existing data, you do a prospective analysis with new data coming in, new patients coming in, you giving the result and that being compared with standard of care, etc. And these being reviewed and published. So the clinical efficacy is a cornerstone and an important part of any commercially released medical device. And just like US FDA had a lot of stringent rules, now thankfully even CDSCO, Indian regulatory body, has already matured to provide this classes of AI software devices, right? Class A, B, C, D, and C and Ds, high risk, etc. And many of us, though it's just a few, maybe less than 10 of us, are able to go through this rigor and then show that it is clinically validated regulatory. So I think the regulatory systems definitely be, should be taken seriously, be it in finance domain or healthcare domain, and it's a must. It's not an option.
How do you create the checks and balances within any kind of ecosystem? Healthcare is what you're talking about, Kelly. But when you're trying to apply this globally across many sectors, when an AI tool harms a user, there is the question of accountability. Who should be responsible? The company that built the AI, the company that deployed it, or the one that supplied the data? Do you think that there can be common ground over here where globally everyone agrees where the accountability or where the buck stops? What is the simplest rule that you think India can start adopting, and perhaps that can be a measure that other countries can?
Yeah, that's the question of our lifetime, right? Because we have seen the increasing use cases that really demand for us to really identify where is the liability placed, right? And we have seen how that was introduced to us with the rise of traditional AI and even more with agentic AI and generative AI in the last few years, right? So use cases are only growing, and we have now, I think, an increase as well in court decisions and how judgments across the world are trying to deal with those issues, right? And we have, I guess, a global umbrella that is trying to make sense of these things at an international level, because we know, well, AI cross borders, and even though a government can have really strong governance in place, the reality is that actions now of companies that have presence globally can really affect citizens in another country, right? But we also seeing, I think, a strong increase in response from local governments in thinking about how they go about adapting the existing laws. And we see a lot of, I guess, existing examples of that from South Korea. India is doing a lot more work in that area as well.
Yes.
We have a lot of existing laws that would apply to AI, so we don't necessarily need to reinvent the wheel a lot of the times.
So this is work in progress from what I'm hearing. Anirudh, we've been speaking a lot about deepfakes. The Prime Minister wants clear labels on AI-generated content. But you see real enforcement happen. Is that even closely possible now from where we are right now, practically at the top of 2026? You think there are penalties that could apply if content is not labeled? Do you think we can move that piece? Should platforms be forced to remove it? But have you been able to make, steps that really are significant to that effect?
It's very difficult. I'll be very honest, Vikram. I think it's going to be a very difficult uphill task to mandate it and make it happen and to have penalties, because the amount of content that's out there, the amount of tools that are being used to generate that content, the number of platforms and websites that platform is going to go on to, it's going to be a massive exercise of finding needles in a haystack sometimes. So it's going to be an uphill task. That said, I think one must remember that the tech companies that are helping enable this content, generate this content, those are massive companies with massive teams of engineers, massive resources at their disposal. So I do think that it's a very important responsibility to pin on them that they must do the best possible effort on it. They, of course, will be incentivized to not do it. But I think it's, again, as I said earlier, it's going to be the job of governments and the consumers to try and mandate it to the extent possible.
Yes.
But that said, it's going to be an uphill task.
It's an uphill task. Is it an uphill task when it comes to jobs as well? Because when we're trying to create AI, which is that much more humane, we don't want to be in a situation where every day on this very show, we're talking about the kind of job losses that have happened because of increased automation, because of AI. Mihir Shukla, do you think India can create some kind of system where there is this skilling commitment? And should Indian companies be signing up to it? How do you think that is going to work, where this anxiety about losing jobs because AI is going to take them, we are going to be able to get past it?
Vikram, that is already happening. So just last month, many of the tech companies, that includes many of the Indian SIs, we all came together and made a commitment to retrain 120 million people on AI and automation. So I think there is a lot of effort already underway. I think the key topic, as you rightly said, it is about upskilling and reskilling.
Yes.
And that is where lies the answer.
So how much of that is going to happen in as quick a time now is going to be an important piece. So even as we are kind of looking at this entire piece coming together where AI is going to be more humane, Geeta Manjunath, should India make it compulsory for the high-risk AI in sectors like health, finance or government services to make them undergo continuous monitoring after deployment? Is that going to be a system that we can bring in? Regular reporting of errors, of risks, of updates. What's your take? Do you think that's possible soon?
That is possible. Again, the good part is healthcare has been continuously regulated earlier as well as a medical device. Now what we make is software as a medical device. For example, there are standards called ISO 13485 and others, which actually make auditors come in every year and check the different sort of, like sampling, like a financial audit. It is happening today, right? That will continue and it definitely needs to continue, yes.
Well, we will hope that it continues and it continues at a faster keel because timing is of the essence. India's AI moment is not going to be defined by who has the biggest model, but by who sets the clearest guardrails. The Manav vision is out. It only matters, of course, if it becomes muscle memory, where we're talking about transparent systems, real consent on data, the hard labels on the synthetics, and child-safe defaults as well, which would be baked into classrooms and code. So inclusion is not going to be charity. It is going to be a strategy, because if AI only serves the few, it's going to fail the many, and ultimately it's going to fail the market as well. Right now, the world is racing on speed. India must win, and it must win on trust. That is how we are going to balance intelligence with intent and lead on that count. My big thank you to our guests, Kelly Forbes, Mihir Shukla, Anirudh Suri, Sanjay Gupta, Geeta Manjunath. Thank you indeed for joining us on The Big Question. And that's where we're wrapping it up. Our discussions on AI will continue here on The Big Question. We'll be back with much more. But for the moment, from me, Vikram Oza, and the entire team, good evening.
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Tamanna.
I think it was, and this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your
Hello and welcome to Market Express. I'm Himakshi Bahogna. The markets have wrapped up the trade for the day and we are here with everything you need to know after the closing bell. So the biggest movers, the key stories shaping the sentiment. Let's get started with today's show. So first up, let's see how the markets have fared today. Markets have seen a sharp fall in trade, largely on the back of profit booking as the benchmarks, witnessed a steep correction in the last hour of trade. And Nifty has ended the day at 25,450 levels, while the Sensex has also seen a fall of near 1,500 points on the expiry day. If you look at the broader market, so they've also ended the day on a weak note with both mid and small cap index losing over 1.5% in trade. And sectorally, if we look at, so it was a tepid day as it was a sea of red across the sectors. Nifty Realty was the top sectoral loser today, followed by the auto and FMCG stocks, while pharma and metal counters have also, gave up their morning gains, reacting to the weak market sentiment. Now let's talk about a counter that hit a 20% upper circuit. Now TIL was in focus after the company announced that its board will meet on 23rd of February to review a major fundraising proposal, and the capital raise may include fresh issue, preferential allotment and also a qualified institutional placement. Now that is the QIP. So this update comes shortly after TIL approved acquiring 60% stake in Tulip Compression, strengthening its push into the clean energy ecosystem. And despite reporting a widened Q3 net loss and also a drop in the revenue, investor sentiment has surged on hopes of fresh capital and also strategic expansion. And viewers, shares of Netweb Technologies have jumped nearly 10% on the NSE after the company unveiled a breakthrough Make in India AI supercomputing system powered by NVIDIA. Now, in its announcement, Netweb has said that it has launched one of the world's most powerful AI infrastructure solutions, which is the Tyron and Tyron Camerero. And that's called GB200 system, and this is alongside the Tyron Camerero Spark, which is a compact petascale personal compute system. Now, the company is saying that the Spark is among the world's smallest AI supercomputers, bringing NVIDIA's complete AI stack into a desktop-sized form factor, and this is marking a major leap for India's high-performance computing capabilities. And viewers, next up we have Intellect Design that has launched eMAC.ai, that is its first AI banking platform. And this is aimed at reshaping how financial institutions adopt the artificial intelligence. Now, the platform comes with hundreds of, built-in domain and also aware agents designed specifically for banking operations. Now, the company has also unveiled Purple Fabric, which is an enterprise AI service offered on subscription basis and with a strong focus on governance, audibility and also the regulatory compliance. Now, the architecture is also built to help banks move from heavy capital spending to a more flexible operation-led AI model. Now let's look at some brokerage notes. CLSA maintains a high conviction outperform rating on Coforge, keeping a target of 2,426 rupees. And the firm also highlights Coforge as a net beneficiary of the AI wave following a massive $1.56 billion 13-year deal with US travel technology firm Sabre. Now, CLSA says that Sabre's financial risk appears manageable and also its guidance for 2026 aligns with expectations supporting growth for Coforge. Now, viewers, the metals market, glimmered a little brighter today with MCX sweeping away the extra margins that had weighed on the gold and silver futures. Now, with the 3% additional charge on gold and also 7% add on the silver contracts now withdrawn, traders felt a wave of relief ripple, through this morning session, and the impact was immediate as MCX own stock sparkled and rising over 4% at the day's peak. Now, this move signals a return to smoother trading flows and also renewed market confidence and also freshly polished outlook for bullion futures. And in a market where margins matter, today's cut was pure gold. And viewers, next up we have BL Kashyap and Sons that has secured a fresh order worth around 300 crores from CRC Greens. And this contract is for civil works at a group housing project, and the company has said that the project will be executed over the next 3.5 years. And next counter in focus is Pace Digitech that has secured a $1.35 million order from Yakin Chem for the supply of mobile battery system. Now, the company has said that delivery of the order will be completed by April 2026, and this is marking another milestone in its growth in the energy solution space. Yes, next up we have Cochin Shipyard that has signed a major deal with the French shipping company CMA CGM to build 6 feeder container vessels, and the contract worth over 2,000 crore rupees, and this is boosting India's shipbuilding industry. And also the yard begins work immediately, and also the first ship is set to be delivered within 2 years, and this is strengthening Cochin Shipyard's presence on the global maritime stage as well. Next counter in focus is Naven Fluorine. At its analyst meet, outlined strong growth visibility across the segments, and the company expects HFO volumes to grow 20% and also see sustainable R32 prices at $6 to $6.5 per kilo. And this is a new 15,000 MTPA capacity that will, go live in Q3 of FY27. And projects, Nectar will ramp up to 50% in FY27 and also reach full capacity in FY28. Now, in specialty chemical space, the Chemers project goes live in Q1 of FY27 with large phase 2 potential, and also in the CDMO space, the Fermion run rate is also set to rise to $50 million annually, with a target to double the CDMO revenue by FY30. Next up, we have Alkem Laboratories that has outlined an aggressive entry into the medical devices as a new growth engine, and the company aims to build a 1,000 crore medtech business within 5 years, and this is targeting margins of 20 to 25%. And focus areas include orthopedic joint implants and also cardiac devices. And Alkem has tied up with the Advita, Ortho, and this has been acquired. This has acquired Bombay Ortho and also is buying a majority stake in Sweden-based Occlutech, which sells heart implants in over 80 countries. So the Occlutech deal will make Alkem the world's third largest player in occluder devices, and also the company expects cardiac products, to drive the growth, and also targets 10% share in India's large joint ortho market. Next counter in focus is Hilton Metal. Forging shares have slipped to a 52-week low, even as the company, approved a rights issue to raise nearly 28 crores, and the board has cleared the issuance of 1.67 crores of equity shares at 16.68 rupees per share to eligible shareholders on a rights basis. And the total fund raise stands at 27.97 crores, and the company has not detailed the end use of the proceeds yet, but the move comes amid weakness in the stock, which has been under pressure in the recent sessions. Next up, we have Jindal SAW that has received a suspension of letter from the American Petroleum Institute after certain conformances were observed during an audit, and the suspension restricts the company from affixing the API monogram on its seamless pipes, and the company says that it is responding to the regulator and also implementing corrective measures, and management adds that the financial impact is unlikely to be material as seamless pipe capacity is also fungible and also has already been diverted to other products as well. Now, Jindal SAW has assured that it will take necessary steps to regain the compliance at the earliest. And next up, we have National Highway Security of India that has, barred the NCC and also its subsidiary, OB Infra from participating in NHAI tenders for 2 years. And starting February 17, 2026, the company has said that it is reviewing the order and also plans to challenge it legally. NCC adds that there is no immediate impact on its current order book. Next counter in focus is Dr. Reddy that has entered the hormone replacement therapy market by acquiring the Progenova and also a Cycloprogenova trademarks in India from a UK specialty pharma company. Now, Progenova treats menopause symptoms, while Cycloprogenova targets estrogen deficiencies. With Progenova's sales at around 100 crore rupees, the acquisition strengthens Dr. Reddy's gynecology portfolio. Now let's look at some key brokerage notes. Citi maintains a buy rating on Aadhar Housing Finance with the target of 650 rupees, and the bank expects asset
assets to grow steadily, crossing the 50,000 crore mark and also in the medium term. And the spreads remain above 5.6% while credit costs stay low. Citi also expects improvements in the efficiency ratios and also forecasts healthy returns, making the stock an attractive buy. And yet another partnership when it comes to AI in India. Pine Labs will embed OpenAI's APIs into its digital payments infrastructure to enable the agentic commerce in the country. And the new collaboration was announced on the sidelines of India's AI Impact Summit 2026. Now, this is said to be OpenAI's second collaboration with digital payments company after the AI giant entered into a partnership with the Razorpay. Now, the partnership is also set to facilitate conversational, AI shift from a medium of discovery to creating a mandate for the action. Viewers, now on to the big story dominating the global tech landscape and the AI summit in New Delhi, where governments, CEOs and also innovators are laying down the roadmap for humanity's next major technological leap. So at the center of the AI summit today was a landmark address by the Prime Minister, who unveiled India's new AI doctrine. Now, the Manav vision, where Manav stands for moral and ethical AI, accountability in the governance, national sovereignty, and also in data and compute, accessibility for all, and also valid, transparent systems. Now, the Prime Minister has framed India as not just a consumer of AI, but also a global architect of responsible and inclusive artificial intelligence. He has emphasized that India's future mantra must be develop in India and also develop for the world. So in his speech, he has called on the global leaders to build AI systems that uplift the poorest first, warning that innovation must never outpace humanity. Meanwhile, French President Emmanuel Macron made a clear declaration that his government and allies will take the lead in shaping global artificial intelligence rule, saying that the future of AI governance must be defined collaboratively and also not unilaterally. And Macron has highlighted that the European Union's AI Act, which was adopted in 2024 and is now being implemented in phases as a model for balancing innovation with the safety. He has said that Europe intends to be a space not just for the regulation, but for innovation and investment, and while protecting the citizens and also underpinning the ethical norms. So Macron has emphasized that France and partners like India are determined to shape the rules of the game together. But from optimism, now let's look at some caution, especially from one of the world's most influential tech voices. So Sundar Pichai has warned of an emerging AI divide. Now, a world split between nations that have compute access, data capacity and AI models and those that do not. So he has said that AI could easily become a technology that accelerates inequality unless global systems are put in place to ensure equitable access. So while recognizing AI as the biggest platform shift of our lifetime, he has insisted that the benefits must reach small businesses, students, developing nations, and also not remain isolated within a handful of global corporations. And on to a crucial update from the Gates Foundation. So Bill Gates, who was slated to be one of the marquee speakers at the AI Summit, has withdrawn from the event. While the summit has not issued an on-record explanation, Gates' profile was removed from the summit's official website, mirroring wider scrutiny as several high-profile global figures were referenced in the US Justice Department's extensive Epstein records. So, however, the foundation has refuted the claims. The statement issued by the Gates Foundation read, and I quote, "After careful consideration and to ensure the focus remains on the AI Summit's key priorities, Gates will not be delivering his keynote address," unquote. Now, on to the most consequential announcements of the summit. Tata Group and OpenAI have revealed a sweeping partnership aimed at accelerating India's AI readiness. And under this pact, thousands of Tata employees across IT, manufacturing, communications, and all the services will be trained on cutting-edge AI tools, including OpenAI's enterprise platforms. But the collaboration goes even deeper. Tata will expand its data center capacity and also creating large-scale compute infrastructure to support the advanced model training and also enterprise AI deployment in India. industry experts say that this move positions India as a rising infrastructure backbone for global AI operations, especially in an era where compute power is becoming as valuable as the capital. Now let's look at key corporate news, but before that, quick look at the crude oil. Oil prices remain perched near a 2-week high as escalating geopolitical tensions involving Iran continue to unsettle global supply forecasts, and tensions between the Washington and Tehran remain high, and the market is reacting sharply to renewed fears of potential disruptions in West Asia, a region that still anchors a significant portion of the global oil output. Analysts are saying that traders are pricing in a risk premium, and this is expecting volatility to persist as diplomatic strains rise, and higher oil prices could have ripple effects across global inflation, logistic cost, and also emerging market currencies, including India. Now let's look at the aviation ambitions of an Indian carrier that is set for a major fleet boost. Now, SpiceJet has received a formal MOU to induct 10 additional aircraft, and this is a move that will more than double the airline's operational capacity this year. So this expansion is crucial for SpiceJet, which has been restructuring, operations while working to improve the profitability and also network reliability. And these new aircrafts are expected to, support the domestic connectivity, also strengthen the high demand routes, and also SpiceJet's leadership says that this MOU marks a revival phase for the carrier and also sets the stage for a stronger financial turnaround. Time now for the biggest stories from across India. Ganga Expressway, one of India's most ambitious infrastructure projects, is now set for inauguration and stretching over 594 kilometers. This will become the longest expressway in the country, connecting Meerut all the way to Prayagraj, dramatically reducing travel time across the western and eastern Uttar Pradesh. Once operational, commuters can expect travel time between the two cities to drop from nearly 11 hours to just 6 hours, and the expressway will have 8 lanes, multiple access points, and also service roads, toll plazas, and also a high-speed design that aims to match the global highway standards. So officials have said that the project is also expected to be a major economic catalyst, and this is boosting logistics, industrial clusters, warehousing, and also rural connectivity across the Ganga belt. Years after the recent helicopter crash involving Maharashtra Deputy Chief Minister Ajit Pawar, his son Jay Pawar has publicly demanded a detailed investigation into what he calls serious lapses in the flight safety. And authorities have recovered the helicopter's black box, with experts noting that these devices are extremely difficult to destroy, which increases the chances of retrieving the crucial flight data and also voice recordings. Now, Jay Pawar has said that incident raises critical questions about the maintenance checks, emergency protocols, and also aviation safety standards for the VIP aircraft. And the state government and aviation regulators are now under pressure to ensure a transparent probe, as opposition leaders also demand accountability and also clarity. And amid rising concerns over biomedical waste and public health, the Delhi government has announced plans to set up new treatment facilities that will together handle 40 tons of biomedical waste per day. Now, this comes as hospital, labs, and clinics continue to generate increasing quantities of the biomedical waste from surgical disposables to lab material, putting existing infrastructure under severe strain. And officials say that the new plants will use modern sterilization and also scientific disposal systems to ensure waste is processed safely, reducing the risk of contamination and also environmental hazards. Now, the move is also expected to streamline the collection, also improve the segregation practices, and also strengthen Delhi's readiness for future health emergencies. Now on to some legal news, viewers. The Supreme Court came down heavily on the state government's practice of pre-election handouts, or commonly known as freebies. So in a series of strong statements, the court has demanded to know how the states plan to fund actual development if they continued offering free food and free electricity. Now, a proposal from poll-bound Tamil Nadu's government to provide free electricity to its customers, irrespective of the financial status, was this trigger for scathing remarks on the state spending crores on subsidies while running into budgetary deficits and also complaining about a lack of money for development. And the court has also asked the state government to explain why the scheme had been announced at the last minute, leaving power distribution companies scrambling to adjust tariffs and also budget calculations. Viewers, the Directorate General of Civil Aviation has revised rules on handling unruly passengers. Airlines can now directly impose a flying ban of up to 30 days for certain disruptive acts without referring the case to an independent committee. Now, 6 new categories have been defined. These include smoking on board, drinking alcohol on domestic flights, or unauthorized alcohol on international flights, misuse of emergency exit, protest or sloganeering, intoxicated misconduct, and also other disorderly behavior, such as screaming or kicking the seats. Now, the move gives airlines faster powers to act against disruptive passengers mid-air. And viewers, ex-Prince Andrew Mountbatten Windsor has been arrested on suspicion of misconduct, according to media reports. Now, this amid UK police escalating their review of allegations tied to the recently released US Justice Department Epstein files. Now, the documents include emails and evidence suggesting Andrew shared confidential trade information with Jeffrey Epstein in 2010. Now, the renewed scrutiny follows years of controversy, including allegations from Virginia Giuffre and also images from the files placing Andrew inside Epstein's properties. Well, viewers, that's all the time we had on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
Hello and welcome to this very special conversation that we're having on the sidelines of the India AI Impact Summit. I'm joined here by Chairperson and CEO of Salesforce India, Arundhati Bhattacharya. Thank you so much, ma'am, for taking time out. We're at, the 4th day of the summit. Lots of chatter about AI adoption, diffusion, a lot of chatter about how India is now staking its claim at the global stage of AI. My first question to you is, talk to us about the sort of evolution that India is going through. Firstly, India was a consumer of AI. Now India wants to become a creator of AI. We're seeing participation across all layers of AI. Talk to us about where India's focus should lie as we now embark on this journey.
So I believe that, being a consumer is also very important, because it brings a lot of benefit to our people. We have seen even earlier that given the populous nation, the nature of our country, it's very difficult to bring services of the level that is required to our population unless we use technology. We saw this during the financial inclusion program, the PM Jan Dhan Yojana. We saw it again in the spread of UPI, which has made payments so much easier for us. So, for a population level of our size, technology is what enables us to improve the standards of living of our people. So, to be a consumer is important, but to be a creator is also important. And if you consider the digital awareness or the skill levels of our people, that is very deep. We have a very deep pool of expertise in the country at the individual level. And because we have that, there is really no reason why we should not be creators of AI as well. Having said that, it's also a fact that AI adoption across industry has not been as much as we would have liked. Whether it be industry, whether it be government, while the government, I think, actually has been doing better, given the India stack and the other things that the government has been doing, whether it be ONDC, whether it be the GEM portals, the government has actually been a little ahead, I would say, of industry. But industry as such, I think, still has a lot of catching up to do. And that is important because of the sheer amount of efficiency and productivity increases that AI can bring in. I think it's important for us, if we want to be globally competitive, to see industry coming up much faster and much better in these areas. Regarding us being creators of AI, really no reason why we shouldn't be. And if you've seen the expo, or rather the exhibition grounds, you've seen the various stalls, and the various startups that are working over there, some of them with really, really differentiated and very great ideas. So hopefully, yeah, in the coming future, we will see many of these scale and become, producers of AI, with which they will be able to solve not only local but also global problems.
Ma'am, you speak about some sort of a lag between industry and government adoption of AI, right? What are those impediments? Why is the industry, why is India Inc. lagging in that sort of an adoption? Because they are cash rich, balance sheets show that there is a lot of money on hand. Why is AI adoption a concern, even if money is not?
So I think one issue is a little bit of a trust deficit.
Okay.
Even today, I think a lot of industry is very wary of using the cloud.
Okay.
And of course, I come from a company that is cloud native, and I have felt this at every step, that there's been a lot of discussion, especially where the public sector is concerned, regarding whether cloud is safe or not. In spite of the fact that if you go to the Western world, you'll find that, most of the agencies over there, even agencies that are in the defense sector and things like that, even they are using the cloud.
Absolutely.
So, there is nothing to say that the on-prem systems are safer than the cloud systems. You cannot say either way, because, either can be subject to certain cyber risks.
Okay.
That is part of the way things are. But having said that, Indian industry does have its own reasons for not being very trusting about all of this.
Hello and welcome to India Market Open on NDTV Profit.
AI is the theme. That's something which you're looking out for.
Absolutely, AI is the theme, and let's also get in Tamanna Inamdar.
Welcome viewers to India Market Open, a show that helps you prepare for the trading day. The biggest theme right now across the country and perhaps for markets is obviously AI. Which companies are going to be ahead in the AI game? Which ones will be left behind? Along with IT service companies, those involved in data centers are also in focus. The biggest question for investors right now, though, are AI claims being made by companies going to actually add to their earnings, or is it just window dressing? I think it's time for the fake Tamanna to go and the real one to come in. Good morning, guys.
Good morning. Tamanna.
I think it was, and this is just a small display of what AI could do. Be honest, could you guys tell the difference? Could you viewers tell the difference?
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
President Emmanuel Macron, speaking to NDTV Profit, says that France is keen to expand the Rafale program with India. Just days ago, India confirmed its willingness to consider a new batch of Rafale, around 114 aircraft. The Prime Minister Narendra Modi holds high-level CEO roundtable at the AI Impact Summit. Earlier today, PM Modi outlined Manav vision for artificial intelligence. OpenAI's Sam Altman and Anthropic's Dario Amodei skip handhold at Delhi AI Summit. Rift between two of the most influential players in the global AI race. Amodei earlier served as OpenAI's Vice President of Research. Tata Sons Chairman N. Chandrasekaran spoke about layoffs amid AI in an exclusive conversation with Profit. He says that TCS layoffs are not linked to artificial intelligence. Former Prince Andrew Mountbatten Windsor arrested on suspicion of misconduct in public office. He has been held for his links to child sex offender Jeffrey Epstein. King Charles says law must take its course. Broker Association ANMI writes to SEBI on RBI's new norms on lending to stockbrokers and other market intermediaries, seeks a 6-month pause on the implementation, says they will impact the market liquidity, FPI participation and India's market attractiveness. Market ends lower to log the worst session since the 1st of February. Both the benchmarks close more than 1% lower. Broader indices mirror the fall. All sectors close in the red. Nifty Realty becomes the top loser, down more than 2.5%. Good evening, viewers. This is Malika Mishra on NDTV Profit, and you're watching Profit 360. We will shortly cut across to PM Modi holding a round table with some of the top global CEOs, 30 to 40 of them present. And this is a very important conversation. We've been reporting about it since morning. And in light of the AI summit, actually, where it's a convergence of the top global CEOs, CXOs, CHROs, many people linked to the AI fraternity, everybody will be talking to PM Modi on lines of artificial intelligence, acceptance of it, technological revolution, and a lot more. In fact, AI Summit has been the epicenter of AI-driven innovation and technology. As soon as we get the visuals, we will be playing them for you. And this is a very sensitive and important roundtable that PM Modi will be hosting with 30 to 40 CEOs and, in fact, leaders of big tech giants like Meta, Google, and even Zoom would be present as part of that roundtable conference. And this, just until we get some more information on that, I'd like to bring your attention to day 4 of the AI Summit. It's been an action-packed day, to be very honest. In the morning, PM Modi launched the Manav scheme and Manav vision for AI. And Manav stands for moral and ethical systems. The A in it stands for accountable governance, N for national sovereignty, and A for accessible and inclusive, and V for valid and legitimate. This sort of is our framework on how we plan to take AI-related initiatives in the future. PM Modi spoke about it in detail, and we, in fact, have planned to get you bites and comments from a lot of people who have spoken on day 4 of the AI Summit. We had Sam Altman speak on the opportunities that India presents for the AI fraternity. In fact, he also spoke about how ChatGPT has been used here extensively. He said, and I remember that about 1/3 of ChatGPT's users come from India. So India has been consuming it to a great extent. I had conversations with many people since morning on AI as well, out of which was Pat Tomlinson also, and he spoke in detail about AI as well. Just a bit more about the India AI Impact Summit. The India AI Impact Summit 2026
strengthens India's role as a key platform for shaping the global AI agenda, anchored in the 7 chakras and the 3 sutras of people, planet, and progress. The summit advances a development-oriented framework for artificial intelligence. This is a bit about the core philosophy of the summit. Plus, the summit is anchored in 3 core pillars, as I said: people, planet, and progress, and is driven by 7 thematic working groups covering AI for economic growth and social good. Let's, in fact, listen into Macron, French President Emmanuel Macron. While speaking to NDTV, he called the India-France relationship a special global strategic partnership, signaling a major deepening of ties. In fact, he also spoke in length about the new batch of Rafale and has proposed that the Dassault Rafale jets will be co-produced under the Make in India vision. Let's listen into that conversation.
Relationship between India and France and the importance of the 114 aircraft deal that's now being looked at, the Rafale. Could you talk a little bit about both of these, please?
Yes, we agreed upon a lot of cooperations, building up what we already decided in defense, and increasing through innovation, because we launched Innovation Year, culture and creative industries, research, and so on. So we have a very strong relation, and I just would like to amend your statement, if I may. We don't have just a strategic partnership. We have a special global strategic partnership, which is unique, both for India and France. On Rafale, what we want to do is to expand. So India confirmed few days ago its willingness to indeed command a new bunch of Rafale, 114, and to co-produce. So the Make in India will be core in this new command. And on top of that, what we want to do is to improve the cooperation in maintenance capacities, in terms of diversification of approach, and to be much more, I would say, in a sort of mutual agreement cooperation. So it's a new step forward, clearly consolidating the existing one and going further. So Rafale is absolutely key. I hope we'll do the same on submarines. We offered additional capacities, and we are doing it as well on the engines and on helicopters, by the way, between Tata and Airbus. So clearly the cooperation is improving, and we are building a new area of cooperation.
Okay, and after that conversation, let's in fact talk about the AI Impact Summit. It's day 4, as I was saying, and the summit continues to draw global attention as some of the top CEOs and leaders descend in Delhi. In fact, PM Modi's exclusive meeting with 35 to 40 global CEOs also has been the center talk of the town, with leaders from Microsoft, Amazon, Google, Netflix, and Zoom all expected to be on that table. The Prime Minister also made big announcements related to Manav, and I just spoke about the abbreviation of it as well. So let's listen into some really intriguing comments we have gathered from the summit all throughout the day, starting with PM Modi, who described AI as the turning point in the whole of humanity. Listen in.
AI मशीनों को इंटेलिजेंट बना रही है, लेकिन उससे भी अधिक मानव सामर्थ्य को कई गुना बढ़ा रही है। अंतर सिर्फ एक है, इस बार स्पीड भी अभूतपूर्व है और स्केल भी अप्रत्याशित है। जैसे स्कूल का सिलेबस क्यूरेटेड होता है, वैसे ही एआई स्पेस भी चाइल्ड सेफ और फैमिली गाइडेड होना चाहिए। हमें भय नहीं, भारत को एआई में भाग्य दिखता है, भारत को एआई में भविष्य दिखता है।
Let's listen into some other influential voices from the summit that are shaping the future of technology and enterprise. A distinguished lineup of global business and AI leaders took center stage, including Tata Sons chairman N. Chandrasekaran, Anthropic CEO Dario Amodei, and Alphabet and Google CEO Sundar Pichai. All of them spoke in length about India's AI stride and the guardrails to be considered for the unknown future. Listen in.
We are adopting AI across the stack, from silicon to systems to AI-ready data centers to applications and AI agents. And we believe such a vision and such a journey is going to be extremely exciting, and it will require us to work with world-leading partners in India and across the globe. The Tata Group is establishing India's first large-scale AI-optimized data center, purpose-built for the next generation AI training and inference. I'm very happy to announce that we have partnered with OpenAI to build the first 100 megawatt capacity, which will scale to 1 gigawatt.
Back when I was a student.
And viewers, let's quickly cut across to Prime Minister of India, PM Modi, speaking with exclusively with a lot of CEOs at the AI summit. Take a look.
मैं समझता हूं कि ये एक बहुत बड़ा बदलाव ला सकता है, और क्योंकि हमारे यहाँ बहुत धीमी गति से परिवर्तन कहीं आता है तो एग्रीकल्चर सेक्टर है। एक किसान की एक पीढ़ी नई चीज को अडॉप्ट करने के लिए तैयार नहीं होती। नई चीज तब आती है जब नई पीढ़ी आती है, मतलब इतनी स्लो प्रोसेस है। इसमें इसको एक्सपेडाइट करने के लिए बहुत बड़ी चुनौती रही है। मैं समझता हूं कि ये टेक्नोलॉजी ये स्थिति को बहुत तेजी से बदलेगी। हमें कभी कभी लगता है कि ये मैन्युफैक्चरिंग सेक्टर में चेंज लाएगी। मैं जहां सबसे कठिन एरिया है, एक होता है सोसाइटी में बिहेवियरल चेंज का, और दूसरा होता है एग्रीकल्चर सेक्टर में पीढ़ी से पीढ़ी पर। ये दो एक बड़े कठिन सेक्टर होते हैं, लेकिन मुझे लगता है कि एग्रीकल्चर सेक्टर में इसके क्योंकि उसको आंखों से फील होता है, हाँ यार मेरे मोबाइल में दिखता है, हो सकता है, तो हिम्मत करेगा। और ये एक बहुत बड़ा अवसर मैं इसमें देखता हूँ। बाकी हेल्थ सेक्टर में उसकी सुविधाएं वगैरह, वैसे उसमें रिवॉल्यूशन होता ही रहा है, बदलाव आता ही रहा है, लैब से निकली हुई चीज़ों की काम में आती रही हैं, लेकिन ये बहुत बड़ा परिवर्तन करेगा ऐसा मुझे लगता है। हमने जो लोगो रखा था, वेलफेयर फॉर ऑल, हैप्पीनेस फॉर ऑल, मैं समझता हूं कि हमने इस मंत्र को एज फार एज मैं भारत के लिए तो बात जरूर करूंगा, वैश्विक पर इससे अलग कुछ हो ही नहीं सकता है। हम चाहेंगे कि ये कल्याणकारी होना चाहिए, हमारा काम कल्याणकारी होना चाहिए, और उस कल्याण का मार्ग का एक लक्ष्य हैप्पीनेस होना चाहिए। अल्टीमेट क्या चाहिए? और मैं मानता हूं कि हम समाज जीवन को ये चीजें दे सकते हैं। हमने एक प्रयोग किया यहां पर, शायद आपको पता चला होगा, लाखों बच्चों ने एक रिस्पॉन्सिबल एआई की शपथ लिए हैं, ग्रीनिज बुक ऑफ वर्ल्ड रिकॉर्ड का वो। लेकिन इसके पीछे मेरा इरादा यही था कि मैं मेरे युवा मन को एआई एथिक्स जो है वो कोई थोपे नहीं जा सकते, उसको संस्कारित करना पड़ता है और जन भागीदारी से बनता है। अब जैसे मैथ्यू ने भी कहा, शांतनु ने भी कहा, कंटेंट क्रिएटर की बात कही, अब ये संस्कार करने के लिए बहुत काम आने वाला है। आपने देखा होगा हमारे बजट में इस बार हमने 15,000 स्कूल्स पायलट प्रोजेक्ट के लिए तय की है, जिसमें पहली बार कंटेंट क्रिएशन के काम की लैब होगी। हमें इस टेक्नोलॉजी का बहुत अद्भुत, तो मैं चाहता हूँ शांतनु, मैथ्यू दोनों जो इस क्षेत्र में काफ़ी काम करते हैं वो इसमें स्टडी करें और कैसे उसका उपयोग हो सकता है, क्योंकि ये ये मेरा पायलट प्रोजेक्ट है। अगर ये हम सफलता पाई तो हम एकदम तेजी से उसको बदलें। हमने एक छोटा सा प्रयोग किया था, अटल टिंकरिंग लैब। अब एक प्रकार से प्राइमरी स्कूल के बच्चों के लिए था, लेकिन उसने बड़ा इतना परिवर्तन लाया है। उसमें से जो बच्चे निकल रहे हैं वो विद साइंटिफिक माइंडसेट, वो स्टार्टअप की दुनिया के सपने देखने लगे हैं। अभी तो पढ़ रहे हैं वो, लेकिन उनके मन में ही आता है। मैं समझता हूँ कि एक बहुत बड़ा, ये बात सही है कि एआई इंफ्रास्ट्रक्चर, भारत की विशालता इतनी बड़ी है, विविधता इतनी है, एआई इंफ्रास्ट्रक्चर हमारे लिए बहुत जरूरी है। आप लोग इसमें बहुत कंट्रीब्यूट कर सकते हैं, आपके पास एक्सपर्टाइज है और धीरे धीरे इंस्टीट्यूशन बहुत डेवलप होने वाली है। मैं समझता हूं कि उसकी दिशा में अगर आप, जैसे कंटेंट क्रिएटर की बात हुई, मैं पक्का मानता हूं कि एक युग डिजाइन केंद्रित भी रहने वाला है। प्रोडक्ट करने के लिए तो रोबोट भी काम कर लेगा, और डिजाइन में ह्यूमन माइंड प्लस एआई, क्या रिवॉल्यूशन होगा जी। आज से मुझे कौन बता रहा था, सुंदर ने शायद कल बताया, आज ही बताया शायद। पहले मॉलिक्यूल और दवाइयां बनानी है तो कितना टाइम जाता था। आज जब मैं सुंदर को सुन रहा था तो मैं आज उनको एक और काम दे देता हूं। सिकल सेल हमारे देश में जो ट्राइबल लोग हैं, ये परंपरागत बीमारी है और बहुत पेनफुल होती है। ब्लड के अंदर इस प्रकार के नोकीली चीजें हो जाती हैं, उसका जीना मुश्किल हो जाता है। मैं कई वर्षों से उस पर काम कर रहा हूं, लेकिन अगर आपके पास जो हेल्थ सेक्टर में काम करने वाले लोग हो, ये सिकल सेल को लिए करें, तो मेरे यहाँ ट्राइबल बेल्ट में और दुनिया में कई जगह पे हैं। मैं जापान में एक नोबेल लॉरिएट जो है, मैं उनको मिलने गया था, उन्होंने थोड़ा बहुत इसमें काम किया था। मैंने उनसे भी बड़ा आग्रह किया था, लेकिन मैं चाहता हूं कि आप लोग जो हेल्थ सेक्टर में काम करते हैं, इस टेक्नोलॉजी का उपयोग करके, अभी तो हमने सिंपल वे बना दिया था कि हम उनका टेस्टिंग करते थे, आइडेंटिफाई करते थे, और शादी के समय हम आग्रह करते थे कि आप शादी 2 पेशेंट के ही बीच शादी हो जाए, ताकि नेक्स्ट जनरेशन उतनी कम होती जाएगी। अदरवाइज एक पेशेंट एक नॉन पेशेंट है तो बढ़ता जाएगा। तो छोटी छोटी चीज़ों का हमने प्रयोग किया है, लेकिन मैं मानता हूँ सिकल सेल को अगर आप एक प्रायोरिटी सेक्टर में गिने, करोड़ों लोग और दुनिया में है, अफ्रीका में बहुत है, अगर हम उनकी सेवा कर सकते हैं तो एक बड़ा मानवता का काम होगा। एक मेरा आग्रह है, कुछ साथियों ने, संजय वगैरह जो लोग हैं हमारे, मदद कर रहे हैं, स्किल डेवलपमेंट। हमारे बहुत सारे ITI हैं, उसमें हम इसको कोर्सेज कैसे लाए। कल मुझे खोसला जी बता रहे थे कि उनकी पत्नी ऑनलाइन ट्रेनिंग करती है। अच्छा प्रयोग है। हम भी चाहते हैं कि ऑनलाइन सर्टिफिकेट कोर्सेज हो, लेकिन स्किल डेवलपमेंट ही हमारे लिए, ह्यूमन रिसोर्स डेवलपमेंट अल्टीमेट बहुत जरूरी होगा, ताकि मैं इसका एप्लीकेशन स्किल मैन पावर होगा तो कर पाऊंगा। तो उसमें आपकी अपने हर काम के साथ कोई न कोई स्किल का काम होना चाहिए। सरकार की योजनाओं में कोई परिवर्तन आप चाहते हैं, व्यवस्थाओं में आप IIT छोटी छोटी हैं उसको एडॉप्ट कर सकते हैं, सिलेबस दे सकते हैं। तो एक अच्छी सुविधा स्किल डेवलपमेंट की दिशा में, और मुझे लगता है कि आज हो रहा है, लेकिन उसका वॉल्यूम बहुत बढ़ाना पड़ेगा जी, और क्वालिटेटिव लगातार इम्प्रूव करनी पड़ेगी। और आपके फील्ड के लोग हैं जिनका योगदान हमें बहुत मदद कर सकता है। आपने देखा होगा, हम सुबह अश्विनी जी ने अपने भाषण में कहा था, हम पूरा एंड टू एंड के काम करना चाहते, हम टुकड़ों में करना नहीं चाहते, एंड टू एंड हम करना चाहते। और हम इस स्पर्धा में एज अ कंट्री पीछे रहना नहीं चाहते। इसलिए नहीं कि भारत को दुनिया में अपनी सुपीरियरिटी बताना चाहता है, लेकिन हम कुछ कंट्रीब्यूट करना चाहते हैं। और इस
And viewers, have you ever wondered if AI will eat jobs? Are you anxious about the existence of your professional role 5 years from now? Have you wondered if your current job could soon be irrelevant? And most importantly, have you feared the power of AI? It's time for our exclusive conversation with Pat Tomlinson. He's the CEO and president of Mercer. Mercer is a global leader in consulting on talent, health, retirement, and investments. And hence, I quizzed Pat on many of these questions that most of us think about every day. Listen in to that interview. Viewers, at a time when AI is redefining workforce and bringing in anxiety in many people around whether they would be relevant or not in the coming decade, we have with us today Pat Tomlinson. He's the president and CEO of Mercer. Thank you so much, sir, for joining us in this conversation today. You have spoken about how companies need to go beyond just substituting technology or substituting old ways of working with technology and actually redefining and redesigning how their work really happens or their work models. What do you mean by that, and to what extent can work really be redefined so that human capital can be optimized in the best possible manner?
Great. So thanks so much for that. And it's wonderful to be here, Malika. Thank you. So as we think about what employers should be able to do to be able to take advantage of the technology that's coming out, we're seeing a lot of companies deploying AI tools. But typically they're just layering the technology on top of old and existing processes, and they're not really rethinking the work itself. And what we're seeing is really to try and unlock the meaningful opportunity from that. The end client organization really needs to move beyond the technology rollout and even just the adoption of the new technology. And they have to think much more specifically about redesigning the work itself and redesigning it intentionally and integrating new and evolving roles and skills alongside the AI that's being implemented. And when that happens, I think that we'll start to see organizations and clients really start to see the ROI on their AI investments, and that will kick in and really start to infuse the cycle of reinvestment that they'll see into even more AI and be able to get that cycle working. So really, that's the crux of what we're really seeing out in the marketplace.
Okay, Mr. Tomlinson, you've been a proponent of AI being integrated into work in such a manner that it can boost productivity and also redesign workforce. That's something that I've seen in most of your statements as a common ideology that comes through. How do you think this can be done in the best possible manner, especially in the context of how India is adopting AI? And there can be no better day about speaking to you on AI when we're hosting the India AI Impact Summit 2026 in Delhi, where all eyes are on India's AI muscle and AI capabilities. How do you think we can take that leapfrog jump towards AI and prevent people from feeling anxious?
Yeah, so foundationally, we believe that we need to see full transformation of the work in order to be able to maximize the opportunities that are there from AI. And what we are seeing is we're seeing too many companies at this point thinking that we're just overlaying the technology on existing work processes. So we do think that there needs to be wholesale changes in how you deconstruct the work that's being done and you think about true transformation of it itself. It means starting with the work, figuring out where AI fits in. It means redesigning jobs, integrating new skills and new roles. And without that intentional work redesign, I think that what we're going to see is we're going to see companies, risk falling behind on this AI journey as they think about how to do that. So that's a key piece. And you mentioned anxiety, and there is a significant amount of AI anxiety amongst the workforce, where colleagues are feeling a